States, trade has augmented substantially. Rheinmetall, again, coming in with very high expectations, being called a little bit lower, maybe missing a little bit of the estimates, but let's not lose sight of the fact that this is a stock that has rallied more than 1,000% since the beginning of the war in Ukraine. And of course, chips always in focus. We're starting to learn what gets you an exemption in the United States. Is that bullish? Is it bearish? We'll find out.
We certainly will. I think it's really crucial to see whether or not this is actually reflected. So much of that chip story, at least in the last 24 hours, has largely been one that's affected U.S. mega cap. Does it affect the likes of ASML, et cetera? We'll find out in just moments. It is, of course, the opening trade. Let's open these markets now. The FTSE 100, right off the bat, we kind of knew from the futures picture it was going to be on the back foot. This morning, you are starting to see that as well. And I wonder how much of this is just light volume, light liquidity. We're going to wait for those numbers to shake out. But a lot of those earnings stories we're talking about this morning are concentrated in Europe, are concentrated specifically in Germany. We had Siemens. We also had Maersk as well, which is not a German company, but of course one of the bellwethers that we are watching. Not to mention Rheinmetall, as Ollie was mentioning, and a sea of others as well. The stock 600 right there, finally getting into the green. The CAC 40 higher by 0.2%. But we've got to keep one eye on the DAX, one eye on the Swiss market as well, because of course we know the Swiss president has come back to continental Europe with no trade deal on the horizon. Val, walk us through what we're seeing underneath the hood.
It's a bit split when it does come to the sectors. We do have some of the more cyclical sectors at the top of the basket, like travel and leisure and banks. We currently have 13 in the green, the remainder, the last 7 in the red. So it does seem to be a bit split. But Ollie, my eye went straight to the Maersk opening price, opening up 5%. It's now up around 4%. This is off the back of raising their guidance. It seems like the shipping industry is still giving a bullish tail, even amid the global trade war.
Yeah, we like a big move with a punctual open, rare enough as it is for us here in Europe. But as you say, coming down just a little bit with Maersk down up about 3%. I'm still waiting to get a price on Rheinmetall, something we're going to watch a lot, very, very closely. Maybe call down a little bit just because there's been so much positive sentiment built into the stock. And IHG, again, also waiting for the open there.
Well, we do have some of these tech stocks opened. As mentioned, we're keeping an eye on them. We did see such a positive session in Asia with TSMC up some 5% on these exemptions. We're seeing some positivity feed in through the European session as well, seeing the likes of ASM and ASML up around 1.5%. So it does seem to be like this exemption. Yes, it was a big 100% tariff number on chips, but that lengthy exemption list is leading some of these stocks to rally afterwards.
I know, it's a fascinating one as well. The ASML story, it feels like we can't really tell if they are actually benefiting from this or not, because ultimately the fundamental thesis is that you're building out your manufacturing capability stateside. Ultimately, you need to invest in the infrastructure to actually do that. And I guess that is a big help for ASML. But note that AI theme really shows up in the likes of Schneider Electric as well. That's a Guy Johnson favorite over in the Core 6. But so is Relix. That's an Anna Edwards favorite, by the way, which is really kind of a legal doctrine company, but has been really benefiting from the AI trade. So I think that's likely showing up in these numbers.
Yeah, and seeing also some weakness in Siemens. They had earnings out a little bit earlier today, kind of a mixed bag for them. We saw a huge order for trains, so the old school heavy industry still doing some heavy lifting for Siemens, but then their digital industries, this is their sort of automation business for factories across the world, not really picking up the slack, and you can see that in the stock this morning, down by 1.5 percentage points.
Yeah, we stay with the pharma sector there. We are seeing the shares of Merck, Germany's Merck, in the red, down some 2.5%. We did speak to the company earlier. Was a miss on some of their numbers, so it seems like that's the reason why the stock is trading lower today. Let's bring in our guest here sitting around the table this morning to discuss some of these market moves. Fabiano Fedeli, M&G Investment Manager, CIO for Equities, Multi-Asset, and Sustainability. Thank you for joining us on this snoozy week in August for some markets, but here in Europe, we're busy with earnings season. Any big takeaways for how these European companies are dealing with not only tariffs, but the FX headwinds?
Good morning, Valerie. Yes, the main takeaway is until now we really haven't seen the impact of tariffs on markets besides some uncertainty among the companies. And our concern is that going forward, we are starting to see some of that impact. And so we'll have to see how the next 6 months pan out. But one of the key takeaways from the earnings season is that companies continue to be very different in the way they perform. So you've seen companies in the same sector, you mentioned healthcare, for example, that are having very different results. And that is also actually showing up in price dispersion. You're seeing higher price dispersion in healthcare, in consumer discretionary, and in technology. And I believe that we will continue to see this.
I'm always trying to build a bearish picture because I guess that's my nature. But again, at the same time, we see all this euphoria across so many of the markets. We see sort of, the equities particularly doing very, very well, while at the same time, these extremely high levels of uncertainty, foundational questions about some of the market architecture that we have. When do we start building a bearish picture? What does that look like?
So what we've seen so far has been a sense of crisis fatigue among investors. They've had so many times that the news flow was negative. We had 2 wars, we had COVID, we had the tariff war, and we have all learned that actually unless this impacts the global macroeconomy or company fundamentals, then it doesn't really affect the investment outlook. However, we're starting to see some numbers, and it's very initial at this point, and it's mostly macro, starting to weaken. I mean, we're seeing in the U.S., we've seen the ISM business pricing having the highest pressures in 2022. We've seen, obviously, the payrolls last week. We're seeing some signs that consumption is weakening. So while it's too early to tell, I think we are possibly starting to get more cautious, or we need to get more cautious on markets. Never say never, because the markets have been cautious many times. How many times have we been told to invest in fixed income because equities would underperform over the last
familiar, right,
2
Val?
years?
Yes, it does.
And equities
and then you missed the tech trade.
have performed very well. But also there is a matter of dispersion in fundamentals. Some companies continue to do very well. For example, on technology, the AI-driven technology trade, and some others are having difficulties.
Fabiana, you mentioned some concerns are brewing. You mentioned the payroll miss, the weak ISM services number, and manufacturing that we've had in the recent days. Is there something else that would really start to spark concerns that this bearish view of yours should be moved up in its timeline?
I think simply more data in that direction, and also more companies that are showing impact from tariffs. I mean, the tariff war doesn't help anyone, right? But we're starting to see winners and losers. So not everyone will be negatively affected. You're seeing some results, for example, Toyota overnight, which is affected by tariffs, but you're also seeing companies that actually are faring very well. So more data points on that will actually give us some clarity.
Yeah, I just want to take a moment to acknowledge some of the movers we've seen this morning now. Intercontinental now open up almost 9% off of the earnings, raising some of its outlook going forward. On the other side of that trade, also Rheinmetall, we mentioned it at the open, we didn't have a price, down 6% this morning. Again, we have to say a huge amount of positive momentum has been built into the stock, up some 250% over the last year. But this morning, some investors taking some profits out that, down about 6%.
Fabiana, let's dive into that. Rheinmetall is taking a beating, not just today, it has been lately. Is the defense trade over in Europe? If we're talking about valuations, if we're talking about returning and reversing some of the trade we've seen in the last quarter and last 6 months, how are you thinking about defense and allocating to European defense right now?
Krit, if you remember, we talked about this last time that I was here, and our stance was clearly defense has momentum behind it, but you have to justify those valuations. And it's not surprising to see a moment of pause in that run. Longer term, some of these stocks will continue to see some very good fundamental results as long as that defense spending actually comes out as expected. But when there is so much momentum, so much expectation built in a stock, you are bound to have some disappointments in the short term.
Well, it sounds like, if I didn't know any better, it sounds like you're describing the tech story, and you're not, which I think says a lot about this idea of the sustainability, perhaps, of that European reallocation trade. Is it over?
We still like Europe. We continue to be, if you want, selective in what we buy. But one of the things that we've started to do, because cyclicals have done so well in Europe, and there is still an economic momentum that is weak in the region, we have started to look more into high-quality stocks, which actually have underperformed. And so we have started to rotate portfolios. Always, hasn't been a big rotation, but we're starting to see some really interesting opportunities where higher quality stocks have underperformed.
Fabiana, it kind of sounds like everything's fine. It kind of sounds like, despite the wars, despite the tariffs, and despite a slowing economy, and perhaps being late cycle, everything is actually fine. When you're looking at some of these earnings numbers, we're talking to every CEO, we're looking at these numbers, and there's resilience. It's not massive growth necessarily, but there is resilience from a business perspective and from a consumer perspective. Is everything fine?
There is not resilience everywhere, and that is the key point. I mean, when you are looking at an index level, not everything is rosy. Valuations are substantial, and the economic momentum is likely to slow down. So there is resilience in certain companies when you have very high innovation, very strong competitive advantage, when you have very good management, but that's not everywhere.
I want to ask a final question on this Fed pick that we're expected to hear from Trump this week to replace Adriana Kugler. He said recently, even yesterday, that it could be just a temporary pick to the Federal Reserve Board of Governors. Is that something you are concerned about and are watching? I mean, I guess the market assumes it's going to be someone dovish, but if we get a wild card pick, could that be something that could jolt these summer markets?
Well, the good thing is that not only one person makes a decision, right? It takes a decision for the Fed. So from that point of view, I think in practice, it doesn't really make a big change. What it does, however, it affects sentiment, and that's a very fine line that the government in the U.S. is threading, because investors need to have confidence in an independent Fed.
All right, Fabiana Fedeli, M&G Investments CIO, walking us through the market trade this morning. We thank you so much for your time. Let's get a quick check on the core six. Of course, the heavyweights that tend to move the European market. Green on the screen, 6 out of 6, an A++ across the board. Novo Nordisk, I think, is the highlight for me, only because it's not moving in line with the rest of some of these heavyweights. Nestle as well, and I think that underperformance in both the pharmaceuticals as well as some of those Swiss stocks is really prevalent, or maybe a little bit of a hangover in terms of what we're seeing on the tariff picture and the trade picture from the United States. But again, the tech theme is in full swing. ASML, Schneider Electric, both catching a bit, perhaps playing a little bit of catch up to the news from Donald Trump's CHIPS announcement, but also the exemptions and the carve-outs that are baked into it. That is a picture of your core six. Let's check on some of the other individual stocks on the move. Louise Moon has that for us. Louise.
Good morning. As you say, a big day of earnings this morning, so we'll get into some of the movers that we're seeing. So first up, we've got shipping giant Maersk. They're up almost 6% this morning. That's after they raised that outlook. They're saying there's a lot of demand, particularly outside the US. Moving on to Rheinmetall in Germany. Their shares down more than 7%, so heavily in the red this morning. They've obviously been on an absolute tear over the past year and more. Their shares up heavily, so this is paring some of those gains. That's after they missed estimates this morning. WPP over in the UK down over 4%, almost 5%. They issued a profit warning in July and essentially kept things in line with that this morning, but the picture is still essentially very negative. And then finally, we're looking at Deutsche Telekom. So they raised that outlook. They raised their 2025 outlook. Shares, however, down in the red. There's a bit of weakness in Germany, so that's kind of offsetting the positive news this morning.
Louise Moon from our equities team, thank you so much for those movers. And Ollie, Rheinmetall has been paused on a volatility interruption. So we saw there it's down some 7%, but it seems like the stock has had a torrential 12 first minutes of trade.
Absolutely, yeah, down 7%. I wonder if it's going to go even further from here. I mean, the real question here, I mean, as we've talked about, it has done so well over the last few months. I think there's so many questions. I'm glad we're going to talk about it a little bit later in the show. We look at the backlogs for some of these defense companies. That's great for a defense company. That's guaranteed orders forever and ever. For a government that's using taxpayer money to buy this stuff, are they going to be patient forever? Like, when do we have a conversation about getting that output up more in a more serious way and actually getting deliveries of some of these arms?
Well, I mean, that's the issue, right? That's the issue that Fabiana was talking about when it comes to the valuations of some of these defense companies. Even arguably some of the valuations of these investment promises that are being made in the States. These are, at the end of the day, promises. The execution is what needs to drive the market moving forward.
And you could argue, you know, Trump having that meeting with Putin and Zelensky with perhaps a ceasefire on the cards could lead some of these defense valuations to come down quite a bit on the back of that, because then that urgency around that defense spending just softens throughout the year.
And we're back open, just bouncing slightly off the low, down 6% now.
Lots to digest in terms of these earnings stories, but we're not done yet. Coming up, we're going to dive into another one. Shares of ISG surging on the back of that earnings release. We'll speak to the CEO in just a few minutes. Stick with us. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
From our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is really important for us right now is to see where this is landing with China. This is something that has yet to get fleshed out, and once we have this in place, then I think we will see uncertainty ebb, and we will start to see customers actually understanding what they need to do now to adjust their supply chain to what is a structurally different trading environment given the tariff levels and the different deals that have been put in place.
CEO Vincent Clerc speaking to Bloomberg just a few minutes ago. I want to take a quick check at the share price here because they are thriving when it comes to these numbers, higher by 5.4%. And I think what's interesting about this particular earnings set, and I think the narrative we've heard from this morning across a lot of companies that are commenting on that tariff story is simply the idea that the fear of business freezes, business investment getting halted, even consumer confidence getting hit is not the narrative we're seeing. In fact, we're seeing resilience across the globe despite some of these really scary numbers that have been put forth in terms of the tariff impact. It looks like a lot of this has been pulled forward. A lot of this really speaks to the idea of how much cash so many of these corporates and these consumers are able to bring to the table. Let's have this conversation perhaps from another perspective, this time from a company that is very much exposed to the consumer. IHG shares also rallying this morning, higher by 5%. Their net profit beating estimates across the board. Their RevPAR also beating some of their projections. Let's see what's underneath the hood of this success. I'm pleased to say the CEO of IHG Hotels and Resorts, Elie Maalouf, joins the program. Elie, a pleasure to have you. Thank you so much for your time this morning. Walk us through your success story here. What is driving this positivity amid a world, as I just said, that is dealing with so much uncertainty? What is the secret sauce to your success?
Well, look, we're pleased with our team's performance in the first half of the year. As you mentioned, our RevPAR was up 1.8%, our operating profit up 13%, earnings per share up 19%. When you look more broadly, there was really very strong demand from our owner investors for our world-class brands. We had a record openings of rooms around the world, over 200 hotels. We also signed another 320 hotels into our pipeline. I'm really proud of our teams to reach the important milestone of 1 million open rooms around the world. I mean, an incredible milestone for IHG and all of our decades around the world. What's really driving it, you've got our main industry body projecting that this year, the travel industry will contribute over $12 trillion to the global economy. And we're very well positioned in our strategy and our model of being globally diversified, geographically diversified by brand segment, diversified by fee stream. We're very well positioned to capture a good share of that growth.
Well, Elie, talk to us a little bit about your China exposure here, because it feels like when you're looking at some of those RevPAR numbers, it's your Greater China business, that is perhaps starting to fall, starting to have a little bit of weakness. Talk to us about, one, how you plan on addressing that, and two, what you associate that drop to.
And so what we're seeing in China, we've been seeing it for a while. There is an overhang from the overbuilding of the residential market. That's been impacting the market for a couple of years now. And we said at the beginning of the year that China was bottoming out and that our business was bottoming out in China. And we're seeing that. Our second quarter RevPAR was better than our first quarter. Our second quarter RevPAR this year was better than second quarter last year. So we're seeing that bottoming out as the real estate, the overhang gets digested through the economy. Meanwhile, you have a $20 trillion economy with many sectors that are doing well. Electric vehicles doing very well. Technology, artificial intelligence doing very well. You saw their export numbers today up over 7%. You saw their GDP growth in the second quarter up over 5%. So it's not just a one-horse economy. It's a big $20 trillion economy that's still growing at over 5%. And within that, travel is still growing. If you look at our occupancy, it was basically flat, which means that the demand is still growing for our business. Meanwhile, we had record number of hotel openings and signings in China. We're looking at another record for the rest of the year. So, we're pretty constructive, optimistic about the long term in China. You got a middle class that's going to double over the next 10 years. You've got, strong technology investment. You've got an under penetration of hotel rooms, like 1/5 of what it is in the United States. So the long term is pretty optimistic in China.
But sort of gauging the consumer from everything that we're seeing, there's a lot of risk still. How vulnerable are some of your assumptions going forward, just given what we're seeing in the macro outlook, maybe some concerns about slowdown in the United States and across the world? And as a sort of addition to that, where are you confident that, that is more insulated and where you're willing to put sort of CapEx to work around the world?
Well, we're looking at the situation a bit over an arc of time. When you started, say, in March and April, you saw a lot of turbulence, a lot of tension, a lot of volatility around trade, around policy, rates, financial markets responded negatively to that. We think that was the peak. And we said in May that we believed we were past the peak. And here we are in August, and I think that's turned out to be true. Sure, there's still some uncertainty. And you know what? There's always going to be uncertainty in this world. But we think we're past the peak of that uncertainty. You've got more trade deals and trade tensions today. You've got, clarity on the U.S. tax bill. You've got financial markets that have recovered, in fact, at a record, really, in the United States and some parts of Europe at a record. And you've got, stable interest rates and inflation in the United States. Then when you look at the United States in particular, you've got employment still at a record. Yes, the jobs report last week wasn't as people expected, but it was still jobs growth. And so you've got employment at a record, you've got GDP growing at 3% in the U.S., clarity on the tax regime, financial markets at a record investment, capital investment in technology, on data centers, power. I mean, all that's a pretty good foundational base for constructive growth going forward in the United States.
And so those are the capital flows. I'd like to talk about the human flows, about where people are going, where you're seeing demand shift. I remember I spoke to the CEO of Accor in the spring, and he said that people from Europe had cut their sort of summer bookings to the U.S. down 25% in the wake of Trump's election and some of the headlines of what was going on at the border. I'd like to get an idea of whether or not that is something that you have seen or that is sort of dissipated. And also, there's been a lot of stories about people not going to some of the traditional vacation spots in Europe. It's getting too hot. What are you seeing there?
Those were comments made by some people during that peak of turbulence, right? March, April. Yeah. I'd say for the first half of the year, our international inbound in the United States was actually up year over year. A little less from some countries, a little more for some other countries. Interestingly, UK, Germany, China, Japan, those were positive year over year. Some other countries were a little bit down. So I think it's a very diversified world, and over time, there's been more demand of people going into the United States for us in the first half of the year. Fewer from Canada, more from some other countries. But I'll tell you the other thing. We're in all these countries. We're in over 100 countries around the world. So if you choose to travel domestically or go to a different destination, we're there for you too.
Ellie, we've heard a lot of a similar theme from European companies talking about how FX has affected their bottom line with the dollar weakening so substantially in the first half. How has your business dealt with the changes in FX?
Really hasn't been a big issue for us on our earnings. We're, again, broadly diversified globally. We're reporting dollars already as it is. Our biggest business is in the United States, but it's a domestic business, right? It's a domestic business. So we're not exposed to trade or to, moving goods across countries. So FX has not been a big factor in the first half of the year for us.
Well, Elie Maalouf, the CEO of IHG Hotels, thank you so much for joining us this morning. The stock coming a little bit down from the highs. We saw it up as much as 8% earlier this morning, now up 5.5%. And that'll be, one of the other big earnings stories that we've been discussing this morning. Some interesting sort of observations about where people are going, and that sort of sell America trade as far as tourism is not holding up.
Yeah, that was just a scare in May and April, but transatlantic travel, transatlantic shipping, as Maris was commenting, is more than back.
I think what's interesting, though, is that we're not crazy. This did happen. There was a pause in the data. We did see travel stop for a moment. We did see bookings stop for a moment, where everyone kind of stayed within their side of the Atlantic for a quick beat. The fact that it recovered that quickly, I think, is pretty staggering. And I think in maybe a year's time, we'll probably see more of this pattern and see this idea that maybe this kind of stop, this kind of pause, start kind of function is really behavioral change from a lot of companies after their experience with COVID. I think that's pretty interesting.
Yeah, well, this beat in IHG is leading the travel and leisure sector to be the best performing sector so far this morning. It's also lifting the likes of Accor. I know that's a business that you spoke to also, Ollie. So this beat from IHG doing a lot to shift the sector. Yeah, and going around elsewhere, I mean, Ryan Mittal bouncing off the lows, Maersk still up about 4%. So that's just some of the earnings that we've got to deal with today. In addition to Allianz, which we haven't spoken about yet, but we'll be very lucky to speak to the CFO after the break, get through some of their numbers. Massive inflows to PIMCO and the bond fund. That'll be next, and this is Bloomberg.
With the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number two. because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own niche.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This is the opening trade. We are about 30 minutes into the session today. What are we seeing? Broadly speaking, green across the screen with one exception, and that is here in London, the United Kingdom, down by 1/3 of 1 percentage point. Otherwise, though, Eurostoxx 600, I should say, trading reasonably flat. DAX as well, reasonably flat. The CAC getting a little bit of that action, but I think under the hood today, as of the earnings season, is where a lot of the action is going on. We know, for example, Rheinmetall dragging down Germany, and a number of other ones beneath the surface, Critty.
It's cloudy in London. That makes it a little bit of a wait on the FTSE 100. That tracks, I think. Let's talk a little bit about what we're seeing in the volume picture, because traditionally when you see volume this light, you do see markets a little bit on the autopilot to the upside. Today may be a little bit of a breather from that trend. Volume versus the 100-day average down about 28%. And it's showing up in a little bit of a mixed bag when it comes to what the stock 600 is doing. I want to go to the 52-week highs, though, because I think this trend is really interesting. Banking stocks across the board are getting a bit. BBVA, Banco Sabadell, you know the theme there. Spanish banks really in focus. And a lot of those, of course, might be simply a takeover story there. But Standard Chartered also getting a little bit of a boost, higher by about 1%. The anomaly amid some of that doomsday in the FTSE 100. But speaking of doomsday, let's talk about those 52-week lows, because that's where you are certainly seeing some pain. Of course, Merck is really taking a hit, down about 3.6%. They had some misses in their earning. Adidas as well, down about 0.6%. I will not call it Adidas. It's Adidas to me. And WTP, I think, is also interesting. We haven't hit this yet. This is an earnings story, a dividend cut, and a results miss weighing on those shares, Val.
Well, here's what else you need to know on this Thursday morning. President Donald Trump's sweeping new tariffs are officially in effect. Taken together, they will push the average U.S. rate to 15.2%, according to Bloomberg economists. But Trump is still surprising markets, announcing a 100% tariff on chip imports while exempting companies that move production back to the U.S. And over to Germany, where German industrial production has suffered its biggest drop in almost a year, driven by weakness in machinery and equipment. Pharmaceuticals and food also added to the softness. The print is the latest setback for Europe's largest economy as it reels from trade conditions with the U.S. And lastly, Rheinmetall shares are on a back foot this morning after the company posted worse than expected sales numbers. The results signal orders from increased European defense spending have yet to materialize. Critty?
Lots to digest there in terms of the earnings picture. Rheinmetall is certainly taking a little bit of a beating this morning, down a whopping 5%, as Valerie said. I think this is so crucial when we're talking about this earnings story. It feels like a lot of the heat right now, Ollie, seems to be actually in Germany, where we are seeing a consistent set of earnings misses across the board. SAP seems to be doing the heavy lifting in that index.
Yeah, I mean, as you mentioned, also Rheinmetall, we're seeing it there on the screen, down almost 5%. Off of some of the lows, it was frozen a little earlier due to some volatility when it was lost about 7% of its value. So significant downturn. But again, we put that perennial footnote there. This is a stock that has rallied unbelievably over the last few years, thousands of percent, since the beginning of the first war. And then another one we're actually watching this morning is Allianz, which is actually now up about almost 4 percentage points. The shares are higher in the insurance group after they posted a strong second quarter showing, with operating profit coming in ahead of expectations and massive inflows into the bond fund over at PIMCO. And we're very pleased to be joined by the Chief Financial Officer, Claire-Marie Coste-Lepoutre. Thank you so much for joining us this morning. I'd like to start there and what you saw in terms of the flows over at the bond fund and PIMCO and what you've seen actually so far in the third quarter.
Yeah, thank you very much, and good morning to all of you. So indeed, the Allianz Group has posted an excellent set of results this morning, and the second quarter is also building on an excellent first half overall. We have seen a growth, 8% coming from our three segments, which is very important, including asset management, including PIMCO. I'm coming back to that in a minute. And we are delivering a record level of operating profit, which we are building on a record level of operating profit already in the fourth quarter and the first quarter of this year. So this is definitely demonstrating the consistency of the delivery of our performance. Again, today we are creating value for our shareholder with a core ROE which is above 19%, which is an excellent result. And I will say even more importantly, in the current environment we are into, our resilience is very strong, and we have a solvency ratio of 209%, which makes us very comfortable when it comes to our outlook for the full year of 16 billion plus minus 1 billion. And indeed, you were mentioning that PIMCO has an excellent set of inflows. So basically for the first half of the year, we have seen almost 42 billion of inflows at PIMCO. The month of July is excellent as well. And what we see very clearly, I think the fixed income market is very interesting, right? Because opposite to the equity market that is much more moving to passive, in the fixed income world, investors value technical excellence. They value excellence coming from the investors, from the asset managers that can pick and select what are the best investments in the turbulent environment. And we have a lot of turbulence right now, so it's definitely a very good opportunity. And that's what we see as well, supported by the very strong performance and alpha captured of PIMCO.
And indeed, you have to sort of navigate the turbulence you talk about within the markets, but there's also a lot of geopolitical turbulence, and there's also a lot potentially of opportunities for Allianz itself in a world in which we're talking increasingly about bigger and bigger European champions, particularly in asset management. In order to compete substantially with the United States, that will require more scale. What role does Allianz want to play, and are you willing to go sort of aggressively into M&A? How are you thinking about that, and what the role of Allianz will be as a European champion?
So I think Allianz already today is very international. It's global. It's not European only. Look at PIMCO, that is like in the US. So we are really global, a global player. Our strategy in terms of M&A is bolt-on. So we want to add scale where it makes sense. As an example, in the P&C business where we are not in the top three, we want to achieve this top three position in our markets because this allows us to deploy our platform and to create value out of our platform, right? We are also focusing on distribution as an example, in particular also adding certain type of distribution access also for our asset management business. And when it comes to our asset management business, we are usually more looking at teams, picking up on teams to add to the setup. So we are very happy with the way we are now playing with our M&A games, and this is definitely creating a lot of value for the group overall, the way we are doing it today.
Claire-Marie, it's Valerie here. Can I ask you a follow-up question on that M&A? We know that you paused some talks with Amundi over some potential tie-up. Is that something you're looking to restart?
So, I mean, if you look at our setup today, right, so we have our three segments. So we have P&C, Life and Health, Asset Management. Those three are very important. They are really the cylinders that are creating the diversification, the resilience of the organization. So that's very important for us. And we are definitely not in the camp that asset management is not needed in our setup. We like having asset management. We believe it's creating a lot of value as well for our customers, in particular when it comes to the life and the asset management convergence. So, and then if you look at our setup within the asset management business, today PIMCO and AGI are very complementary, both from a geographical perspective and from a technical perspective, if you want, given the underlying offering. So I will say we are very happy with our setup today. We are not looking at changing it the way it is today, but we are also always open to any type of conversation. So we are constantly discussing, and if good ideas would emerge in that context I was mentioning, we would always engage with any parties.
Claire Marie, can you expand a bit on the second quarter profit that you did see rise in your insurance business? Is that something you see as sustainable, a sustainable track for the insurance business through the end of the year?
So I mean, we are planning, right, with on the insurance business side, on the P&C side, with 6 to 7% total business growth. That's what we are basically looking at. We see different type of trends, right, because we have a very big portfolio. So across geographies and across line of business, it's a bit different. So to give a general answer is always a bit difficult. But maybe I can give you some highlights on what we have seen. So in particular, in the first half of the year, I think we have seen very strong proof point of the strategy we were presenting in the Capital Market Day when it comes to our platform play, which is really like building platforms on which we can access, we can build B2B business, which is really growing nicely. That's what we have seen with the growth of Allianz partners in the first half of the year. Also like a different type of platform play, but very important for the future, right, in building the right type of cost. In motor insurance, as an example, is our direct play, and Allianz Direct, as an example, in the first half of the year, had a total growth of 14%, which is quite impressive, I will say. So we are very confident, and we are building different type of engines to allow high quality growth, tapping into our technical excellence to continue to create value, which is ultimately the most important piece of all.
Claire Marie, it's Creedy in London. Talk to us a little bit about the euro component here. When we look at fund flows, especially when it comes to American or international investors into European money managers, there's always that question of currency exposure. And lately, we have seen a little bit of some of that momentum come out of the euro. We're looking at about a 115 handle at the moment. Talk to us about how that shows up, or maybe doesn't show up, in your bottom line.
So it does show up in our bottom line. Just to give you a sense, in our operating profit for the first half of the year, it represents 160 million against 8.6 billion. So that gives you an order of magnitude. In the second half of the year, we will likely see a bit more of a translation effect from the weaker FX dollar against the euro. So it has some impact into our numbers. When we do our planning, we always take into consideration such type of economic scenario. So that's coming within our range. So that's why we are very confident in general. There is another dimension which I think is even more fundamental and is very important, is the fact that we hedge our dividend over a sort of 10-year logic, but with a 1 year, 100% type of logic, meaning we are securing the cash in order to pay the dividend to our shareholder, which is obviously a very important item when it comes to ultimate value creation.
And as an insurer, you're navigating not only the sort of uncertainties within the market, you're also navigating some of the uncertainties within the insurance sector, and part of that is natural disaster. In the first half of the year, we had a report out from Munich Re saying that there were more than $80 billion of insured losses in the first half, which is well above the average, and half of that was from the LA fires, $131 billion if you take in uninsured losses. Looking at the picture there, and as somebody who does this for a living without the sort of politics, what are you seeing in terms of the picture for the risks associated with natural disasters? We know the value of assets is going up, so those numbers are going up, but also are the frequency of these events going up, and how does that play into your thinking on insurance?
So you are right? If you just look outside of the window currently, I mean, we have some luck today because the weather is beautiful in Munich, I think, in the background, but it was terrible the last few days. It was pouring rain, like not possible. I think it's extremely dry in the UK, way too dry. So we see a lot of patterns which are not the usual patterns, so which are clear signals of climate change that we have to take absolutely seriously. The way we are handling it is that on the one hand, we do whatever we can at our level, but also fundamentally, we deploy a lot of technical excellence, which is the only way for us to be able to do that. So we leverage the insights we get from the data, we capture the right data, we do the right modeling in order for us to manage extremely well the accumulation, so that we can secure the famous resilience I was referring to and provide the right level of management of the volatility, which is absolutely essential. What we do as well is that we engage with our customers, in particular in part of the world where cat insurance or nat cat insurance is not mandatory, where you need to do a lot of education to explain and support the customers before it happens. And also, obviously, we are on the ground when things happen. And you may remember that last year, our numbers were impacted by severe natural catastrophes, in particular in Germany, and we demonstrated how we act on the ground, which is absolutely essential for what we cover and what we stand for as an organization.
All right, that was the Allianz CFO, Claire Marie Coste-Leput. Thank you for joining us after your beat in your second quarter earnings. Now, coming up, Siemens shares are under pressure, even as the company reported a rise in both orders and revenue. More on our conversation with the CEO next. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good Thursday morning. We are 47 minutes into the session this morning, and we find Siemens 47 minutes in, down about 1 percentage point after revenue and orders rose on robust demand for rail products, which helped offset a sharp decline in its software business. I spoke with the CEO, Roland Busch, a little earlier today and asked him if there will be a turnaround in the foreseeable future.
So I wouldn't call it a turnaround compared to what was happening in the past, this kind of recycle recovery. I always said I expect the Chinese market to come back gradually, and that's what we see. We see semiconductor business, for example, coming back, the automotive business having a slight increase. So they're coming back. Chinese government works on cleaning out the real estate problems on the one side, investing in high-tech manufacturing in order to drive productivity in a competitive environment. They're investing also in green technologies. So therefore, that's everything what they do now is tailwind for us, because we are the incumbent in automation. We drive digitalization in this country as well, but also a strong foothold on electrification that helps the market. According to our expectations, would come back, but gradually.
And if the Trump administration is to be believed, there are literally trillions and trillions of dollars that are coming into the United States in order to build up manufacturing capacity that should favor, theoretically, digital industries. Have you seen any sign of that in terms of any kind of efforts from other companies that you might be involved in? And do you really take that number at face value?
So we see some pickup there also from order intake in the United States for the automation business, but also revenue. It's too early to say. Again, nobody was investing until the tariffs somehow settled. So we see, I mean, you might have learned that Audi is thinking about building a new production site in the United States, the first one. So it will benefit digital industries and automation in particular. Why? If you really relocate manufacturing to the United States in a market which has high labor cost, and if you get labor at all or trained labor, the best thing what you would do is make it as automated and as digital as possible, base it on a digital twin with digital threads, and there Siemens technology comes in. So we are market leader from that perspective. We can help every of our customers to really run a manufacturing site highly automated. That's what you want to do if you invest in the United States, and Siemens is here to help.
So the chief executive officer of Siemens there, Roland Busch, really interesting company with sort of exposure to a lot of the different themes we talk about. Obviously, tariffs. He said a little earlier in the conversation that he was not really happy with the deal, but he's happy that there is at least a deal, brings some clarity. They're also exposed to the data sector story in terms of their smart energy and how they sort of interplay with the grid. So that's bullish for them as well. In addition to that factory build out, which we're seeing and we're hearing from people who are actually involved in building and automating factories in the United States, you're starting to see evidence of, Kriti.
It's a fascinating one as we talk about just kind of a lot of the issues that German companies in particular are facing when given in the last 6 months. They've been kind of the golden child of Europe, and it feels like when it comes in an already big backdrop of reallocating to this region. Of course, another kind of golden child of Europe is Rheinmetall. They're not having such a great day today. German defense company, of course, recording an operating profit of 475 million euros in the first half of 2025. That was a miss on the average analyst estimate. Of course, comes the backdrop of orders from increased German and broader European defense spending have yet to materialize. So basically the fears everyone had about this company actually coming true. Jerry Doyle, Bloomberg's global defense editor, joins us here. Jerry, just walk us through basically this manifestation of all of our fears. How real is that underperformance?
The underperformance has to come in the context of the fact they still expect their sales to increase by 25 to 30% this year. There's a lot of upside. Where the uncertainty comes in, and I think what disappointed investors, is that they didn't change their guidance based on the fact that there is increased European defense spending now. That NATO countries have agreed to increase their defense spending to up to 5% of GDP. That's a lot of money going into the defense industry, and I think the expectation was that was going to manifest itself more quickly in the results from companies like Rheinmetall.
But the story around future orders, what kind of picture is Rheinmetall painting for us about, orders to come and how quickly they could?
They did make a point of saying that they could adjust their guidance in the second half of the year. And one of the reasons for that is the German parliament, when it comes back from its break this summer, will pass the budget for the country. And that could include funding for as many as 5,000 Boxer armored fighting vehicles, hundreds of Leopard 2 tanks, other war material that is going to be funded by the German budget. And obviously, those kind of numbers would have a big impact on the bottom line of a company like Rheinmetall.
I'd like to talk also a little bit about the difference between backlog and delivery, right? This is something that's blowing out within the defense sector. We see Rheinmetall now with another record backlog of 63 billion euros. That's up from 40 billion last year. Is there a point at which there's going to be more pressure from governments who are saying, listen, we're giving you taxpayer money, we expect delivery? And where does that play into the story for Rheinmetall?
I mean, I think that pressure is already there. There's a lot of immediate demand for the products, things such as, again, the armored fighting vehicles, artillery ammunition, that stuff. And there's been pressure building for years to deliver that more quickly. So I think that might play into what we've seen today as well.
All right, thank you for joining us. That was Jerry Doyle, Bloomberg's global defense editor, on the Rheinmetall miss in their earnings today. I also do want to check on the European chip makers after Trump announced a 100% tariff on semiconductors, but it came with some decent carve-outs. We're seeing the likes of ASML, ASM trade pretty positively, but to the downside, STMicro and Infineon. So it does seem like not every company is winning from these exemptions, with those in the red maybe being an example of those who haven't pledged U.S. production or pledged U.S. investment.
I mean, that's the trick. That's the secret sauce of success in this market, it seems. And Apple was a great example of that yesterday, despite having massive tariff exposure to China, to India, and other places around the world. Let's talk about what else is coming up in the next 24 hours. You can tell what kind of day it is when the BOE rate decision takes a back seat. That, of course, is coming at 12 p.m. 30 minutes later, it is the press conference. Plenty of earnings and a series of data throughout the rest of the day as well, plus that 30-year bond auction. But I think for now, in the next few hours, let's focus on that BOE rate decision. We, of course, have our correspondent on the ground with us. Bloomberg's Lizzie Burden has us covered. Lizzie, walk us through what we can expect in the next few hours.
Well, Kriti, if you get a dovish tilt from the Bank of England today, of course it would weigh on sterling, but it's going to be hard to make a dovish tilt when you've got inflation at a 17-month high, an expectation that they're going to raise the short-term inflation forecast, and this cut today fully priced. Now, if they emphasize the labour market weakness, then you may see more cuts being priced in after today. But look, this stagflationary backdrop is precisely the reason that lots of economists, most economists, are seeing a three-way vote split today. 2 voting for a half-point cut because they're worried about the growth backdrop and the labour market. 2 voting for a hold because they're worried about inflation being sticky, the likes of Hugh Pill and Catherine Mann there, and the rest for this quarter-point cut. Now, the real surprise could come if gradual gets dropped from the guidance, if the forward path for rates is no longer described as gradual, because maybe that would be a signal that they're veering off this quarterly cadence of quarter-point cuts.
All right, Lizzie Burden on the BOE that we can expect in a couple of hours. She, of course, will be live on the ground and give us those updates. We thank you so much. Let's just recap what we've learned in the last, I want to say 24 hours. We've learned that earnings are resilient everywhere but Germany, it seems, in the defense sector, which is already still doing not too shabby, but just kind of having to meet some high expectations. There's still tariff uncertainty, geopolitical uncertainty when it comes to Russia, but if anything is saving the day, it's tech.
Yeah, and I think it's just sort of so interesting that we have such an aggressively bullish picture. But again, I think there's one point to sit on that Dan Curtis brought this to our attention, is that $100 billion announcement from Apple pledged to the United States on top of 500 additionally to what they've pledged. They have only ever spent $166 billion in the last 30 years on CapEx. I think it's also a sort of broader conversation about kind of an era now of sort of flagrant, potentially corporate deceit, and that's something just as being seen as part of the game in the United States now. Is that a healthy thing?
Well, look, we've also heard from many of the CEOs, CFO interviews that they're touting these strong relationships to the U.S., so it's possible these companies pledging this kind of investment only to keep in the administration's good books.
Yeah, we'll see how this all gets priced in the market. Right now, everyone's on summer holiday. We'll take good news where we can get it. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Donald Trump's sweeping tariffs take effect in a fresh test for the global economy, while the president eyes a 100% tariff on semiconductors with carve-outs for firms investing in America. Trump talks up the chance of a meeting with the leaders of Russia and Ukraine in a bid to broker peace between the two countries. Plus, the Bank of England set to cut rates to a 2-year low as policymakers contend with a slowing economy and mounting concerns about the labor market. So we, of course, keep an eye on sterling. All of that will play out with that decision from the Bank of England at 12 p.m. London time. You can see sterling currently at 133.76. Lizzie Burnham outside the Bank of England also saying we're probably expecting a 3-way split once again. Now, we focus firmly on NASDAQ futures with the gains of 0.3%. Again, European shares, I would say right now, we can get to it in a second, struggling for traction. We had some disappointing economic data. It tempered some of the relief that we saw when President Trump yesterday announced the carve-out for companies that invest in the U.S. from his threatened 100% tariff on chip makers. So we look at chip makers with NASDAQ and the like, and then the European market. Again, a lot of the focus will be on the earnings. I think I counted about 22 companies so far, but the focus is really trying to understand the supply chains. We know that with the announcement of President Trump, there was a lot of concern about exactly how it would work, and companies worldwide really trying to figure out how to make sense of that threat. The CAC 40 gained some 0.6%, the DAX 0.8% higher. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Donald Trump has been threatening them for months, and now its sweeping new tariffs are officially in effect. Taken together, they will push the average U.S. tariff rate to 15.2%. That's according to Bloomberg Economics. But Trump is still surprising markets, announcing plans for a 100% tariff on chip imports while exempting companies moving production back to the U.S.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
Well, in a moment, we'll unpack the economic impact with Yari Sten from Goldman Sachs. Now, let's dig into some of the detail. We're joined by Jill Deesis in Hong Kong and Ross Matheson, our EMEA News Director. Ross, we're also really focused. We'll get into tariffs in a second, but we're very focused on this possible meeting between Vladimir Putin and Donald Trump. And the Kremlin, according to IFX, says that actually the meeting will take place as agreed in the next couple of days. It's not market moving, but it actually changes quite a lot for Europe.
Well, it could be very significant if this meeting does go ahead. We don't know the location, we don't know any of the terms, and we don't know what they will have agreed before they sit down, because for both Vladimir Putin and Donald Trump to go into a meeting, they want to have a clear sense of what they're going in to get and how they're going to get it, because the risk is high for both of them, particularly for Donald Trump, in sitting down, face to face with the Russian president. The question is, are these threats of hitting Russian oil being sold to India, to China, to elsewhere, secondary sanctions, are they the thing that's putting the squeeze on Vladimir Putin? Is he showing that Trump is exasperated with Vladimir Putin? Is that now coming through? And in turn, what does Vladimir Putin offer? Is it he'll stop his airstrikes on Ukraine? Is there going to be even talk around territory at this point? So yeah, high-risk meeting. Let's see if it actually does happen and where it happens. And then, of course, what are going to be the parameters going in and coming out?
Yeah, and of course all this is happening in the middle of these, tariffs going up. Jill, we had this other surprise from President Trump, because he basically says that there's a likely impact of 100% tariffs on U.S. chip imports unless he's carving it out, you're investing a lot of money in the United States.
Well, Francine, I think that unless is pretty big. I mean, the way that, we've heard from Donald Trump, and we just played a clip a few moments ago, kind of talking about how he's saying, well, if you're building or investing in the United States, then you could, conceivably be exempt from this. I mean, again, we haven't seen anything written down in the form of a white paper or anything like that, but that would conceivably cover, all of the major chip makers. I mean, think about it this way, Francine. So, for a lot of, semiconductor companies, chip designers and such, they're working with companies like Taiwan's TSMC, South Korea's Samsung, these companies that actually have the fabrication plants that are capable of, creating these chips that these companies are designing. And both of those companies have plants in the United States. We know that, TSMC has spent years building fabrication plants in Arizona. We also have, Samsung's building plants in Texas. So, you do have this capability that's already in the United States. Now, of course, not all the world's global demand and capacity can be built out of, just these, U.S.-based plants. But if you're reading Trump at, this most generous sort of broad interpretation of what he's saying here, then I guess, that does qualify for exemptions if you've got these companies that are already building in the United States or that continue to build in the United States. So I do think that, again, as with a lot of things, Trump, this classic idea of, you're listening to what he's saying. A lot of this is still a bit nebulous. Some of it is a little bit vague. But again, I think the reaction that you're seeing today is based on the fact that, reading that interpretation of what he's saying in the White House, it does seem like a lot of places, a lot of companies are going to be exempt.
Yeah, and Roz, I mean, to Jill's very good point, the thing is that every time there's an announcement like this, it kind of scrambles, trading partners and companies to try to make sense of what the president wants and the threat out there. And then, Trump also doubling tariffs on India. So what do we read into that?
Well, it's interesting again to see how quickly the relationship with India seems to be turning, because, of course, there's a strong personal relationship between Narendra Modi and Donald Trump. And so what's behind that? I mean, obviously, he's singling out India over Russian energy. He's not going for China, meantime, although China imports a lot of energy from Russia, primarily because China has that key leverage in rare earths. It has something that Donald Trump very much wants, and he really wants to keep that trade truce going with China, and he perhaps wants that sit-down meeting with Xi Jinping at some point. So what is it that's getting up his nose, really, on India? And where did this come from? Does it track back, perhaps, to the tensions that we saw between India and Pakistan? I mean, India was quite annoyed at Donald Trump for just declaring a ceasefire and putting India and Pakistan, in India's eyes, on the same footing as kind of semi-equal partners. Does it track back to that? Is it something else? But for whatever reason, Donald Trump has decided that India is the one in the crosshairs. And the question for India is, how do you respond to that? We're seeing that India actually is seemingly digging in here. They're saying, Narendra Modi is saying, I'm protecting farmers, I'm protecting industry here. We are going to buy local. We're going to buy goods that are made by, he said, the sweat of Indian people. And he's, digging in. So is there a way to get this to diffuse between them? It's hard to see. Maybe it's a direct phone call between the two of them again and the two of them sorting it out.
Yeah, and Jill, I mean, to that very good point, I mean, it was also, I thought it was quite bizarre actually having Tim Cook, the chief executive of Apple, in the White House with Trump declaring that Apple is coming home with this new investment. I mean, can we export more, can more companies do the same? And how did you read the room yesterday?
Yeah, I think, Francine, it's become very clear to a lot of these companies that sort of, bending the knee, kissing the ring, this idea of placating Donald Trump by, making this, appearance at the White House and pledging these types of commitments does seem to ingratiate them with the U.S. president. I mean, obviously this big announcement from Apple yesterday, you've got a $100 billion US dollar commitment that they're talking about in terms of building out domestic manufacturing, adding to an existing plan for $500 billion worth of investment. Obviously, we have to see what that ultimately looks like, long term. I mean, over the course of Donald Trump's, presidency, his second term in the White House so far, we've heard plenty of massive commitments from all kinds of companies that have said this. I think, what that actually looks like once, a lot of these plants are built and what, the supply lines look like really kind of remains to be seen. But this is a playbook that we've seen before. I mean, we saw plenty of, major tech executives show up at Trump's inauguration. We've seen them, take meetings with Trump in the White House. We've seen even, international companies look at SoftBank and Masasan, talking about investments earlier this year with Trump. So I think if you're any of these companies and you're trying to think of ways that you really sort of play the rule book here with Donald Trump, a lot of it ultimately comes down to, how do you end up ingratiating yourself with Donald Trump? You make these big flashy announcements. Maybe you show up at the White House, you take these meetings, and that seems to be the strategy, that a lot of companies are really kind of relying on to sort of navigate their way through otherwise, a somewhat unpredictable administration.
Yeah, interesting to see that it works actually if you're chief executive, maybe less so if you're head of state, to Roz's good point about Narendra Modi of India, and then also Switzerland now with the highest tariffs amongst the Western world. Roz Matheson and Jill Deeses, thank you as ever for joining us. Now joining us to talk about the markets, Yari Sten, chief European economist at Goldman Sachs. Yari, we'll get onto the Bank of England, we'll get onto Europe in a second, but we did have, I think, 3 Fed policymakers yesterday voice concern about the U.S. labor market. Does that change, your house view on the Fed because of the economy and therefore potentially also what it means for Europe?
It doesn't actually. We are expecting the Fed to cut in September, in October and December. That's been our forecast for some time because the US economy is slowing down. And so we saw the payroll numbers, the latest, as supportive of that. Of course, the main event there was really the big downward revisions, and those tend to happen around turning points in the economy. So we do think that was an important signal. And the recent Fed commentary, I think, is consistent with the idea that the FOMC wants to cut rates here to support the economy. And so we think we're on track for a cut in September.
Yeah, this is what Mary Daly had to say, actually, about the labor market. Here she is.
Once the labor market stumbles, it falls. And it falls quickly, and it falls hard. So you don't want to get into that situation. So all this means, as you put it together, that I think we'll likely need to adjust the policy rate sometime in the coming months.
You're expecting a cut in September. Do you also worry about inflation going up because of these tariffs?
We do think inflation will go up, but we think those are going to be temporary effects. They're really price level effects rather than inflation effects. We think they will be sizable, but we also think the FOMC is inclined to look through that to a large extent and focus on the labor market, because that is really what is helping you to predict where inflation will settle once these price level effects from the tariffs wash out. And so, that's why, despite the prospects of inflation moving up in coming months, we think they will cut really with an eye to the labor market and an eye to the slowing economy.
Well, let's also talk, Yari, about the Bank of England. It's today. Of course, markets are expecting a cut, a quarterly cut. Market thinks rates will settle around 3.5%. I mean, that's 50 basis points away if we get that cut today. Do you think we're starting to approach the end of the cutting cycle?
I I don't think so. I think there's still more to do for the Bank of England. As you say, we'll get 25 basis points today. I think we will also get a renewed pledge for a gradual decline in rates. Of course, they're going to also say that they want to be careful, which I think basically means that they're attentive both to higher inflation, but also to a weakening labor market. They can adjust the pace as we go along. But ultimately, we do think the labor market is weakening. We are seeing that pay growth is now slowing. And we also expect fairly subdued growth for the UK over the next year or so. Rates are still high at current levels. And so we do think these cuts will continue. I think for now, we will stay on a quarterly cutting pace, given that there are still questions around inflation, and inflation has surprised to the upside in recent months. But ultimately, we think rates will fall more than what's currently priced. So we have them falling to 3%. Below the 3.5% price, which we think would be a more neutral and more normal level of rates for the UK.
And Jari, how are you expecting the split on the MPC today?
Yeah, that's of course always a very hard one to guess. I think the safe guess is that it's going to be a three-way split, that you're going to get support for 25, support for 50, and support for a hold. Our best guess would be that we get 6 MPC members for 25 basis points, that we get 1 for 50, that would be Swati Dhingra, and we get 2 for a hold, which would be, in our view, Hill and Mann. But again, pretty hard to guess, and I think, we could get a second dissent for 50, Taylor, for example, but there could also be some shifts on the other end of the distribution. But I think, bottom line is going to be that I think there's going to be a good amount of support from the center of the MPC for the cut today.
How worried are you about the labor market? And, we've had an adjustment in April because of Nick's the minimum wage increase. Are we past the worst?
I think we are slowing. I think we continue to slow. I don't think we're falling off a cliff in terms of employment. The difficulty is, of course, the data. We have data quality issues in the UK. So what we tend to do is 2 things. One, we average across different labor market indicators that include the usual LFS employment data, also the payee payroll data, but then also surveys. And what we're finding now is basically that the labor market has been slightly contracting over the last few months. And so I think the incoming data is supporting that. The other indicator we look at is the vacancy to unemployment ratio. This is one that the MPC has emphasized, which gives you a sense of slack in the labor market. And here we continue to see significant drops in vacancies relative to unemployment. That's both because vacancies are going down and because the unemployment rate is going up. So I think if you cut through the noise, we are seeing a significant slowing in the labor market. We think that will continue, but it's not the case that we're seeing a very sharp downturn at this point in the labor market. It's really more a steady deterioration that we think will continue.
Right. Jari, is it fair to say that it's actually just it feels harder to set policy, interest rate policy for the UK than it does for the Eurozone? And if you agree with that, why?
I think that's right. I think the reason is that you're getting cross currents in the data with regard to the inflation outlook. So on the one hand, the spot data continues to surprise to the upside. So, in the latest inflation report, headline inflation was higher. Headline inflation is, probably going to track close to 4% over the next few months, which is obviously too high. At the same time, the more forward-looking indications, like the labor market we've just talked about, like the growth outlook, pay growth, that is slowing. And so the tricky situation for the MPC here is that you really have to trade off this high spot data versus the weakening forward-looking data. Yeah. And I think that is really the extent of disagreement on the MPC. The different members put different weight on the spot versus forward perspective. And that is harder in the UK than it is, for example, in the Euro area, where inflation now is close to 2, policy is close to a neutral level. So I think it's much more straightforward at this point for the ECB.
Yari, thanks so much, as always, for your great insight. Yari Stendler, Chief European Economist at Goldman Sachs. Now, if you're just joining us, let's recap some breaking news from a little bit earlier. Russia and the U.S. agreeing on a venue for the meeting, and together with American colleagues, they're starting to work on specific issues. They're basically saying that Russia is saying that Presidents Vladimir Putin and Donald Trump will meet for summit talks within the next few days. So that's the very latest, of course, on that possible meeting. Coming up, but we'll speak to Mario Greco, Zurich Insurance, reporting a 6% gain in profit for the first half of the year. That's next, and this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Welcome back, everyone. Now, Zurich Insurance has posted a 6% gain in profit for the first half of the year as the insurer shook off losses from the California wildfires. Now, joining us now is Mario Greco. He's the chief executive of Zurich Insurance Group. But Mario, as always, thank you so much for joining us. Look, there's a lot going on in trade and tariffs and interest rates. So where do you think we are? What kind of cycle is the insurance business looking at right now?
Yeah, the markets are still very strong. The economies are growing. Inflation is subdued everywhere in the world. Investments are coming. There is a lot of construction. There is a lot of infrastructures being built. This is very supportive for our business, as our numbers show. The markets hate uncertainty, and so, in a sense, clarity is much better than any results. Clarity matters much more than the level of tariffs. And so I think, I'm confident that from now on, we will have even better markets than we experienced in these 6 months.
What does it mean for pricing and fees and premium in the insurance sector?
Yeah, the insurance landscape is very differentiated. We have some lines of business like motor, where price increases have been pretty high in the first 6 months and will remain relatively high through the end of the year. Liability is hiking strongly because of unprofitable results over the past years. And we really look forward to this continuing over the rest of the months and the next years. Property, on the other side, is softening, is reducing the growth of rates, And this is fair enough because property had very good results for insurers over the past years. And so customers have absolutely fair right now to have reduced price increases for property. But overall, the margins are healthy, and we're very much expanding in mid-market customers, in small and medium enterprises, and in the specialty area.
So given everything that you've laid out and everything, frankly, that's going on, what's the next strategic step for Zurich? How important is M&A in this equation?
M&A for us is always an opportunity that we consider, but has to fit into our strategy, which is now to grow our mid-market portfolios and the specialty books and the small and medium enterprises, and has to be at disciplined financial conditions. If we find opportunities that fit into this, we will definitely consider. We have the financial resources, we have the capabilities, we have the interest to do it, but it must be according to what I said, to our strategic principles, and it must be financially disciplined.
How are you implementing AI, and actually are you expecting any cost saving from that then you could, if you find the right target, spend that on?
Right, that's a great question. Look, AI so far has been helping us optimizing our expense basis or the customer service. That's useful, and we're grateful to AI for that. But in a sense, it's not enough. We're looking at ways in which AI can help us revolutionize the insurance business model. Insurance is a business model that goes back in centuries, hasn't changed much. We just went from papers to computers, but we kept doing the same things. I think with AI, there is really an opportunity to rethink about the way we do the business and do it in a very different way. This is what we're really busy with these days. We continue tinkering, but the most promising development is to look at AI to completely revolutionize the business model.
Mario, could you give me a sense, actually, of, when you look at currencies, and it's very clear that the Swiss franc has been quite strong, and actually dollar has been weaker. Will that impact your results?
Of course it does. Currencies had quite a strong impact on our results, and so our results stand out even better given that. However, we're kind of arbitrage naturally because we invest assets in the same currency where we have the liabilities. The most concerning aspect for our investors is on our dividends. And the message that we want to give today is that we already generated the cash to pay the dividend this year. And so the dividend is safe and already here in Zurich. But of course, we will continue working for the next years.
Okay, Mario, very quickly, I mean, what's your take on the Swiss-US tariff deal?
Look, I'm confident that Switzerland will find a way to remain strongly competitive, and I'm confident that Swiss companies will continue to report the manufacturing, the industry, the pharma, very good profits. They'll find a way to do that.
Mario Greco, thank you so much, as always, for joining us. That was, of course, the Chief Executive of Zurich Insurance Group. Still ahead, the Bank of England expected to cut rates today. We'll have the details next, and this is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Donald Trump's sweeping tariffs take effect in a fresh test for the global economy, while the president eyes a 100% tariff on semiconductors with carve-outs for firms investing in America. The Kremlin says Presidents Vladimir Putin and Donald Trump will meet for summit talks within the next few days. Plus, the Bank of England is set to cut rates to a two-year low as policymakers contend with a slowing economy and mounting concerns about the labor market. Now, one of Donald Trump's highest tariffs is now in effect on Switzerland after the government failed in its last-ditch effort to get the U.S. president to lower the rate. The 39% levy on exports from Swiss watches to Nespresso coffee capsules is the highest amongst developed countries and compares with just 15% on the European Union. Well, joining us now is Thomas Bohrer. He is a former Swiss ambassador to Germany and founder and managing partner of Dr. Bohrer and partner. Ambassador Bohrer, thank you so much for joining us. First of all, I mean, I don't know if it feels like diplomatic catastrophe, showing up to Washington, not meeting with the president, and then coming back empty-handed.
No, I wouldn't call it like that. It's clear that the United States is a superpower, Switzerland is a medium power, and we have to understand that President Trump is not the normal politician. He sees himself as a transactional leader, and diplomatic behavior is not one of his priorities. And, you know, Switzerland, I can tell you how it will play out. Switzerland will come up in the next hours, hopefully, with a strategic action plan, how to tackle the huge trade balance of 40 billion. Right. Because this trade balance is the only thing which interests President Trump. Other facts he is not interested in, so we have to tackle this issue.
Yeah, but first of all, I mean, look, President Gerhard Schröder seems to have refused to budge before Trump, right? This was ahead of the announcement of the tariffs. Was that a failure of a strategy, or did she do the right thing?
The Swiss government thought that the United States are still working in normal diplomatic terms. That means an agreement negotiated on the level of ministers will afterwards not anymore be changed by the president. That was the case before President Trump took office. That was the case with the European Union and others. You can rely on the commitment of ministers of commerce or the USTR. But as I said, for President Trump, everything is negotiable till he has signed the deal.
Do you think Switzerland will implement countermeasures to the tariffs?
No, we will not implement countermeasure. We will come up with a strategic action plan negotiated by the Swiss government and the private sector and really tackle that 40 billion trade deficit. We will tackle the issue of the gold smelters, which adds 20 billion to that trade deficit. I think we should export these smelters to the United States and make the United States the biggest gold smelter in the world. We have to tackle the issue of the pharmaceutical exports we have. And Novartis Roche has already promised that they will invest billions in the United States and make the United States a huge pharma producer. By that, we will reduce our trade deficit again. And then we should, and we will, like the European Union, make promises that Switzerland will buy over the next 2, 3, 4 years. Billion of dollars of American goods, LNG, arms, probably also beef. That's going to be the strategic plan the Swiss government will reveal, hopefully this afternoon already.
So, Ambassador, I mean, the strategic plan is basically giving in to what President Trump wants 100%, if not 120%. There's no strategy in getting closer to the EU or getting closer to the Far East. It's basically trying to work with the president, giving what he wants, put money in the U.S. to alleviate the tariffs so that he doesn't get madder?
The United States is our most important trade partner. And if we do not want to have industrial recession, we have to come to terms with President Trump. That does not mean that we do not come up with new trade deals with other areas of the world. I think that's one part where Switzerland is very strong. We have a free trade agreement with China. We have a trade agreement with Latin America just now negotiated, with India, with Indonesia, and that is the way we have to continue. And of course, also, we have to come to terms with our trade relation with the European Union. So do A and B, and not only find an agreement with the United States.
Does it show, do you think this is a dark hour for Switzerland? And actually, does it really show the limits of openness and global integration that has really been the defining factor of Switzerland over the last 30 years?
No, it's not a dark hour. It's one of many challenges. And we overcame this kind of challenges over the last decades very often. Remember 2007, 2008, the huge euro shock, where in one day the euro became much weaker to the Swiss franc. That was a heavy burden on our industry. The corona shock, now the failing or the very weak dollar, these trade negotiations. Switzerland, over the last decades, has always proved that they overcome these challenges, and we come out stronger if we take the right measures.
All right, Thomas Bohrer, thanks so much for joining us. He is a former Swiss ambassador to Germany, founder, managing partner, Dr. Bohrer & Partner. Now back to a developing story out of Russia now, with the Kremlin confirming that President Donald Trump will meet with President Vladimir Putin in the next few days. It follows comments from Trump about potential talks between the leaders, as well as Ukraine's Volodymyr Zelensky.
We had some very good talks with President Putin today. And there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
Now, the effort to convene a meeting came hours after Putin hosted U.S. Special Envoy Steve Witkoff for 3 hours of discussions in Moscow. For more, we're joined by Tony Halpin, who leads our Russia coverage. Tony, thank you for joining us. So, Trump-Putin meeting, what can we expect? What needs to happen before the two actually sit down?
Yes, the Kremlin has said this morning that they're working out the details with the American side, that they've agreed that there'll be a meeting within the next few days. He said they're working on next week. They've decided on a venue, though he hasn't disclosed that yet. And he said that Witkoff raised the idea of a trilateral meeting involving not only Putin, Trump, but also Ukrainian President Zelensky, but that Russia hadn't really responded on that question, that they're focused on the bilateral talks between Putin and Trump. Clearly, what we yet don't know is whether or not that Russia will declare a ceasefire before that meeting takes place.
So, Tony, are we any closer to a ceasefire on this war? Does any of that need to happen before the two leaders sit down?
Well, I think certainly from Ukraine and Europe's point of view that they want to see a ceasefire in place before any sort of meeting takes place with Putin to try and reach a longer-term settlement. The US, too, has been pushing for a ceasefire, and that was part of Trump's deadline, the Friday deadline tomorrow, for imposing secondary tariffs on purchases of Russian oil that Putin had to agree by that date for a truce. We don't yet see from the Kremlin that there is a willingness by Putin to stop the fighting, but clearly, as they've indicated, there's a plan for a meeting within the next few days, and it would be quite surprising if there wasn't pressure on the Kremlin to agree to at least a short-term truce while that meeting took place.
Tony, will President Zelensky be there? How much of a difference does it matter on the global stage if it's a two-way meeting or a three-way meeting?
We don't yet know. I think the original proposal was that Trump would meet with Putin and then meet with Zelensky, and potentially there would be a three-way meeting involving all three leaders if those talks went well. We're waiting to see whether or not, in fact, President Zelensky is invited to this meeting and indeed where the meeting will take place next week.
Tony, thanks so much. Tony Halpin there with the very latest on Russia and the U.S. Now, shipping giant Maersk has raised its financial outlook for this year, saying demand outside North America is resilient despite concerns over global trade. The chief executive, Vincent Cleric, says customers will start to alter supply chains to adjust to Trump's tariffs.
What is really important for us right now is to see where this is landing with China. This is something that has yet to get fleshed out, and once we have this in place, then I think we will see uncertainty ebb, and we will start to see customers actually understanding what they need to do now to adjust their supply chain to what is a structurally different trading environment given the tariff levels and the different deals that have been put in place.
Well, let's bring in Bloomberg's Oliver Kirk now with the very latest. Ollie, look, Maersk was pretty upbeat about the outlook.
I mean, you know, the trade war technically started today at midnight, and yet this is what we hear from the biggest shipper across the world. Very upbeat outlook, raising even their outlook in terms of what they see coming down later in the year. Very bullish on China as well, saying that, yes, there is a diminishing of trade with the United States, but actually building on this macro narrative that we hear from a lot of European officials that actually you need to expand trade elsewhere in the rest of the world, and that is exactly what Maersk was seeing in their numbers a little bit earlier today. So I think that is sort of very interesting, particularly since you think about kind of how important trade is now the main sort of policy plank in dealing with every geopolitical issue for the United States, and potentially longer term, United States maybe isn't the only game in town.
Yeah, and I wonder, I mean, you had to redraw the map anyway, right, if you're keeping them at home or changing the supply chains. What about Siemens?
Yeah, Siemens is another interesting one. I mean, this is a business that has really three main categories. There's the mobility, which is, for example, train building, and it actually was the big winner. Massive order from Egypt, so that really sort of boosted the books. Where we've seen continued weakness from Siemens is this idea of digital industries. Factory automation is one of the things that they have seen sort of not really rebounded. That is in part due to China. Though I did ask him about basically, are you seeing now a push for factories being built in the United States? You need to automate those. Siemens is going to be a part of that. He says he's beginning to see the beginnings of that within the United States, though not the full impact of it. I think also what was interesting is his view on the tariffs. He has said in the past, a bad deal, an okay deal is better than no deal at all because it brings certainty. Have a listen to what he had to say this morning.
Talking about the uncertainties, this is really a topic, and you cannot have this kind of worms open for a longer time. I think everybody knows that. So we hope that this deal now between the United States and Europe is the deal which is set now, that they execute now accordingly, and companies can start planning and also release investments which they hold back.
So Francine, hoping that the deal is the deal as ever, like so many policymakers, like so many CEOs, the last part of their business is smart infrastructure. Part of what that does is feed data centers and is going to be fed by all of that. That, again, another bullish outlook for Siemens. So a couple tailwinds, despite the fact you had a little disappointment from Digital Industries.
There you go, firing on all cylinder for this Thursday morning. Ollie, thanks so much. Oliver Crook there with the very latest on Musk and Siemens. Coming up, Trump's tariff shakeup could be drowning out appetites for Europe's real estate markets. Well, we'll speak to Richard Bloxham, Chief Executive Capital Markets at JLL. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Well, the Bank of England set to cut interest rates today to the lowest level in 2 years as policymakers contend with the slowing economy and a jobs market rattled by higher taxes. Our UK correspondent Lizzie Burden joins us now from outside the Bank of England. So, Lizzie, what surprises could there be today?
Well, Francine, as you say, economists and markets expecting this quarter-point cut to 4%. So that'd be lower than the Fed's rate, notably. But what's maybe surprising about that is that you've got inflation at a 17-month high. But the reason that they'd still be cutting is that you've had these back-to-back contractions in the economy and the slowdown in hiring, both attributable to this rise in the payroll tax and the rise in the minimum wage, hence why they would still cut. And the governor himself has said that this rise in inflation is only temporary, although that's obviously not a unanimously held view on the Monetary Policy Committee. But it's because of that stagflationary backdrop that economists are expecting a three-way vote split today. So 2 dissenters for a half-point cut, 2 dissenters for a hold, and the rest voting for a 25 basis point cut. It would be the same as 3 months ago when they voted to cut. But the real surprise could come from the guidance, because if you see them dropping the description of the rate path ahead as gradual, that would be interpreted that maybe they want to veer off this quarterly cadence of quarter-point cuts.
And could the Bank of England, Lizzie, actually hint at slowing active gilt sales given the strain on these long-end yields?
Yeah, I mean, the real focus on this, because they're making this strategic decision in September, but of course today's the day when they have the press conference. There isn't one scheduled for that meeting. And of course there's been all this speculation about whether they will tweak the pace of gilt sales, because as you say, you've had this rise in long-end gilt yields, particularly the 30-year, up to levels that we've not really seen since the 1990s. So the question is, do they slow the pace of active gilt sales, or do they skew it towards the short end of the curve? And when the Bank of England surveyed market participants, overall the expectation was that the runoff overall would be slowed from £100 billion a year to £75 billion a year. But whatever they do, if they mention the long end of the curve, that is going to be seen as a hint that that tweak to the strategy is coming in September. And maybe this is more what's going to move the gilt market today than the actual decision itself.
Lizzie, thanks so much. Lizzie Burden there outside the Bank of England. We'll, of course, bring you that decision at 12 p.m. London time. For viewers in the UK, we'll have full coverage of Governor Bailey's news conference and a special broadcast starting at 12:15 p.m. You can also watch that live on the terminal and on YouTube. We'll bring you also a conversation with Governor Bailey after 4 p.m. UK time. Now, President Donald Trump's sweeping tariffs threats have put a pin in what many hoped would be a year of recovery for European real estate markets. Now, according to data from MSCI, commercial property sales are down some 10% by value in the second quarter and down 7% in the first half of the year. Well, joining us now is Richard Bloxham, Chief Executive of Capital Markets at JLL. Richard, thank you so much for joining us. First of all, how have a lot of the tariffs impacted appetite for some of the sectors that previously were wonderful or much loved, such as logistics and living?
There really has been relatively little impact overall on the tariffs. I think largely investors have seen through a little bit of the noise. So I think we have a very strong depth of equity available to invest in the real estate markets, as well as probably at all-time highs availability of debt across multiple lenders to the industry. So I would say that it gave pause after the tariff announcements by the Trump administration, but most investors have been seeing through that.
So where do real estate investors want to be right now? What kind of assets and what kind of countries?
Well, globally, we've seen significant uptick in investment activity, 179 billion traded in the second quarter globally, and that's 14% up year on year, 21% for the first half of the year. The most sought after asset classes, offices have increased significantly in the first half, 38% in the second quarter. And in countries such as the UK, that's been up to a 75% increase in activity. And that's largely driven by investors feeling confident that occupier markets are becoming more resilient. And frankly, a limited supply. We're at all-time lows across the United States in groundbreaking, and Europe is at a 10-year low in groundbreaking for new office development. So office occupiers are having to be a little bit earlier in their planning for new locations and a bit more willing to go to locations that are not always prime. But there's robust appetite across all the asset classes.
So, Richard, give me a sense. I mean, data from MSCI show that in Europe, deals, for example, from U.S. headquartered investors dropped some 29% year on year for the first half of 2025. Does that increase in the second half, or does it get worse?
I think U.S. investors have been very focused on the opportunity in the United States. The beginning of the year, there was strong appetite and forecast for GDP growth, so a lot of U.S. domiciled investors have been focused on their domestic market. But there have been announcements by a number of the big private equity players that they're going to be investing considerably in Europe. And I think infused by the level of response from Europe to the changing trading dynamics and maybe an environment where there's a little bit less regulation, a little bit more emphasis on economic growth.
Will there be less regulation?
I don't know whether there'll be less regulation, but certainly what we're hearing from policymakers is that there's an intent to make it easier to do business.
Richard, what's been the most surprising thing that you've seen in your industry over the last 2 years?
I think what's been very encouraging is quite how quickly the retail investment sector, shopping centres, shopping malls, strip malls, power centres, high street has recovered. And pretty much everything has been thrown at that industry over the last 15 years with the revolution in online retailing, to COVID, and then the post-COVID economic malaise. And so what you're seeing is investors showing real confidence that that industry has now, that sector has bottomed out, and that they feel confident there's now some rental growth. There's very little vacancy in retail across the world. And I think if you'd asked me 3 years ago whether we'd see that to recovery, I'd have been a little bit circumspect.
All right, Richard, thanks so much. Richard Bloxham, their Chief Executive of Capital Markets at JLL. Now, Siemens revenue on orders rose on robust demand for rail products, which helped offset a sharp decline in the software business. Oliver Crook spoke to the Chief Executive, Roland Busch, earlier and asked him if there will be a turnaround in the foreseeable future.
So I wouldn't call it a turnaround compared to what was happening in the past, this kind of recycle recovery. I always said I expect the Chinese market to come back gradually, and that's what we see. We see semiconductor business, for example, coming back, the automotive business having a slight increase. So they're coming back. Chinese government works on cleaning out the real estate problems on the one side, investing in high-tech manufacturing in order to drive productivity in a competitive environment. They're investing also in green technologies. So therefore, that's everything what they do now is tailwind for us, because we are the incumbent in automation. We drive digitalization in this country as well, but also a strong foothold on electrification that helps the market. And according to our expectations, would come back, but gradually.
And if the Trump administration is to be believed, there are literally trillions and trillions of dollars that are coming into the United States in order to build up manufacturing capacity that should favor, theoretically, digital industries. Have you seen any sign of that in terms of any kind of efforts from other companies that you might be involved in? And do you really take that number at face value?
So we see some pickup there also from order intake in the United States for the automation business, but also revenue. It's too early to say. Again, nobody was investing until the tariffs somehow settled. So we see, I mean, you might have learned that Audi is thinking about building a new production site in the United States, the first one. So it will benefit digital industries and automation in particular. Why? If you really relocate manufacturing to the United States in a market which has high labor cost, and if you get labor at all or trained labor, the best thing what you would do is make it as automated and as digital as possible, base it on a digital twin with digital threads, and there Siemens technology comes in. So we are market leader from that perspective. We can help every of our customers to really run a manufacturing site highly automated. That's what you want to do if you invest in the United States, and Siemens is here to help.
Well, that was the Siemens Chief Executive Officer, Roland Busch. Now, a couple of things that we need to look out for. The U.S. chip stocks look pre-market. These are some of the winners and losers. Again, we had quite a lot of news coming from President Trump. President Trump eyeing some 100% tariffs on chips, but at the same time, he said yesterday that he would be exempting companies that move production back to the U.S. Now, President Trump did announce these intentions along the Apple Chief Executive, Tim Cook, who announced plans to invest an additional $100 billion in domestic manufacturing. Up next, Bloomberg Brief. A lot of the focus will also not only be on chips, but of course on these tariffs overall. Look, he said, Donald Trump, that companies that demonstrate a commitment to building in the U.S., such as Apple, will be exempt from tariffs on chips. The question is, what does that mean? How do you quantify that? A lot of global companies around the world will try and figure exactly if they are exempt, how, and how to prove it. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. It's go time. President Trump's sweeping new tariffs kick in. Switzerland and India get hit with some of the highest rates. A threat and an exemption. The president announces 100% chip tariffs, but 0 for the likes of Apple, who invest in the U.S. And the Fed's outlook. Trump says that he'll name a temporary governor, while 3 other Fed officials signal that it's time to adjust rates. And we are higher this morning, despite the fact that at 12:01 a.m., we had tariffs kick in, despite the fact that chip makers are going to get 100% tariff. But there was a key exemption. If you invest in the U.S., you'll get 0%. And that's maybe why we're seeing the rally underway this morning. We're up by more than 0.5%. By the way, the Mag 7 hitting another all-time high yesterday. For this bond market, a little bit of a different driver. It was the Fed speak. Kush, Kashkari, and Daly all out yesterday talking about it is time to adjust rates. So we had a front-end rally. Little change this morning, but still we are slightly lower with your front-end yields at 3.70 for the 2-year yield. The long end was under pressure yesterday. We had a pretty dismal bond auction for 10-year yields. That's at 4.23. We'll get a 30-year auction today. Let's get you some stocks moving in the pre-market, including those chip makers. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Yes, let's start with TSMC, the largest chip manufacturer based in Taiwan, really cheering these tariff exemptions. Those shares are up 5.2%. I know you mentioned that Mag 7 was trading at record highs. We also have TSMC trading at record highs in the back of this optimism that now we don't have to worry about these sectoral chip tariffs. Let's move on to the broader tech industry because we are decently in the green. I want to start off with NVIDIA, one of the biggest out there, up nearly 1%. Apple up nearly 3%, Danny, and this comes after it had its best session since May, up 5% yesterday, adding to that again in pre-market as it gets those tariff exemptions. Global Foundries, this is also related to Apple. Those shares up 9% in the pre-market. This is something that they're increasing their ties to Apple. That was announced yesterday. Now, Global Foundries is a chip manufacturer, has 3 manufacturing sites in the U.S. As you can see, the reason why Apple wants to build more of its products in the U.S., and Global Foundries is going to help it do that. Let's move on to one more stock that is moving lower after earnings, and that is Airbnb. This is the hotel booking website, down 5.7%. Danny, this comes after, even though their results did come in with a beat for the previous quarter, they gave quite a modest guidance on the year ahead, saying that they're going to face some tough comparisons year on year through the remainder of the year. Danny.
Valerie, thank you very much for this roundup. We'll catch up with you later in the hour. Also in this hour, we'll speak with Nandini Ramakrishnan of JP Morgan, who joins us to look at the impact of Trump tariffs on emerging markets. And we'll discuss how questions of the economic data integrity and a new Fed governor will affect the outlook with Terry Wiseman of Macquarie. But first, our top story. After months of threats, reversals, talks that led to deals and talks that haven't, President Trump's sweeping new tariffs are officially in effect. Joining us to break down the key details is Bloomberg senior editor Bill Ferries. So, Bill, the tariffs are being implemented just on an overall basis. How much confusion, how much certainty is there as they start to work their way through the system?
Well, there was a rush to get goods on their way before that midnight deadline last night in the U.S. Average U.S. tariffs are now up at over 15% compared to just about 2% when President Trump took office. So that is going to have a huge impact sooner or later on the U.S. economy, global trade flows, and the global economy. We haven't seen a huge influx or increase in inflation so far in the U.S., but we have seen from some of the latest economic data that the economy appears to be nearing more of a stall speed when it comes to things like job creation. So the impact is probably starting to filter through, and the expectation is in the months ahead, we're going to see that tariff hit start to take effect.
In terms of the haves and have-nots, Bill, in the latter category, there's the likes of India and Switzerland that are facing really punitive rates. What went wrong?
Yeah, well, first on India, I mean, that has been a 180-degree turnaround from what I think most of us expected maybe 3-4 months ago. The administration was talking about India being near the front of the line. President Trump and Prime Minister Modi have had a close personal relationship going back to Trump's first term. It seems like the more President Trump focused on Russia's continuing war in Ukraine, the more he looked at things like the BRICS bloc and some of their moves to separate or limit trade with the U.S., the more frustrated he got with India. The relationship has really kind of broken down. India has avoided escalating the situation, but right now they're looking at potentially 50% tariffs in 3 weeks' time when this extra 25% kicks in. And then you have Switzerland, which failed. Their president failed to get a meeting with President Trump when she visited the U.S. this week. The 39% tariff is the highest among industrialized nations. All of Switzerland's neighbors, or many of them, are paying as little as 15%. So that's going to create a huge competitive gap that Switzerland's going to struggle to deal with.
And when it comes to the question of Russian oil, Bill, it's interesting because it really feels only like India that's faced this scrutiny. China certainly buys Russian oil too. How are discussions evolving there when it comes to China and their tariff rates?
Yeah, I mean, China actually buys more Russian oil, about 2 million barrels a day, than India does at 1.7 million. President Trump has really not focused on the Russian oil component of Chinese trade so far. He wants a deal. I think the big difference between these two countries is with its rare earth magnets and its influence over that market, China has a lot more leverage over the U.S. than India does. There's no comparable key product for India that it sells to the U.S. So that's been the difference. The president has said that maybe he'll consider the Russian trade when he deals with China, but I think he's got his eye on a bigger picture trade deal, and he's talked about meeting Xi Jinping to sign that deal later this year.
Bill, thank you so much for this. So much to go through. Helpful to have you on. That's Bill Ferries. Let's stay on trade, though, because Apple and chip stocks, as Valerie was laying out, are in focus and rallying this morning. Apple adding another 3% onto its rally from yesterday. The president announced further plans for his sectoral tariff regime yesterday. Speaking in the Oval Office alongside Apple CEO Tim Cook, Trump declared that he would slap on eye-watering tariffs on semiconductors.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
Roz Matheson joins us now. Roz, how would these exemptions work?
Well, it's very unclear how they might work and whether, in fact, Donald Trump just kind of floated this in the minute when he was having that meeting with the Apple CEO. Does he mean on chips coming in to the US? A couple of big chip makers really around the world who have a lock on the global market and are already rushing to show that they're investing in the US. So would they get an exemption? Is it separately to that anything that is an electronic device that's brought into the US that contains a chip? It's very, very unclear exactly what Donald Trump was meaning, but the fact he even talked about carve-outs, exemptions for these companies that are investing in the US suggests that a large slice of the market might in fact get an exemption. That's why you're seeing a pretty low-key reaction in the market today. But if you look underneath that, are there mid-tier, smaller-tier chip companies, including particularly in Europe, who might actually find themselves vulnerable in all of this? We're trying to understand all of that today because underneath those exemptions there are companies that are potentially quite impacted.
And there are companies that maybe have found their way to the exemption. To your point, Roz, Apple seems to be one of them. You can see shares up 3% in the pre-market. They rallied 5% yesterday after talking about investing in the U.S. But Roz, what sort of moves are Apple and other companies having to make to try to skirt some of the supply chain pressures and make sure they're on the White House's side?
Well, it's interesting to see the playbook that company executives seem to be using in the US. We saw that even at Donald Trump's inauguration, where they're all lined up in a way paying homage to him in the minute and getting this idea that Donald Trump is essentially a businessman. He's a showman. So they're turning up at the White House, having their meetings, they're promising investment. The interesting thing is in all these vast amounts of money that are being promised by companies to put operations, manufacturing, factories and whatnot in the US, how much of it has to actually eventuate in the end? Are they promising stuff that they've already pledged previously and they're rebundling? Are they promising factories and other buildings that could take many, many years to build and may never actually have to build? The question is, of all this money that's being pledged, how much is going to be a reality, but how much actually matters in that for Donald Trump? Really, for company CEOs, it's about realizing the playbook that you need to operate with under this administration. And the main thing, of course, is to show that you're hearing Donald Trump on his messages and you're really promising you're going to bring jobs, manufacturing and business back to the US.
Roz, while we have you, because it's not just been companies that have been promising investments, it's the likes of countries too. And where you sit in Europe, many countries have also promised the same thing. In fact, that was part of the deal with the tariffs with the EU. Do we know how that's playing out with tariffs officially kicking in?
Well, the interesting thing in all this, again, is the question of what it means more broadly for trade globally, what it means for businesses. Can investment come in to the US? But obviously, you know, for global companies looking at this, as Bill was saying a minute ago, the impact on the US economy is still very unclear, and therefore on the global economy is unclear. So do we see a rise in inflation at some point? Do we see supply chains being completely reorganized around the world as a result of this? But certainly you can see, if you're a CEO, if you're a head of state, you're all still trying to work out exactly how it is that you do business with Donald Trump under this administration.
All right, Roz, thank you very much for that. That is Bloomberg's Roz Matheson. Let's now get you some other top stories that are trending on the terminal this morning. The Kremlin has confirmed that President Donald Trump will be meeting Russia's Vladimir Putin within the next few days. Putin met with Trump's envoy, Steve Witkoff, yesterday in the Kremlin for nearly 3 hours of talks. The U.S. is pushing for an end to Russia's war in Ukraine. 3 Federal Reserve policymakers, Mary Daly, Lisa Cook, and Neil Kashkari, have voiced concerns yesterday about the U.S. labor market. They pointed to a potential interest rate cut in September. Kashkari expects the Fed to lower rates twice before the end of 2025. Daly said 2 cuts are likely appropriate this year, but the Fed may need to cut more than twice. And the Bank of England is set to cut their own interest rates today. It would mark the lowest level in 2 years. Policymakers are contending with a slowing economy and a jobs market rattled by higher taxes. Economists predict a 3-way split on the committee, with the majority supporting a 1/4-point reduction. Coming up, high tariffs for India and other emerging markets loom. JP Morgan's Nandini Ramakrishnan will be joining us next for the read through to markets. Stay with us on your brief.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
India will never compromise on the interest of farmers, fishermen, and dairy farmers. I know personally I will have to pay a heavy price for it, but I am ready for it.
India's Prime Minister Narendra Modi speaking in New Delhi after tariffs of 50% kicked in for India, one of the most punitive of Trump's tariff rates. Nandini Ramakrishnan of JP Morgan writes, quote, while most economies are feeling some effect, many equity markets are much less affected. India, Brazil, Indonesia equity markets all source 80 to 90% of their revenues domestically. I'm pleased to say that Nandini joins us now. She's emerging market equities macro strategist at JP Morgan. Nandini, great to see you this morning, and we'll get into the impact in just a moment, but I would love to get your thoughts on just why India seems to be such a concentration of this president and what you make of the 50% tariff rate that they've been slapped with.
So globally, I think we thought that India and the U.S. may have had a more amenable or seamless negotiation in the tariff process post-Liberation Day. But it is interesting that the U.S. administration has singled India out on the energy imports issue. And I think that brings to light that maybe all countries are not going to be treated the same, right? China is still under negotiations. There's various other issues that the U.S. and China would need to work out there. And the India negotiations shows us right now that there's maybe a singular approach that the U.S. administration is taking for each of these countries, especially because India has been in the spotlight for maybe being the beneficiary of a China tariff issue as China +1 or new manufacturing hub of the world. It does look like the U.S. administration is focusing on some of these issues to try and gain that competition back as production may leave China to other parts of the world.
Well, so as some of these emerging markets get 50%, Nandini, does it change your outlook? I know you mentioned, as we read, that most of the revenue is sourced domestically for the equities in these markets. But is there a point where the tariffs are punitive enough that you'd likely see some local impact because of the economic ramifications?
Certainly. One thing I can tell you working in emerging markets for many years is there are a wide array of countries with a lot of different dispositions, you can call them. So for countries like Korea and Taiwan, which are extremely export dependent, produce a lot of global technology, tariffs are going to be quite difficult for them. The equity market sources much of its revenues from the export part of that economy. While I mentioned, as you said, Brazil, India, Indonesia, those equity markets, not the economy, the equity market sources most of its revenues from the domestic country. So for India in particular, the U.S. is the largest trading partner. It's a huge part of some of those software and services industries that India has. But actually, 80 to 90% of India's equity market comes from local domestic consumption, spending, financialization, all these long-term structural themes that we constantly love about India when they're at a good price, of course. India's valuations are a bit expensive in the equity market, so there's a bit of pickiness we have to apply there for companies. But overall, these tariffs actually have less of an effect on the Indian equity market than it does on the economy as a whole.
Well, it's also interesting because we were listening to Prime Minister Modi there, and among the things he said is, I'll have to pay a heavy price. He probably was talking maybe politically about paying a heavy price of standing up to Trump, but there's also this idea that perhaps what India and others will have to pay is fiscal expansion if they're to support their economies that are under stress. Do you assume that we're about to enter an era of fiscal expansion for a lot of these emerging markets who are coping with the fallout?
Well, it's actually interesting. Two of the countries in our coverage that have had slightly higher than expected tariffs in the past few weeks, Brazil and India, especially the headline numbers, are actually two countries that the macro is really accommodative to easing fiscal stimulus and basically a domestic economic positive scenario, right? So you've got high real rates in Brazil, a central bank who has been really disciplined before and now can possibly cut. In India, you have some of the lowest inflation numbers we've seen in many years, even decades. So with low inflation, the RBI, central bank in India, can actually think about easing a bit more than they may have been before. So there's actually while tariffs, I can tell you as an economist, are never going to be a great thing overall for global trade, there's actually some counterintuitive benefits to the economies that have been hit worst with these recent tariffs that they actually can stimulate domestically. And again, as an equity investor, that's actually maybe good news in terms of those domestic revenues coming into the equity market in that sense.
Nandini, really wonderful to get your views this morning. Thank you for joining us. Nandini Ramakrishnan of JP Morgan there. Coming up, Citi CEO Jane Fraser is the latest banking executive to meet with President Trump. We'll have more on the C-suite coming in and out of the Oval Office. That's coming up next on your brief.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what is on the front pages of major publications this morning. First up, on the front page of basically everywhere this morning is President Trump's tariffs taking effect. New tariffs on more than 90 countries kicked in after midnight. Hours before they took effect, Trump signaled that there would be more to come. He doubled down on his strategy. Next up on the Wall Street Journal, President Trump said that there was a good chance that he would soon meet with Russian President Vladimir Putin. About an hour ago, Russia's Interfax also reported that the Kremlin confirmed a meeting in the next few days, that it has been agreed upon after being proposed by Special Envoy Steve Witkoff, who spent 3 hours at the Kremlin yesterday. And on the front page of the Washington Post, they are reporting that Director of National Intelligence Tulsi Gabbard overrode arguments from the CIA to release a classified report on Russian interference in the 2016 election. Officials worried that the release could reveal top-secret spying techniques and sources, but Gabbard authorized a lightly redacted version. Now, another story we're keeping an eye on this morning. Citi CEO Jane Fraser is the latest major bank executive who has been meeting with President Trump. Also spotted leaving the White House, Bank of America's Brian Moynihan. Conversations abound about what's happening with Fannie and Freddie and others. Joining us for this conversation is Bloomberg's Tom Metcalf. Tom, what is our understanding at this moment about the conversations Jane Fraser had and others with the White House?
Well, all these big-name CEOs are going to the White House and effectively pitching to be part of any possible IPO of, these two massive mortgage companies. So I imagine, they're laying out everything they could possibly bring to that. And I suspect in those conversations, emphasizing, this is just how much money we could raise off these things.
That's what they want, but who are they likely to choose, Tom? What is sort of the criteria that President Trump is using, as in recent days in that interview with CNBC, he had a lot of ire directed at the banks, claiming that they wouldn't accept his money, the likes of JP Morgan and Bank of America?
Well, I think that probably won't help their cause, right? I can imagine some of the other bigger banks that are, first in line, one would suspect. So yeah, it won't be the usual, I guess, sort of milk round process where, the normal things you tout might be what's most important here. So it'll be interesting to see what the results is. But clearly, the White House going through all the obvious big US banks, and suspect, whoever gets that, top left lead will be very, very happy, because there'll be seriously large fees on these kind of transactions.
Yeah, for certain. Tom, thank you very much for that. That is Bloomberg's Tom Metcalf. All right, a quick look at your markets this morning before we head to the commercial break. S&P 500 futures up by 0.6%, a second day worth of a rally led by tech stocks. Mag 7 hits an all-time high, with chip makers getting an exemption from 100% tariffs if they simply invest in the U.S. Coming up, Fed officials sounding the alarm on the labor market, and we break down the Trump's choice for the next Fed governor. We speak with Terry Wiseman. That's coming up next.
Estava sitiada.
Nisso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Thursday. It's go time. President Trump's sweeping new tariffs kick in. Switzerland and India get hit with some of the highest rates. A threat and an exemption. The president announces 100% chip tariffs, but zero for those like Apple who invest in the U.S. And the Fed's outlook. Trump says that he'll name a temporary governor, while 3 other Fed officials signal that it's time to adjust rates. We are moving higher this morning despite the fact that at 12:01 a.m. tariffs kicked in, but it is an exemption for tech chip companies that invest in the U.S. that has something of a relief rally underway. But Russell 2000 futures, those are outperforming, but we're higher by at least 0.6% across the board. The Mag 7 hitting another all-time high yesterday. We did get Fed rhetoric from Cook Kashkari Daily yesterday that an adjustment is needed. A rally on the front end in your bond market takes place after that. At the moment, your 2-year yield is at 370.52. The long end under more pressure after an auction yesterday with some pretty lousy demand. 422.87 is where we stand. Let's get some stocks, though, moving in the pre-market. With that is Valerie Teitel. Hey, Val.
Good morning, and Danny, let's start with the enthusiasm in the chip space. We have TSMC, the world's largest chip manufacturer, rising over 5.5% on the back of this excitement around these carve-outs. Remember, TSMC has pledged investment to the U.S. They've even begun production of a manufacturing plant in Phoenix, Arizona. So those carve-outs is what is boosting this stock, and is trading at record highs. The broader chip sector, the broader tech sector is also in the green. Take a look at shares of NVIDIA up nearly 1%. Apple is gaining ground, up over 3%. And this comes after yesterday, Danny, Apple had its best session since May, up over 5%, adding to those gains on sealing that exemption from those tariffs. Global Foundries, this is a chip manufacturer, is also getting a boost, up some 10%. That comes as Apple has increased its ties with this manufacturer, who has 3 production facilities across the U.S. as Apple and other tech names try to increase manufacturing, try to onshore that manufacturing back into the U.S. Lastly, it's still earnings season. Let's end with Airbnb. This is the hotel room booking website. Those shares are falling over 6.5% in pre-market trade. The results came in okay. The previous quarter did come in quite solid, but the CEO and the company warning of some soft quarters ahead as it faces some tough year-over-year comparison. And it was that guidance that is leading that stock lower in the pre-market. Danny.
Valerie, I appreciate you explaining what Airbnb is, but I think most people know what it is unless you've been living under a rock. Thank you very much for that roundup. Excellent work this morning. That is Valerie Teitel. Now back to one of our top stories. President Trump has been floating the idea of naming a temporary Fed governor for the vacant seat. Terry Wiseman of Macquarie Group weighing in on the implications after last week's jobs report that has more Fed officials turning dovish. He writes, the report may also have the structural effect of justifying the call for having a chair that is more pliable and aligned with the administration's views. That's why yields beyond the Fed's 2-year visible policy horizon fell a lot on Friday. I'm pleased to say that Terry joins us now. Wonderful to see you this morning, Terry. What do you mean about a possible structural change?
It could mean several things. I think that the nuclear bomb, if you will, conceivably could be not just a Fed chair that the administration appoints that is more pliable and more accommodative to the administration's views and urges, let's say through their charisma, through their influential ability, an FOMC that is willing to keep interest rates lower than they otherwise would. Conceivably, though, this could also be a long-term structural change. We get a lot of questions from clients recently about whether a new Fed chair might be able to actually change the Fed's inflation target. In other words, what level of inflation is considered to be, by the Fed, consistent with price stability. And if you recall, it hasn't always been the case that 2% has been the official Fed inflation target. Prior to January of 2012, the Fed did not really have an official inflation target. And there were some members, some Fed officials, some members of the FOMC who thought that 1% or 1.5% was consistent with price stability. So the idea that 2% is the Fed's target is not written in stone, and it's very possible that what the U.S. administration wants ultimately is to not just have a more dovish Fed, but to have a way to do that by raising the ultimate inflation target, maybe to 3%. There are some countries out there that have 3% inflation targets. So this is not outside the bounds of what is conceivable.
It's not outside the bounds of what's conceivable. What would be the impact of it? Because you probably could make a reasonable argument, to your point, other countries use it, that 3% is okay. Would it be okay?
Yeah, look, I think the way that the FOMC, which would need to make this change, and the administration would rationalize this, is that there are a lot of structural inflation trends out there. And these are, it's going to be difficult to avoid the inflation, impede the inflation, if you're setting inflation to be 2%. Some of these trends are just plain old deglobalization, which has the effect of making the global economy less efficient, raises inflation. We have climate change. We have the investments that we need to make for climate adaptability and mitigation. We have adverse demographic changes as well. The baby boomers are retiring, so you can make a case that productivity falls. And as a result, and we have high debt as well, high sovereign debts, not just in the U.S., but around the world. And because of this, governments may want to monetize that debt. And the only way they could do that smoothly is to raise the inflation target and allow the central bank to have more flexibility towards that goal. So there are reasons, rationalizations why we may want to slip into a higher inflation target. I think those are the underlying drivers and causes. But of course, ultimately, it will be for the Fed and the new chair to decide if the Fed ultimately takes that path.
Well, to your point, you said the FOMC needs to decide. There's been a lot of arguments that it kind of doesn't matter who the Fed chair is, that this is a committee and that they will push back on anything outsized. You said the necessary charisma might sway them. So how important is it to you to see who becomes the Fed chair and just how much they can sway the committee in matters like this?
Yeah, it's very important. I think people forget sometimes that the FOMC is not robotic, that it's not a machine. And that's why I actually don't like the style of analysis that always goes back into history to see what the Fed had done at a particular point in time to find out what it's going to do today. These are different people than there were 10 years or 12 years ago or 30 years ago on the committee. So we have to look at the personalities individually. And these are people, and they respond to sometimes their own conscience, sometimes their own intellectual dispositions. So it's very important, I think, to answer your question, that the next Fed chair, not just be someone who is respected intellectually, but can also argue a case. And usually arguing a case is a matter of charisma. We know that, of course, in criminal and civil trials, that if the prosecuting lawyer is more articulate, might be better looking, they tend to win the case. So I think that this is a situation that might prevail on the FOMC. And because of that, I think the administration has to be very careful on who they nominate ultimately.
So, okay, if we do get this world where inflation is targeted higher, Terry, what I'm understanding from you is that means that the front end is looking pretty attractive. But what does that mean for duration?
Well, it's interesting because, remember, whatever the administration may be able to set in motion, it may only be able to set in motion during the tenure of this administration. If you get a new administration with a whole new economic policy, disposition. Whatever the administration currently does not have to last. We may have a situation where the Fed under this administration does one thing, but the Fed under the next administration does the other thing. I think ultimately, however, even if you set aside what the Fed might do to try to influence the inflation target or inflation itself, we are heading into a world where there are going to be greater inflationary pressures. Now, what I tell clients is, look, in the near term, we have a cyclical downdraft in the U.S. We may have no more than 1% real GDP growth over the next 2 quarters. And we know that in periods of economic sluggishness, the 10-year yield tends to go down. It has gone down in almost every recession, for example, that we've had in the post-war period. But if you believe that structural inflation is eventually going to be higher once we get past this soft spot, you don't really want to be holding nominal assets. You don't want to be holding assets whose principal value or whose cash flows do not adjust with inflation. So this does not make a strong case for the bond in the long term.
Is there a real risk with that, though? Because you have that case being made. If you have an appointment that looks blatantly political, even let's say there is a real case to be made to have more cuts into this economy, that you get more days like yesterday where a 10-year auction is pretty sluggish, where a risk premium grows and it's harder to fund the twin deficits of America.
Right. So the trade there, if you will, if there is one, is to bet on the yield curve steepening. You want to put on a trade that's effectively duration neutral, but it's still a yield curve steepening. You'll have to pay up a little bit for that trade every month because there is negative carry on that position, but you want to bet on the yield curve steepening. And the yield curve right now is not that steep. I mean, in the swap market, the difference between 5-year swaps and 30-year swaps might be about 40 basis points. In the Treasury market, it might be about 50 basis points. We have had yield curves that are much steeper in the past without all the consternation out there around long-term inflation and who the Fed's next chairman will be. So in the context of everything that's going on, this is not a very steep yield curve yet. It could get steeper, and that is probably one good way, if you can hold on and pay the negative carry over time, to bet on the trends in long-term structural trends in this economy.
Yeah, it's important context for everyone to remember.
Absolutely.
I think, as we all seem to be losing our minds in recent days. Terry, I would love to just get your thoughts, because we had Kashkari, Cook, and Daly yesterday talking about it's time to adjust rates. These markets are pricing in something like 95% odds that they cut in September. Is September set in stone now?
Yeah, I think so. And I've always been sympathetic to the September view because I had a feeling that by the time they were able to see the summer data, they would make the conclusion that the economy is in fact slowing. And my view is that the consumer, especially the low-income household, the low-income consumer in the U.S. has been weak since the middle of last year. It's just that wasn't reflected in the data through the end of last year because we had all of this euphoria around the election. And the high-income households went out to spend, and you saw it with luxury sales, certainly in the fourth quarter of last year, and that masked the underlying weakness in the consumer. But now this year, in the first 6 months of this year, we have in fact seen a much weaker consumer, and that has now been reflected in the labor market indicators. We see with the revisions that the labor market is weak as well, and I think that's enough of a compulsion from the data to cut rates and start with this, renew this easing cycle, cut rates in September. I don't think that I think the market is a bit way ahead of itself to think that the Fed might be cutting 5 times by the end of next year. That seems a little bit exaggerated. I think for that to happen, you really do need to see a Fed chair that is ultra dovish eventually come into place. Maybe that's what the market is pricing in when it calls for 5 cuts in the swap market. But that would indicate a structural change or a recession. I don't see a recession coming.
Well, this conversation long from over, but unfortunately we're out of time. Terry, so wonderful as always to get your thoughts. Terry Wiseman of Macquarie, thank you so much. Coming up on the show, chip imports are set to be slapped with 100% tariff, with a very, very key exception that has chip stocks rallying this morning. We're going to get you a trade update coming up next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies. And we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge.
President Trump speaking yesterday after meeting with Apple CEO Tim Cook at the White House. Apple announced that it will invest an additional $100 billion in U.S. manufacturing. You can see that's boosting Apple shares 3.25% pre-market after a rally of more than 5% yesterday. But the president did announce an 100% levy on imported chips. Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, as we look through the details of many different tariffs that are being placed on with chips specifically, do we understand how this investment and exemption might work?
Yeah. Hey, Danny. Good morning. Well, there's a few really important distinctions that we have to make here. Yes, President Trump says that we are expecting to get a 100% tariff on chips and that these companies that move manufacturing to the U.S. will be exempt. But keep in mind, when that Section 232 investigation into the chip supply chain was launched back in April, it extended to the entire supply chain, such as consumer electronics. So Apple has actually been under a reprieve for the past few months. But that exemption is really only temporary, and our understanding is that this reprieve will not extend to those downstream products, whether it be iPhones, whether it be cars that use semiconductors. So that's something that is really key here to watch, whether or not you see any other sort of product carve-outs, because for now it appears that this only applies to the actual chips. And to be sure, some of these investment pledges fall short of the White House's initial and original goal to completely reshore production and manufacturing. But as we heard Tim Cook in the Oval Office standing next to President Trump yesterday, he said it's going to take time to move those supply chains, though did point out, for example, that many of the components that go into iPhones are made in the U.S. What is clear is that this administration wants to see the investment pledges, and they want to see them coming in. And this pledge from Apple for $100 billion now brings the cumulative total for other tech companies, including NVIDIA, for example, TSMC, to over $1 trillion, according to the administration's investment pledges. So we're going to have to see how they actually end up shaking out, when they will actually see that investment come to fruition. But one thing's for sure, it's made President Trump relatively happy that he's been able to extend this exemption, at least for chips.
So we have the sectoral tariffs still being worked out, Tyler, but as of 12:01 a.m., right after midnight, we had tariffs for countries kick in. To what degree is there still discrepancies in interpretations versus certainty in how countries are now dealing with these tariffs?
Well, there's definitely still a lot of details that need to be worked out, Danny, because really what we've seen so far have been the framework. So importantly, that higher tariff rate has kicked in, and across the board, it's substantially higher. Our analysts at Bloomberg Economics say that the average U.S. tariff rate has now reached 15.2%, much higher than the 2.3% when President Trump took office. But keep in mind, a lot of the key details here, including how some of these countries, some of these trading partners that were able to secure a more perhaps preferential rate of 15%, Japan, South Korea, the European Union, also saw that rate extended to the sector-specific autos, but we've yet to see the text when it comes to lowering that rate, which is going to be really important for those trading partners. And we're still waiting to see the finalized details on some of what the administration would call these unique agreements, including the investment pledges, including the pledges to buy more U.S. LNG and agricultural products. There's still a lot of big questions that we're going to need to see further information about in the coming days. But one thing is for certain, those higher tariff rates have kicked in and the negotiations continue.
That is for certain, although some like Switzerland leaving despite the fact of trying to negotiate and getting that higher rate. Tyler, thank you for your work this morning. That is Bloomberg Washington correspondent Tyler Kendall. Now, on trade and how tariffs are being used on countries sanctioning Russian oil, that's been a real focus, especially when it comes to India, getting an additional 25% tariff, now for a total of 50% tariff because of their use of Russian oil in purchases. Joining us now is Bloomberg oil strategist Julian Lee. Julian, I wonder what you make of the targeting of India overbuying Russian oil, despite the fact that other countries, namely China, do the same.
Yeah, I think perhaps there's a feeling that India is more likely to cut back on its Russian purchases than China. I think if you look at what was done in the past with Iranian oil exports, there were secondary sanctions on buyers of Iranian oil. India was one of those that was targeted then back in 2012 and 2019, and it did respond. It did cut back its purchases of Russian oil. So I think that's a big part of it. I think there are clearly much bigger issues around the trade relationship with China. But I think there are some things we have to bear in mind. There's a 21-day sort of grace period before these additional tariffs come into effect. And I think there is a lot of skepticism in the oil market about whether this will ever actually happen, particularly if we do get this meeting between President Trump and President Putin.
To that point, Julian, with an oil market that's been very resilient, if you were to price some of that in, how would that look? And what form does it take for India to look elsewhere beyond Russian oil if they were to try to replace it?
Well, I think from an Indian perspective, I think they would quite clearly look to the Middle East, Saudi Arabia, Iraq in particular. They were significant buyers. They still are significant buyers of oil from those countries. That would add to the competition for barrels from the Middle East. And I think there are sort of two big questions. One is, if India's not buying the Russian oil, where does it go? The only other significant buyer other than China is Turkey. I don't see Turkey taking much more Russian oil, and even if it did, the volumes wouldn't offset what India might drop. So that means, does it all go to China or does it stay in the ground? If it stays in the ground, then suddenly we're taking anywhere up to sort of 1.5 million barrels a day of Russian crude out of the market. The OPEC Plus producers have been very clear that they won't step in to pump more. Russia is a key member of the OPEC Plus group. It has quite close political ties now with Saudi Arabia. So I don't think we can expect more oil from them. That's going to cut the supply of oil. Now, that may not be a bad thing going into the autumn and the winter. Most forecasts are looking at an oversupply. And I think all these things are sort of being mulled over by the market, and I think that's a real strong reason why we've seen a relatively muted impact on oil prices from this announcement yesterday.
Yeah, oil prices, if anything, a little bit higher by about 0.5% for WTI and Brent today. Julian, thank you so much. That is Bloomberg oil strategist Julian Lee. Coming up, earnings, central bank rate decisions, some new jobs data. We're going to set you up for your trading day with your trading diary. That's coming up next. Stay with us on your brief.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Let's get you set up for your trading day on this Thursday. We're going to get some more earnings before the bell. That includes Eli Lilly, Hyatt, and Warner Brothers, among others. And we also have Bank of England rate decision. That comes at 7 a.m. Eastern time, followed by Governor Bailey's news conference at 7:30. Plus, U.S. jobless claims data coming in at 8:30 a.m. And more Fed speak, this time from Atlanta Fed President Raphael Bostic at 10 a.m. A quick look at some of the movers pre-market. Apple pushing higher alongside chip makers, gained 5%, another 3.25% yesterday, with those chip makers that invest in the U.S. getting an exemption from 100% tariffs. DoorDash up 8.8%. Earnings gains extending those that had a rosy outlook. Delivery orders hit a record. And finally, the security software maker Fortinet plunging down 20.5%. Gave a mixed outlook. At least 3 analysts have downgraded their ratings on a disappointing product refresh cycle. All right, that is it for your brief. Surveillance takes things from here. You're watching Bloomberg.
down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Market's moving more on headlines than it is actually on data.
You can't underweight tech. You still have to be where growth resides.
The tech AI spending is the juggernaut that's empowering this market higher.
The next 12 months, we see a broad rotation out into everything else.
There's some concern right here where we are, but people want to be invested in this market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Big tech looking to build on record highs as tariffs and plenty of exemptions come into focus. More Fed officials, meanwhile, voicing concern about the labor market ahead of the latest read on jobless claims, with Trump planning to nominate a temporary member to fill the open Fed governor's seat, and the U.S. saying that a meeting with Russia and Ukraine may take place within the next few days. We have to start with a new round of tariffs as we look to the reciprocal tariffs going into effect. A whole host of new tariffs being announced. Is this the beginning of a new world order, Anne-Marie, or is this the beginning of a new round of negotiations?
Well, it depends on the country. For some countries, it's the beginning of a new world order. And I'm thinking of the United Kingdom, the European Union, Japan. They actually struck deals with the United States. For other countries, like Switzerland, which right now is holding an emergency meeting with the president, who was in the United States, was in Washington, D.C., only met with Secretary Rubio. That cabinet is meeting on emergency response to 39% rate, the highest in terms of developed countries that trade with the United States. And India, they have a 25% tariff. They're also facing an extra 25% because Donald Trump is trying to make it a point, the fact that, a punitive point, that they are still importing Russian oil and gas. But there's an asterisk to that one. That doesn't happen for the next 21 days. So potentially, it's giving time for trade talks.
It's good that you mentioned, and it's the right call to mention the different countries and what exactly the different motivations are. It seems like some of these particular tariff rates are incentives to get some sort of leverage over investment in the U.S. or geopolitical rearrangement, not necessarily a reordering of trade. And I'm thinking not only of what's going on with India, but also the 100% tariffs on semiconductors. Sounds big. You saw yesterday some of the semis, not just the semis, but also the tech companies reach new record highs. Apple surging more than 5%, its biggest one-day return going back to May, because they are exempt. How much is this really the path of travel?
Exactly. There's shock and awe coming from the Oval Office, and then you look at the fine print, and you hear from some of these companies. TSMC today is coming out, and they are saying, or the minister in charge of the National Development Council is coming out and saying TSMC is exempted from the chip tariffs because it has set up plants in the United States. So that's pretty much almost everyone. There's also questions whether these are actual just semiconductors or products that have semiconductors in them. But most of those products, like Apple yesterday, Tim Cook with the president yesterday, adding more billions of dollars into the United States in investment, They are basically saying, okay, this is our carve-out, this is our exemption.
Meanwhile, there's a question about the economic ramifications, with some people still saying you are going to see the economic pain filter through, pointing to the labor market report on Friday. We do get a new round of jobless claims today at 8:30 a.m., about 2.5 hours Eastern time. We do hear more Fed officials nodding to the potential, Emery, of cutting rates in the near future.
Yeah, that chorus is getting a lot bigger and a lot louder right now. So you have Lisa Cook calling the July jobs report, quote, concerning. And then you have also Neil Kashkari saying it might be appropriate in the, quote, near term. Well, what is the near term? We're in August, September. So you have more Fed officials lining up potentially what the market is expecting, which is this rate cut we might see from the Federal Reserve come September.
Yeah, yesterday we saw a new record high on big tech. Not really a concern there. Building on that this morning, what we can see across the board, trying to get a second day of gains. S&P futures up 0.75%. NASDAQ futures up 0.8%. Russell 2000 leading the pack with expectations for rate cuts. And a real question around whether the weakness is a head fake, backward looking, and some of the strength is going to be forward looking that we've seen on the heels of earnings. Coming up this hour, we've got Ben Laidler of Bradesco with investors digesting the latest tariff developments. James Fishback of Azoria, with President Trump planning to name a temporary Fed governor, and maybe his name is in the list. And Kelsey Barrow of JP Morgan Asset Management, as Fed officials warn of a U.S. economic turning point. We begin this hour with our top story, President Trump's sweeping tariffs taking effect today. Bloomberg's Tyler Kendall joins us now. Tyler, how much are tariffs going up, and how much are these still in negotiation?
Yeah, hey, Lisa, good morning. Well, after months of threats, we're seeing these new tariff rates go into effect as of 12:01 Eastern this morning. And what is clear is that our trading partners are facing higher rates, some starting at 10% and really building up from there. Our analysts at Bloomberg Economics say that the average U.S. tariff rate will rise to 15.2%, substantially higher than the 2.3% when President Trump took office. But importantly, as you alluded to, we're still waiting on some key details of these deals, even as those tariff rates go into effect. I'm thinking about some of our key trading partners that were able to secure perhaps a more preferential rate of 15%, like Japan, South Korea, the European Union. They're seeing that lower rate extended to some key sectors like autos, but we haven't seen that codified in text. So we're still waiting on the details on that, as well as some of the details on what the administration would dub these unique agreements, these unique frameworks, such as some of the crucial aspects of these investment pledges, as well as key pledges to purchase more U.S. LNG and agricultural products. We need to see what those actual details are going to look like. Of course, we would be remiss if we didn't mention those countries that weren't able to secure some sort of agreement ahead of today. Of course, Switzerland left yesterday, the Swiss president, without a meeting with President Trump or a lower tariff rate. It's our understanding the Swiss government is now holding an emergency cabinet meeting to deal with the potential fallout from a 39% tariff. Of course, Lisa, we're going to be watching the economic impacts ahead, but we have to keep in mind there are more tariffs coming as we wait for those announcements on pharmaceuticals and semiconductors.
Tyler Kendall, thank you so much for that. We'll be catching up with you in the next hour. Here's the view on Wall Street. Ben Laidler of Bradesco BBI writing, markets face a possible reality check over the seasonally weaker summer months, with tariff and economic slowdown complacency high, in support of Trump and Fed puts both in doubt. Ben joins us now. Ben, thank you so much for being with us. I want to start there with signs of complacency. Is it complacency about the economic damage on the heels of tariffs? Is it complacency about the labor market? Where are you seeing the sign of complacency?
All of the above. It's slightly remarkable to me that we have a market which is at way above average valuations, with way above average earnings expectations, with way below average volatility at a time when the economy is clearly slowing and the tariff bill, which we know is coming, hasn't even started to be paid yet. And just for good measure, we're going into the weakest 2 months of the year. So I think that is a setup which makes me feel a little bit nervous over the next couple of months.
So is this a matter of chop, which is something we've heard a lot from people, or is this a matter of some sort of economic turn that people haven't really accounted for, especially on the heels of earnings that came up pretty positively?
I think it's more about the lack of upside rather than the sort of absolute, downside. I just really struggle to see when you have a market on 22 times earnings with 13% earnings growth, profit margins at all-time highs, increasingly supported by, forget about the Mag 7, the Mag 4, just, you know, there are only two ways to make money in markets. It's either valuations or earnings, and they both look sort of stretched. So it's the lack of upside I worry about rather than the sort of absolute downside. And I just think there are better risk rewards in other parts of the world, quite frankly.
Like what parts of the world, Ben?
Or like any part of the world, quite frankly. I mean, you know,
Anything but
Europe.
America? Is that your trade?
Well, I don't want to overdo that, but, you know, the US does stand out with very extended profit margins, very high earnings expectations, you know, a strong currency and a well-valued equity markets. You have a sort of triple premium there, and you have the reverse in the rest of the world. You've got some combination of cheaper markets, more depressed earnings, and cheaper currencies. And just simplistically, I just think that improves the risk reward, and it gives you more ways to make money.
It sounds like you don't think the U.S. is exceptional anymore. Is that accurate?
I don't think so, no. Well, maybe it's becoming exceptional in some of the wrong ways in terms of the institutional instability we're seeing, the policy uncertainty. I mean, none of that is good, and I think ultimately it will impose a cost. I'm not saying the rest of the world's fantastic. I'm just saying that it is priced for much more realistic earnings expectations, and the bar is just much, much lower for investors and for expectations to beat. So, you know, I spoke a lot about emerging markets. You know, Brazil, it's the cheapest market in the world, highest real interest rates in the world. The economy's doing fine. It's a closed economy. It doesn't really matter what goes on in the rest of the world. That looks like a better risk reward than the US on 23, 22 times earnings with all-time high profit margins and double long-term average earnings growth expectations.
Ben, when was the last time you were more underweight the United States than you are right now?
Yes, so I would absolutely be overweight the rest of the world versus the US. Again, you know, I think you make money everywhere. It's just,
No, I'm saying when was the last time?
The market has already spoken.
Right, but when was the last time that you were this underweight the United States? I'm just wondering if there's a historic reference that we could look to understand just how bearish you are in the prospect of upside, not necessarily downside, but upside for the United States.
Yeah, I mean, historically, you know, I've been a secular bull on the US for at least the last 5 or 6 years. And again, I'm not a bear now. I just see that, you know, again, bringing it back to basics, you have very high earnings expectations and very high valuations. You know, you basically, for the US to outperform from here and for you to make significant money in the US, you essentially need to argue that we're going off, you know, into the unknown, either on earnings or on valuations. And if the economy was booming and everything was great, maybe I would make that case. But I think given this given the setup right now of, you know, a fading economic growth and the policy uncertainty, it's difficult to make that case. And again, I think the rest of the world just has this sort of triple discount, which makes the risk reward just look a lot more attractive.
Before we let you go, how much would a rate cut really change your view, given the fact that we're hearing a number of different Fed officials line up and really indicate they're ready to go?
Well, certainly the market's pricing that, but I do think there's, you know, that Fed put is maybe not as secure as people think. The market is now pricing a 90% chance of a September cut, 5 cuts over the next year, and core inflation's still running at nearly 3%, and we haven't seen the impact of the tariffs yet. I'm not sure I would make that bet. I think there's a little bit less policy flexibility there than the market would like to think.
Ben Laidler of Bradesco BBI, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. President Donald Trump's new country-specific tariffs have taken effect. As Tyler said earlier, according to Bloomberg Economics, Trump's actions will push the average U.S. tariff rate to 15.2%, as some countries face duties as high as 50%. The president says the higher levies will slash trade deficits and push companies to move manufacturing to the U.S. Meanwhile, President Trump indicating he'll likely nominate a temporary instead of a permanent Fed governor to Adriana Kugler's soon-to-be vacant seat. Trump also reiterating he considers the two Kevins, Warsh and Hassett, as top picks to replace Fed Chair Jerome Powell. Fed Governor Kugler will vacate her role tomorrow, and Trump says he will announce his pick this week. And Trump is set to meet with Russian President Vladimir Putin within the next few days, with The Kremlin confirming the two sides have agreed on a venue. The agreement comes as the U.S. pushes for an end to Russia's war with Ukraine, and it comes as Trump has threatened to hit purchasers of Russian oil with secondary tariffs unless a truce is agreed to by Friday, tomorrow. That's Bloomberg Brief. Lisa?
Thank you so much, Yahira. And I got to say, Anne-Marie, we've been hearing a lot about this Russia-U.S. meeting, a possible Putin and Trump summit. Yet the United States is saying it's going to be a trilateral. Russia is pointing to a bilateral. The U.S. saying they want Ukraine involved. So which is it?
Well, this is what Steve Witkoff presented to Vladimir Putin in his 3-hour meeting yesterday in Moscow. He wants it to be trilateral. Zelensky, Putin, and Trump at a table. We heard from Yuri Ushakov overnight from the Kremlin. He's chief policy advisor, foreign policy advisor to President Putin. And they said they just want to, for now, focus on Putin and Trump. So for now, it looks like it is just going to be those two. But potentially, there is some wiggle room to add Zelensky either on another day or a future summit.
Well, right. Well, we're going to be discussing that and more up next, making a mark on the Fed.
We've started the interviewing process. We have some great candidates. It's probably down to 3. We're probably going to go with a temp and then a permanent. The temp is going to be named, I'd say, over the next 2-3 days.
Azoria CEO James Fishback joins us next to talk about whether he could be a possibility. You're watching Bloomberg Surveillance.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Seeing a lift to start the day. Futures higher by a significant amount, up almost 1% when it comes to the NASDAQ. S&P futures up 0.9%. Expectations for a rate cut really affecting the front end, where you're seeing yields lower. On the long end, not so much, 4.24% on that 10-year yield after a little bit of a messier auction yesterday. And dollar weakness ongoing, 116.65 on the euro-dollar cross. Under surveillance this morning, making a mark on the Federal Reserve.
We've started the interviewing process. Scott and I and Howard, a lot of people, JD, we have some great candidates. It's probably down to 3.
Candidate from Wall Street, Mr. President?
Yeah, essentially we're all from Wall Street, aren't we? You know, when you get right down to it. We're probably going to go with a temp and then a permanent. The temp is going to be named, I'd say, over the next 2-3 days.
Here's the latest. President Donald Trump saying he'll likely nominate a temporary Fed governor to fill a soon-to-be vacant seat. Trump adding the decision will be made in the coming days. Joining us now is someone whose name has been floated for the position, Azoria CEO James Fishback. James, thank you so much for being with us. Let's just start with what you know about the process and how intimately involved you are.
Well, good morning, Lisa. I think it shocked everybody last week for two reasons. The first of which, for the first time in 32 years, we had two Fed governors dissent against the chair. And then second, we had a third Fed governor abruptly resign on Friday, Adriana Kluger, without explanation. So it's given President Trump yet another opportunity to shape the leadership of the Federal Reserve, and he's going to do just that.
Well, he's looking potentially, and he said there, and I had a reporting on this yesterday, James, good morning, that this could be a temporary position, meaning this person would just serve out the remainder of Governor Kugler's term. So they would leave their job, serve in Washington for about 4 months, and then that would be it. Is that something you would consider?
It is something I would consider, Anne-Marie. I told the president that on Monday when we spoke over the phone. I think the next 4 to 5 months is especially important for monetary policy. We have a very big dislocation on our hands. Since President Trump took office, headline CPI has been running at 1.8% annualized, and we have 4.5% rates, Anne-Marie. The last time rates were this high, we had 6.5% inflation. It doesn't make any sense. Everywhere I travel in my home state of Florida, folks are stopping me, and their number one or number two concern is why on earth Jerome Powell is obstinate. Why doesn't he look at the data that Waller and Bowman and everyone else is looking at and lower interest rates to more natural levels?
Well, he might. We now have Governor Lisa Cook saying that the July jobs report is, quote, concerning. You have Neil Kashkari saying it might be appropriate in the, quote, near term. By the time September rolls around, the Fed might already be moving to the president's favor. Did you and the president, by any chance, discuss who he is thinking about the prime position of chair for the Federal Reserve?
Well, look, I'm going to keep my discussions with the president between him and I, but what I will tell you, Anne-Marie, is that this idea of cutting by 25 basis points a month and a half from now is a little too late for a man that does, of course, go by too late, that moniker that the president has rightly coined. The truth of the matter is that at the September meeting, if I were there, I would vote for a 100 basis point rate cut, because as Waller pointed out in his dissent after the July FOMC last week, rates are at least 150 basis points above natural. Look at the fact that mortgage originations are down 363,000 versus their 5-year running average. What does that mean, Anne-Marie? It means that families all over this country want to start a family, have done everything right, have saved up, have worked hard, but can't get a mortgage. If you can't get a mortgage, you can't get a house. If you can't get a house, you can't start a family. That is unacceptable, and President Trump is right to call out Jerome Powell on this.
That said, Jerome Powell doesn't really have control over mortgage rates. And in fact, if they were to cut rates by that much, you probably would see some sort of increase in yields in the long end, akin to what we saw last year. That certainly has been
to be fair, Lisa, we saw that. Well, to be fair, Lisa, we saw that because market expectations were pricing 7 cuts in the fall. They only delivered 3 cuts, and so the repricing at the 10-year part of the nominal curve ended up readjusting to what the SOFR curve had run ahead with. There's no time really in history where the Fed had cut and mortgage rates hadn't gone down by a substantial amount. This is the same Jerome Powell that in 2020 was talking up his ability to bring down mortgage conditions, to bring down long-end rates, and he actually did do that quite successfully in 2020 and 2021. So I don't accept the premise from Jerome Powell, who's all of a sudden can't do anything. He can do these things. They're well within his remit. It's time for him to act.
But we do hear from a lot of companies as they put earnings out that they are raising prices. They're grappling with just how much demand there is out there, and that the more the economy keeps chugging along, and that was the portrayal that we saw from everyone from United CEO to McDonald's, they're going to be able to pass that along. So at a certain point, how much is this a very different situation than 2020, where there's a new inflationary push that's not going to allow rates to go back to where they were, or the perceived rate of neutral back in 2020?
Well, that's a great point, Lisa. I got to give you credit for that. The truth is we are seeing limited price increases from here and there as companies are making this transition. President Trump has never made a secret this is going to be a transition period. But the way the Fed, and we should all look at inflation, is as an aggregate number. There's always going to be increases and decreases beyond the mean. But if you look at the aggregate inflation numbers, they have come in better than expected, lower than expected for the past 5 consecutive months. As I mentioned, since President Trump took office, inflation on on a headline CPI basis is annualized at 1.8%, Lisa. That's not at the Fed's target. That's below the Fed's target. President Trump does not deserve a Federal Reserve that is acting out of accordance in a complete rejection of the data. Waller is looking at the data. He is saying neutral. Even the Fed's own models from the New York Fed of the short-run neutral rate have it closer to 3%. And why are rates at 4.5%? It just doesn't make any sense.
James, as you know, the Fed's purview comes under Congress, and this position would have to be Senate confirmed. Some of my reporting with Saleha Mohsen is that the administration is actually looking for someone to fill this temporary position that already has been in front of the Senate and can get confirmation. Many would view you as a bit more of a controversial pick, took a less traditional path to this. Do you think you could be Senate confirmed?
Look, at the end of the day, Anne-Marie, the president is going to make the ultimate decision. He has no shortage of great options. What I will tell you is this is a president, unlike Jerome Powell, who surrounds himself with workers, with businesses, with retirees, with unemployed folks all over this country. He talks to them directly. Jerome Powell meets with his PhD economists. They publish papers about systemic racism being the cause of the home ownership crisis, not high interest rates or the fact that private equity companies like Blackstone are coming into communities like mine and buying up homes from under folks. So I trust that the president is going to make the right decision. And part of that, you're right, Anne-Marie, is the ability of someone to be confirmed by the United States Senate.
James Fishback, Zoria CEO, thank you so much for being with us, and we look forward to catching up as you continue the process. Joining us now is Bloomberg's Michael McKee as we get a host of different Fed speakers coming out and saying that it might be appropriate right now to cut rates.
Exactly, Lisa. The timing is very interesting, but it is also tied to the data that we have gotten. A lot of the members of the Open Market Committee had said they wanted to see what happened with the payrolls report and with the CPI report we're going to get next week to ensure they had a better handle on what was going to happen. Now, obviously, Mr. Fishback is campaigning for a job, so that's okay. But there's two things wrong with what he was saying. One is that Jerome Powell can do anything on his own. This is a committee of 12 voters, 19 people total, and he can't just snap his fingers and cut rates, and the majority have not wanted to cut rates. The other thing is that there is no inflation lately. Well, the tariffs haven't started until today, really, so we'll have to wait and see what happens. But yesterday you had Susan Collins, you had Lisa Cook, and you had Mary Daly all say that they think it's about time to start cutting rates if the data continue to show what they have shown the last couple of months.
Michael McKee, thank you so much. We'll be catching up with you throughout the morning, especially as we get that key jobless claims data in about 2 hours' time. And just building on what Mike was saying, we also heard from Neil Kashkari yesterday saying in the near term, it may become appropriate to start adjusting the federal funds rate. So well on their path, not necessarily to a 100 basis point rate cut, but still 25 basis points.
Well on their path now when we have the labor market data. What happens if we have very hot CPI prints? We have 2 CPI prints before the next Fed meeting. What happens if they come in hot? Look at the ISM services. Everyone is saying that is the conundrum the Fed is in, this stagflationary potential environment. And what do you do then when 2 sides of your mandate are not working together for you to have this ability to cut rates?
Luckily, they have about a month and a half, so they can really discuss this. And Jackson Hole will be a very interesting meeting with some interesting commentary. Coming up next, Jim Bianco of Bianco Research taking the other side of those rate cuts, and as well as discussing Trump's potential pick for the Fed governor.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Perhaps it's the beginning of a new era. We do see tariffs come into effect with the U.S. tariff rate now effectively more than 15% from 2% at the beginning of the year. Highest levels going back to the 1930s. A real question of how markets are dealing with that. Well, they are looking to make some new highs in the big tech space after another record close yesterday for the Magnificent Seven. We're seeing NASDAQ futures push higher 0.8%. Russell 2000 up almost 1%, with the expectation that there will be some sort of rate cutting cycle and strength in the underlying U.S. economy. 3 hours away from the cash open. Here are your morning movers with Danny Berger. Danny.
Hey, Lisa, I have one of those Mag 7 stocks that's having another really good day. It is Apple, which rallied 5% yesterday in the pre-market, up another 3%. Had that meeting in the Oval Office. Tim Cook did, the CEO, with President Trump announcing an $100 billion investment. The enthusiasm here is that you will not get that 100% chip tariff that Trump announced if you invest in the U.S. So some of Apple's partners, chip partners, also rallying in the pre-market. Now, on the other side of things, Airbnb reporting earnings yesterday. And look, it was okay. They meet expectations. They said that the summer bookings were looking robust. The problem for them, though, was that they said they had tough comparables for the end of the year. And that meant that growth would look pretty steady instead of robust. So that weaker kind of outlook, or let's call it mild, mean that shares are down 6.7%. But maybe if you're not out booking Airbnbs and going on vacation, you're ordering at home. And that's what we saw from DoorDash. Really strong earnings, exceeding expectations. Shares are surging 9%. They said they added new customers for every single month of the last quarter. Their outlook also exceeding expectations, too. We heard similar things from Uber. So, yeah, people ordering from restaurants, despite the fact there is some lingering economic anxiety within other earnings reports, Lisa.
Thank you so much, Danny. Maybe they're just staying at work and ordering in dinner to stay at their desks rather than going on vacation. On our radar this morning, not that. President Trump's sweeping new tariff rates taking effect, impacting nearly all U.S. trading partners. The moves raising the average tariff rate to more than 15%. Some countries facing rates as high as 50%, although those seem a little bit more fungible when we're talking about India. It just goes to show each of these tariff rates kind of, Anne-Marie, has a different purpose.
Right, and they're bespoke, really, depending on the country. So, as you rightly pointed out on the start of the show, is this a new world order? For some countries, it is. Or is this negotiating? And for some, it is, like Switzerland and India. They still seem to be in negotiating mode with the United States, especially India. Front page of the Wall Street Journal editorial this morning in the opinion section, Trump targets Russia via India. Basically, going after what's going on in Russia, something he also wants to bring to a close, that Ukraine war, going after the oil imports going into India. Now, this puts India definitely on the back foot, because this is a 50% potentially as high in 21 days tariff rate. What is so interesting on the economic front, for months we've been talking about how the market is pricing in the uncertainty of tariffs. Well, the next 6 months, they're actually going to have to start pricing in the actual tariffs.
And that's the reason why some people are saying people are overestimating how well the U.S. economy can absorb them without any weakness or any inflation. And we're going to be having a conversation coming up, taking the other side of what we heard from James Fishback. Jim Bianco joining us to talk about why he thinks cutting rates will be a policy mistake. Meanwhile, Trump announcing plans to raise tariffs on semiconductor imports to 100%. Okay, this sounds really bad, so why did we get record highs? Well, he promised to exempt companies that demonstrate a commitment to building in the United States. We saw NVIDIA shares, Supermicro shares, as well as TSMC all surging, and Apple coming out with that announcement that they were going to invest $100 billion to building more in the United States, them seeing a more than 5% boost, as Danny was talking about earlier.
And you know who else wasn't just at the White House yesterday? It wasn't just Tim Cook. It was Jensen Huang as well, as Trump was about to announce this, quote, 100% tariff rate on semiconductors. Jensen Huang was also there. Both these CEOs have been trying to lobby the president when it comes to exemptions. And guess what? If you read the fine print, there likely will be exemptions. When it comes to tariffs, TSMC is saying we're okay because we are still building in the United States. We are putting investment into the United States. It's that carrot and stick approach the Trump administration is trying to use when it comes to tariffs. You also saw the exemptions when it comes to TSMC. Canada looks like it has a very high tariff rate, 35%. But then when you look at actually what is being traded, most of those goods are USMCA compliant. And if USMCA compliant, your tariff rate is 0.
Which is a reason why everyone's continuing to parse through all of the details. We've been talking about, is this a new world order? Is this a negotiation? When it comes to India, it's been a negotiation to try to get Russia to the table to end the war with Ukraine. On that note, Trump is set to meet with Russian President Vladimir Putin within the next few days. This, according to the Kremlin, saying the two sides have already agreed on a venue. The agreement coming ahead of that Friday deadline tomorrow that would hit Russia with secondary tariffs. The thing that I find confusing, and there are a lot of things that I find confusing, is that the United States side talked about a trilateral meeting with Vladimir Putin, Volodymyr Zelensky, and President Trump, but there here seems to be from the Russian side a discussion about a bilateral summit. So which is it?
Well, when you listen to the Kremlin and Yuri Yushakov, Putin's top foreign policy aide for decades, they are talking about just a bilateral meeting between President Trump and President Putin. And he said, together with our American colleagues, we are starting to work on specific issues. This is what's also interesting for me. You're meeting to work on those issues. Usually when you have a summit, it is the final part of the deal. The deal has been worked on for months, and you are having a summit because you are going to be signing it. But on the leader level, it feels like this is almost taking a backwards approach. The leaders are going to be meeting, and then more work needs to be done on the diplomatic front.
And India is watching and saying, look, if it goes well, will you guys lift some of those tariffs? In the Fed news, President Trump saying he would likely nominate a temporary Fed governor to Adriana Kugler's soon-to-be vacant seat. I believe that is as soon as tomorrow. Meanwhile, a real discussion about what this means for Fed policy. Jim Bianco of Bianco Research writing this. Trump suggested he would appoint someone to finish out the term through January 2026. Presumably, that would be Kevin Hassett. In other words, Hassett would have a 5-month trial run. Jim joins us now. Jim, one thing that you pointed to is that in this push to cut rates, you think the Fed is going to make a policy error. Why do you think so?
Because I don't think it's necessary. I think that we've lost the sight as to what is interest rates and what is the appropriate interest rate. President Trump keeps talking about that we're the hottest country ever. Everybody wants to be in their country. Look, I agree with him. But what he seems to be implying is we're the best credit rating, so we should have the lowest interest rates. That's not how you set sovereign yields. That's how you price a mortgage on Trump Tower in Manhattan. The way you set sovereign yields is the combination of growth, inflation expectations, and supply should determine kind of a natural or neutral interest rate. And right now, that looks like, on the long end of the yield curve, somewhere around 4.5% to 5%, which is where we are right now, which is why the market has been meandering sideways. Now, if the Fed wants to cut rates and add extra stimulus into the economy, because that's presumably what they're going to do, they could push those numbers up. You know, faster growth, potentially higher inflation, and that could wind up pushing up the long end of the yield curve, like we saw last year. The yield curve went up, I think, or the long end of the yield curve, 10-year yields rose when the Fed was cutting rates. largely because after the Fed started cutting rates, the economy started to rebound, and it did what it was supposed to naturally do.
Jim, we saw the labor market report on Friday really change the tone of a number of people on the Federal Reserve. The fact that the revisions came in at the greatest pace going back to the height of the pandemic caused a lot of Fed officials to start talking about rate cuts. Lisa Cook coming out and saying these revisions are somewhat typical of turning points. How do you view that, given the fact that there are other people saying they're seeing real softness in the jobs market?
Because there is softness in the jobs market, and they are, signaling or you see them at turning points. But what is the turning point that we're seeing? And the answer is the thing that very few people are talking about. Labor market statistics are measures of population growth. We've shut the border on this, and we have got net immigration at zero. President Trump tweeted this out the other day, or put it on Truth Social, that we have net negative immigration for the first time in 50 years. And that might be correct, or it's very close to zero either way. That means we've got no population growth. That means that the U.S. economy might only need to create 10 or 20,000 jobs a month in order to meet the population growth and new entrants into the economy. But we're all operating under this assumption that normal is 100, 150,000 jobs a month. And that's why there's this rush to cut rates and stimulate. Well, if you're going to do that and try and force the U.S. economy to create more jobs than population growth with demand, that means you're just going to have to drag more people into the workforce. And you do that by raising wages. You do that by creating inflation. I think the other side of the equation, how many jobs do we need to create, is not being discussed. And it's not being discussed because there is no population growth, and that number might be trending towards zero. The American Enterprise Institute has said by next year, that break-even number might actually be as low as zero.
Jim, the president said yesterday, following reporting we had, that he plans to go with a temporary approach to fill the Kugler seat. How do you think the market will respond to that?
I'm wondering how they're going to, was this Apprentice season 1, the Federal Reserve is what we're going with this. I mean, basically.
Game of Thrones,
first
but
of
yes.
All, yeah, or Game of Thrones, either way. I think either way, the issue you're going to have is, assuming he appoints somebody this weekend for this temporary role, and assuming it's a trial that person could also be the permanent person and eventually the Federal Reserve chairman. I don't think they're going to get approved by the Senate before the September 17th meeting. I know Trump will try to get them approved. Maybe they don't even get approved by the October 30th meeting. They might only be there in time to cast a decision for 1 or maybe 2 meetings, and then they'll have to make a decision, at the end of the year. So I think initially the market will look at it, assuming it's one of the 4 names that we continue to throw out, and it's not an outlier name that no one has discussed. I think the market will look past it at least for a little while, because that person probably is still going to be a few months away from actually casting votes.
Well, what if it is someone like a Kevin Hassett or Kevin Warsh? Do they then basically become the shadow Fed chair? And how confusing might that be for market participants?
Yeah, I think they will become this shadow Fed chair, and it will be a little bit confusing because the market will look at a Warsh or a Hassett, or if it's a Waller, and ask the question, what are they going to do after May, assuming that they May of next year, assuming that they are the Federal Reserve chairman, and that will diminish Jay Powell's role and increase their role. And if they're at odds with what Jay Powell is saying, then I think that could create some real confusion. If it's a name that none of us are talking about that gets it, then we'll be asking the question, will they even be there after January? And that's a whole different discussion.
Jim Bianco of Bianco Research, thank you so much for those insights. It's important to hear the other side. It's amazing to see how much dissent there is right now among market participants about whether there is about to be some sort of inflationary push or whether we're about to see some real weakness in the labor market.
As you mentioned, Jackson Hole just got so much more interesting because the individual everyone wants to hear from is Jay Powell. Everyone agrees he is a dove. What is he thinking about now when it comes to the labor market, given the fact that we had basically a trend when you look at the revisions of a weakening labor market and more people lining up with the double dissenters that he faced at the last meeting?
Yeah, I'm also curious about Chris Waller, given his renewed position as, if not a shadow Fed, certainly a real contender to be the next Fed chair. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Eli Lilly shares are plunging nearly 13% after results from its latest obesity treatment pill fell short of expectations. In a study, patients who took the experimental pill lost an average of 11% of their body weight. Investors had hoped Lilly's pill would be as effective as Novo Nordisk's injection Wegovy, where users in trials lost 14 to 15% of their body weight. Novo Nordisk's shares are higher by 9%. Meanwhile, Chinese exports surging in July, with exports up 7.2% year over year. That marks the fastest gain since April, as demand from around the world offset a continued slump in shipments to the U.S. due to tariffs. The resilience signaling demand for Chinese goods remains strong and continues to be a significant driver for the Chinese economy. And Switzerland's government is holding an emergency meeting today to consider the fallout from President Trump's 39% tariff rates. This after President Karine Keller-Sutter failed to make a trade deal and avert the highest U.S. levies on any developed country. The Federal Council will issue a public statement after the extraordinary meeting. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. I'm just looking right now that Swatch has raised its pricing on watches for the United States and is looking like a 7 to 10% increase on brands like Blancpain and Gazut Original.
Nespresso, their prices are going to be going up if you drink coffee in the morning from Nespresso. It was the Swatch CEO that actually was saying publicly, this president of Switzerland needs to go to Washington, D.C. and sort this out. We should not be facing a 39% tariff rate.
Well, she went to Washington, D.C., sorting it out. Another question. Up next, unwelcome signs in the economy.
The labor market has softened, and you can see this everywhere in the U.S. economy. And I would see additional slowing in the labor market as an unwelcome sign.
Kelsey Barrow of J.P. Morgan Asset Management joining us next. This is Bloomberg Surveillance.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, the tariffs went into effect. Big fear in markets. We're looking at maybe some new record highs for the NASDAQ. We're seeing right now Mag 7 continuing to chart the charge higher. We're seeing across the board gains. S&P futures higher by 0.7%. A bit of dollar weakness on the expectation there will be Fed rate cuts and yields just slightly higher on the long end, which is a question about what the ramifications will be on the heels of rate cuts. Under surveillance this morning, unwelcome signs in the economy.
The labor market has softened, and you can see this everywhere in the U.S. economy. And I would see additional slowing in the labor market as an unwelcome sign, especially since we know, and I think importantly because we know, that once the labor market stumbles, it falls. And it falls quickly, and it falls hard. I think we'll likely need to adjust the policy rate sometime in the coming months.
Here's the latest. San Francisco Fed President Mary Daly voicing concerns about the U.S. economy alongside two other policymakers suggesting a rate cut is imminent. Kelsey Barrow of J.P. Morgan Asset Management writing this: if economic data continues to indicate weak hiring, the Fed is likely to deliver on a rate cut in September, despite Chair Powell's more neutral tone. Kelsey joins us now. We are seeing, Kelsey, a 95% chance of a rate cut getting priced into Fed funds futures. Seems like this is almost a given. Is this the right thing to do?
I do think that it is the right thing to do. So if you take a step back, you think about what the Fed has done so far. They've cut 100 basis points. They did that last year, then they paused. Policy right now is still restrictive. It's still above neutral. We are seeing signs that the labor market is slowing. We've been seeing these signs actually for a while, but on the other hand, the Fed was balancing the risk to inflation. I think there are still risks to inflation. We are going to see more inflation in terms of core goods, but I think the reason that the market has been able to digest it and the Fed is going to be able to look through it is because we're seeing disinflation on the services side that is offsetting some of the inflationary forces on the goods side.
So I feel like it's cognitive dissonance a little bit. When I speak with equity investors, they talk about this incredible strength and resilience and the sort of profit increase that we see at companies that really belies the weakness that bond investors talk about. I know it's cliche, bond investors pessimistic, stock investors optimistic, but do you see some sort of cognitive dissonance there?
I mean, not really. I mean, we're looking at two different things, but you put it best. We were in the commercial break. You said the volatility so far this year is in the headlines. It's not so much in the market. And when we came into this year, what we wanted investors to focus on are the high starting yields within the fixed income market, yields that you haven't been able to get for over 10 years. And even if yields stay range bound around here, credit spreads are range bound, which is essentially what we've had this year. We've had some choppiness, but yields are a little bit lower than the start of the year. Spreads are about the same as the start of the year. Then what do you get? You get carry, you get income in your portfolio. The U.S. Ag is up 4.7% year to date. U.S. high yield up 5.3% year to date. This is exactly what you want to see in this type of environment.
By the way, when Lisa says volatility in the headlines, I think you mean policy out of Washington, volatility in every time almost the president speaks, or truth. The more sanguine markets are there, is the president more emboldened? Could we see more volatility that actually the markets have to react to?
I think that is a risk. So we've been doing a lot of analysis on how corporations are going to handle tariffs. And we've stressed them against a 10% tariff regime. Then we were like, okay, maybe we need to stress them against a 20% tariff regime. And our corporate analysts came back and they said, it's not great for earnings. Earnings are going to slow. Revenue is going to slow. But it's manageable given the very strong starting points of companies. And they're going to use a variety of different methods to offset those higher costs.
Including layoffs?
It could be some layoffs. And I think if it's not layoffs, it's at minimum less hiring. And that's what you're seeing in the economic data already flow through. The risk, though, is that once maybe you get past 10 or 20%, at a certain point it is going to become nonlinear. Everything that we've been looking at so far, that we've been looking to measure, is essentially linear. You know, a 1% increase in this results in a 50 bip decrease in Y. And so the risk is at a certain point, all of this compounds and it creates a more negative result. So far, though, that's not actually what we're hearing. Our credit analysts are saying that Q2 earnings are coming in better than feared, and the focus is really shifting away from managing tariffs to now managing the advantages that they're getting in terms of the One Big Beautiful Bill, whether it be expensing of R&D, interest deductibility, less stringent emission standards for autos. So, you know, the focus is shifting again here for companies, and they continue to just muddle along.
As you look at the economy, is it more instructive to listen to what corporate executives are talking about than the economic data? Especially, you can put aside the BLS of what exactly happened with the labor market data, but even CPI coming out on Tuesday, real questions around just how much some of their data collection has declined and the integrity of that data. So at this point, are corporate executives better reads on the economy?
I think that you have to look at all of it. And what the jobs data on Friday really reminded us all of, and people say this all the time, you can't just focus on one data point, you can't just focus on one data series. You know, if you're trying to come up with a view on the economy or a view on where things are going to go, you need a variety of data points that all kind of, a mosaic essentially, that gets you to a conclusion. And so, yeah, maybe in this environment, we need to look at a few more alternative data points to try to enforce what we're looking at. But I think also what we do need to be prepared for is more volatility in the data. So because we have less data collections, the sample sizes may be smaller, response rates may be lower. That doesn't necessarily bias the data in one direction or the other, but it does mean that we are prone to more revisions. Now, that's something we've all been dealing with for a while. I think I would describe that as not just a new thing to the last 2 months, but actually something that we've been experiencing since the pandemic, which is that there have been a lot of large revisions that have caused the market to have to reassess the trajectory. And that's why I do think it's so important that you don't just focus on one data series, you look at a variety of data points, you focus on what companies are saying, you look at what small businesses are saying, you look at what the economic data is saying, you determine what the trend is, and you don't jump to conclusions based on just one revision or one data point.
Or you take the rest of the summer off, because right now bonds have basically been in the same place for quite a while. Kelsey Barrow of JP Morgan Asset Management, thank you. Have a wonderful rest of the day. What we are seeing in markets is that lift as people look past all of the noise, listen to what companies are saying, and sort of deciding it's not that bad.
Well, Kelsey put it really well from the research team. 10 to 20% tariffs. It's not great, but we can weather that storm, and it's not going to be a material impact on our earnings. And that is why the markets is just pushing through and looking at what's coming down the pipeline next. And maybe that's some incentives from what happened in Congress in the One Big Beautiful Bill.
Yeah, for now, because a lot of people expect chop, including Sarah Hunt, who's coming up next, of Alpine Saxon Woods, former NEC Deputy Director Everett Eisenstadt, Hyatt CEO Mark Hoplamazian, and Mike Pyle of BlackRock. We also do get a Bank of England decision in just about 4 minutes' time. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that
you want to exist in 100 years?
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
U.S. economic data is the envy of the world.
The consumer is doing just fine.
We're unlikely to see a major reacceleration of inflation.
I wouldn't be surprised if there is no rate cut in September. The Fed probably will be behind the curve because the tariffs create so much uncertainty.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance as we wait for a Bank of England rate decision as we talk about the Fed's potential move in September. The Bank of England potentially taking the lead, and indeed they do cut that key interest rate to 4% after a 5-4 vote. We'll be getting to that in 1 second. A real question here about what this means going forward for the rate cutting cycle globally. We have seen Europe taking the charge. Does this mean that they're now going to be on hold? This comes at a time when we're trying to understand what the ramifications from tariffs are, at a time when they do go into effect today, President Trump's tariffs, and a real question going forward of what future tariffs could look like at a time where they're increasingly being used, Anne-Marie, as a negotiating tool.
Absolutely. When it comes to countries like India and Switzerland, it feels like they are still part of this negotiation, even though they are facing higher tariffs, and everyone is facing higher tariffs as of 12:01. Just after midnight. What the Trump administration, though, is doing is negotiating with certain countries, but setting rates, higher rates for others. And this is the whole conundrum the Fed is facing. Will this bleed so much into CPI that basically their dual mandates are working against each other and puts them in a very difficult position to cut rates? I can imagine the Truth Social post this morning is going to be, even the Bank of England was able to cut rates a 5th time, brings it to the lowest since March of 2023, and pulls ahead, of course, the Federal Reserve.
Yeah, lots of questions here, and we are going to get to that Bank of England rate decision. We're seeing a response in markets with the pound gaining versus the dollar, strengthening versus the dollar, a 5-4 decision. They're talking about how inflation will remain at 2% in the 3rd quarter of 2027 as well as 2028. So seeing that downward trajectory, breaking it all down, Bloomberg's Lizzie Burdett joining us now. What do we learn from this decision?
Well, Lisa, I can hear you saying that Donald Trump is going to be disappointed because now the Bank of England's rate is lower than the Federal Reserve's 4% here, as expected, but there is drama beneath that rate cut. So they've cut it despite inflation being at a 17-month high, but the worries here are about the growth in the economy, the contractions back-to-back that we've seen earlier in the year, and the slowdown in hiring. But look at this vote split. So initially, they had a 4-4-1 split, and then they had to recast the vote and go again. So because it was so finely balanced, they ended up on that 5-4 split, 5 voting for a quarter-point cut and the other 4 voting for a hold. The expectation, the most common expectation going into this was for a 3-way split of 2-5-2, but I have to say the expectations were absolutely all over the show going into it, just reflecting how much uncertainty there is here. In terms of the forecast, as you nodded to, in terms of inflation, they've upgraded it. So they had seen 3.7% as the peak. They now see it as 4% in September as the peak. And they see inflation at 2% in the third quarter of 2027, so way down the line, and 2% in the third quarter of 2028. That is when we will be back at the inflation target in the third quarter of 2027. So as you say, the pound is up. It's been read as a hawkish cut, this, because of these worries about inflation.
Thank you so much, Lizzie Burden, and we will be following up as we try to understand what central banks around the world are going to be doing as a result of the tariffs and the potential pressures. Bank of England facing a unique pressure given the threats to its currency. How much can you cut rates if you still have inflation as a problem, even in the face of slowing growth? Right now, you are seeing a bit of gains across the board in the United States as people parse through all of the potential tariffs that are coming down the pike, as well as the ones that actually are going into effect, and seeing that maybe this is all baked into the price, really led by the Magnificent Seven in the United States. You can see that dollar weakness continuing this morning versus the pound after what Lizzie Burden said was a hawkish cut. Coming up this hour, Sarah Hunt of Alpine Sachs and Woods talking about increased volatility going forward in the market. Former NEC Deputy Director Everett Eisenstadt, as President Trump's tariffs take effect, and Hyatt Chief Executive Officer Mark Hoplamazian on resilient travel demand. We continue with stocks higher as markets shrug off the president's levies. They look to potential rate cuts around the world. Sarah Hunt of Alpine Sachs and Woods writing this: markets are experiencing more volatility as we wind down earnings season, as excellent numbers sometimes are greeted with a yawn or a knee-jerk drop, at least on the first glance. And this is what we were talking about a lot yesterday. Sarah joins us now for more. Thank you so much for being here. Let's start with that. The idea that you saw good earnings from Uber. You saw good earnings yesterday, pretty much across the board, and yet the performance in shares kind of all over the place.
Well, good morning and thank you. This is what I think is very tricky right now, is you've got an argument that valuations have to grow, earnings have to grow into valuations, and you have some anticipatory moves in the stocks. I mean, Uber was up already, right? So I think part of the problem is you've seen these big moves in the stocks. They come in with really good earnings, and everybody's like, well, the move's already happened, or that wasn't so much better than I expected that it's gonna push it again further. So I think this is, to me, a little bit worrying, because you want to see those good earnings be rewarded, but I think that the market just keeps moving sort of relentlessly higher, especially on the technology side, and those earnings better be able to fill into that. And I think that is a little bit more of a turn than we saw earlier in the beginning of earnings season.
It seemed like heading into earnings season, people said that corporate earnings were going to be the risk. They crossed that hurdle and then some. You saw a real earnings revision in terms of forecasts. Now people are saying, wait for the data to turn around. So is that really kind of the catalyst for some of this chop, the idea that some of the economic data could start reflecting some of the weakness that we saw last Friday?
I think the problem is that once earnings are out of the way and they were good news, and then the market continued to go higher. I mean, we did have a little bit of a down few days, but it wasn't sustainable, and it doesn't seem to be right now being carried through, that any weakness in the data, because you now have a paucity of earnings until you get into the next quarter, is going to be the absolute focus. And this is a tough time of the year for a variety of reasons. There's seasonality going on, people are away for the summer, and any moves tend to be somewhat outsized, which is why we think you're going to see more volatility. And in fact, if you go back and look at the last 3 or 4 years, the whole August, September into the beginning of October has been rather witchy. And so I think that that is a little bit what we are anticipating, and you have things like those data numbers, I mean, the labor numbers, that was not a great set of revisions. That was not great news, and this has been the reason why you can justify, no, we don't need to cut rates because the labor market's doing fantastically. Well, maybe it's not doing quite as fantastically as we thought.
Well, on top of all these months that you say are witchy for a number of seasonal issues, we also have now much higher tariff rates. When are these companies going to digest that? When are we actually going to see the impact?
Well, and that's the other big question, because the anticipation on that has been going on for so long, and the knowledge that they were coming has been going on for so long. It's hard to see under the surface who's been able to mitigate some of that ahead of time and who hasn't. As we get closer, as this gets implemented, and then the question becomes, there's so many carve-outs, does implementation mean versus not implementation? We're going to see that change over the next few months as that starts to get absorbed. Is that going to hit margins? Is that going to be a bigger problem? Because so far we've been able to push that out because it hasn't actually taken effect yet.
How have you seen corporate America mitigate some of those concerns?
I think people look at sourcing. I think people look at a variety of different things that they can do to say, okay, if this is going to cost me 15% more, what else can I do to either change that and or maybe I'm not hiring so many people, because in the end, what is the flex that you can do in your variable cost? Sometimes it's labor. Sometimes it's not some of those components that are fixed. So to the extent that you can't resource something in the States that you were buying somewhere else, or do something that's cost efficient that way, I think the problem is that then that becomes a labor question.
There is a bull case in big tech, and there's a bull case in some of the puts that are out there, that still are out there, even if some people are saying that maybe they are less potent than they were earlier this year. And one of them is central banks around the world. And we just saw that with the Bank of England cutting rates despite some of the inflationary pressures because their economy is weak and actually showing real signs of weakness. In the United States, we've heard something similar from some of the Fed officials, even though there still is that risk, especially with CPI on the table next week, that there really could be this inflationary pressure. So how much is that sort of a tailwind for risk assets? Because either there's going to be weakness and there'll be a response from a central bank, or there won't be weakness and then you can just carry on with these kinds of gains.
Well, and I think that that's sort of where the Fed's been able to hedge its bets and say, we're going to wait and see, and we're going to wait and see, because the economy has been kicking along. Things have been going well. Earnings have been coming in. And that is one of those conundrums that either you're stuck because you can't do something, or no matter what happens, it's going to be okay. And I still think we don't know, but the market is priced for it's definitely going to be okay. So any wobble in that story, as you see we've watched those narratives flip back and forth for the last couple of years, any change in that story, and I think you could see some, if not prolonged weakness, certainly some volatility that nobody wants to ride through in August.
Well, earlier, about an hour ago, actually, we were speaking with Ben Laidler, and he said he doesn't like the United States right now. He actually likes the rest of the world better just because of valuations and people not factoring in some of the slowdown that you're talking about. Do you agree that the rest of the world looks better?
That's a tricky thing for me, because at the same time, the U.S. has to do well for the rest of the world to continue to do well. So if the U.S. is looking shaky, then I'm not sure that I can say that it's much better to be in other places, because there's going to be a knock-on effect. If the U.S. slows down, everybody else is going to slow down. But from a straight-up valuation point, that's hard to argue, because the U.S. is valued at a very high level right now. And that's part of the problem, is that some of those valuations seem much more ephemeral and .com-like, and that is what I think is worrying investors in a general way.
What Ben Laidler was talking about reminded me of what Mark Rowan of Apollo said in May, which is basically like there's been a brand hit to corporate U.S. America Inc., and he sees the U.S. moving from hyper-exceptionalism to just merely exceptional. Would you agree with that? We're just not as exceptional?
I think that's trying to fine-tune something that is either a yes or a no, as opposed to a gradation. I think that from a technology and an innovation standpoint, it's still hard to beat the U.S. markets, which is why the U.S. technology market is doing so well and will continue to do well. I think I have a hard time parsing out that much of a difference. I think it's still, the U.S. is going to continue to do well. Other markets will do well. The U.S. starts to slow down. I think that's going to be a problem for other markets as well. It's hard for me to separate those two.
Sarah Hunt, thank you so much for being with us. Sarah Hunt of Alpine Saxon Woods on this Thursday. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump's new country-specific tariffs have taken effect. According to Bloomberg Economics, Trump's actions will push the average U.S. tariff rate to 15.2%, with some countries facing duties as high as 50%. The president says the higher levies will slash trade deficits and push companies to move manufacturing to the U.S. Meanwhile, President Trump and Russian President Putin are set to meet in the coming days. The Kremlin confirming the two sides have agreed on a venue. Talks had been initially considered to include Ukrainian President Zelensky, who posted on X this morning that various peace meetings have been discussed with German Chancellor Merz, including 2 bilateral and 1 trilateral. And take a look at Eli Lilly shares. They are sinking 13% as disappointing data on its new weight loss pill is overshadowing a strong second quarter. Lilly beat on both the top and bottom lines, and it raised its full-year revenue outlook. It now expects to bring in $60 to $62 billion this year, with its obesity treatments continuing to drive growth. But quite the plunge this morning. That's Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Evidently, in Lilly's pill study, patients in the highest dose lost about 11% of their body weight, or 25 pounds, and people were looking for maybe 15% of their body weight. That's essentially what people were talking about.
Well, potentially they're going to get there, right? The science just keeps getting better. But a little concerning, though. It's a lot of weight to lose in a short period of time.
Well, this was last year's story. Maybe we're all getting back to fast food this morning. Up next, piling on levies.
You know, we put a 50% tariff on India on oil. You're going to see a lot more.
So this is a taste of
You're going to see a lot more. You're going to see so much secondary sanctions.
Former NEC Deputy Director Everett Eisenstadt joins us next.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It was supposed to be D-Day. It was supposed to be the deadline for all of the tariffs to go into effect. A lot of concern about what this would mean for businesses. Let's take a look at markets to see all of that concern, and markets are up. They're retracing some of the gains from futures. Now just up about 0.6% for the S&P, really led by big tech, and you can see that with the outperformance in NASDAQ. Yields creeping just a touch higher. A focus today on the 30-year auction at 1 p.m. Yesterday's 10-year a little soft. 424, up about 2 basis points, and crude prices just slightly higher, $64.81. Under surveillance this morning, piling on levies.
You know, we put a 50% tariff on India on oil. They're the second largest. They're very close to China in terms of the purchase of oil from Russia.
Why are you singling India out for these additional sanctions?
It's only been 8 hours. So let's see what happens over the next,
sanctions.
You're going to see a lot more.
So this is a taste of
You're going to see a lot more. You're going to see so much secondary sanctions.
Here's the latest. President Donald Trump threatening additional levies on countries purchasing Russian oil as his country-specific tariff rates take effect. Bloomberg's Tyler Kendall joins us now. Tyler, what's the latest on why India has been pinpointed as the first to really underscore this effort to use tariffs in a negotiation with Russia?
Yeah, Haley. So, well, it's clear that the president hasn't been too happy with India when it comes to the trade talks, and it looks like this is perhaps being used in leverage for those negotiations, considering that India really saw a reversal in fortune when it came to the discussion since the country was long prioritized. We saw Prime Minister Modi be one of the first foreign leaders to come to the U.S. In fact, India actually put a whole lot of concessions on the table pretty early on. You'll recall they lowered tariffs on an array of goods from luxury items to motorcycles, yet they still ended up with this 25% tariff rate. Now, President Trump, though, said that India is really just the start here, which leads us to questions on which other countries could get these so-called secondary tariffs. The president did say potentially China could be on that list. And while we did hear the Treasury Secretary Scott Bessent last week in Stockholm say that he warned China against importing sanctioned oil, we're starting to see some top advisors really downplay that idea, including senior trade counselor Peter Navarro, for example, considered to be rather hawkish, saying yesterday that he doesn't really think that the tariffs are going to be ratcheted up that much higher. One of the main reasons being that Beijing would likely retaliate. And at this point, both sides are just trying to keep this de-escalation in place, though China is the leader when it comes to importing Russian energy supplies. They represent 47% of Russian oil exports, followed by India at 37%, and then Turkey at 6%. But Lisa, at the end of the day, our analysts at Bloomberg Economics say that when it comes to India, those barrels are just going to be diverted into the market elsewhere, which really means that this administration is likely looking at some other economic penalties when it comes to forcing Russia to the table. We had our Bloomberg News reporting yesterday, according to a person familiar, that the White House is looking at adding new sanctions on Moscow's covert fleet of oil tankers, and that potentially could be on the table next.
Bloomberg's Tyler Kendall, thank you so much for being with us. Joining us now is former NEC Deputy Director Everett Eisenstadt. Everett, thank you so much for being with us. I want to just start with what we know today in terms of the tariffs that have gone on, the details of that, and what's to come over the next 3 weeks.
Well, this is a really big day. You know, the president has been signaling these tariffs on the way for, well, since he was elected on January 20th with his America First trade agenda. And he's put different measures to kind of tease out the rates and different methodologies using different statutes. And now we've come to the place where today they're actually going to go into effect. And we know what the tariff rates are going to be on the reciprocal tariffs for particular countries. You have some of them up there. As you noted, they range from 15 to 50% and for different purposes. We also have a number of the sectoral tariffs in place, in addition to investment commitments from some of our trading partners. So there's a lot of the president's trade agenda that is now in place, including the framework agreements. Now, the framework agreements are going to be a guidepost, really, about how to move forward with these economies. They're not perfect. They need continued negotiation, but they do demonstrate directionality. So I think we've got a bit more clarity than we did a few months ago, and we really have now see what the president's agenda is going to look like in operation.
Everett, when it comes to the president's agenda, though, there's two countries that it does seem like they're still in negotiating mode, India and Switzerland. Do you think we're going to see those rates come down?
I do, certainly with Switzerland. I look at the U.S.-Swiss relationship, and it is so interconnected, and we're such important allies. I think the Swiss were a bit shocked, candidly, at the rate. I don't know if that was just a botched negotiation or how they ended up in one of the highest rates in the world. Of course, a lot of it has to do with the trade deficit and how the president sees that trade deficit. But there's a lot that we share with Switzerland, particularly on intelligence and things of that nature. So I think that one, it will come to settlement at some point. In fact, they were in Washington yesterday seeking to find a framework deal. India is a much, much more complicated equation. That one, as was noted, was started out with such a great dynamic between President Modi and President Trump, and really has deteriorated. And if anything, they've become more polarized over time and almost every day.
When it comes to Well, when it comes to India, is the president basically putting geopolitical priorities in terms of Russia ahead of some of the economic priorities?
I think it's a combination of both. And if you noted that the secondary sanctions, which are a new concept that the president actually authorized himself to deploy, not just against India, but other countries yesterday, are being used on India, not China. So I think it's selective, but I think it's a tool that he will use. And when he feels like a relationship is not moving in the right direction, he'll use every tool he can to get leverage. And if it's a geopolitical reason, then that's certainly a valid reason to do that. So I think it's a combination of factors. It's going to take some work and time to rebalance that relationship. I don't know that it's going to happen soon, but we're definitely going to have to watch. And of course, the secondary sanctions, as noted, new tool could have new dynamics for other economies. So that's going to be an important concept that we'll need to keep our eye on.
Everett, does it sound like something that is going to be used with China? Is that sort of the objective here, not only to pressure Russia, but also to put this on the table ahead of some sort of Xi-Trump meeting to say we could go there too?
It could. I mean, we tried that, right? The president put prohibitive tariffs on China. It didn't work out so well. It really was incredibly disruptive, and China responded by withholding exports of materials that were needed for manufacturing in the United States. So I'm not sure they want to go there again that quickly, but the fact that the tool is there is definitely a signal, and we'll see how the relationship between the U.S. and China unfolds. The president wants to get to a place with China where we can have a more productive relationship. I think that's clear. He's moving in that direction. I think putting sanctions on China, secondary sanctions, would not lead to that goal. So I don't expect that to happen in the near term. On the other hand, he is meeting with Russia. And so in many ways, these sanctions could be as a message to Russia as much as they are to India and China. But again, new tool, it's unprecedented. This president has used tariffs in ways that couldn't have even been imagined, really, prior to his election. So I'm sure there's a lot more creativity there. And it's something, that's going to continue to be a factor, even though we've got a lot of the central elements of the president's trade agenda in place now.
Everett Eisenstadt, a former NEC Deputy Director, thank you so much for being with us as we do look through the more than 15% rate and understand what exactly the ramifications will be for the U.S. economy. So a lot of question marks, including all of the exemptions that could potentially be put in place for auto manufacturers, for example, in South Korea.
You have to look at all the fine print when it comes to these trade deals, because there will be carve-outs and there will be exemptions, which is giving basically the market some breathing room and looking through some of, okay, this isn't the worst case scenario, even though the baseline for a lot of countries is 15%, not the 10%. What's so interesting about China and India, and Heidi Redeker brought this up yesterday, the Wall Street Journal editorial board, the top of their opinion piece is talking about it today. Trump is going after India, but for decades, Republicans and Democrats have been courting India to be a counterweight to China. So this is one way he's using geopolitics, try to benefit one situation when it comes to Russia's invasion of Ukraine, but does it hurt the administration when it comes to that counterweight to Beijing?
Which is what some people are arguing. We're also seeing the president this morning out in Truth Social talking about the way we measure the population in the United States, saying, I have instructed our Department of Commerce to immediately begin work on a new and highly accurate census based on modern day facts and figures, talking about what information was gained during the prior presidential election, talking about how people in the country illegally will not be counted. A real question here about whether some of the economic data is going to be increasingly politicized.
I knew you were going to go there because you have been on this correct rant about how we should have better data. Partially, a lot of people would say to have better data, the Trump administration needs to lift their own hiring freeze so that they can get more statisticians in the BLS.
We're going to be talking more about that and what the ramifications are for corporate executives with the CEO of Hyatt Hotels. This is next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Markets digesting the tariffs going into effect today with ease. You're seeing futures push higher throughout the morning, off earlier highs, though. Throughout the morning, just losing a little bit of steam, up 0.7% on the S&P. Russell 2000 climbing more than 1%, as there is currently a 95% chance of a Fed rate cut in September. And NASDAQ certainly leading the charge after a lot of people saying that the semiconductor tariffs were less than some of them had been expecting. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Eli Lilly, the latest company to report results, but shares are plunging 9.5%. But it was not because of the results. Those were solid. It's because just ahead of those earnings, we got data from its latest obesity pill trial, and it came in short of expectations. On average, patients lost 11% of their body weight. Investors were hoping for weight loss of 14 to 15% in order to match Novo Nordisk's shot Wegovy, but their hopes have been dashed, and they are punishing the stock for it. Moving on to tech. Look at all these companies rallying on the back of Apple's announcement that it will invest another $100 billion in U.S. manufacturing. Apple up another 2.75%, Corning up 4.3% because Apple plans to invest $2.5 billion in its longtime glass producer. And now all glass used in Apple products will be made in the U.S. Meanwhile, Global Foundries, a chip manufacturer, also rallying 7.8% because it is another Apple partner doubling down on U.S. production. And sticking on tech, we have TSMC shares. They are rising 5.5%, trading at record highs after Taiwan confirmed that the chip maker will be exempt from Trump's proposed 100% tariffs on semiconductor imports, thanks to its massive investments here in the U.S. Because like Apple, it too made a splashy announcement at the White House, and it made that announcement all the way back in March before the tariff chaos of April even started. So in hindsight, I'm sure they're very happy with that early move. Lisa?
Thank you so much, Yahira. It does seem like you have to look at the fine print, given 100% tariffs with a big but after about who's exempt.
Exactly. And then you look at, okay, who's exempt? It's pretty much everyone, which is the market is like, great, we can rally on this news. It doesn't mean anything. Shock and awe is what comes out of the Oval Office, and then you take a step back. Okay, there's a ton of exemptions. We're fine.
Well, we have to look at the fine print for this. On our radar this morning, President Trump's new tariffs officially taking effect this morning. Bloomberg Economics estimating that the average U.S. tariff rate is more than 15%. That's well above last year's 2.3%, and the highest level since the World War II era. A real question of how much we've already seen companies adapt and adjust, and how much, to use Ben Laidler's phrase, this is boiling the frog.
Well, for Ben Laidler, he's basically like, I don't want to touch the United States right now because they are weakening and these tariff rates are going to make it incredibly more challenging, and you can get better results elsewhere, especially when it comes to high valuations. But then we heard from Kelsey Barrow, who's like, our team did the research. We did 10 to 20% on tariffs. And the bottom line is it will hurt earnings a little bit. It will crimp them a bit. But for the most part, companies in America will be fine. What I find interesting about today is that this does feel like for most countries, and you put it best at the top of the show, for most countries, this is the new rules of the road. These are the new tariff rates. But there are still some that are working out the administration a potential deal. So I think what's going to be interesting in the next few weeks, what do we see out of India and what do we see out of Switzerland?
That's the negotiation side. I'm curious about how much companies are going to increase prices. Not necessarily have they already, but are they going to? Elf Beauty and commentary yesterday, just as an example, saying overall retailer acceptance has been good for our price increases, and saying you will probably see more companies take pricing upward. Meanwhile, we're watching Apple shares getting more expensive. Well, those prices are rising after the company unveiled plans to spend another $100 billion on domestic manufacturing. President Trump promising to exempt companies that move production back to the United States from his 100% tariff on chips. A real question here, how much of this investment was already planned? How much of this investment is actually new on top of what had already been discussed?
Well, the majority of it was already planned. They just sweetened the deal a bit more and get a higher number. Also, this is going to take years, if not decades. So potentially will we see all of this actually come to fruition? But it was enough for Apple to get an exemption. And we saw Tim Cook do this in Trump 1.0. What do I need to do to make sure I can get a carve out? What is interesting, and Yahaira brought it up, this Corning leading the Apple suppliers hire this morning, they are basically saying Apple at some point will 100% have the glass that covers your Apple iPhone or your Apple Watch made in the United States. At the end of the day, that is what the president wants to see. He wants to see a carrot and stick approach when it comes to this tariff policy.
He also wants to see lower rates. President Trump signaling he will nominate a temporary Fed governor to fill the open seat vacated tomorrow from Adriana Kugler, saying he's considering, quote, probably 3 candidates for the position, adding they could come from Wall Street. We all come from Wall Street, he said. A real question here about why a temporary Fed official? What would be the role if someone knew they only had a couple of months before they would be replaced?
So I broke this story with Saleha Mohsin yesterday, and the president basically confirmed it. We're looking at this temporary option, and you have to think, who wants to do that? You basically leave your job for 4 months. I think there's 2 paths to look at it. One, is this a temporary option as a trial period for someone to see how they do? Does the president like this individual that potentially could get either the full nod to have a seat at the Fed or become the new Fed chair? Or is this someone that is overtly political? The president just wants to send a message right now. He does love a little bit of drama, potentially wants to send a message and get someone that is really brought up through the MAGA base. Someone like we talked about earlier, a bit more of an unconventional pick when it comes to James Fishback.
Talking about maybe cutting rates by 100 basis points in September. The question about how much this will actually ripple through the economy is an important one. Turning to the travel industry, Hyatt reinstating its full-year guidance after its second quarter earnings beat estimates. Bloomberg's Danny Berger joins us now with a special guest. Danny.
Lisa, thank you so much. It is such an important earnings season for just that, understanding the consumer and their sensitivity to this economy. I'm pleased to say joining us now is someone who understands the consumer very well. It is Mark Hoplamazian, the CEO and president of Hyatt. Mark, thank you so much for joining this morning. You were out with earnings moments ago. Earlier this year, you had to cut earnings because of your outlook on some of the weaker reservation trends going forward. You've mostly held on to that look. So what, if anything, has changed for the consumer and the demand you're seeing?
Well, Danny, first of all, thanks for having me. You know, the first point that I have to make is that travel is extraordinarily resilient. It's become a necessity for both leisure travelers and for business travelers. The second quarter was a weaker quarter for business travel, but leisure held up really, really strongly. And our U.S. resorts were up mid-single digits for the first half of the year. Europe was up almost 7% in leisure. So it's leisure, especially in the luxury segments, which luxury's been up about 6 or 7% year to date as well. The higher end customer, which is our core customer base, with 70% of our portfolio in luxury and full service, is alive and well. So I would say a couple of things have happened right now. The first is that our largest corporate customers have told us they're going to lean in and continue to travel. And they're making more commitments, especially for customer-facing events and meetings. The second thing that happened is that we saw bookings for 2026 really improve for big group meetings. And third, the Conference Board and the Business Council released their CEO sentiment survey this morning. And things have turned. Now tariffs and volatility have declined to number 3 on the list from number 1. And their outlook with respect to potential recession has dropped dramatically. So I think the attitude and mindset for a lot of CEOs is shifting.
Mark, that's very fascinating because the tariff picture is still evolving as we go on. So are there any pockets where you're still seeing those fears of economic anxiety? Or to your point, is it now confidence restored?
No, we are. And in a word, it's China. The caution and conservatism in China is clear. And a lot of people are uncertain about what a so-called tariff war or the tariff picture might do to the economy overall. There's an increasing, I think, body of thought that says that Beijing pays a lot of attention to sentiment. And the sentiment is definitely one of very significant caution right now. So I think there's an expectation that sometime in the fall, there may be policy shifts that alleviate some of that and bring back a stimulus for growth. So I would say,
if I could just jump in, because I wanted to get to luxury, because you mentioned that this is one of the strong suits and really resilient. Of course, you've doubled down on the luxury strategy too. But it is a time where there is more competition, and maybe that aspirational traveler needs a little bit more convincing that they should be paying up for the 1,000 plus a night type of all-inclusive resort. So what do you need to do in terms of strategy to convince them that paying up is worth it?
Well, our all-inclusive business is up 6 or 7% year to date, 8% if you include Europe. It's been wildly resilient. We are the leader in 5-star luxury all-inclusive resorts. I think the certainty of what your vacation will cost you and the experience on property where our colleagues are not thinking about or engaged in how much something costs, but rather full-on human-to-human service makes a difference to people. And so the format is really, really proven to be very, very popular and will continue to do so. We just closed on the acquisition of Playa Hotels and Resorts, 2,600 new hotel rooms in premier beachfront locations. And we have a deal to sell all the real estate, so we will maintain our asset-light status. It's a great deal and adds $65 million in new fees to our run rate. So I think we're quite pleased with that. So we're definitely doubling down on luxury, and we're definitely doubling down on all-inclusive.
Well, Mark, just to that point, it's been a really hot summer, a really hectic summer. I think a lot of people are looking for inspiration of where to travel right now. Where is the most demand? Where are you seeing most people go to? What's in fashion right now?
Yeah, I would say the U.S. traveler has headed to Europe this summer. We thought we would see a massive decline from last year, given the Olympics and Taylor Swift, but they're back in Europe, and Europeans are staying in Europe. But I would say the diversity of destinations has increased a lot of interest in Central and South America. And the Caribbean and Mexico continues to be in great demand, both amongst Europeans. And the Canadian volume into our Mexican and Caribbean resorts is significantly above last year. A lot of people have talked about the flyover effect, where Canadians are heading over the U.S. to get to Mexican and Caribbean destinations, and we're seeing it significantly.
All right, so Europe, staying in Europe, Canadians skipping over the U.S., definitely a trend there. Mark, thank you so much for joining us this morning. Mark Hoplamazian, the CEO of Hyatt. Lisa, you are seeing a rebound in business travel, but China remains a weak spot.
Yeah, that's something that has been a theme for a number of U.S. companies. Danny Berger, great work. Thank you so much for that. Right now, we are getting another Truth Social. It is an active morning for President Trump on Truth. He is saying the CEO of Intel is highly conflicted and most resigned immediately. There is no other solution to this problem. The CEO took over from Pat Gelsinger, and what we are seeing is the shares with an immediate knee-jerk reaction, pre-market trading, futures lower by now 1.5% as people try to understand what exactly the ramifications for this are, what the motivation for President Trump's tweeting about this morning. And this just continues the theme that we've seen, Anne-Marie, that you do see a response in stock markets on the heels of a lot of these pronouncements.
Well, on the motivation front, what we saw yesterday, Reuters report, an exclusive report, was that also an ally of the president in the Senate, Tom Cotton, sent a letter to Intel questioning the new chipmaker CEO. He's been in office, as you said, for a year, about his connection and ties to Chinese firms. And that seems to be a concern, at least from some senators, Republican senators who are very hawkish on China. Maybe the president is getting a little bit of briefing from them and wants to air this out. He's not explaining what his issues are, but when he says highly conflicted, it seems to be talking about this letter that Senator Cotton sent to Intel.
Yeah, and a real question about what this means with respect to tariffs and whether they get targeted with something more substantial. We'll follow that story this morning. Is it just a Truth Social post, or is there some sort of oomph behind it to try to penalize the company until there is some sort of changing of the guards? Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump declared plans to slap a 100% tariff on semiconductor imports, but promised to exempt companies that move production back to the U.S. Trump shared his intentions alongside Apple's Tim Cook, who announced his plans to invest an additional $100 billion in domestic manufacturing. Meanwhile, Switzerland's government is holding an emergency meeting today to consider the fallout from President Trump's 39% tariff rates. This after President Karine Keller-Sutter failed to make a trade deal and avert the highest U.S. levies on any developed country. The Federal Council will issue a public statement after the extraordinary meeting. Meanwhile, shares of Warner Bros. Discovery are rising 2.3% after the media giant reported earnings that beat estimates. The company also topped total subscriber expectations, adding over 3 million new subscribed viewers in the quarter. Its studios unit has been on a Hollywood hot streak, with revenue rising 55% to $3.8 billion. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, looking for the next rotation.
We see a broad rotation out into everything else. We're starting to see it already. The overall market's really not that expensive. We think it's the rest of the market where there's value.
Mike Pyle of BlackRock joining us next. This is Bloomberg.
Applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
If you came into this year on April 2nd and said a lot of those tariffs would stick and that we would be looking at more than a 15% average tariff rate across the board, you would probably expect stocks to really be having some issues digesting this. Right now, you're seeing futures up pretty much across the board, 0.6% gain on the S&P. You're seeing a bigger gain on the Russell 2000, more than 1% on the futures. Dollar weakness has been a theme. You are seeing that reverse just a touch today. And yields just continuing to creep higher, but still hovering around that 4.25 to 4.50 level. Today they are 4.24. Tomorrow we do see potentially the ramifications of a 30-year auction later today. Under surveillance this morning, looking for the next rotation.
The next 12 months, we see a broad rotation out into everything else. You're starting to see it already. The overall market's really not that expensive. Once you take out the Mag 7, which are kind of special, exceptional companies globally, right? You take them out, the rest of the market's trading around 19, 20 times. We don't think that's an unreasonable level, and we think it's the rest of the market where there's value right now in the market.
Here's the latest. Traders continuing to buy the dip with the S&P 500 up nearly 1% after a slide on a weak ISM data earlier this week. Mike Pyle of BlackRock writing this: "We do not believe this is an environment for taking big bets on macro trends." Mike joins us now. Mike, a lot of people would agree with you because that has been definitely a pain trade. We have seen, though, even in the micro space, some pain trades with respect to the huge moves after earnings, as well as some policy pronouncements like we're seeing this morning with Intel. So how do you find an advantage in a market that is so bespoke and idiosyncratic?
Yeah, I mean, I think a key word for investors now and always is diversification. That's true when you think about asset allocation. It's also true when you think about alpha. And I've been on the show a couple times, talked about some of the advantages of systematic strategies. One of those advantages is they've got a bunch of different strategies, a highly diversified set of strategies to harvest alpha from new sources of data. And in a world where there's a lot of uncertainty, where the macro trends could go in a bunch of different ways, finding sources of alpha where there are a lot of them, where they're well diversified, allows the greatest probability of harvesting consistent alpha over time.
What you just said there, harvesting different data sets, how much is that of renewed importance? Is there real questions around the integrity of some of the gold standards that so many market participants have relied on?
Listen, I don't envy the job of the official statisticians these days. The world is complicated. It's being buffeted by a lot of shocks, and they're having to do their jobs in a world where, survey response levels are way down. You see that challenge in political polling. You see that challenge everywhere survey data is important, and you see it with the official statisticians as well. One of the things we do in BlackRock, and again, particular around some of our systematic efforts, is really look holistically at a full range of alternative data sets that zero in on things like how are prices moving in the economy, how is hiring moving in the economy, try to provide a more holistic picture beyond just the official sources of data, and importantly, where you see divergences between those alternative sources of data and what the official data is saying, that can be a source, a signal to identify alpha over time as well.
You worked on both Pennsylvania Avenue and Wall Street. What would be your advice to get better data out of the government?
Listen, I think the important thing is to continue to have a credible, independent process for generating official data. At the same time, I think, like I said, I don't envy them their job. I think that this is a really challenging world where the traditional methodologies are increasingly under challenge. Again, not just within the official data keepers, but really anywhere in the world that's using survey data. And so maintaining both a credible, independent process, but also one that is given the space to update itself methodologically, thoughtfully, rigorously, and I think that's the path ahead.
When it comes to policy in Washington, are you surprised by how sanguine the markets have been to some of these higher tariff rates and certain trading partners?
I think we talked a bit about this last time, that markets right now, the economy right now, I think requires holding a couple of different divergent thoughts in your head at the same time. On one hand, tariffs are a source of uncertainty. Tariffs are a source of a negative growth shock, a shock in terms of the price level higher. We're seeing that now play out on the data. At the same time, on the flip side, the U.S. and in particular U.S. corporates and in particular U.S. corporates in the technology sector are the world's leaders in innovation, dynamism, provide investors around the world exposure to something that they can get nowhere else. And so I think when you look to square what we're seeing in markets with what we're seeing in the economy, that's kind of the source of, or the key to unlock it. That, yeah, this is a shock where growth is lower and inflation is higher, but it's also the case that there's incredible dynamism and investors want exposure to that around the world.
Well, to something that you just said, you said inflation is higher. And this is something that a lot of people are rejecting. They're saying that the weakness that's going to come on the heels of some of these tariffs, these are going to act as constraints to the market and to growth, and that will be disinflationary. You don't really see it that way, and that's one of the reasons why you don't see bonds as the same kind of diversifier as they have been in the past, right?
Yeah, I mean, I would say, both these things are true, that this is a shock higher with respect to the level of the price of goods. That's playing out and will play out. At the same time, there will be disinflationary impacts that spread out over time as growth is lower and demand is lower, in part because of what we're seeing. So on balance, I think folks are right who say, these two forces are kind of counterbalancing one another. What I would say is there's an issue about how this plays out over time. The impact on goods happens in the here and now. That impact on disinflation from lower demand plays out over quarters and years. And so I think that's important to keep in mind as well. But I think you're also exactly right that, we don't see the same role for bonds as diversifiers. That said, as Rick Reeder, my colleague, has talked about, this is a really historic opportunity to generate income through fixed income assets. And so identifying your sources of diversification elsewhere, like through market neutral strategies, while recognizing that fixed income can play a role in generating income and income in a historic way, that's maybe the role of fixed income right now.
Mike Pyle, thank you so much for being with us this morning.
Thanks.
Mike Pyle of BlackRock there. As we try to understand exactly how market participants are spending their August amid a slew of headlines that most people seem to be looking beyond.
Well, we know one thing they're doing. They're ratcheting up these bets that the Fed is going to cut rates in September, because before that jobs report, it was at 40%. Now it's at 95%. And you see other members of the FOMC lining up with the double dissenters and saying, maybe it is time we have to actually cut interest rates.
By 25 basis points, not by more, which some people would argue would be necessary, particularly on Pennsylvania Avenue. Coming up, Kate Moore of Citi Wealth, Tom Forte of Maxim Group, Seema Shah of Principal Asset Management, and Tom Orlick of Bloomberg Economics. As they build this conversation, what is the new neutral rate? What is the right rate of inflation to expect in the future? This is Bloomberg Surveillance.
You have had a number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we could do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Or do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
AI is definitely in the center of it, and we're looking for how do we spend time and which industries do you invest in. Investors becoming more and more digital or AI enabled that actually adds value to economic growth. And this, we think could be time because you have a strong hardware power and you have a strong software power as we see, and it's accelerating significantly. But a very important, another element, which is changes in demographics. More AI-enabled softwares and applications may improve the people's lives and actually increase productivity in times where demographics are decreasing everywhere around the world. So this, I would say, is a major theme. So digitalization and AI-related technologies, and we think of it technology, but in reality, a lot of the businesses coming up and claiming to be technologies that are actually cannibalizing a lot of traditional businesses.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays. Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Market's moving more on headlines than it is actually on data.
You can't underweight tech. You still have to be where growth resides.
The tech AI spending is the juggernaut that's empowering this market higher. The next 12 months, we see a broad rotation out into everything else.
There's some concern right here where we are, but people want to be invested in this market.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance as we wait for jobless claims in about a half an hour time. Lots of tariffs across the board. Tariffs, and markets are taking it all in stride. Meanwhile, a rate cut from the Bank of England putting the focus squarely on Fed officials as we hear an openness from more U.S. policymakers to potentially cut rates in the next month. A real question here about how much this market really is absorbing the tariff threat.
Well, right now, they've been absorbing the uncertainty, and now companies are going to have to look through, see the actual rates that come into effect. They are now going to come into effect officially for a host of these countries, unless a few are still negotiating with the United States. And they're going to have to figure out how are they across their supply chain going to be able to digest these rates. And what Kelsey Barrow said is that they did the model, 10 to 20%. It might hurt earnings a little bit, but it's not going to completely destroy corporate America, which is why the market is just looking through this.
And that's the reason why you are seeing futures pushing higher as we do wait for the jobless claims. A real focus right now on just what the economic ramification does look like. Right now, it looks like big tech will save all, and the Russell 2000 gaining on the prospect of rate cuts. But the labor market report that we got on Friday, then this stagflationary type of ISM services data really puts a spotlight on some of the downside surprises that some people have been worried about.
Jobless claims is going to be really important today, given the fact that we heard from Lisa Cook yesterday, talking about the fact that she is uncomfortable with what's going on in the labor market. She finds it concerning. Quote, these revisions are somewhat typical of turning points. Also, Neil Kashkari, we have to be cutting in the next few months. Well, you don't have a ton of months left. We're 6 months left for the rest of the year. And the market is pricing in 95% chance of a cut in September, and more individuals are now starting to line up with Governor Waller and Governor Bowman.
Yeah, and a real question about exactly what a temporary Fed member might look like to replace
Lots of
Adriana
questions about that
Kugler
one.
in terms of what that person's role actually will be. Right now, we have been seeing in markets a calm, a little bit of yields higher, particularly on the long end after yesterday's 10-year auction. Later today, we do see a 30-year auction of Treasury notes as people wonder how willing international investors will be to keep coming to the United States. Right now, yields 2 basis points higher on the long end, 10-year yields 2.5%. Coming up this hour, Kate Moore of Citi Wealth as markets digest President Trump's latest tariffs. Tom Forte of Maxim Group as Apple reaches a deal with the White House with great fanfare yesterday. And Yelena Shulyateva of the Conference Board reacting to the latest read on the U.S. labor market and maybe some alternative sources of data as people wonder about how much you can glean from some of these indicators. We begin this hour with stocks higher as sweeping new tariffs come into effect. Kate Moore of Citi has been cautioning people recently, writing this: we view newly announced tariffs as a headwind to further equity upside. We are moving to a new phase of policy and trade uncertainty. Kate joins us now. Kate, thank you so much for being with us. You've been cautious. You've been cautious for a while. You're still cautious. What makes you hold on to this position, even though a lot of people have been saying it's a pain trade?
Yeah, so I mean, maybe we need to separate this out. I have been cautious, concerned with some of the policy headwinds, with some of the challenges that individuals have in terms of making spending decisions. That doesn't mean we've been underweight equities. These two things are not the same. We've been neutral weight equities, but we prefer to express our view, up in quality, like a lot of people, and more concentrated in kind of the mega caps and the secular growers. So if I felt really, really like we were going to be in an accelerating growth phase, I'd be rotating more into the small caps as something more than a trade and into a kind of an investment, but that's not it. So my caution expresses itself in more of a neutral weighting and a bias towards high quality and a bias towards large caps.
Although there is this issue of valuation at a time when everybody's been hiding out in this. So at what point does that become a concern for you, given the fact that everyone's hiding out in these mega caps and big tech has been the story yet again of the year?
Lisa, I would be a little bit more concerned if the companies didn't put up good numbers in the second quarter, right? Multiples can stay high for extended periods of time. They can stay cheap for extended periods of time. And we're in an era where a lot of information gets priced into shares very, very quickly. So, there's this mispricing that maybe some of us grew up with in earlier stages of our careers is less likely to persist. And things are expensive because they have secular earnings, because they have an ability to grow through all parts of the economic cycle, because they're in the fastest rivers. This is, I think, justified for some of these mega caps, even if I look at some of these numbers and, like many people, feel a little uncomfortable.
Everyone on the street is talking about how they want to be a buyer of the pullback.
Well, oh yeah.
When's the pullback?
How big of a pullback can we get in that environment? I think that's right. We've looked at, seasonality like everyone else and said August and September, weaker times. We tend to get some of these air pockets. I have perhaps a little bit more cautious stance on some of the tariffs that hit today. And this is what I would say. Everyone's saying if we get a 5% pullback or a 7% pullback, they'd go all in. They'd back up the truck. The problem is that no one's going to wait for those levels. I think these pullbacks are going to be quite shallow, even if we get a decent amount of volatility through what is normally a seasonally weaker period.
The uncertainty around tariffs. On the other side of the coin, you are looking at potentially the incentives for the one big beautiful bill.
Yeah.
Are you starting to see that now actually take effect?
I don't think corporates really know how to guide us on this one. So I hear a lot of people say, hey, we're only talking about a 15% give or take, effective tariff rate. It's not that much. Of course, we all know how much it is relative to where we ended 2024. But the bigger question I have is, when people make these assumptions about it not having a large impact, how are they splitting the cost between the suppliers, the company, and the end consumer? And everyone has a lot of assumptions baked into why it won't be a big deal for XYZ company. So, and companies don't know what to say. They don't know how much they're going to be able to push. I think a lot of what's happened since the April 2nd tariff announcements has been companies have been eating some of this in their margins, or they've been spreading out costs across a variety of different products, or they've been holding off an investment, trying to fund as much of it as possible. But as some of these things get baked in for longer periods of time, there's going to be more durable impact on both margins and on the consumer. And frankly, I don't know either exactly what that looks like.
Do you think it's going to be worse in the U.S. than the rest of the world?
I think it's going to be worse in I think it's going to be bad in a number of places. I will say that U.S. companies and consumers are going to feel the pain. I think we're at the very beginning stages of seeing some of the tariff impacts on goods prices. Whether or not that changes the consumption, or appetite for like the average household, I'm not sure. Or whether we see, as we've heard from some of the retailers, spreading out tariff costs across a variety of products that otherwise would not be directly hit. In order to make sure that people still come into the store and that we don't see a significant decline in retail sales.
Well, I guess I'm wondering how much of the dollar weakening story is really pegged to this ongoing belief that the United States is going to suffer the brunt of any kind of economic slowdown on the heels of tariffs. That's been challenged, certainly with some earnings, certainly with some of the rates that we've seen, as well as the commentary out of central banks. I mean, how much do you lean into that versus push back against it and say, hold on a second, when you actually look at the corporate earnings, they're still outperforming in the U.S. in a significant way?
Yeah, I mean, I guess, the conversation we were having in the beginning part of this year about the end of U.S. exceptionalism was really is really not going to play itself out in the equity market, in my view. If we get fewer buyers or fewer marginal buyers of, long duration U.S. bonds or people thinking about their currency exposures, that's one thing. But we still have to invest, if you're a global multi-asset investor or an equity investor, in the highest quality companies that are serving all parts of the world. And unfortunately, for those people that didn't want to own the U.S., many of those are U.S. companies.
If you think we're in the start of potentially the impact of the tariffs on inflation, what does the Fed do?
Gosh, I am so glad I'm not a Fed policymaker. This is an incredibly difficult time.
Well, what are you baking in? It's going to impact corporate America.
I think it's very likely that we will see some easing, but I think the Fed is in a really difficult place here. If they cut while the labor market is frozen but not deteriorating, right? I think we need to distinguish, and inflation is continuing to percolate. People are going to ask themselves, if the Fed is really anchored to this 2% target or getting to that 2% target, and we've been above that 2% target for 4 years, and the labor market is frozen but not deteriorating, can we believe them?
Do you think it's frozen now or deteriorated?
Well, we haven't seen huge layoffs at this point, right? Job recs not filled for sure. And we certainly see a lot of companies talk about slowing down their hiring. But from my perspective, I can't disaggregate how much of that is because of tariffs and economic uncertainty and how much of it is because the technology they're investing in may displace workers. I mean, these things are all happening concurrently.
Right now, you see a market pricing in 50 basis points of rate cuts.
Yeah.
If the Fed were to cut more this year, does that make you more bearish on longer-term treasuries?
It makes me cautious, I think, on longer-term treasuries. We have had a more cautious stance. I think it's very consensus for a lot of us in the multi-asset space to have been really anchored to the short duration. And we're all waiting for an opportunity to add to duration. I'm just not excited about it in the near term.
Kate Moore, thank you so much for being with us, as always. Kate Moore of Citi Wealth. Always wonderful to have her in studio right now. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump is urging the CEO of Intel to resign, saying in a Truth Social post he is highly conflicted and there is no other solution to the problem. The post comes after Trump's ally, Senator Tom Cotton, asked Intel's board chairman about the CEO's ties to China. Meanwhile, President Trump indicating he'll likely nominate a temporary instead of a permanent Fed governor to Adriana Kugler's soon-to-be vacant seat this week. Trump also reiterated that he considers the two Kevins, Warsh and Hassett, as top picks to replace Fed Chair Jerome Powell. Fed Governor Kugler announced she plans to vacate her role tomorrow. And President Trump met with Citi CEO Jane Fraser to pitch public stock offerings for Fannie Mae and Freddie Mac. Sources telling us here at Bloomberg, Fraser met with Trump to discuss the bank's possible involvement in monetizing the mortgage giants. The firms have been under government conservatorship since the 2008 financial crisis. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, the morning calls, plus Tom Forte of Maxim Group on Apple's return to the White House. Tim Cook back in diplomat form and seeing the share price up more than 5% yesterday with more gains ahead, at least in futures. This is Bloomberg Surveillance.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
You've seen these big moves in the stocks. They come in with really good earnings, and everybody's like, well, the move's already happened, or that wasn't so much better than I expected that it's going to push it again further. So I think this is, to me, a little bit worrying because you want to see those good earnings be rewarded, but I think that the market just keeps moving sort of relentlessly higher, especially on the technology side, and those earnings better be able to fill into that. And I think that is a little bit more of a turn than we saw earlier in the beginning of earnings season.
That high bar is definitely catching a lot of people's attention. That was Sarah Hunt of Alpine Saxon Woods. As we do see more gains across the board, futures higher, up 0.6% on the S&P, just fading slightly throughout the morning. You do see NASDAQ futures outperforming that, and the Russell 2000 really the big winner this morning. Yields a little bit higher on the long end. Yesterday's auction was a little bit messy for the 10-year. Today we do get 30-year yields. Dollar weakness, a little bit more strength actually after the Bank of England decision. We're seeing 116 on the euro-dollar cross. Time now for the morning calls. First up, Morgan Stanley downgrading Caterpillar to underweight, citing a, quote, steady deterioration in its fundamentals. Those shares lower by 0.4%. Next up, Wells Fargo cutting its price target on Airbnb to $110, saying its growth bets will probably not move the needle. Those shares sinking after yesterday's earnings, down 7.3%. And finally, Bank of America raising its price target on Apple to $250, saying it's likely to gain market share as some products will likely be exempt from tariffs. We do see this year's higher in pre-market trading, almost 3% after yesterday's more than 5% gain on the heels of that announcement in the Rose Garden, as well as some of the discussions around 100% tariffs on semiconductors, but exempted for anyone who produces anything in the United States. Sticking with tech, President Donald Trump calling on the CEO of Intel to resign. The news comes after Senator Tom Cotton wrote a letter to the company's board about the CEO's ties to China. Bloomberg's Mandeep Singh joins us now. Mandeep, thank you so much for being with us. What do we know? I mean, how much is this something that's been talked about?
Well, I mean, clearly they have sent a letter to the board, and at this point, I feel like they'll look into what sort of investments he has with companies in China. I'm guessing it will be some sort of a minority investment. He's not involved in the day-to-day decision-making, but clearly it puts the onus on the board to figure out, you know, what they did do as part of the due diligence. And I think it's too early to say if there will be any action based on this.
Every morning it seems like we have boards. Who's on the good list, the nice list, and who's on the naughty list when it comes to big tech in the White House? It seems like Tim Cook has really clawed his way back onto the nice list. Is Intel being on the naughty list essentially going to have some sort of material impact to its business plan, to its effect from tariffs?
I mean, when I look at, you know, semiconductor manufacturing in the U.S., right now, Intel and Global Foundries are the two companies that are doing this at scale. And so the fact that Intel has been caught in the crosshairs, it kind of puts focus on the administration's plans to bring manufacturing home, because you have to revive Intel to really revive manufacturing, semiconductor manufacturing. And yes, Apple can talk about the CapEx plans and, you know, multi-year investment, but even to start a fab, it's going to take 2 to 3 years. So they can start a glass assembly or, you know, glass manufacturing maybe in 12 to 24 months. But for an advanced node fab, as we have seen with TSMC in Arizona, it takes a while. And so Intel, to me, is still the company that they need to revive to be able to say that, semiconductor manufacturing can take place and we can do this at the advanced node level.
Intel, though, did plead guilty for violating U.S. export controls, sending some of these semiconductors to a military university in China just last month. Do you see an emphasis now, potentially, on this administration to continue to ratchet up pressure with China when it comes to export controls? And what does that mean for a company like AMD, which is still trying to get licenses after the administration made a U-turn on the most recent export control in April?
Yeah, that's where the whole Section 232 comes into play in terms of the investigation that's going on. And look, I mean, it's very hard for an NVIDIA or Intel or AMD to determine who the end customer will be for their chips, right? Because, they sell in bulk. There's so many resellers in between that you can't really, even with location tracking, it's hard to see exactly who is using the chip and what's the use case. And so it's a hard problem to solve.
Mandeep Singh of Bloomberg Intelligence, thank you so much as we watch Intel shares futures lower by about 3% after that Truth Social post by President Trump. We do want to turn to Apple since its shares and how much they rose yesterday really drove a lot of the rally. The surge came after Apple committed to spending another $100 billion on domestic manufacturing. Joining us now, Tom Forte of Maxim Group with a hold rating and a 201 price target on the stock. Tom, thank you so much for being with us. I wanted to start with what we heard from yesterday. How much did you see this as a really bullish signal from Tim Cook?
Yeah, so when you think about Apple or just companies in general, you're trying to determine how can they mitigate risks as it relates to tariffs. And the good news for Apple from yesterday's news is that they're ramping their investment spend in the U.S., making themselves over time less dependent on China. They quantified the impact of tariffs once again when they reported the June quarter, projecting $1.1 billion incremental expense in the September quarter, and an increase from $800 million in the June quarter. But I think the reason the market's reacting favorably is that they're positioning themselves over time to be less dependent on China and then potentially have less of an impact from tariffs.
Less dependent on China because they did move a lot of the manufacturing as well and been trying to India. Are they now stuck in the crosshairs when it comes to this spat between India and the United States?
Okay, so the challenge for a lot of companies, including Apple, is many have moved their supply chain out of China, often into Southeast Asia, only to find that Vietnam's being tariffed at a high rate. So the good news for Apple in India is that they're focusing their assembly there on the iPhones being sold in the US and then using Vietnam for essentially the rest of their product set that's being sold to the US. The iPhones, for the most part, are exempt from tariffs. So were they to be assembling more than iPhones in India, then I think there'd be greater tariff risk to Apple in India right now.
When it comes to Apple announcing this an extra $100 billion in investment, how much of this do you actually think comes to fruition, and what timeline?
It's a 4-year horizon, and I think that it's going to take time for the factories to be built, things of that nature. And a lot of what we're talking about is Apple spending money with suppliers, and the suppliers are US-based. So if you look at CapEx for Apple, they talked about it increasing to $3 billion a quarter from $2 billion a quarter, but that's much less than Amazon that went to $30 billion a quarter from $25 billion. So a lot of this is Apple spending with its suppliers, having more of its suppliers US-based or sourcing from the US.
My head's spinning, Tom. Honestly, for a company like Apple, not only are they dealing with tariff threats, where they're going to manufacture the iPhone, but they're also dealing with artificial intelligence. How do they get a leg up at a time when Samsung is in some ways ahead of them? And then what do they do with their presence over in China, given that that relationship between the U.S. and China is fraught and continues to be? How do you put this together? What is sort of the tell when it comes to Apple and whether they are moving forward with a longer-term strategy to maintain the dominance that they have over the smartphone industry?
The historical performance of Apple has been fast follower. They weren't the first one with a smartphone. They were the best. It isn't clear that they'll be the best in artificial intelligence, but they are making steps. They clearly fumbled the football, but they're trying to address that. They talked about ramping that investment spend as it relates to artificial intelligence. We now have a new timeline for revamped Siri enhanced by artificial intelligence next year. And surprisingly, they opened the door to potentially a large-scale acquisition to advance their efforts in AI. They hinted at that on the earnings call, which historically is not really something in their playbook. So they're trying to address AI to hopefully improve their situation over the next 12 to 18 months.
Before we let you go, Tom, if you put it all together, do you still see the U.S. as being dominant when it comes to the forward look of artificial intelligence and how quickly it's adapting into the economy? Or do you see, especially with some of these deals that are going into effect between the U.S. and China and internationally, other pockets of advancement, particularly in China, that seem to be superseding what's going on in the U.S.?
Yeah, so I definitely think when you step back for a minute, you look at OpenAI versus DeepSeek and things of that nature, it's certainly a very significant AI competition between the U.S. and China. It isn't clear today who will ultimately emerge as the winner. The good news for the U.S. is we have a lot of large multinational firms that are very tech proficient: Apple, Google, Meta, Amazon. So I think that bodes well for the U.S. in this long-term AI battle between the U.S. and China.
Tom Forte of Maxim Group, thank you so much for being with us as we try to understand the myriad storylines that seem to be filtering into the big tech story. The latest coming this morning with an investigation into Intel. I want to go back, though, to what Mandeep Singh said when we started the conversation, and he said, if you want to bring manufacturing back to the United States, you need Intel, given that it has the foundry, and it takes a very long time to build these.
It takes an incredibly long time, which is what we saw as well under the Biden administration with the Chips and Science Act, realizing how long it takes for even just some grants and incentives coming out of Washington to actually get to shovels in the ground. That is why there has to be things like exemptions, and that's why the market is seeing through this shock and awe, 100% tariff rate the president announced yesterday for semiconductors, because if you are investing at all in the United States, you're not going to have to pay that.
Apple shares in the pre-market up about 3% after yesterday's 5% gain as people look forward to those exemptions that Anne-Marie was just talking about. Across the board, you are seeing strength. Coming up, we're going to be speaking about U.S. jobless claims. That will be coming out in about 5 minutes' time. Yelena Shaliatieva of the Conference Board will be joining us, as well as Seema Shah of Principal Asset Management, because really this is going to be the key data point heading into the weekend after ISM's stagflationary type of tone. Do we see that kind of weakness coming with the wrong kind of upside surprise in jobless claims? That's next. This is Bloomberg.
ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
25 seconds until we get jobless claims. The key data point of the day as we look to see whether we do get confirmation of the unexpected weakness in last week's jobs report. Right now, we do see markets rising, futures higher, although off earlier highs. Notable, the Russell 2000 now up by just about 0.9%. You could see in the bond space a little bit of yields rising as people look to a potential inflationary pressure. Right now, let's head over to Michael McKee with those jobless claims numbers. The expectation is for 222,000. Mike, what are we looking at?
226,000, so very close. At this point, it doesn't suggest any kind of massive layoffs are underway. There's been a big question about what's happening in the labor market, and obviously a lot of Fed officials made nervous by the low job creation last week. But so far, we're not seeing the converse of that, companies laying off anyone yet. Continuing claims rise to 1,974,000 from 1,936,000. And last week's initial jobless claims headline number revised up by 1,000 to 219. So very much stable in that area. The other numbers out this morning, non-farm productivity rises 2.4%. That is more than the 2% anticipated, and it is after a 1.8% decline in the first quarter numbers. The 2.4% is a second quarter number, and it comes in after the first decline we had seen in non-farm productivity in some time. The issue here is important because there have been people suggesting, there's an argument being made that the economy can withstand a little bit higher inflation because AI is pushing productivity up. And that may be the case. We don't know exactly why it went up, but it did go up significantly for the second quarter. Unit labor costs restrained 1.6% after rising 6.9% in the first quarter. So overall, a fairly good news portrait of the economy this morning.
Michael McKee, thank you so much. Stay close. We will get back to you. Right now, seeing not a lot of movement in markets. On the margins, yields lower just by a couple basis points, particularly at the long end as people look to continuing claims. Just to give some size and scope, the continuing claims number came in at the highest level going back to November of 2021, a significant bump up with a question of this low churn dynamic. People low hiring, low firing, but if you find yourself out of work, it is taking a lot longer to get back into the workforce. Joining us now is Yelena Shulyetiva of the Conference Board. Yelena, just on that point, how much is this indicating some sort of weakness, the idea that it is so difficult for people, or more difficult, I should say, for people out of the workforce to find their way back in?
Look, the data this morning actually shows the same kind of thing that it's been showing over the last several months. The insured unemployment rate remained at around 1.3%, and that's where it's been over the last several months. So we have seen a little bit of a pickup from the trough, but the idea is that there's not been that much upward movement in the unemployment rate, despite the fact that the pace of job creation has slowed. And that's the point that Chair Powell made.
Kate Moore was just talking about the fact that is the labor market frozen or actually deteriorating? What do you think?
I think it's frozen. So a couple of things to mention. So if you look at the data from the employment report last week, you'll see that the increase in the unemployment rate since its trough back in 2023 has mainly been driven by people's inability to find a job, so kind of long-term unemployment, and not by new layoffs. So that's point number one. Another thing is that this morning we saw a release of CEO confidence report for the third quarter of this year. That is in conjunction with the Business Council and the Conference Board. So CEOs are feeling a little bit more optimistic. So confidence among C-suite, actually increased in the third quarter after collapsing in the second quarter. But CEOs are still citing difficulty finding qualified workers. What it means is that they will probably not be laying off people unless it's absolutely necessary. So that's what we hear from them. One thing is that, CEOs mentioned that they may be reducing the labor force, and that, share of those CEOs exceeded the share of CEOs that were expecting an increase in the labor force. But still, the majority of CEOs are expecting no change in the labor force. It's still fresh in their memory after the COVID recession that when they laid off a lot of workers, they had a huge difficulty hiring them back. And while the circumstances are different now, you still have a reduction in the overall availability of labor among immigration slowdown. So that is creating, an issue for those CEOs.
Well, if CEOs are looking to lay off people when it comes to circumstances, is it because they're dealing with higher tariff rates and they need to make sure that they are basically hoarding some more cash? Or is it because what's going on in AI?
Well, at some point you have to cut costs, right? So labor is the most expensive thing, the highest cost for a company. So when when your profit margins shrink and you just faced with the fact that you have to cut costs, that's where you go and look. But I don't think that is actually going to happen in the next few months or so. Look at unit labor costs, right? So they are decelerating. Growth in unit labor costs, another data released this morning. You see some deceleration in that metric, and that tells you that labor is getting, well, at least not more expensive in that sense.
Yelena, one thing that we kept hearing this week, including from Stephen Oth of Federated Hermes, was that a lot of the hard data is backward looking, and that actually a lot of companies have more confidence now. They have more certainty. The uncertainty was paralyzing. Now that is lifted just a touch. And you can see a better path forward, that actually you are seeing confidence start to pick back up, and that maybe things are turning in the other direction. Do you see any signs of that from where you said that that's actually what's going on?
Yes, we do talk to a lot of CEOs at the Conference Board. And again, the latest report on CEO confidence is actually telling you just that. So it collapsed. Confidence collapsed in the second quarter of the year, but it recovered substantially in Q3. And that report covers the period of the second half of July, essentially. So when we were getting a little bit more certain about the level and the ultimate size of tariffs. So now we will be pricing out some uncertainty, but also we need to price in the size of tariffs themselves and the impact of tariffs on the economy. We estimate the impact from tariffs on economic growth will be substantial, but at the same time, uncertainty impact was also very, very sizable, and that's not going to be in the cards anymore, at least not to the same extent. So I think there is a potential for some revival, even in the pace of payrolls going forward. So maybe the latest data reflects some of this uncertainty that we had early in the year, and companies can kind of start planning ahead with a little bit more precision.
And we certainly have seen that in the confidence data, just a touch higher as people take a look at what the landscape is right now. Yelena Shulyetyeva of the Conference Board, thank you so much for being with us. Michael McKee is back with us. Mike, you've been scouring through the data. What stands out?
Well, I think the markets are looking at kind of the same thing. I'm seeing the 10-year yield on the screen there absolutely diving, and it's basically that we are not seeing the economy collapse because companies aren't letting people go. But the real question is, now that they know what the tariffs are and the tariffs are in place, and they start figuring out what it's going to mean to their bottom line, do we see that change? And that's the part where the Fed is watching very closely and kind of holding their breath. But on the other side, we do have these good productivity numbers. Manufacturing productivity was up by 2.1%. Durable goods manufacturing 3.3%. So some strength in manufacturing productivity, which is a good thing for overall growth, but it does maybe mean that companies don't need as many people. So we'll see how all of this plays out going forward.
Yeah, Mike McKee, thank you so much, as always, as people try to understand exactly where we are in the economic cycle. Joining us now, Seema Shah of Principal Asset Management. And Seema, thank you so much for being with us. You put this all together, and I guess, what do you get? I mean, now that we have tariffs, we have more certainty, we are seeing kind of a pivot point, at least that's what some people are saying, in the labor market in the U.S. How much are you shifting your view heading into fall?
Hi, Lisa. I think there has to be some reappraisal after the payrolls report last week. I don't want to put too much emphasis on it at the same time. So clearly the payroll report was very disappointing. Those downward revisions, very meaningful. But at the same time, we have been warning, and I think the rest of the market, that the break-even employment report was likely to fall, coming down to the kind of 70,000 level, which is kind of where we got to for last month's payroll. So we need to keep that in mind. At the same time as knowing that from a political side, I think it's going to be very, very difficult for the Fed to avoid cutting rates. And we've seen so many Fed speakers in the last few days falling onto that side with Waller. So we are expecting a cut in rate in September now. But I have to say, I don't think there's going to be much need for really aggressive rate cuts, because we still have a constructive view of the economy. We still actually have some concerns about inflation. So I think from a market perspective, this is fairly constructive in a way that you're getting preemptive Fed cuts without a really, really concerning deterioration in the economy on the way. But of course, I think there's still a ton of uncertainty within the market to come.
Seema, is September for you a one and done, or is it sort of a cycle?
No, I don't think it's a one and done. I think I think we should see a couple of rate cuts. In terms of the timing, a lot of it is going to depend on how the CPI reports perform, as well, of course, the employment reports. But we are expecting 3 to 4 cuts. That is not that meaningful, but it's also very, very helpful for financial conditions in an environment where the economy is it's slowing, but it's still fairly robust. So I think for risk assets, for earnings growth, this is actually one of the reasons why you see the markets actually react pretty well this week to the news that we had on Friday last week.
You mentioned a number of Fed voices now coming up, lining up with the 2 dissents we saw in terms of talking about the cracks in the labor market. But what if we get hot CPI reports, especially since the tariffs, as of today, the higher rates actually take effect?
Right, and I think this is one of our points, is that from our perspective, should the Fed be cutting September? I would actually say that they should be holding off. But I think from a political aspect, having seen those kind of payroll reports, the pressure that is being put on them from the White House, it's going to be very difficult for them to avoid it. Now, in terms of how they proceed from there and how many rate cuts are going to be coming, that's where the CPI inflation reports can really have an impact. But I do think that the Fed is in a horrible position where they have to react to the employment reports knowing that there's some really conflicting signals from a labor supply perspective, labor demand, and then, of course, although tariff uncertainty has been somewhat cleared up, we can just see from the news flow overnight that nothing is really confirmed. So there's still so much news flow to come, which could have a really meaningful impact on the inflation agenda and, of course, on the economic growth backdrop.
Seema, is the economic resilience isolated to the United States, or is that a global story and really supports the sort of global investment picture that sent a lot of investors international over the past 6 months?
I think there is an element of economic resilience across a broad number of countries. I would say that the US is very well set up simply because of its strength in technology. So when you're looking at an earnings picture, the US does look pretty strong. But even if we're looking across to Europe, to the UK, we don't have really significant concerns about recession, but we can see that the tariffs are likely to put a more meaningful downward impact there. And so from a central bank perspective, maybe the agenda is a little bit clearer than what you're seeing from the Fed.
Seema Shah of Principal Asset Management, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump is calling for major changes to the U.S. Census, posting it should exclude undocumented migrants. Trump instructed the Department of Commerce to begin work on it immediately. The U.S. Constitution mandates a census every 10 years to allocate federal funding and political representation. This comes amid a redistricting battle across the country that started in Texas. Meanwhile, President Trump will sign an executive order today to allow private equity, real estate, crypto, and other alternative assets in 401ks. The White House confirming the order will direct the Labor Department to reevaluate guidance around alternative asset investments and retirement plans. And Firefly Aerospace priced its shares at $45. That's above the marketed range. It marks the next evolution for a company that survived bankruptcy and turmoil to develop its own fleet of rockets and successfully land a private spacecraft on the move. Firefly will make its debut on the NASDAQ today under the ticker symbol FLY. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, setting you up for the day ahead. Plus, Tom Orlik of Bloomberg Economics on why getting lower rates may take more than appointing a new Fed chair.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
If you're trying to come up with a view on the economy or a view on where things are going to go, you need a variety of data points that all kind of a mosaic, essentially, that gets you to a conclusion. And so, yeah, maybe in this environment, we need to look at a few more alternative data points to try to enforce what we're looking at. But I think also what we do need to be prepared for is more volatility in the data.
That black box is getting a little bit darker as we look forward into a very cloudy future. That was Kelsey Barrow of JP Morgan Asset Management. A cloudy future looks bright if you're in the market. It's got futures higher on the day, going into the open up 0.6%, led by big tech, and we have seen that for the past week, as you do see some sort of reprieve, or at least perceived reprieve, when it comes to the potential semiconductor tariffs. We do see a little bit of dollar weakness, although today changing that a little bit on the margins. Euro dollar 116. Just basically flat. Yields just basically flat also after the jobless claims. Less than an hour away from the cash open. Here's your morning movers with Danny Berger. Danny.
Hey, Lisa, your future might not be so bright if you are some of the CEOs feeling the tension, but here is where the future does look bright is for Hertz Holding this morning. Shares are up 10.5%. Out with earnings moments ago. The loss was less than expected. This is a company that is really trying to engineer a turnaround in this moment. So a lower loss than expected is good. The CEO saying that they are cutting costs, have a smarter fleet. Bill Ackman probably happy about this. He took a 20% stake back in April. Now, a lot of various things when it comes to tech companies this morning. And if you're Apple and some of the chip suppliers to them, you are doing well. Apple announcing an $100 billion investment into the U.S. alongside President Trump. Anyone who invests in the U.S., Trump says, will get an exemption on the 100% chips tariff. Apple also trying to manufacture more of its parts in the U.S. You're seeing Corning, for example, who makes the glass for iPhones, that rallying. Global Foundries, a U.S.-based chip business, that also rallying. Notably absent from the chip makers rallying this morning is Intel. It is hurting after Trump posting on Truth Social that its CEO should resign. Don't have shares of those at the moment, but I can promise you they're falling something like 5% this morning. Tom Cotton, the center over there, saying, writing to the board, saying that they should look into the CEO's ties, Lisa.
Thank you so much, Danny. Right now, counting you down to the opening bell. Here's a trading diary for the rest of the week and into next. 10 a.m. Eastern, Atlanta Fed President Raphael Bostic speaking. 1 p.m., the Treasury auctioning $25 billion in 30-year bonds. 4 p.m., we hear from President Trump delivering remarks. Next Tuesday, this is really going to be the big data point, CPI data. Thursday, PPI, and another round of jobless claims. President Trump continuing his push for lower interest rates, blaming Fed Chair Jay Powell for getting in the way. But a new book raises questions about how easy it'll be to get lower long-term borrowing costs, regardless of who's at the Fed. Tom Orlick of Bloomberg Economics, one of the authors of The Price of Money, joins us now. Tom, thank you so much for being with us. Why is it that you think there is a new structural regime for benchmark rates that's going to make it a lot more difficult to get them lower over the next 10, 20 years?
So it's a great question, Lisa. So let's cast our minds back briefly to the early 2000s, to Ben Bernanke, and to the famous savings glut hypothesis. So back then, the Fed was hiking, but long-term Treasury rates weren't going up. And Bernanke said, it's because there's a glut of global saving, all of this money coming from China and Saudi into the US Treasury market. And that means even as the Fed hikes, long-term rates are staying low. So the big thesis, which Bloomberg Economics, my co-authors, Jamie Rush, Stephanie Flanders, and me set out in this new book, The Price of Money, is that that situation has reversed. And we're no longer in a world with a savings glut. We're in a world with a savings shortage. And that means it doesn't matter who President Trump appoints as the next Fed chair. He can appoint Kevin Hassett. He can appoint Kevin Warsh. He can train an AI model to make the same decisions as Arthur Burns the notorious Fed chair who cut rates for Nixon back in the 1970s. And he can get a short-term policy rate, but that savings shortage is going to mean that long-term rates, the 10-year Treasury yield, stays high. We think 4.5% for the 10-year Treasury is the new normal.
Yeah, something also the administration would not welcome, because also I see you say it might actually trend above that figure. What does this look like in terms of a transition for 4.5% a 10-year yield being the new normal?
So it's a great question, Anne-Marie. So this book's about the natural rate of interest. It's a bit of a wonky concept. It fires the imagination of PhDs and the folks in the Fed, can leave others cold, but it's actually pretty important, right? If you're the US Treasury, well, 10 years ago, you were borrowing at the 10-year horizon with a 2.5% rate. That was very sustainable. Now you're borrowing at a 4.5% rate. Well, that puts us into a world where the US is going to be spending more on interest than it does on defense. If you're in the equity market or the real estate market, if you put money to work in stocks and real estate in the US, pretty much any time over the last 4 decades, you've made a lot of money. And an important reason for that has been that interest pressure on stocks, the pressure on property, isn't going to be for prices to rise. It's going to be for prices to plateau or maybe even fall.
Tom Orlick of Bloomberg Economics, thank you so much, and looking forward to reading your book, The Price of Money, which does come out today. Honestly, this is going to be the theme going forward, and frankly, a big discussion in Jackson Hole. Are we looking at a new, much higher neutral rate that really does challenge some of the pricing that we experience on assets?
Well, according to Tom and the team, we are, and that's the new normal for a very long time. What's interesting is he says it doesn't matter who the Fed chair is. Even if it's someone so overtly political, or someone who on the surface doesn't look political, but behind the scenes, like Nixon and Burns, actually is very political, it doesn't matter, because this is the trajectory we were going into.
Yeah, or potentially it could exacerbate it, like we saw during the Arthur Burns Federal Reserve. Coming up tomorrow, I will not be here. We've got Anne-Marie holding down the fort, Lori Cavacina of RBC joining, Neil Dutta of Renmax, Savita Subramanian of Bank of America, and Colin Martin of Charles Schwab, as we look forward to CPI next week. A real question about whether you're going to see that ongoing grind of maybe slightly weaker growth, slightly higher inflation, and how much that does dovetail into Fed policy. Right now, still a real positive tone across the board in markets as people look forward to earnings that have been better than good, as well as the expected Fed rate cut that people are pricing in for September. Right now, we are seeing just a touch of a sell-off in the bond space, but in the long end, 30-year yields, just a touch lower ahead of that auction later today. Good morning.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A cidade estava sitiada.
Nisso ao começo eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
nisho talia ki kon ahmale pa ahmata suara pang ahmale pa manchang le ay kon mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we don't want to lose you, Emily, in all of this?
Stargate, put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg. All right, we're hoping for a truce here, and stocks are showing it 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, a threat and an exemption. President Trump announces a 100% chip tariff, but zero for those like Apple who invest in the U.S. And Intel taking another hit as the president calls for the CEO to step down immediately, saying he's highly conflicted. And another busy earnings day across sectors, corporate America, painting a mixed picture of the economy. Katie?
Let's talk about one of those reports today. I'm not sure what this says about the economy necessarily, but Eli Lilly reported disappointing data on its new weight loss pill. That overshadowed otherwise strong growth from its current obesity medicine, which is an injectable. You can see Lilly shares down 7.5% pre-market right now.
I can't wait to talk about this story. We're also watching chip stocks. As I said, President Trump has threatened a 100% tariff on imported semiconductors if you're not building like $100 billion plants in this country. That would further upend a global electronic supply chain undergoing a seismic shift already following decades of reliance on China. And the president telling the CEO of Intel, Lip-Bu Tan, to resign following concerns around his ties to China. As you can see, Intel shares, which have already been battered in a company which is a shadow of its former self, down another 3% today. Katie?
Let's wrap it all together now with Bloomberg Tech co-host Caroline Hyde, who joins us on set. So, Caroline, I want to start with Intel because Lip-Bu Tan, he only took the helm in March 2025 or so. Now you have the President of the United States calling for his resignation. As I understand it, this traces back to his ties to Cadence.
His ties to Cadence, but also his ties to Chinese semiconductor giants. He was on the board of SMIC, which is one of the #1 chip producers over in China previously, and his venture capital firm that he founded has made plenty of investments in Chinese companies and Chinese-related companies and Asian companies writ large. He's born in Malaysia. Look, none of this is a surprise. There was much reporting done on his ties to China when he did become what many would say a surprising savior of Intel. But Trump today really highlighting this, saying, look, he's highly conflicted. This is after Republican Senator Tom Cotton yesterday asked the chairman of Intel's board to answer questions about Lip-Bu Tan's ties to China more broadly. Now, I will add, Intel responded to that letter from Tom Cotton saying Intel and Mr. Tan are deeply committed to the national security of the United States and the integrity of our role in the U.S. defense ecosystem, because this is what Republican Cotton had been pointing to, the $8 billion of money coming from the U.S. government, coming from the CHIPS Act, to basically build manufacturing here in the U.S. that would supply the U.S. government and armed forces. Does that conflicting potentially be there if he's still related to Chinese entities. We need to understand how much he still has investments in them, how much he's been selling them off, and more broadly, what his relationship was to Cadence as well. That's right, you brought that up, that was something that Tom Cotton had been concerned about them pleading guiltily, as he quoted, illegally selling products to Chinese military university and transferring its technology to China. And of course, he was once the CEO of Cadence. So a lot still to be built there. Shares are only off by 2% now, though.
I was listening to President Trump yesterday and was surprised when he said he was going to put a 100% tariff on chips. You know, he's come out with these big numbers before. He said that when talking about India previously, and now it's only 50%. What's the likelihood that we get that kind of tariff? And then if he does allow companies who invest in the U.S. a carve-out, who else is going to get it besides Apple?
Well, thus far, we understand Samsung's got a carve-out. We understand TSMC has got a carve-out. So Korea is saying that SK Hynix has a carve-out. All these whopping big technology companies have sort of front-run this. Think about how much TSMC has been building manufacturing in Arizona, how much they've been flying out to Mar-a-Lago and to meet President Trump to commit yet more and more capital into the United States to ensure that, rather like a Swiss cheese, you have all these holes peeled out of what would be a blanket 100% tariff. But the questions still roll. How much Apple, for example, yes, it gets a carve-out on its phones because they've committed yet another $100 billion in US manufacturing. But what of those iPhones that are still being made in India and the ongoing tariff concerns there? What of all these smaller other companies, international Asian giants? Remember, most companies don't actually manufacture their own chips. They manufacture them with TSMC, but others in Asia. And what about all the products that cars, that I know you so love, Matt, auto industry, they have all the semiconductors in. Are you going to tariff them? There's really no end to the questions here thus far, but it does look like some of the major tech companies in Asia have got a carve-out, and that's why the market reaction has really been pretty muted.
I mean, if Samsung and TSMC get carve-outs, and they import almost all of the chips to the U.S., then we're all good. I wonder if Ford or GM will get carve-outs for steel tariffs then, and other things that are hurting them. Caroline, I'm sure you're going to cover this all on your program. Bloomberg Tech starts at 11 a.m. Wall Street time. Definitely tune in to see more from Caroline Hind and Ed Ludlow. Let's bring in now Morgan Stanley Chief U.S. Equity Strategist Mike Wilson and Bloomberg Intelligence Global Head of Tech Research Mandeep Singh. Mike, we'll start with you. So happy to have you as our guest co-host for the hour. What do you make of this announcement? As I said to Caroline, we've heard from the president before, 100% tariffs, and then we get a smaller number later. Do you really think we're going to get 100% on chip makers?
Well, no. I mean, this is how we've laid it out. We've said this all along at 232. There'll be carve-outs. This is exactly what we're getting. I kind of like the Swiss cheese analogy. There's definitely holes to get away from this, but it requires investment, and that's really what this administration is trying to do, is trying to encourage investment in this country for manufacturing of all kinds, and chips is just one part of that. I want to bring in a theory or a thesis that we've had all year, which is that, so Trump came in, President came in this time as like a new CEO, right? He came in, he kitchen sinked the first quarter, did all the bad stuff, the kind of growth negative stuff, and then now he's doing the pro-growth things. And tariffs are kind of the same way to think about this, right? It's like a company that sets the bar, they set, and then they beat and raise. So you set a low bar, so he's setting 100% tariffs. He can beat that pretty easily. And that's how the market's trading now. And it's to the point now where the market isn't even selling off on this headline because they know that's a sandbag number, just like a CEO would do.
And Mandeep, I really want to get your perspective here, but I have to follow up on that because that's a nuanced interpretation of the market reaction to these tariff levels from where I'm sitting and from where others are sitting, judging by the notes that we're getting on Wall Street. It just seems like people are exhausted, that there's fatigue around the tariffs, and that's why maybe they're not really causing these big reactions to these headline numbers.
Well, but there's one fact that you're missing in that, which is the earnings revision breadth, which has been the thesis of our bullish view since April, has gone straight up and to the right. So what is that all about? What that's about is that in April, basically companies and analysts discounted much higher tariffs. So now we're getting tariffs that aren't quite as bad. They're still higher than we were at the beginning of the year, of course, and we're collecting revenue on that, but they're not as bad as what was priced into the earnings. And so we're getting this reflexive move off of those lows, and that's also what stocks are reacting to.
It's a taco take, essentially. I mean, without being so mean about it, right?
Well, no, I don't agree with that. I think this is the way he negotiates. I mean, he basically puts a high bar, and then he negotiates something in the middle. That's a negotiating tactic. I mean, it's well known. I mean, I learned this in business school 40 years ago. Like it's the BATNA approach, right? You set the bar here and with the hopes of settling somewhere in the middle.
So that is the investor perspective. That is the market perspective. Let's talk about the corporate perspective. You see shares of some of the chip makers higher today, NVIDIA, AMD, for example, Intel in its own special world right now. I mean, how do the executives deal with this sort of approach that Mike Wilson is laying out here?
I mean, look at Apple, right? Last night they had announced $600 billion in CapEx over the next 4 years. Now, when I look at it from their perspective, it's going to have a hit on their gross margins. How else can you explain an asset-light company having to invest, $150 billion a year in CapEx, which is similar to, by the way, the other hyperscalers. They'll be spending $100 billion, but in data centers. Whereas Apple is setting up these facilities, and they won't have any revenue growth to show, unlike, an Amazon, Microsoft, or Google, where they will have revenue growth from all the data center investments that they're making. So from that perspective, Apple has the ability to invest in data centers because they can vertically integrate like a Google, with their TPUs. Apple makes chips. They can make that sort of investment, which will have a much higher ROI than replicating what TSMC and Foxconn have done in China, Vietnam, and India. And so from that perspective, I do see a hit to Apple's gross margin, given they will be forced to make investments and they will diversify their supply chain in the process.
If, Bandeep, they actually do invest that much, right? We've heard so many giant numbers out of not just companies, but countries. Japan is going to invest $600 billion. The EU is going to invest $550 billion. And a lot of the officials from those countries are saying, no. Actually, that's not going to really happen. Is it possible that Apple is just giving us this huge headline number and not really likely to follow through over the next 4 years?
I mean, next 4 years, you said it, right? So you can kind of work your way around it for maybe a few months, but then they will have to show some progress with regards to their CapEx investments. And the administration and president were very clear that if these companies don't follow up, they'll make him pay. And so from that perspective, they announced a glass factory, right? So the question is, what else are they going to bring onshore? And to my mind, if you're not bringing advanced node manufacturing, which TSMC has already put so much money in Arizona, what else are you going to do with that $150 billion in CapEx? Data center seems to be the most obvious choice. But right now, Apple hasn't mentioned that, and I'll be curious to see if they go towards that data center investment.
Do you think that the productivity of that investment is going to be the same as what we saw in Taiwan? That's some of the pushback, and I think even they've said that the manufacturers themselves that the labor isn't here to do that high-end type manufacturing.
Yeah, I mean, so they're going to go at the supply chain level in terms of individual components. So glass was the easy one where they could partner with Corning. I expect them to do something similar with other components that go into a phone. And so that's where they're still going to rely on their existing suppliers. I don't envision them, picking a new set of suppliers to set up the operations. They're still going to rely on a Foxconn or a TSMC to do it. And so that's where I want to see what part is coming from TSMC's CapEx versus what part is coming from Apple's CapEx, because that $150 billion a year number is huge. And if it's not data center or power related, what is it going to? Because the supplier parts are not that big in terms of, the addressable market.
Well, I am curious. I mean, reading these stories, thinking about these numbers and how just much spend that these companies are committing. Mike, do you think it ultimately matters whether or not they spend that amount over the next 4 years or so? You think about the example of Apple yesterday offering this olive branch to President Trump. The stock went up. You think about Intel today coming under criticism from President Trump, having a pretty bad morning. It seems like, when looking at companies, you also have to care about what their state of the relationship with President Trump and this administration is, and whether or not they happen to be in good graces at this moment.
Well, let's just talk about where we're starting from, right? Which is that capital investment, domestic capital investment in this country has been on a downswing for the last 20 years, really since the last tech cycle. So, we got to jumpstart it, right? And that's what the tax bill is all about. That's what these deals are all about. Let's jumpstart this. Let's see where we can go, because right now there's no capital investment going into the United States. That's why we've lost so many jobs. That's why we've deindustrialized. I mean, this is
Wasn't that what the CHIPS Act was about?
Sure, but this is part of that same idea, right? It began with President Trump's first term. This is not a new development. Now it's just going into kind of turbocharge mode. It's very disruptive, okay? But this administration has been very clear. We have to reindustrialize America, okay? That is the initiative. Whether you agree with it or not, that's where they're going. And we have 2.5, 3 more years of this before there's going to be a change in that.
All right, Mike, you are sticking around for the next 30 minutes or so. Mandeep, we're saying goodbye to you. That is Mandeep Singh of Bloomberg Intelligence. A really interesting conversation on chips. We do have some other movers on our radar this morning, though. We're in the thick of earnings season still, and Hertz surging as it secured all of its 2025 fleet at pre-tariff pricing. Shares up 16%, Matt Miller.
Yeah, it's a big deal also because they sell cars. So if they've bought them pre-tariff and they sell them post, at least in the short term, that's a little bit of money made. Celsius also reported record sales following its Alani Nu acquisition and up 24%.
Yeah, not impacted by that high noon kerfuffle, it seems like. Let's talk about Crocs really quickly because Crocs down 20%. Its sales were in line with estimates, but it's only providing guidance for the current quarter due to global trade uncertainty. That is certainly the case across industries, but Crocs down 20%.
I'm surprised. Crocs seems to be like the airport footwear of choice these days.
Yeah, I see a lot more of them than I used to, but who knows?
Coming up, hey, Eli Lilly plunges. We're going to digest the latest weight loss pill data next. This is Open Interest.
Yuck.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to Open Interest. We've got our eyes on Eli Lilly tumbling in the pre-market as disappointing data on its new weight loss pill overshadowed otherwise strong growth in its current obesity medicine. Joining us to discuss is Bloomberg's managing editor for global business, Shelley Banjo. So Shelley, quite a decline in Eli Lilly this morning. When it comes to the weight loss results that we got for the pill, is it the side effects? Is it the actual number of pounds that people shed? What exactly is Wall Street latching onto here?
So it's all about the future. The pill is the future. How are we going to open up this market even more for people who feel a little queasy about taking a shot every single week? And so the idea is, how big of an impact is this going to be? So it came in at the low end of what Wall Street was expecting. It didn't, completely blow things out of the water, but it was just on the low end. And so Wall Street's saying, you know what, maybe this isn't going to be as big of a deal as we had thought, at least at the beginning.
In terms of weight loss, right? But when I heard this news, I was like, yes. Like 11% is exactly what I need to lose, and I don't want to lose 20% of my body mass. But I was also hoping that that meant the side effects would be somewhat lighter as well. And that's not the case, right?
Right. The side effects are pretty much the same. You got about 10% of people dropped out of the study because of the side effects in general. So the same as the shots. So no worse than the shots, but no better than the shots either. So the pill might be easier to pop, but it still can hurt you, can mess with your life, your day-to-day life.
Mike, you're in great shape. What do you think about this? What do you think about this GLP-1? I mean, you can't deny that Americans need something, and they're not going to start eating well and exercising for the most part.
Yeah, well, I think it could be both, right? So I think this is a godsend. This drug as a pharmaceutical is great for folks who have diabetes and are just, chronically overweight. That's a great start. But I think it's a dangerous road to go down. And I think this is what RFK Jr. has said, the head of the HHS. I mean, he wants to have a balance, better diet, a little exercise. Let's work in the presidential medal again for fitness, right? Both mental and physical fitness. I mean, those are you got to do both. You can't just rely on a pill to solve all your problems. And so, but I think it's a great product.
But that's you're saying from a consumer point of view. What about the business? What do you think about selling these drugs, and how does it affect the broader economy? Like we were talking about McDonald's yesterday, which the shares were up yesterday, but. Yeah.
There's no doubt. I mean, that has played through. So that was obviously a story last year where you're seeing less consumption of all kinds of things, even alcohol, right? So this pharmaceutical does reduce consumption of a lot of items, and the market has priced in a lot of that. I don't think this is going away. It's a setback, perhaps. Okay, but this, it works. A lot of people have had a lot of success with this drug, and as you said, America needs help with this issue. So I think it's going to continue to probably be a growth area. There's going to be other alternatives. They're going to fix the side effects probably over time, and hopefully it doesn't have other side effects that are more debilitating.
It's been really interesting watching this theme develop because it feels like investors are so focused on AI. That is the theme that dominates all the themes, but a lot of folks have latched on to that narrative around GLP-1s, what that could mean, and you're certainly seeing that being expressed. I do want to talk about healthcare broadly, though, because you take a look at the sector performance year to date, healthcare at the bottom of the pack, down about 5% year to date. This was one of the bull cases coming into 2025. The idea was that you were going to get maybe looser regulations similar to financials, and maybe we're going to see some consolidation, and it just feels like that hasn't played out.
Well, I think what's going on is they're waiting. We're waiting for what the changes are going to be. So even in the first quarter, when defensive stocks really outperformed, healthcare did not. It lagged. And that tells me there's this cloud. And I think, going back to RFK Jr. again, he said that they're doing their data analysis now. They're going to roll out something in September. We're looking like late September, early October for what is the grand plan here, like what is going to happen. And let's not forget the insurance companies, right? The HMOs have been under major duress, okay? And that's how these companies get paid. So there's just a lot of noise right now in the space. We don't have answers yet. And just like with tariffs, we're going to get more information over the next 3 or 4 months. I think what we could see is regulations and things come out in September, and that's actually almost a sigh of relief for the group to start working again. Because there are great companies in this space that are growing. Okay, this is not a defensive sector that has no growth. There are avenues of growth in the healthcare space, and there are companies that have technologies to drive that growth.
Yeah, I mean, this year to date, Novo Nordisk and United Health are not representative of the whole industry, right? So.
Yeah, but Eli Lilly, that was the shining star. So to see that down year to date, it's going to be, once markets open, it's going to be even more dramatic.
All right, Mike Wilson is sticking around. Shelley Banjo is going to keep us apprised of matters as we get more developments on this Lilly story. And let's get to some of the other movers on our radar right now. Airbnb issued a solid outlook despite warning that growth may not be sustainable. and
Peloton.
a massive buyback.
Yeah.
Did Airbnb not come out with like a $6 billion buyback last night?
If they did, it did not help because shares are down more than 7% pre-market. I want to talk about Peloton, though. We were just talking about exercise, and Peloton projected a sales decline for the current quarter and will cut jobs to reduce costs. Shares up 3.8%. Maybe people like that cost discipline. I will say that I just bought a Peloton, so.
Too much Ozempic.
Too much Ozempic.
I'm down for some Krispy Kremes, although the sales disappointed maybe because of Ozempic as demand fell in the US, Europe, and Australia. That was the theme anyway, but they are just delicious. Do you not enjoy a Krispy Kreme donut?
Our office is right across the street. It's dangerous.
Nice. All right, we'll be back with more. This is Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachian Zahran, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to Open Interest. We are minutes away from the opening bell. Here's your setup. Green on the screen all the way down. The S&P 500 higher by about 0.6%, building on that rally that we saw yesterday. Big tech leading the S&P 500 up about 0.8%. It's the small caps that are the shining star today. The Russell 2000 higher by about 0.9%. Of course, we'll talk about whether or not that will hold, and we'll talk you through all the opening action up next with Morgan Stanley's Mike Wilson after the break. Don't go anywhere. This is Open Interest.
break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Just moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at gains in futures. Markets not deterred by the 100% tariff President Trump announced he may put on semiconductor importers. S&P futures right now up about 0.5%. NASDAQ futures gaining even more, 0.75%, and the small caps up almost 1 full percent. Great news for these markets. We have a couple of IPOs ringing the bell. It's been a long time since that's happened, both at the New York Stock Exchange and the NASDAQ. C1 fund is like a closed-end fund, so not as exciting as Firefly, which is a space company, a rocket scientists. They're ringing the opening bell down at the NASDAQ market site, and we are going to talk to the CEO in just about 1 hour's time. So this market is alive and well.
It's alive and well. Excited for that conversation. We'll probably have more videos of rockets. So,
I hope so.
Stay tuned for that. But let's talk a little bit about Eli Lilly because shares now down 10% at the opening bell. That's after it reported disappointing data on its new weight loss pill, overshadowing that strong growth from its current obesity medicine, that injectable. Shares down 10%. Shares had been lower year to date, just by about 3% through yesterday's close. So really taking a bite out of 2025 performance.
Yeah, getting absolutely decimated. And I guess investors had been banking on the pill doing much better. So we're also watching chip stocks today. President Trump's threat to impose a 100% tariff on semiconductor importers further upends a global electronics supply chain that's already undergoing a seismic shift. That sounds so dramatic when I say it like that. Following decades of reliance on China. Speaking of, President Trump is now telling Intel CEO Lip-Bu Tan to resign on concerns about his ties to China. You can see NVIDIA's a gainer this morning. That helps the market. Taiwan Semiconductor putting up a fab in Arizona, and, well, Intel down another 1.33%, but it's already, as I said, a shadow of his former self. We're back with Morgan Stanley's U.S. equity strategist, Mike Wilson. And, Mike, a couple IPOs there get me excited because, you know, we've been waiting for this market to bounce back in that sense. When we saw the bank bonus story earlier this week, I noticed debt underwriting guys are getting paid, equity underwriting guys not so much. Yep. Is that going to change?
Well, debt usually leads, right? So, I mean, that's what's been going on. The private loan market's been very busy. Seeing a lot of recaps, too. So that's how it starts. And this gets back to our overall thesis, Matt, which is that, you know, we believe we've been in sort of a 3-year rolling recession, and that the end of that recession ended in April with the tariffs. That was the final capitulation. So we think that's a new bull market, right? We think the bear market ended in basically April. It was a pretty nasty one. There were several, along the way, and that was the final flush. And now we're in a new bull market, and capital markets activity is just another sign that that analysis or that conclusion is probably correct.
A new bull market, that seems like a pretty big statement. And what does that imply of what the road ahead looks like? I mean, you think about now through the end of the year, we've heard a lot of folks say that, okay, maybe we get a dip. Maybe we ultimately finish 2025 higher from these current levels, but expecting some volatility on that path.
Yeah, but that's different. Volatility in a bull market or bear market is normal. I mean, you want to see some consolidation. I'll go back to 2020, that's probably when we were probably the most out of consensus bullish as we are today, like on earnings. So in the spring of 2020, we were very bullish out of consensus because of our earnings work, and our work's telling us the same thing. In 2020, it was a straight line up, right? Didn't really let anybody in until September, and then we had a consolidation for about 6 or 8 weeks where we had 2 8-10% drawdowns and we went sideways. But if you look at the chart, it's not even perceptible, okay? So consolidation, volatility, correction, I hope we get some. That would be normal, as opposed to just sort of going straight up and going parabolic here. So I think that's normal. I expect it too. We've said that third quarter, we think this is the best chance we could have for some correction or moderation, if you will. But I want to be very clear, it's still early in the new bull market, so you want to be buying these dips.
Well, and there is some frothiness, right? It sort of feels like silly season when you look at how much Mark Zuckerberg is paying people to come on to his super intelligence unit, right? $100 million bonuses. And then you get something like Palantir, which has forecast sales of $4.15 billion, and it's worth $415 billion. Like 100 times sales is pretty nutso, right?
Yeah, no, I mean, I think it'd be naive to sit here and say it's not getting a little frothy in parts of the market, but that's what new bull markets do, right? I mean, and even in existing bull markets, you get frothiness, right? Just like you get over pessimism in bear markets like we got in April. So I think it's part of the deal, right? And as investors, our job is to find good risk rewards, okay? And by the way, a portfolio can have some speculative assets in it, right? It just shouldn't be 40% of your portfolio. And so, but right now, I'd say the risk reward still looks pretty good where the revisions are positive, things like industrials, things like financials, parts of the technology sector. These are areas that are continuing to show positive earnings revision breadth, and there's definitely still value in some of these pockets.
So we were talking about froth. Remember, we had meme mania reignite just a couple weeks ago, which definitely was a sight to behold. When it comes to this new bull market that we're in, what do you need to cooperate? I go to the bond market, for example. I see 10-year yields at 4.23%. We had been hanging out around 4.5%. It seems like we've reset a little bit lower here. Are these the levels broadly that you need long-end yields to stay in for this bull market to really flourish?
Yeah, 450 has been the level we've been talking about for several years. When you get above 450, equity multiples don't particularly like that. So 423, it seems like we're in a fine zone. I think to continue the bull market, you need the things you need, the ingredients you need is positive rate of change on growth. Okay, we have that from an earnings standpoint. And you have policy that isn't inhibitive, right, or inhibiting that growth. So both fiscal and monetary policy looks like it's okay. And it appears as if the Fed, maybe they're not going to cut in the short term, but all signs point to the next move will be a cut. So you have supportive policy, you have positive rate of change, you have good flow dynamics. I mean, those are all the ingredients you need.
We had a chart on Bloomberg Intelligence earlier this week showing second quarter earnings expectations, and it's pretty amazing. You may have seen it. It just starts to come down at the beginning of the year because we were so pumped up, right, for Trump 2.0. And then after Liberation Day, plummets, but it picks up and goes hyperbolic. Do we have that chart?
I hope so.
I said, do we have that chart?
It's like a U.
Will
Just
said, yes, we have that chart. Where's the chart?
Yeah.
There it is.
There we go.
Yeah. Is this what Q3 and Q4 expectations are going to look like too? What do you think earnings turn out to be at the end of the year?
Well, look, this is probably where we've gotten things really right this year. Where we came in this year, we said there's going to be, earnings are going to come down first because of policy, the sequencing of policy is going to be growth negative. And we were still finishing off this deceleration in AI CapEx. Plus the dollar was a bit too strong. And everything sort of bottomed in that April timeframe at the same time, whether it was AI CapEx, the sort of burden from tariffs and the pressure that it was having on revisions, the dollar was weakening at that point. So that's what's driving that. And let's not forget that companies were lowering the bar. That's what they do. just like I talked about President Trump with the tariffs, right? He's setting the bar and then he beats the bar. Well, companies do the same thing. So that pattern is normal, is a little more extreme this time because of the dip we saw in April. Third and fourth quarter, and we've been pretty vocal about this, third and fourth quarter is where you won't, probably, that's where the risk of the tariffs start to flow through the cost of goods sold, okay? So I don't anticipate that kind of a rebound like we saw in Q2.
So we will take a tariff hit in Q3 and Q4.
We should take a tariff hit on the revision factors, okay? It doesn't mean that earnings estimates have to get, hammered for next year. It just means the pace, the rate of change, the second derivative could roll over for a period of time. That is a potential risk in the third quarter for a correction consolidation that we were talking about earlier.
And a risk to Fed cuts?
Well, risk to Fed cuts comes next week with the inflation data, okay? And I think this is part of the reason we sold off on Friday is that we had a really weak labor report, okay? It didn't really shock us, but it was weaker than expected. And the Fed is on hold, meaning that reaction function now is being driven by their concerns about inflation, so they can't react to weak labor data. The market didn't like that for a day, a day. And now it's saying, well, but ultimately they're going to get there. So I'm going to look through it.
It was also the revisions, it wasn't just one report. It was those really ugly revisions that I think shook sentiment as well. Mike, we're up against the clock. You've been so generous with your time this morning. Great time speaking with you. That is Mike Wilson of Morgan Stanley. Let's get a quick check on this market. We're just about 9 minutes into the session on the S&P 500. You can see breath is booming in a good way. You have more than 400 names in the green right now, 420 for a moment, and you have fewer than 100 in the red. Take a look at what's leading. This is why we're higher right now. Apple, NVIDIA, Broadcom, Amazon, AMD, those are your biggest contributors on a points basis to this rally, dragging the S&P 500 higher by about 0.6%. Then take a look at the downside. You have Eli Lilly, no surprise there. It's down 13%, taking 9 points off the S&P 500. Fortinet, I know you've been following that one, Matt Miller. Maybe we'll mention that because it's down 25% right now. Airbnb also down, despite, as you said, Matt Miller, $6 billion in share buybacks. Markets typically like buybacks, but not in the case of Airbnb. There's a lot going on there. But let's take a look at the sector breakdown as well. I think this is really interesting because you have all green, energy up at the top, tech, materials, the list goes on. Your sole laggard today is healthcare, and that is thanks to Eli Lilly, dragging the sector overall down by about 0.8%, Matt.
All right, a lot going on in this market, and there's a lot to come. Elf Beauty is getting squeezed by tariffs. We're going to talk to the company's CFO, Mandy Fields, next, as that market cap is decimated as well. This is Bloomberg Open Interest.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function. It's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is?
Telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Time now for our top calls. Some of the analyst action in focus this morning. And first up, Campbell's getting downgraded over at Piper Sandler. The analyst citing snack pressures and higher EU tariffs on the sauces. Next up, we have Caterpillar getting cut to a sell over at Citi. The industrial giant reported disappointing second quarter earnings, and Citi says that the quarter was mixed, but notes the negatives outweigh the positive. Shares down about 1%. And finally, Fortinet is getting a raft of downgrades on Wall Street after the software company gave a disappointing update to its firewall refresh cycle. Morgan Stanley downgraded the company to reflect the, quote, reset of expectations. The analyst also citing reduced confidence in the management team. You can see shares getting reset in a big way right now, down about 25%. Now, we also want to talk about e.l.f. Beauty slipping this morning after reporting a decline in profits thanks to new tariffs on Chinese imports. The cosmetics giant is also declining to give an outlook for fiscal 2026, citing tariff uncertainty. Now, these results, they put a pause on what's been a rapid multi-year growth run for e.l.f. And here with more details is e.l.f. Beauty CFO Mandy Fields. And Mandy, this is interesting because we saw a lot of companies pull their guidance back in the last reporting season, only to reinstate this season. You're taking a different route here, actually declining to give 2026 guidance. What more clarity do you need on tariffs at this point to have confidence in saying these are the numbers for next year?
Yeah, well, thanks so much for having me, Katie. From a tariff perspective, there still remains a number of outcomes on the tariff front. And until we have more certainty there, we're not issuing guidance. But what we did do this time around is give more perspective on what we expect for the first half of the year, since we do have better visibility to that. Our first half of the year ends in the September quarter. And what we said is that we expect our net sales to be better than what we delivered in Q1. We're going to have the addition of Rhode in those numbers as well. And we expect our adjusted EBITDA margins to be about 20%, which I think is pretty solid given the tariff headwinds that we're facing. Those adjusted EBITDA margins would only be down about 300 basis points on a year-over-year basis.
Well, I'm glad you brought up Rhode and that acquisition, because one of the questions that analysts seem to have was how much is organic growth versus just the acquisition of Rhode?
Right. And in the first quarter, I'm proud to say that we just delivered our 26th consecutive quarter of net sales growth and market share growth. We're really the only beauty company to be able to deliver 26 consecutive quarters of market share growth, so very proud of that. And that is all led by our existing portfolio. Rhode will not contribute to our results until August. We just closed on that acquisition on August 5th, and so they will now be a contributor to our growth, but the growth that we've seen has really been driven by e.l.f. Beauty and our existing portfolio of brands.
That's great answer, considering the fact that analysts were worried this was all due to Rhode. What does organic growth look like to you? I mean, obviously with Rhode, it's going to be great compared to last year, but organically, will you continue to grow, and can you put maybe a percentage number on it?
Yeah, we continue to believe that we're going to pick up market share as we move forward, as we have done for these last 26 quarters. And over the longer term, what we see for e.l.f. Beauty is an opportunity to more than double our sales, whether that be through cosmetics, skincare, or the growth that we see from an international standpoint. And so over the coming years, we do believe that we will be double the size of where we are today. And I think Rhode just helps to accelerate that.
Yeah, looking forward to watching that evolve. I do want to talk a little bit about the pipeline here, what you're working on right now. What new products are coming, and are there any timelines that you can give us?
Sure. Really excited about our skin tint that we just launched. That is SPF mineral sunscreen multi-benefit skin tint, and we've been working on that one for quite some time, and it's incredible. If you saw our earnings call yesterday, one of the beauty influencers out there, Michaela, called it one of the best products that she thinks e.l.f. has ever launched. And so you can get that now. It's $18 versus a prestige item at $48. So really still speaking to our value proposition. In fact, our value proposition is super important in this environment, and 75% of our portfolio is at $10 or less, which really speaks to consumers.
Can I ask about financing? Because it's on the Bloomberg terminal, when I hit DDIS to see what kind of debt you have out, I'm used to seeing a lot more here. You've got very little in terms of debt, really just loan that I can see here, and weighted average cost of capital at 12.8% WACC on the Bloomberg terminal is a little higher than I'd normally see for a company your size, but on the debt side, it's nothing. So are you going to issue bonds?
Yeah, so from a leverage standpoint, we're very pleased with how we're positioned. Even with the acquisition of Rhode, on a net leverage basis to our adjusted EBITDA, we're still only going to be about 2 times levered. And so very much manageable. You know, I've been in companies where we have a lot more debt load, but, you know, I don't want to put us in that position here at e.l.f. And so we're going to be mindful of how we borrow. We've done that very responsibly over the years and feel great about both our leverage position and our cash flow.
All right, very cool. Great to get some time with you, Mandy. Thanks so much. e.l.f. Beauty Chief Financial Officer Mandy Fields there, eyes, lips, and face. Coming up, Eli Lilly, that is, plunges. We're going to dig into the latest weight loss pill data next. See if we can't digest it. This is Bloomberg Open Interest.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francina Sintra, Portugal, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Ruhodern in Buenos Aires, Argentina, and this is Bloomberg.
This This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks. And it's going to be a happier day today. At least for now, we're looking at gains on the S&P 500, 63.78 there. So almost back up to 6,400 level. The NASDAQ up to 23,500. Mike Wilson just told us this is the start of a new bull market. So let's look at what's going on in the individual names here. NVIDIA up more than 2%. That's guaranteed to move the needle at $4 trillion and change. Taiwan Semiconductor up 6.5%. And remember, President Trump said he's going to put a 100% tariff on chips. But if you build something big in the U.S., you could get a carve out. They're building a chip factory. I don't know how many chips they need for that chip factory, but they'll get them tariff-free. Apple as well, investing another $100 billion, up to 2.5%. AMD up 4.33%. Celsius, a massive gain on Celsius, gaining almost a quarter of its value again. And then Eli Lilly losing 14%, Katie. I just can't believe how bad the market is taking this. I mean, just because the pill only gives you 11% weight loss, 11% is a lot of percent of your entire body, right?
Is a lot of percent, and you're right. That is Eli Lilly's biggest decline since October. You have at least one sell-side analyst saying that this is an overreaction. Jared Holes from Mizuho saying that the magnitude is high, given what we learned this morning. So let's wrap it all together with Bloomberg Health reporter Damien Garde. And Damien, a 14% decline in Lilly. What exactly is Wall Street really latching onto here? Is it that it was only 11%? Is it the dropout rate in this study? What is going on?
I think it's a little bit all of the above, but the percentages really come down to it. As Matt said, 11% is a lot of percent, but it's fewer than 15%, which was perceived as the bogey number for weight loss, because that is what we see from the injectable medicine Wegovy from Novo Nordisk, which is the kind of direct analog to this pill from Eli Lilly. Compounding that is the issue that the side effect profile was a little tougher, maybe than analysts wanted to see, with the gastrointestinal side effects that we know come with this class of medicines of GLP-1 drugs. But it's difficult to kind of frame the reaction in context with the data itself. As Lilly said on the call this morning, these minute single-digit differences in weight loss from a clinical trial, these are not the kind of things that move the needle with doctors and patients who are looking for something more convenient than a weekly injection and might choose Lilly's what would be a daily pill. Now, it remains to be seen. Obviously, this drug needs to win FDA approval and launch on the market, et cetera. But I wonder whether this reaction is something we look back on with a bit of a raised eyebrow this morning.
Well, it's not just the pill form that people want. I think fewer side effects is something that a lot of people are waiting for, right? A smaller dose is, at least according to my Instagram feed, very popular. Everyone's talking about microdosing these things, right? So 11% is probably good for most people, but you want to make sure that you don't have any of the side effects and hope to find out that there aren't more side effects that we don't know about.
Yeah, that's true. I mean, so the home run would have been that this medicine matches Wegovy with respect to weight loss, but also comes through with an improved side effect profile, specifically on those gastrointestinal ones. That plainly didn't happen. I think there's a reasonable question as to whether the home run Wall Street envisioned for this was ever realistic to begin with. But to your point on kind of the long-term viability of lower dose medicines, Lilly is testing a multitude of doses here. They have a study we'll learn about in the future that uses this pill as a sort of maintenance product for people who've already lost a substantial amount of weight on an injectable, but simply need something a little more tolerable at a lower dose to keep the weight off. So the future of this product is by all means unwritten. The multi-billion-dollar revenue targets ascribed to it for 2030 seem to be coming down, at least in the eyes of analysts and obviously in the eyes of the market. But I think there's an argument that maybe those were a little overheated to begin with.
Damien, awesome to get some time with you. Thanks very much for filling us in. Bloomberg's health reporter Damien Garde talking to us about the Eli Lilly results. Coming up in the next hour, Katrina Dudley sees a reversal in market trends as valuations raise concerns. And we'll talk to the CEO of Firefly after their trading debut.
For Trump to win, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good educations, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging.
Yes, exactly.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The Secretary of the Army, Daniel Driscoll, is at Fort Stewart in Georgia this morning, where he's just paid tribute to a group of soldiers who disarmed a sergeant after officials say he opened fire with his personal weapon.
One of the soldiers tackled the person, so just think about this. They were unarmed and ran at and tackled an armed person who they knew was actively shooting their buddies, their colleagues, their fellow soldiers.
5 were wounded. The secretary says 3 have been released from the hospital. 2 others are still being treated, but expected to recover. Officials say the suspect had no known disciplinary issues. He was arrested for a DUI in May. In Moscow, President Putin explaining he's hoping to meet with President Trump in person next week, possibly in the United Arab Emirates. Putin spoke the day before Mr. Trump's deadline for reaching a ceasefire agreement with Ukraine. Former U.S. Ambassador to Ukraine, William Taylor.
President Trump has the ability to lay down conditions. There has to be very soon a 3-way conversation. It can't just be a 2-way conversation between the Russians and Americans. The Ukrainians have to be there.
President Trump's higher tariffs on more than 60 countries and the EU went into effect this morning. The new rates are expected to lead to higher prices on everything from furniture to cars here in the U.S. One auto manufacturer is already reporting a drop in profits and cutting its forecast. WWJ's Jeff Gilbert.
Toyota brought in 3% more revenue in the April to June period, but saw its profits decline 37%. Toyota says tariffs cost it $3 billion. The world's largest car maker still posting $5.7 billion in earnings, despite other issues, including an unfavorable exchange rate.
A new study finds California's wildfire season is starting earlier and earlier.
The study published in the journal Science Advances says the state's fire season now starts in the spring, 46 days earlier than it did 3 decades ago. And the researchers expect the fire season will continue to move up in the calendar. They blame climate change, which has the snowmelt starting earlier and soil and vegetation drying out sooner.
And making those grassy fuels more readily available to burn.
CAL FIRE Battalion Chief Robert Wetstein. What used to be considered a seasonal threat is now a year-round concern. Michael Wallace, CBS News.
Meta's taken the wraps off Instagram updates with new features like reposting content and a location map. Tech contributors contributor Ian Scher.
These features on their own may not seem that important, but they mirror critical things that have helped Snapchat and TikTok to stand out from what Instagram is offering.
This is CBS News. A scene from a Hollywood movie is being used to great effect on some farms in the West.
Here's the problem. Gray wolves are eating livestock on Oregon farms. Cue Scarlett Johansson.
You're so merged with your own selfishness, you don't even identify it as selfishness anymore.
Her bitter scene with Adam Driver in the movie Marriage Story is being played on loudspeakers and drones to scare off the wolves.
Every day I wake up and I hope you're dead. Dead like if I can guarantee Henry would be okay. I'd hope you get an illness and then get hit by a car and die.
The sound of fireworks and gunshots is also being played. One official tells the Wall Street Journal it's been somewhat successful. Steve Kathan, CBS News.
History set to be made in Atlanta.
This one chopped foul, and that one is called by the third base umpire, Jen Powell.
Powell will become the first woman to ump a regular season Major League Baseball game at Saturday's Marlins-Braves game. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Radio. That's where you'll find us. Lisa Mateo is with me today. Coming up, we're going to check in with Enda Kerr and Bloomberg Global Economy Report to get the latest on the tariffs. It moves on a daily basis. We need to stay on top of it. We're also going to have, in just moments, a simulcast with Bloomberg Television with Firefly Aerospace CEO Jason Kim. He's going to speak with Bloomberg Television's anchors Matt Miller and Katie Kreifeld. Megan Horniman's going to join us here. She's the CIO at Verdance Capital Markets to get her thoughts on these markets. Geetha Ranganathan, Bloomberg Intelligence. She covers all the media companies here. We're going to talk about Warner Brothers Discovery. They actually had a profit in Peloton. How about that? Putting up some pretty decent numbers. Jody Lurie, one of our faves, Bloomberg Intelligence credit analyst. She's going to talk to us about Hertz. Hertz reported some earnings. We'll talk to her about the rental car business and travel in general, because Hertz is a good bellwether there. So we got a lot coming up, but right now, let's go to Amy Mars down in Washington, D.C. for World and National News. Bloomberg Business.
All right, thank you, Paul. This Bloomberg Business Flash is brought to you by IBKR. Will U.S. initial jobless claims exceed 220,000 for the week ending August 30th, 2025? At IBKR Forecast Trader, the yes was recently at 50%. Start predicting today at ibkr.com/forecast. Last trading date for this contract is September 4th. This just crossing the Bloomberg terminal. U.S. battery startup Leighton is buying up what's left of Northvolt in Europe, including a flagship factory and a research and development facility in Sweden and a site in Germany. Stocks rose after the Kremlin confirmed Presidents Vladimir Putin and Donald Trump will meet for summit talks, raising hopes of a truce in Russia's war with Ukraine. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.5%. Nasdaq's up 1%. The Dow is up 0.2%. 10-year Treasury yield yield at 4.22%, the 2-year yield at 3.7%. Intel shares now down more than 2% after President Trump called for the chip maker's chief executive officer to resign, posting on Truth Social that, quote, "The CEO of Intel is highly conflicted and must resign immediately." Republican Senator Tom Cotton asked CEO Lip-Bu-Tan to answer questions about ties to China, including investments in the country's semiconductor companies. Eli Lilly shares down 14% after disappointing data on its new weight loss pill, which overshadowed strong growth from its current obesity medicine. The pill's results showed lower weight loss and higher rates of nausea and vomiting. Lilly's data raised doubts over whether the pill can meet Wall Street's estimates of $12 billion in annual sales by 2030. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Paul and Lisa.
Amy Morris, thank you so much. We appreciate that. As Amy was just reporting, we've got some green on the screen. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo, and we're joined by Bloomberg's Norma Linden. Norma, what are you looking at?
Well, there's some really interesting stock reactions happening today under the hood. I'm looking at shares of Intel. That's ticker INTC. Of course, this is the news that we've been hearing throughout the morning that Trump is really putting pressure on the CEO here, Lip-Bu-Tan. He's saying that he should resign immediately, essentially citing that he has a conflict of interest. There hasn't really been much of an explanation as to what that may be, but this does come after the Republican Senator Tom Cotton asked Intel's board, the chairman of Intel's board this week, to answer questions about the CEO, that is, his ties to China there. And Intel is saying that it's deeply committed to national security of the United States and the integrity of the United States defense ecosystem in response to those concerns about his ties to China that have been arisen here. But we're definitely seeing shares taking a bit of a breather this morning, a bit of a hit here.
Before we get to our next one, I just want to point out this red headline that just came across. Chris Waller emerging as the favorite for Fed chair among Trump's team. So we're continue to monitor this and see where it goes, because this has been a big talk among the news flow. So let's move on. We'll go to Eli Lilly. Now, those shares have really been taking a hit. I mean, it's not great news about its experimental weight loss pill.
Not great news.
Yes.
Yeah, the pill that we're talking about here. Not great news at all. We're seeing Eli Lilly shares as the worst performing stock, or second worst performing stock, in the S&P 500 this morning. We're seeing shares tumbling as much as 15%. That's their worst intraday performance since April of last year. And this is after disappointing data on its new weight loss pill. It overshadowed strong growth from the company's current obesity medicine. And this has really helped to drive it to raise its yearly profit and sales outlook. But when we look at the obesity pill study here, I mean, of course, people are not really happy with what they're seeing here. They're saying that the new weight loss pill had lowered weight loss and higher rates of nausea and vomiting that anticipated in the study. So interesting reaction here as it's overshadowing that sales beat.
I was shocked by how much the stock is trading off. And this is a big company, 700 billion market cap. One more for us.
Yeah, let's wrap things up with DoorDash here. That's ticker DASH. Of course, you know this is fitting considering I'm really trying to wean myself off of ordering online food.
You can't do it. You have to. You have to get off.
But then I got the Chase Sapphire card, and now I get some sort of discount with DoorDash. So I don't know. I might have to move on from Grubhub here. But we're looking at shares of DoorDash here. They're up and trading today. And this is after it gave a rosy outlook. Delivery orders hit a record here. And this is really after increased engagement. They're really seeing a growing number of active customers, apparently myself. Year to date, we're seeing shares up about 57% here.
I just can't pay that. It's just a generational thing. You guys are comfortable paying that, and we're not.
I can't.
Get up and go out and just pick it up. Plus, the food's terrible when it gets to you.
It's cold.
It's just not the experience I'm looking for. All right, Nora, thank you so much. We appreciate that. Norma Linda, she covers all the equities for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get right to what is always top of the mind for most investors, which is global trade policy, tariffs. Where are we today? Today was a big day. A lot of stuff went into effect for a lot of countries around the world. Enda Curran joins us, global economy reporter. So today's a big day, and do we know kind of what's different today versus yesterday?
Well, it's a new phase now, Paul. Like you mentioned, for many months we've been talking about where tariffs might go, where they might settle, what the president might actually go ahead and do with key trading partners. Well, we've kind of passed that Rubicon now, with the tariffs coming into effect overnight, pushing the average effective tariff rate on goods coming into the U.S. to about 15%, according to Bloomberg Economics. That is well above the 2% level it was a year ago, and it pushes tariffs to the highest level since around the World War II era. So it is a new phase. These tariffs are now in effect on goods coming to the US from right around the world. Now, that's kind of the headline. Obviously, under the bonnet, there's a different story with different countries and different products. The likes of Japan, South Korea, EU have cut deals. They're coming in on for tariff rates of around 15%. But there's still a lot of uncertainty in terms of where tariffs will settle for big trading partners like Canada, Mexico, and China. Those talks continue. China tariff rates, of course, in somewhere around the 40, maybe 50% rate, according to analysts. And then you have these other countries, smaller trading partners with the US, but obviously important for what they sell. The likes of Switzerland, as we know in the news yesterday, with that 39% level. India getting both threatened with and whacked with a big tariff rate due to its trade in energy with Russia and so on. So it's still a bit of a moving feast. Details still to be worked out on some country levels and on some product levels, pharma, semiconductors and autos, for example. But the bottom line is we have crossed something of a Rubicon overnight. We are now in very much a new trading world, I think, when it comes to selling goods to the U.S.
And you mentioned the word uncertainty, and it seems to be a lot about, when you hear these trade deals, about all the exemptions, too, that come along with them. So does that create more confusion? I mean, you have Brazilian orange juice not included, Chilean copper not included. Does that create confusion?
And also on the semiconductor threat, as we saw with the Apple announcement in the Oval Office yesterday, if you are a company investing in the US, you'll be exempt from that tariff, for example, in the chip space. So yes, there are a lot of moving parts on this. There is a lot of detail. It is new policy that's being rolled out in pretty quick time. Typically speaking, trade policy takes many months and years to pull together because of the technical detail, the process involved, and of course the legalistic jargon side of it as well. So there's a whole process there that's being crammed into a pretty short time frame. A lot of experts will tell you it's hard to keep up with it, and that's why I say to you, there are details still to be worked out. Take the China talks, take Canada, Mexico. That's the country level talks, and on the product level, we don't know yet what will happen with the pharmaceutical tariffs. Some of the car tariffs also need to be codified and settled. The semiconductor tariffs are up in the air, and some other products as well. So lots of moving parts in all of this, even as we do move into what's clearly now a very hawkish trade agenda.
So, all right, here's the dumb question of the day. Physically, mechanically, how do these tariffs get collected? Is it at a U.S. custom house, at an airport, at a dock? And are they U.S. employees? What department are they in? Are they up to speed? Are they using calculators? I mean, what's going on?
Well, the Customs and Border Protection is the key agency, Paul. That's the one that collects they collect the revenue for the goods that come in. So if you land some goods at the dock tomorrow, and you go to collect those goods that you've ordered, you will have to pay a check on arrival. I mean, that's the way it works. I speak to a lot of companies about this, and they get the bill in their hand, and the tariff is put on top of it, and it drives up their cost. Now, yes, there are question marks around when certain tariffs are implemented and effective. For example, right now, if you have stuff on a ship coming over from China, I think some people will tell you their interpretation is that isn't necessarily, or stuff coming on a ship from, say, Cambodia, that isn't necessarily going to be paying the tariffs announced overnight, but anything that comes in by plane or train, for example, that's effective immediately. So it's complicated, but you pay it at the port, is my point.
I have complete confidence in my government to do that efficiently and effectively. And Curran, a global economy reporter, thank you so much for that. Again, some news crossing the tape that gets global Wall Street's attention. Mr. Waller of the Fed emerges as the favorite for Fed chair among the Trump team at this point. What does that mean for the Fed, for Christopher Waller? What does it mean for the Fed, and what does it mean for fiscal policy? Monetary policy for the U.S. government. Michael McKee joins us. He covers all that economic stuff for Bloomberg. So, Christopher Waller, can you tell us about him, Mike? It appears that the Trump team favors him at this point.
The thing that they like about him, according to our Saleha Mosins, who's reporting this from Washington, is that he's willing to make policy based on forecasts rather than just looking back at data. He did forecast that the labor market was getting weaker and there were cracks in the labor market, and that was underscored by what we saw last Friday in the jobs report. And he had called for a rate cut in July because of that, and I think that's what impressed the president. He has always been thought of as sort of the insurance policy for the president in terms of naming a new chair, because while the president might want somebody who had been more obsequious to him, Waller was already on the board and confirmed, so he would have a much easier time winning confirmation as chair.
So who else is still in the running?
Well, the two Kevins are the ones that the president keeps talking about, Kevin Hassett and Kevin Warsh. Warsh has been seen as somebody who would really upset the apple cart at the Fed and make a lot of changes. He's had a lot of criticism of the Fed in recent weeks, and Hassett has been seen as somebody who is sort of a handmaiden for the president. He's been very supportive of everything the president has said. But if the president wants continuity and somebody at the Fed who has credibility on Wall Street, Waller would certainly provide a lot more of that, which is interesting because when he was confirmed, it took more than a year for him to get on the Fed. The Senate acted very, very slowly, and when he was confirmed, he was only confirmed by one vote. There were people who were voting against him because he was nominated by Donald Trump in his first term.
Just real quick, 30 seconds. Do we consider him a dove or a hawk? Can we label him?
He's been both. He came to the Fed as something of a dove. When inflation started rising, he became very hawkish and urged the Fed to move quickly to raise rates. And just lately, he's adopted the dovish view that the economy is slowing down a lot and that the problem for the Fed in its mandates is more on the labor side than on the inflation side.
All right, Michael McKee, thank you so much for joining us. Appreciate that. Getting a couple minutes of your time here. Again, the news coming out is Federal Reserve Governor Christopher Waller is emerging as a top candidate to serve as central bank's chair among President Donald Trump's advisors as they look for a replacement for Jerome Powell. Now, that's all according to people familiar with the matter. All right, so coming up, we're going to check in with Firefly's Aerospace CEO, Jason Kim. So he'll be speaking with Bloomberg Television and talking about that company and where we're going. Firefly, I'm putting it up right now. FLY is the ticker. And I'm looking at the stock here today. Space and Defense Technology Company, that's kind of what they do. They're out there in Cedar Park, Texas, reporting some results. You want to see about that company, kind of the future here. And coming up in just a moment, we're going to have them speaking with Matt Miller and Katie Greifeld, Bloomberg Television anchors. We have the Firefly Aerospace CEO, Jason Kim. Let's take a listen right now.
We welcome now our Bloomberg TV and radio audiences because joining us now is Firefly Aerospace CEO Jason Kim, joining us from the NASDAQ, awaiting the trading debut. First of all, congratulations on the IPO, Jason. Great to have you with us. Talk to us first about why now. We were just talking about this heating up that we're seeing in the IPO market. You're seeing more companies actually come out of the pipeline after what's been a pretty quiet couple of years. Why did you pick this particular moment?
Well, it was always part of our strategy. I mean, if you look at what we've been doing, we got orbital flight heritage on our Alpha rocket on our second launch, and we landed on the moon just in March of this year. That's something that's really hard. Space is hard, but landing on the moon is even harder, and this company did it successfully. And then if you look at what we're doing, we have a production line of Alpha rockets, and we're building our Eclipse reusable 16-ton rocket, as well as lunar landers annually, and we're building Electra spacecraft to serve, the Golden Dome customer, space exploration, as well as commercial tech. And so if you look at what the CEO of NASDAQ said, Adina Friedman, the markets are strong and they're growing. And we've gotten really great reception and conviction from investors over time. And so this is the right moment.
You're going to raise almost $1 billion. It looks like $868 million. Jason, what are you going to do with the money?
Well, it's kind of like what I already said. We're going to rate up. We're going to continue to increase capacity because there's so much more demand in the space markets right now because of national security, because of space exploration to the moon. You know, the moon is really important. It's the ultimate high ground. It's also important if we're going to put humans on the moon again, starting in a couple of years. We want to know everything about the moon. We want to put more lunar landers up there, more infrastructure, more power systems up there too. So we want to make the moon more frictionless for everybody, for America first.
And we're just seeing this headline cross the terminal now that the Firefly IPO is said to end more than 20 times oversubscribed. So plenty of demand there. Jason, let's talk a little bit more about the actual business and what the status of Eclipse is. As I understand it, that's your rocket that's meant to compete against the Falcon 9. How is that going?
Well, we see the Falcon 9 as very complementary. That's looking at the heavy and super heavy market, and a lot of that is going towards good use to launch Starlinks. But the rest of the world needs launch capacity, and in 2027, it's going to be really scarce. And so that's why, you know, our target of launching our first Eclipse in the fourth quarter of 2026 is perfect timing, because we'll be able to provide more supply of medium launch for National Security Space Launch Program customers, as well as the commercial customers. They're putting up a lot of great advanced technology that are in abundant quantities for those proliferated constellations.
You know, you mentioned Adina. You're at the NASDAQ, obviously tried and true, storied index there and business. But did you think about TXSE? You're from Texas.
Well, Texas is a great place to do business. I've run previous companies, and you know, Texas is just at the forefront. You know, they have the Texas Space Commission, and we received an $8.2 million grant in 2025, and we're going to use that to expand our production line of concurrent builds of our Blue Ghost lunar landers. As you know, as of last Tuesday, NASA awarded us our 4th Blue Ghost lunar lander for $178 million, and we're just proud of the team. We're going to kick that program off next week. And we're hiring a lot of great talent. So if there's people that want to come and do bold missions and do more of what they want to do, Firefly is the place to do that.
All right, appreciate the update there on that contract too. I want to talk a little bit about the Alpha rocket as well. When you think about your long-term strategy, where does Alpha fit in? How important is that?
Alpha is so important because it's the only one-ton to space rocket in the market with orbital flight heritage. We're rating up right now because there's so much more demand than there is supply. And so we want to be able to address that demand. So there's demand in the tactically responsive space market from the Space Force. They want to keep ahead of the threats. And we did that with our Victus Nox mission in 2023. We were the first to successfully launch in a 24-hour timeline, shattering the 21-day previous record. And it became the gold standard for launch in space. And then if you look at, commercial customers, they want dedicated rides to mission unique orbits to generate revenue from their business models. And then finally, we onboarded onto the Missile Defense Agency MACH-TB 2.0 program. And that's an IDIQ where we'll start manifesting launches of 3 to 4 hypersonic missiles at a time. There's a lot of economies of scale with that. So there is so much demand for the 1-ton Alpha rocket.
All right, very cool stuff. We look forward to talking to you again, Jason. Firefly Aerospace CEO Jason Kim talking to us on the debut of their public offering. Coming up.
All right, that was Firefly Aerospace CEO Jason Kim speaking with Bloomberg Television anchors Matt Miller and Katie Greifeld. The company's going public here today, priced at $45 a share. The stock has not yet begun trading. We'll keep an eye on that. Right now, let's head down to Washington, D.C. Amy Mars has got a Bloomberg Business Flash for us.
All right, thanks, Paul. The Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. But Governor Christopher Waller now emerging as a top candidate to serve as the central bank's chair among President Trump's advisors. Sources say Waller has met with the president's team about the role, but has yet to meet with the president himself. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.1%, NASDAQ up 0.6%, and the Dow is lower now, down 0.3%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.72%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Paul and Lisa.
Amy Morris, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So Just head over to youtube.com, search Bloomberg Local Radio, Bloomberg Live Radio, any which way. It'll get you there. Let's talk about these markets here. We've got mixed here. We've got the, as just reporting, kind of a mixed tape out there. But boy, what a resilient equity market this year after the turmoil we saw back there in April with the initial tariff rollouts. The market's just come roaring back and now setting annual highs and all-time highs. And let's break it down. Somebody who does this stuff for a living, Megan Horniman, she's the Chief Investment Officer, Verdant's Capital Market, Zoom from Hunt Valley, Maryland, home of Caves Valley, one of my favorite golf courses ever. Megan, thanks so much for joining us here. When you're talking with your clients here, how do you kind of put in the volatility that we've seen, the peaks and valleys we've seen so far in the equity markets here in 2025? How do you kind of put that into context and frame it out for maybe a way to look forward?
Yeah, so one of the things that we talk about, and it was one of our themes coming into this year, is just be careful and be very cognizant of the price that you're paying. Are you getting rewarded for that risk? And what we saw, you mentioned it, that leading into Liberation Day and then the days after Liberation Day, the market was not expecting that. It wasn't expecting the aggressive measures. It was pricing imperfection, not only from a political standpoint, a tariff standpoint, an inflation standpoint, the Fed, as well as the economy. Well, you can see what happens when the market's pricing imperfection. We got a pretty big drawback. Some of the indices here in the U.S. actually entered bear market territory. And as we've climbed out of that, when we got the tariffs to take a back seat, now we're sitting here right back where we were. Valuations are stretched here for the near term. We're looking at equities that continue to make record highs. The Magnificent Seven is really leading this pack and leading this index higher. It isn't a broad-based rally. You have small and mid caps that are still lagging. So we're right back where we were. We're reminding investors what's the appropriate price to pay here for the level of risk. And we just don't see that in that U.S. large cap market right now.
Now, Megan, one of the things you say in your note that stood out is that there's been a lot of heat in July in the financial markets. Is that sustainable?
Unfortunately, no. We think that the second half of this year is going to be a much more challenging environment. The euphoria around the fact that, Trump either delayed the tariffs after the April 1st deadline. We've got some framework deals set in place. But now that we have tariffs put in place, not only what's been agreed upon, but some of the things that we're doing, that the administration's doing right now, these things won't really hit economic growth until some of the instances in the fourth quarter. So we think it's going to be a much more volatile environment in the second half of this year. Also, don't forget that seasonality does play a part. August and September can be relatively volatile months and weak for investors. So we do think that it's not going to be as easy sailing as we've seen here in the first half of this year.
Earnings season, Megan, what has stood out to you for earnings season? Is it enough to support these markets?
It's been much better than anticipated, and that's surprising to us. Is it that the expectations have been beaten down so much? That could be the case. But what we're starting to see is the earnings estimates now for third quarter are actually moving higher. That's dangerous because most of the time earnings revisions come down so that there's a low bar to beat. But now we're looking at possibly raising that bar a bit. So is it going to be harder to beat in the third and fourth quarter, especially as I mentioned, as we're getting this, the tariffs, this uncertainty, all of this colliding with economic data?
And speaking of economic data, that's what I wanted to ask you about. Where do you see it headed? What's your take from it so far when we see this week, but also last week with the jobs report?
I think the economy is going to continue to slow. It's not unexpected. That's what most people had been expecting for the second half of this year to be a bit weaker. The first and second quarter were completely dictated around the noise with trade. So we had a big contraction in growth because of a big import push forward, and then we reversed that in the second quarter. So now that we've had that nuance and that noise behind us, we think it's going to be a bit more challenging for the consumer, and the consumer makes up the majority of GDP. The business spending side, we're very optimistic for the long run for CapEx spending, business spending. But when you look in the near term, businesses have to figure out what the actual end result of tariffs will be, which we have some of them in place. Will there be some changes in the supply chain? And then how much of the tariffs can they pass on to consumers, and how much are they going to have to absorb? Thus far, we've been seeing companies absorb some of this. I don't think they're going to be able to absorb all of it. So what we're going to see in the second half of this year is still a tepid consumer, still a tepid business. Confidence will be very choppy. You'll see we've seen that in the survey data, but the Fed's the last thing that we're waiting for. What's the Fed going to do? And the markets are kind of in this holding pattern until they see what the Fed's going to do. We think that's going to continue through the second half of this year.
Fixed income, I can go in a 2-year treasury and get 3.7%. Do I sit there and clip my coupons, or do I take some credit risk out there?
I think it's important to have some cash sitting on the sideline. So I'm not worried about clipping a short-term coupon. You can sit in cash and still earn 4%. That, in our opinion, even if the Fed cuts interest rates by 25 basis points, it's not really the end of the world to sit there in cash. It's better to sit there in cash and have that opportunity when the volatility does strike. And that's what we expect. We think there's going to be more opportunities in the second half of this year for those investors that are in this for the long run. We think that there are areas already that haven't caught up. You're looking, as I mentioned, small and mid-cap stocks. You're looking from an international perspective that they've rallied quite a bit and they've been outperforming the U.S. But on a very long-term basis, if you look over a rolling 5 or 10-year basis, developed international equities are still significantly lagging the U.S. and there's room there to catch up.
And finally, how are you balancing domestic versus like international exposure with everything going on in today's climate?
So our overweight to our global equity exposure is primarily driven by the international markets, as well as a bit of an overweight to small and mid-cap stocks. And that's a long-term play where we think that they're just pricing in the worst-case scenario now. The risks are priced in. So small and mid-caps, we're okay to start putting our toe in there. Where we're underweight is the U.S. large-cap growth and tech trade. This is just looking at valuations that are very stretched. We're looking at dot-com bubble-like valuations. We're not calling for another dot-com bubble, but we do think there's room for some valuation correction, that if you're overweight these areas, just beware that you could be in for some volatility this year.
Megan, thank you so much for joining us. Always appreciate getting a few minutes of your time. Megan Horniman, she's a Chief Investment Officer at Verdant's Capital Advisors, joining us via Zoom from Hunt Valley, Maryland, just outside of Charm City, Baltimore, Maryland. Looking at the markets here, mixed, Dow down 110 points. S&P up 11 points, NASDAQ up 140 points, so a little bit of a mixed bag out there. The yield space, 10-year Treasury yields 4.22% off about 1 basis point. WTI crude oil, a little bit weaker, but still right around $64 per barrel. A lot more coming up on this.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Amy Morris. Stocks rose after the Kremlin confirmed Presidents Vladimir Putin and Donald Trump will meet for summit talks, raising hopes of a truce in Russia's war with Ukraine. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.2%. NASDAQ up 0.6%. The Dow is down 0.3%. The 10-year Treasury yield at 4.22%. The 2-year yield at 3.71%. Firefly Aerospace starts trading today in New York. Aerospace CEO Jason Kim says they are aiming for the moon again.
The moon is really important. It's the ultimate high ground. It's also important if we're going to put humans on the moon again, starting in a couple of years.
The company's upsized initial public offering raised $868 million, with the pricing giving the company a fully diluted value of more than $7 billion. Eli Lilly's experimental obesity pill helped patients shed about 11% of their body weight. It's not good enough for investors. Shares of Eli Lilly down 15% after the amount of weight lost in the trial is on the lower end of what Wall Street was expecting. If it is approved, Lilly's once-daily pill would hit pharmacy shelves next year. The company behind Tylenol, Listerine, and the beauty brands Aveeno and Neutrogena slashed its financial outlook for the year. Kenvue has struggled to find its footing since being spun off from Johnson & Johnson 2 years ago. It's undergoing a strategic review of its portfolio of brands. Kenvue shares now more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash. Paul and Lisa.
All right, Amy Morris, thank you so much. We appreciate that. Got Lisa Mateo, Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. When was the last time you went to a movie at a movie theater?
Oh, it was a tough one. We were supposed to go the other weekend and see like Superman, but that didn't happen. I watch a lot of them. Like I stream them. Like for example, Minecraft. Like I saw at home, and then I didn't go to the theater to see it.
Right.
And that's what like Warner Brothers is dealing with.
Yeah, exactly right. So, but Warner Brothers Discovery, they put out results. I don't know. I mean, my expectations are really low for this company, but I thought they were pretty decent. The stock's trading off a little bit here. But let's get the latest on what's happening at Warner Brothers Discovery, and even maybe a little bit on our friends at Peloton. Jen Sherman's my buddy there. She's the person I drink with.
Of course.
Geetha Ranganathan, U.S. I'm not going to do it with some dude. I mean, why would you do that?
She's your friend in your head.
Exactly. We're friends. So Geetha Ranganathan, she actually is the analyst on all this media stuff. She's down there in our Princeton University sprawling campus. Hey, Geetha, talk to us about Warner Brothers Discovery, because they're like a lot of traditional media companies trying to make that transition from the good old days of linear television, cable television, all that kind of stuff to the streaming world. What did you learn from Warner Brothers Discovery?
Yeah, so Paul, what we really saw was, a continuation of the same. So the streaming business is doing really well. The studio business is doing extremely well. But TV networks, which is really 80% of their EBITDA, is still struggling. And we saw a 25% slump in their TV networks EBITDA. So, that continues to be a pain point. And while there was initially some, obviously some excitement about the turnaround in both the streaming and the studio businesses, the fact that there is absolutely no respite in sight for TV is extremely distressing.
And that's why their shares are down like 7%. Okay, so talk to me about the company's in the process of splitting itself into two separate entities, right? So where do we stand with that? What are the pros and cons that go along with that?
Yeah, so this is, one of the best ways for them, or at least, the fact that they've kind of decided to do this really follows a pattern in most of the media landscape where they're kind of separating the low growth assets from the slightly higher growth assets, the low growth or the no growth assets being the TV business. That for Warner Brothers, that split will happen in the middle of next year. And really the strategy here is to unlock shareholder value, because they combine their Warner Brothers business with the Discovery networks. Of course, that really hasn't gone anywhere. And so finally, everybody in the media world is doing this, where they're kind of separating out the secularly challenged TV networks. The only problem here is that we still really don't have a very clear strategy, so they have to really outline that. And I think that is part of the reason why we're also kind of seeing this, the decline in shares this morning.
All right. The studio had a good quarter here. Couple some hits like Sinners, a Minecraft movie, Final Destination, Bloodlines, and things like that. Talk to us about the studio and maybe it's kind of its forward slate. How's that look for the company?
The forward slate actually looks really good, Paul. They just had their major DC reboot with Superman. And what they're really trying to do now going forward. I mean, they didn't have a Superman movie for years. Their DC strategy was was a mess. They had so many movies out there. It was all confusing storylines. But I think finally they've they're going to right that ship. So they've committed to a pretty strong slate of about 12 to 14 movies going forward. The big thing for them is to really get studio EBITDA to about $3 billion, and they seem to be well on their way. I mean, last year was a complete mess. This year, definitely much, much better. They're actually, if you just look at box office performance overall, they already have about a 25-26% share of the domestic box office, so they're only very slightly behind Disney. So they're definitely doing well, and their strategy is working. They have a pretty good content pipeline.
All right, let's switch over to Peloton. How is this company doing? I mean, is there subscribers? Are they continuing to come in? Are people still using this equipment as much as they used to?
So for Peloton, really, and the story has not been so much on subscribers. Unfortunately, it has really been more about trimming the fat, literally, at the company and kind of getting profits into full focus. And if you just saw this quarter's results and what they reported for the full year for fiscal 2025, I mean, the progress that they've made in terms of profitability has been absolutely outstanding. So they reported adjusted EBITDA that came in about 19-20% higher than guidance and consensus. Their forward guidance, so fiscal 2026 adjusted EBITDA guidance, was also way above consensus. So the way that they're kind of optimizing their operating expenses has been absolutely stellar. Just everything in terms of workforce reduction, in terms of inventory management, OPEX costs, marketing expenses, everything has been absolutely top notch. The only problem for them is reinvigorating demand. And that's where, we're really seeing this disconnect, because the financial metrics are really good, but the subscriber metrics, unfortunately, are not.
Is there a credible plan there to reignite growth there? It feels like, everybody who's got one's got one. How did they talk about that part of the story?
Yeah, so it's really going to be a little bit hard. On the margin, I think they can do some things to kind of reignite a little bit of the hardware sales. But in terms of a sustainable go-forward strategy, that is really still pretty unclear, Paul. So I think right now what they're really trying to do is, again, really get, more costs out of the system, maybe increase subscription prices a little bit, so kind of pad that top line a little bit. But in terms of, the overall subscription growth story, I'm not so sure that's really going to be a volume story. I think it's going to, focus more on kind of rates and price and improving pricing.
And Geetha, how much of that, cutting costs includes cutting jobs?
Yeah, they did actually, announce a 6% workforce reduction as well. So a lot of it is going to come down to cutting jobs.
All right. Hey, Geetha, just one quick thing on Warner Brothers Discovery. What's the timing of this separation?
It's going to, so they announced the formal plan in June. It's going to happen by mid-2026, so by middle of next year.
Ooh, okay, all right, we'll keep an eye on that. Geetha Ranganathan, she covers all the media stuff for Bloomberg Intelligence.
Is that like a good move for them to split? I mean, you see Comcast do it, right?
Yeah, I think it is, simply because you hope that the two parts have more total value than they do together. And so you're concerned that the high growth business is being pulled down by the slower growth cable networks. So you split them out and see how far this, the streaming business and the studio can fly, I guess, is kind of the thought there. So we see it all the time in lots of different industries. And there was a time, when all these assets made sense to be together, but the fortunes, the economic fortunes of the cable network and broadcast network business have been permanently damaged, and it gets worse every year. So, you just got to cut those out and see how they trade on a standalone basis. Maybe ultimately they get acquired, or maybe some of these networks maybe get together. The Comcast stuff maybe will get together with the Warner Brothers stuff and just become bigger and get some cost synergies. So we'll see how that plays out, but we're seeing that across the media space here. S&P 500 up 10, Dow minus 180, NASDAQ up 140. We'll have more coming up. This is Bloomberg. Good morning.
Listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney, and there was a ton of earnings today. It's kind of, you get out of breath talking about them. One of them we want to get to is Hertz. They reported their results. It was a second quarter loss, but it was smaller than expected. So here to break it down for us is Jody Lurie, Bloomberg Intelligence credit analyst. Jody, thanks for joining us. So it was smaller than what analysts expected, I guess, so that is good news, correct?
It's good news in that, yeah, I mean, if you set the bar low, it's much easier to pass it.
Yes.
Now,
that's my whole life, Jody. I've been doing that.
I think you're selling yourself short. But I think the story for Hertz is such a complicated one, to say the least. And the devil is in the details. So, you know, you look at it and you say, oh, EBITDA was 1 million. So they technically broke even in EBITDA, which is a big, tremendous feat. But then if you start digging into the numbers of how they kind of got to, you know, operating cash flow being positive, how they got to a bunch of the different components, and you say, well, there's a little bit more nuance to it that I think will play out over the coming year.
How bad is their credit profile here, Jody? I'm looking at the FA function, and I'm old school. I kind of go, you know, kind of net debt to EBITDA. Oy vey. What's going on there?
So the problem with Hertz, and this is also true for Avis, is that you have to look at it separating out the auto-related debt. You know, they have a whole section of debt that's asset-backed securities that are financing their vehicles. If you separate that out, You then have their standard debt and their corporate EBITDA. Now, even looking at that, that's not positive at the moment. Where Hertz benefits is their covenants, so the requirements they have with their lenders, is they have a first lien leverage requirement that they've received some modification on, some cushion on as they work through these issues. Now, there is kind of a definition, a legal definition component to it that makes it hard for us to really back into what that legal definition EBITDA is versus what you see as their corporate adjusted EBITDA, which would not fit the requirements.
What can you tell us about their results as far as, let's say, leisure customers versus corporate government customers?
Right. So Lisa, I mean, I think what's more fascinating about the situation is how they've commented on utilization of their vehicles at large. That was a large component of the call. And when you think about it, part of it is they've scaled down their fleet. So as, say government jobs have been scaling down, as consumers have been pulling back, they've also been scaling down their fleet, which may be a positive for them. But where that's a negative is obviously, if you show up at a rental car facility and they don't have your vehicle, that's a problem. So it's a bit more complicated than that. So much of their services are on airport. And depending on how the airlines see the next few quarters, I think that will dictate Hertz and Avis's demand. Now, Hertz did say on their call that they're seeing good bookings and, advance of what they've anticipated going into third and fourth quarter. And so they are hinting towards positive for them. But I think where it gets a little bit more complicated is as you think about 2026, as tariffs are in effect, as it's harder to access vehicles, as vehicle pricing sort of shifts, when you start folding in 2026 vehicles into the fleet, that's where they really have to show that they've learned from their past mistakes. And I'm not quite convinced they're there yet.
I mean, we all know, Avis, Hertz, but there's kind of the two big ones, but there's budgets out there. I mean, there's a lot of car rental companies out there when you go to the airport. Are there too many in this industry? Should this industry consolidate even more?
So, Paul, I think what's most interesting is it's fake competition, right? Because Avis and Budget are one company. Hertz has Dollar and Thrifty, right? And Enterprise even has their, they have segmented, right? And so while, yes, there's a lot of names out there, there's actually 3 major players.
Gotcha.
What we are seeing is Six is starting to grow. We're also seeing Turo, which is, as people like to describe it, the Airbnb of car rental services. So you have your own personal car sitting in a garage in New York City, and you say, I don't use it that much, but I might as well make some income on it. Let me rent it out to somebody who's visiting the city and wants to use a car. And so that's been slowly taking away some of the volume. And what we've been tracking is if you look at Bloomberg second measure data, that's one of the few places that I can find where you can get data on Six and Turo, which are not public, as well as on Enterprise, which is a multi-generation family-owned company. And so you're seeing Turo slowly creep into Hertz's
I never knew that.
Business operations, and
my son
they've
was
been
talking
competing
about
for
that.
volumes.
He's like, I should lend my car out because it just sits there sometimes.
I
Let other
don't
people
know.
pay me to use my
You're
car.
renting out your house or a room in your house. Why not your car? I guess. I don't know. All right, Jody, we learn something new every time we chat with you. Jody Lurie, Senior Credit Analyst for Bloomberg Intelligence. She follows all the leisure companies, and we pay her to do that, believe it or not. So she goes on cruises, and she goes to hotels and all that kind of. It's a good gig, and she does a great job. I appreciate getting a few minutes of her time. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market and industry news. We got markets mixed here. The S&P giving up all of its gains. It's now unched on the day. The Dow's down 230. The only one higher here today is the NASDAQ, up about 100 points. That's 0.5%. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, Wayne Sanders, Bloomberg Intelligence Senior Defense Weapons Analyst. He's going to talk to us about what it means with Presidents Trump, Putin, maybe even Zelensky. They get together next week, potentially. Peace, what does that mean for some of the defense contractors? I don't know. Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst. Talk to us about Intel. President Trump urges Intel's CEO to resign, calls him a, quote, conflicted. So we got that going for us. We're also going to play some discussion earlier. Bank of England Governor Andrew Bailey speaking with Bloomberg Television's anchor Francine Lacroix. We'll take some of that. Very interesting, talking about the Bank of England, who did cut rates today. So we got a lot coming up in this hour. Let's kick it all off down in Washington, D.C. with one Amy Marks.
All right, thank you, Paul. Stocks rose after the Kremlin confirmed Presidents Vladimir Putin and Donald Trump would be meeting for summit talks. That's raised hopes for a truce in Russia's war with Ukraine. We do check markets for you all day long at Bloomberg. Some of those gains have been pared back now. The S&P 500 is little changed on the upside. NASDAQ is up about 0.5%. The Dow is now down about 0.5%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.72%. Intel shares down more than 3% after President Trump called for the chipmaker's chief executive officer to resign, posting on Truth Social that, quote, the CEO of Intel is highly conflicted and must resign immediately. Republican Senator Tom Cotton asked CEO Lip Buten to answer questions about ties to China, including any investments in the country's semiconductor companies. And Eli Lilly's shares are down 14% after disappointing data on its new weight loss pill, which overshadowed strong growth from its current obesity medicine. The pill's results showed lower weight loss and higher rates of nausea and vomiting. Lilly's data raising doubts over whether the pill can meet Wall Street's estimates of $12 billion in annual sales by 2030. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Paul and Lisa.
All right. Thank you very much, Amy. It's time to take a look at some of the stocks on the move. I'm Lisa Mateo alongside Paul Sweeney. We are joined by Bloomberg's Isabel Lee. Isabel, thanks for coming in. The first one I want to get to is Airbnb, because Paul makes fun of me because when I book vacations, it's the first place I go.
Oh, really?
Airbnb.
I use hotels.
See, that's what Paul is trying to say. But apparently, a lot of people do. But looking ahead, it doesn't look so great for the company.
It doesn't look so great. We have to go back to why we both use hotels. But the stock is now down by more than 7%. The ticker is ABNB. So third quarter revenue will range from $4.02 billion to $4.1 billion. That translates to an 8% gain from a year earlier at the lower end. So this is noticeably short from the nearly 13% growth in the prior 3 months. So they also projected tougher outlook for the second half of the year. So this outlook, plus the lukewarm forecast we've seen from Booking, its rival, really just underscores the broad economic uncertainty and maybe for more people preferring hotels. So again, the forecast overshadowed what were otherwise strong results.
Generational. I'm not of the generation that grew up with that. I grew up in the hotel thing, but my kids all do it.
Oh, they do Airbnbs too.
They do Airbnbs. Yeah,
it's a better deal. You can cook there. You can have parties, especially for big family reunions.
Yeah, I guess. Yeah, I tell you what we do use it for. We do a guys ski trip. And,
see,
and
it
we
depends.
Have Julie, the cruise director, in our group, and
hi, Julie.
He uses Verbo, which is
Oh yes. I've heard
we
of
got
it.
our condos and our ski report, and that works great. So I don't know. Maybe I'll use it more. What else you got?
DoorDash. So ticker's DASH. So its stock is gaining almost 4%. And again, that also is due to the company reporting results that beat expectations. So DoorDash is the largest food delivery service in the U.S. and they issued an outlook that beat expectations. So again, this is a sign that maybe services remains resilient despite really just concerns about consumer spending. The forecast is also good. The company said that the new consumers grew each month in the second quarter and users of more than 6 months also had better retention rates. And they're also ordering more from the company's non-restaurant categories, such as supermarkets and retailers. So maybe this is another generational thing, but I order my groceries online.
Oh, goodness.
And what does that cost you?
There is a fee every
Yes,
month.
there is.
Yes, there is.
And it's a big one.
But you pick your poison, and that is the poison I choose.
The first time I saw the DoorDash on my Visa bills for my son, he was a freshman last year, 2 years ago in college. It was a $15 McDonald's, and the delivery charge was like $10 or $12.
Yes.
That I turned off his credit card immediately.
Good decision.
For like 2 or 3 days, he was screaming. I said,
That's good
Have you learned a
parenting.
lesson here?
Yes.
So, all right, I just don't understand the
He
economics
doesn't
there.
get it.
Here's another new economy one.
know.
What's going on with Duolingo?
Duolingo, ticker is DUOL. The stock is up now more than 27%, but it jumped earlier to 32%. That's the biggest intraday move since May 2022. So this is a language learning software. You know, your friends, they like to brag that they're learning Spanish or French or Mandarin in the app, and they even have a 300-day streak or something like that. It really gamifies learning. So they lifted their earnings forecast for the year, again, better than expected performance of its subscription tiers, and they also expect a full-year revenue that's higher than estimates. They're also making an acquisition. They said that it will speed up to broadening their offers beyond language learning games. So they're buying Nextbeat. This is a music gaming startup in London. So I don't really know how Nextbeat will work, but they have a 23-member team, and this will really just allow the company to broaden from language to music.
I don't know, one of the fundamental regrets of my life is I did not learn a foreign language.
I know.
I really regret that.
Well, I can't. Yeah, hello, I'm Puerto Rican, and I'm not fluent in Spanish. I hate to
But
say.
even parents who teach their kids,
yes,
if you don't speak it all the time, you forget.
And that's what happens.
Yeah.
Yeah. So it
Yeah.
wasn't like the main language in our household.
Mhm.
So I mean, I'm the only one of my 3 sisters who can speak even Spanish.
Oh,
not fluently,
good for
but
you.
they don't know a lick of it.
Yeah.
So it's
Yeah.
it's different. But thank you. My cousin swears by it when she went to Italy. She raves about it. Isabel Lee, thank you so much. For more conversations like this, you can subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Mover on Apple Podcasts, Spotify, or anywhere else you listen. All right, let's change gears a bit and talk about a lot of the news flow. The Kremlin saying Vladimir Putin, Donald Trump holding a summit meeting within the next few days. So what we want to do is bring in someone who has more information on this and can break it all down for us. It's Wayne Sanders, Senior Defense Weapons Analyst with Bloomberg Intelligence. Wayne, thanks for joining us this morning on just last notice. You came in for us. So this meeting, what's expected? What is the outcome? Are we going to see some kind of deal out of this?
I think that's the hope that's going into this, right? Is whether or not it ends up being a bilateral or trilateral with President Zelensky included, is part of it's obviously going to be Ukraine focused in where that is, but I know a lot of it's going to be focused around sanctions. Part of it's probably going to be to the discussion of what happened at the end of last week when President Trump parked a couple of nuclear-powered submarines off the coast of Russia, based off of things former President Medvedev said. And trying to bring some of these things to light, right? So I do find it interesting in the timing that this came up right after last Friday when President Trump decided to let everybody know he was doing that.
Wayne, what has the last several years meant for the defense contractors out there? Has their business seen a material pickup due to the war in Ukraine?
Yeah, from a capacity perspective, you see a lot of that. Something, I'll just use an example of Lockheed's PAC-3 interceptors, which is part of the Patriot air defense missile system that Ukraine, as well as a lot of our NATO partners in the U.S. obviously use. From a production perspective, Lockheed's really looking at trying to take it from 550 of those interceptors per year to 650 by 2027. So you're seeing a lot of demand. You're seeing a lot of production capability for munitions, propellants. You obviously from the reconciliation bill, right? You had the 150 billion that's coming in, 29 billion for shipbuilding is a great example, right? Huntington Ingalls and General Dynamics Electric Boat got a lot of that, but there are 16,000 suppliers that are part of that shipbuilding maritime industrial base that supports that. If you look across Europe as they try to get up on some of this, right? You've seen the pledge to reach 5%. Really, it's 3.5% of hard defense spending and 1.5% of almost like support contracts that are tied to defense to reach that. Some countries like Germany will be easier to reach that, and others won't. Rheinmetall, Leonardo, Thales is some of the companies that are large. The European side of the house, and then for obviously the U.S., you've got your big primes, your Raytheons, your Northrops. Your Lockheeds as some of the big contributors for that. And then Golden Dome's obviously a huge player in that. So you'll start to see more of the SpaceX side of the house as well as some of the other primes that play in the satellite side as well.
Now, Wayne, you mentioned defense stocks. What about the impact on oil?
Oil, I don't have a huge visibility on that, and I don't want to speak out of turn for that. So I'd leave that one to Scott Levine.
So, Wayne, just on the defense side, over the next 2 to 3 to 4 years, will total global defense spending, is it expected to rise as these European countries step up their defense spending? I mean, is the U.S., I don't see the U.S. cutting back as the other guys pick up their spending. So is global going to pick up materially?
No, I believe it will. And if you think about it, there's something out there that's called the security dilemma. And so as one person has this level of capability, then guess what? I need to have this level of capability be just a little bit better. China's not slowing down their production, right? So they outproduce, on the naval side of the house at least, China outproduces and manufactures ships at a rate of 6 to 1 to us. They're not slowing down. You are looking for different partners across the board, even on the Russian side of the house, where like Vietnam, who normally gets Russian equipment, is looking for other partners. So you are seeing some additional players like the U.S. looking for areas like that. AUKUS, the Australia, UK, U.S. Deal for not only the submarine side on AUKUS Pillar 1, but there's also something called Pillar 2, which is a lot of emerging technologies for hypersonic technologies and directed energy. Think lasers and high-powered microwaves. All of these things are all part of that environment, right? They're all part of this ecosystem, and that spending is going to continue to grow. Now, the key ends up being in a lot of European companies and elsewhere is how long can this be maintained? Right now, everybody seems to be on board until you have to start cutting some social spending to be able to get to the numbers that are necessary. Germany has some room to go, so does Poland. They actually have money to use and to buy, but you have others like Italy that are overspent at the time, right? So them or Spain, they promised $12 billion in increased spending, but right now we're not seeing how they're going to be able to do that.
Yep, absolutely. We've heard that from a lot of folks here. Poland and Germany in pretty good shape. Everybody else, big question mark. Wayne Sanders, Senior Defense Weapons Analyst at Bloomberg Intelligence. He's down there in D.C. Intel coming into the crosshairs of President Trump today, particularly the CEO saying he's got to go. I mean, I have no idea where that came from. I'm guessing Mandeep Singh is read up on this, if nothing else. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. Mandeep, President Trump calling for the CEO of Intel to quit. He says he's conflicted. Can you give us the backstory, what's going on here, as far as you know?
I mean, most likely it has to do with the minority investments that the Intel CEO has in companies within China, and they may have some ties to the Chinese government in some way. And look, he used to be a VC. So this guy has had multiple roles. He used to be the CEO of Cadence, then he was a VC with, multiple investments in startups across the globe. So I'm guessing the Intel board, before they appointed him as the CEO, did their due diligence in terms of looking at all these aspects. And to my mind, it obviously is a surprise that, his credentials are being questioned here, given the reputation he has in the Valley.
Is he an American citizen?
I'm not sure.
Yeah, okay.
Probably he is, yeah. But those are the type of things you would expect the board to do their due diligence on. For a company like Intel, which has had multiple CEOs and clearly is looking for a big turnaround, a lot of people felt this guy had the credentials, in terms of having the experience to turn around a big ship like Intel. And so far it's too early to call out how good of a job he was doing. Still early days with his strategy, but clearly he has plans to keep the foundry business and turn around the core chip design business. And he has raised a lot of cash. So I would say still early days with his strategy, but this clearly puts a wrench in terms of his strategy.
Just
and what
look,
he was
as
doing.
per Wikipedia, it says that he is a Malaysian-born American business executive. So that's all I got.
Well, something you brought up, you said they probably, people already knew about this. This is no secret. My question is, why now? Why bring this up now? Why the timing now? And the company's been struggling. right? Its shares now are down, they're down 3% this morning. But why do you think this is taking place now?
I think it's because Senator Tom Cotton, he wrote a letter to the Intel board. They obviously found out some things that the senator highlighted, the links to some of the Chinese companies, small companies that had ties to the Chinese government. And I think the board probably has to come up with an answer in terms of the concerns that were raised by a senator.
Has the company responded at all to either the senator or the president?
I mean, they have in terms of the initial response, but to the best of my knowledge, I think the board clearly is defending, the credentials of their CEO, and there's nothing here that would put a question mark around the future of Lip Bhutan in terms of running Intel, at least for now.
Well, that's what I was going to say. Do you think he would step down? How long has he been in the position? Not too long.
A few months, yeah.
Exactly.
Yeah.
So how is the Intel call here? I mean, the stock obviously underperforming pretty dramatically here. It's flat year to date, but relative to tech, that's just losing ground dramatically.
They are, and this brings back, some of the discussions we were having a few months back before Lip Bhutan was appointed as a CEO, that Intel may be broken down, Qualcomm may be looking to buy parts of Intel, and then the foundry business would be separated. I feel if for some reason this CEO has to step down and someone else is appointed, then it brings all those discussions back into play, because so far what Lip Bhutan had maintained was he wants to keep the foundry business. He wants to turn around through a strategy that involved keeping the chip design and the foundry business together. But if that wasn't to be the case, and if there's somebody new, then I would say that whole aspect around breaking up Intel comes back into play.
All right, the stock is down 3% today, so it is feeling the impact of that. Mandeep Singh, thank you so much for joining us, senior tech analyst for Bloomberg Intelligence, joining us here in our studio. Again, the headline: Trump urges, quote, conflicted Intel CEO Tan to resign immediately. Stock trading off on that news. S&P unched on the day after being about 0.5% higher earlier. The Dow is actually off 0.6%. That's 265 points. And the Nasdaq, it is higher. It is up by about 0.5%. That's 115 points there. The VIX, it is now a little bit elevated here. We were down to about 16 now, just under 17 for your VIX. More coming up. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. President Trump's new tariffs have taken hold with higher rates for almost all U.S. trading partners. Stocks giving up gains from an early rally. We do check markets for you all day long here at Bloomberg. The S&P 500, little changed on the upside. NASDAQ is up about 0.6%. The Dow now down 0.5%. The 10-year Treasury yield at 4.23%. The 2-year yield at 3.72%. President Trump is expected to sign an executive order later today allowing for private equity, real estate, cryptocurrency, and other alternative assets in 401ks. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Paul and Lisa.
All right, Amy Morris, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City. We don't mail it in. And we also are on the YouTube thing, so that if you like the video, you go to youtube.com, search Bloomberg Live Radio, and that's where you'll find us. The Bank of England cut interest rates to the lowest in over 2 years in a closer-than-expected decision that leaves investors with the Bank of England Governor Andrew Bailey called genuine uncertainty on its next move. Today, Bailey sat down for a conversation with Bloomberg Television anchor Francine Lacroix. They discussed the Bank of England's interest rate decision and the impact of U.S. tariffs. This portion of the conversation began by Francine asking Bailey if the Monetary Policy Committee has ever been so divided.
We've actually never had to be in this situation of having to have two votes to produce the majority. Absolutely fine, we can do that. Not difficult. But again, I think it's a reflection of just how finely balanced the situation. So my message to markets is, look, this is a very finely balanced situation.
But finely balanced or complicated?
Well, I think it's finely balanced. I mean, you might say that there's a lot of things going on under the surface in terms of influences on it, but it's finely balanced.
Investors or markets are pushing back almost to actually no cuts this year. Could that make sense to you?
Well, I think the fact that pricing is now, more sort of 50-50 going forwards, I think is a reflection of the fine balance. So that doesn't surprise me.
But you're happy with that? There's no.
Well, I try to avoid pronouncing in that slightly sort of grand scale. But I think if we say something is finely balanced, I'm not surprised when you see that outcome. Perhaps that's the best way I can put it.
Governor, when you look at the cycle, are we starting to approach the end of the easing cycle?
I think the path is still downwards, and over time, I think there's more uncertainty about the sort of step by step, exactly when the steps are taken. Put it that way.
Are you expecting a stabilization when it comes to the labor market? I mean, was April the worst of it because of some of the things that the government put in place?
Well, what we've seen since May, when we did the last monetary policy report, is we actually haven't seen a lot of news on activity and the outlook for activity. What we have seen is actually pay increases come in a bit below where we thought they would be. Now, given that we were starting from a level where they were considerably above, obviously any level that's consistent with the inflation target, the fact that that is happening obviously is welcome news. But that's the context in which a good part of the context in which we have to reach the judgment.
So how do you look at the labor market over the next couple of months?
Well, we think, interestingly, our agents around the country they do an annual pay settlement survey at the beginning of the year. So at the beginning of this year, they said they thought it would come in around about 3.7 as the sort of the middle of it, and we think it's actually pretty much on course for that.
Inflation. Talk to me about inflation and the possibility of second round effects, given all of the tariff turmoil that we're seeing in August.
So. Yes, I mean, there's obviously a vast amount of news being generated in the world economy at the moment, and we have to factor all of that in. However, having said that, actually, in our deliberations, I can say to you that actually it was the domestic situation that was more important. Now, that's not because I'm in any sense relaxed, in any sense dismissing the whole tariff issue. It's important, and by the way, I mean, we've obviously had the news that we've had since May means that the sort of average tariff level is a bit lower than we thought it would be in May, but it's still well above, obviously, where it's been in history.
All right, that was the Bank of England Governor Andrew Bailey. Speaking with Bloomberg's Francine Lacroix, talking about the interest rate cut by the bank today of the Bank of England. So we keep on top of that as it moves markets. And the question now is, what does the U.S. Federal Reserve do? And I bet our next guest cares about what the Fed's going to do. Manju Boreya, he is head of systematic fixed income, Allspring Global Investments. He's in our Bloomberg Interactive Broker Studio. He's based in San Francisco, but you got to come to the world's financial capital, like, a lot is kind of what I say. Manju, talk to us about your business in the black box, if you will, on the fixed income side. What's kind of the trade you guys went into the year with, and how has that changed, if at all, this year?
Yeah, so I think one of the things that we've done, Paul, is I think we did notice the kind of tug of war between what the markets are expecting from a rate cut perspective and what the Fed has been doing from a policy perspective. I think that divergence has only grown. So last September, we saw that the markets were pricing in 10 cuts. Now it's down to 2.5. But I think what the markets have actually been focused on is a singular focus on growth and singular focus on labor market data. But the inflation data is really where the risks are, right? So inflation has been sticky. The supercore CPI has been moving sideways. And now in the last couple of prints, we've seen the growth data pick up, or the goods data pick up as well. So given that challenge, I think one of the things that we've been focused on is on the curve, the bull steepening that's been happening in the 530 part of the curve. I think we think that it's going to continue. Because, yeah.
Well, I was just going to say it's how it's going to shift, like your whole fixed income outlook.
I think from our perspective, I think we want to diversify across the curve. Like the duration needs to be diversified. So we think that just focusing on the short duration is not actually convenient. You have to extend your duration and be diversified across the curve. That's really what we've been kind of advocating for, as opposed to be focused on just the short duration part of the curve, right? But from a curve perspective, we do think that the bull steepening is going to continue, just given the risks on the short end and the long end.
Bull steepening, that just means long-term rates are going up, long-term yields are going up more than short-term because you think the Fed's going to cut in the short term?
So bull steepening means that the short-term rates are going to go down more than the long-term rates.
See?
So
I asked the question that you were dying to ask.
It's in my head. I'm like, I don't know.
I'm an equity guy. I'm an equity guy. I try to stay away from you fixed income.
Yeah, and so I think what it just generally means is that there is rate cut expectations priced in the short end, and in the long end, there is risk around the term premium staying elevated just because of fiscal risks, the debt sustainability issue, the inflation issue, and then also potentially the credibility of certain institutions as we move forward, right?
So where are you seeing the most value across like the fixed income spectrum? I mean, treasuries, corporates, municipals, where do you see the most value?
So we've been advocating, obviously it depends on if it's a taxable investor or not, non-taxable investor, but we've been advocating, especially in the munis, to have a barbell strategy, right? So the short duration and the long duration, having exposure to those two, diversify across the duration, diversify across sectors. Issuance has been high in munis this year, and I think we think it's going to continue to be high for the rest of the year. On the corporate side, I think there's a bit of an irrational exuberance, right? Because the spreads have been tighter across high yield and investment grade. And we do think that as the economy slows, potentially inflation risk being high, the spreads could widen. So we are advocating for being focused on high quality, portfolios. Just A or better, focus on the high quality, corporates, just diversify.
Yeah, but I mean, I'm looking at my INGO function here, the Bloomberg Index Browser, the best INGO, the best performing in U.S. fixed income has been the U.S. corporate high yield.
Absolutely,
5.3%.
yeah.
I mean, people want to talk to, nobody wanted to talk to you guys for the last 15 years because you had no yield.
That's true.
Now you guys have yield all over the place.
It's all over the place, and I think that's the scary part, right? Because when the tide turns, you have to be ready. So, I mean, from our perspective, the philosophy is to diversify it. Don't look at the past. Look at where the puck is heading, right?
So this Fed, 2 rate cuts this year, does that seem reasonable to you?
2.5 is what the markets are saying. I think from our perspective, I think it's definitely the markets are over exuberant. Just given the inflation risk, we do think that it's going to be lower than that.
So you've been talking about all this. What are some of the risks, though, you see in fixed income? Is it liquidity, default, like something else?
Yeah, so on the corporate side, it's definitely potentially higher defaults as the economy slows. The labor markets are still stable, but just the economy slowing and the tariffs actually putting a brakes on consumption, that could have ripple effects on defaults, right? So default risk increasing is one risk. The second risk is really, I think, again, the disconnect in the rates market between what the Fed is saying, which is being very cautious, and what the markets expect, which is exuberance, more cuts, singular focus on growth, less focus on inflation risk. I think that dichotomy is going to play out. So what, again, from our perspective, advocating for diversification in duration, go up the risk spectrum on the credit risk, high quality portfolios, and just diversify.
Earlier this morning, we had somebody in here, I can't remember where he's from, pitching hard on asset-backed securities, mortgage-backed securities, that part of the market here. I'm seeing the U.S. municipal bond total return this year, 5.02%. How do you guys think about that part of the market?
I mean, from an asset allocation perspective, you have to be allocated, right? I think the question is how much you want to allocate to those sectors of the fixed income. I do think that having a balanced approach helps, as opposed to just focusing on just one part of the the fixed income market, right?
Yeah.
So as an active fundamental manager, we do think that security selection matters, right? Bottom-up security selection is really what drives differentiation. So being able to diversify and just focusing on issuers where you know what the kind of risk that you're taking basically helps to build better portfolios.
How many analysts do you have in the Allspring fixed income side?
So we have about 50 fundamental research analysts.
50?
Yeah.
Doing just fixed income?
Just fixed income fundamental bottom-up research.
And you break it up between
across,
high yield and...
Yeah, high yield, investment grade, munis, asset-backed as well.
See, I don't know.
Yeah.
I got a big credit. I got a big credit department here at Bloomberg Intelligence.
Okay.
I don't know if I have 50 people here. I have to go do the math, but that's pretty good.
Yeah.
All right, Manju, thank you so much. We appreciate it. Manju Boraya. On that fixed income side there at Allspring, he's based out there in San Francisco. We appreciate getting him here in our studio here. Coming up later this month, join us for live coverage from Jackson Hole. We'll be on the ground in Wyoming to cover the Kansas City Fed's annual meeting and remarks from Fed Chair Jay Powell. It all starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bromwitz, and Michael McKee. What a trio. We'll all be part of that special starting at 9 a.m. Eastern on Friday. Plus, watch for special episodes of the Odd Lots podcast. Joe Weisenthal and Tracy Alloway, they're going to be out there taping several conversations from the event as well. So Bloomberg's got you covered out there in Jackson Hole. Why? Because Fed Chairman Jay Powell, he speaks, and oftentimes he makes news. He gives a sense of where maybe this Fed is headed. And again, the big meeting, I'm going to say a very, very highly anticipated meeting for this Federal Reserve will be September, because there's a lot of economic data between now and then, and will push this Fed potentially to a move. And again, as we've been talking about, it looks like they'd be looking to potentially cut there in September. So Jackson Hole's important. We'll have full coverage out there with the surveillance team and Mr. Michael McKee as well. I put in a ticket to carry his luggage, did not go through, so I will be here. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Amy Morris. Firefly Aerospace starts trading today in New York. Firefly Aerospace CEO Jason Kim says they are aiming for, among other things, the moon. Again.
There's so much more demand in the space markets right now because of national security, because of space exploration to the moon.
The company's upsized initial public offering raised $868 million, the pricing giving the company a fully diluted value of more than $7 billion. Eli Lilly's experimental obesity pill helped patients shed roughly about 11% of their body weight, just not good enough for investors. Shares of Lilly now 14% lower after the amount of weight lost in the trial is on the lower end of what Wall Street was expecting. If it is approved, Lilly's once daily pill would likely hit pharmacy shelves next year. A rally in stocks faded near all-time highs. Treasuries fluctuating now. We do check markets for you all day long here at Bloomberg. The S&P 500 now down 0.1%. NASDAQ is up 0.4%. The Dow is down 0.75%. The 10-year Treasury yield at 4.22%. The 2-year yield at 3.72%. And the company behind Tylenol, Listerine, and the beauty brands Aveeno and Neutrogena slashed its financial outlook for the year. Kenvue has struggled to find its footing since being spun off from Johnson & Johnson 2 years ago. Kenvue has been undergoing a strategic review of its portfolio of brands. Kenvue shares now little changed. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Paul and Lisa.
All right, Amy, thank you very much. One of the companies she did mention was Eli Lilly. It had a sales beat, but shares are taking a hit. Yeah, Lilly shares are down about 14%. There is something overshadowing that. For that, we're going to bring in Damien Gardes, Bloomberg News health reporter. Damien, thanks for joining us here in the studio. So it looks like this experimental weight loss pill, and that's the thing here, it didn't do as well in the study as Wall Street had expected.
Exactly. So it met its goals, and it helped people lose weight, which was the whole point of it. This was enrolling people with obesity, but that weight loss was about 11% of body weight. And Wall Street was hoping to see something more akin to 14 to 15%, which would match what's seen with the injectable GLP-1 weight loss medicines like Wegovy from rival Novo Nordisk. So despite the trial being a success, and despite this pill seemingly on the path to winning FDA approval and hitting the market as early as next year, the reaction, as you mentioned, was dramatically negative for Eli Lilly because these, single-digit percentage differences are perceived to be massively important to the ultimate financial future of this medicine.
Here's the thing for me, knowing someone that does this GLP-1 thing, whatever it is, you gotta reduce the side effects of the nausea, and this one didn't. And that was I know people that use it and use the injection are saying, boy, when the oral one comes out, I'm told that the side effects will be dramatically less, which is a huge selling point. And I guess that's not what they saw here.
Basically, in this study, they saw gastrointestinal side effects that were comparable to the injectable one, which, to your point, could be viewed as a negative. There was I think there was a home run scenario where Lilly's pill would both lead to a greater percentage of body weight loss and, as you mentioned, have fewer of the nausea, vomiting, unpleasant things.
We being the pharmaceutical biotech industry, we're in the early innings of this GLP type obesity thing. I can't imagine why it's not going to get better and better and better and better. Or I don't know the science. Maybe we're already at that limit. We are at the limit of this, whatever this thing is.
I don't think so. I mean, and granted, clinical trials need to play out. Science, biology, famously unpredictable. But I would say the space is moving in two directions. One, combination medicines that add GLP-1 to other things that can lead to more dramatic weight loss. And then two, more convenient things like pills that you can take that maybe don't have the same effect on body weight, but that would be cheaper to manufacture, presumably cheaper to acquire for patients because these injectables have list prices of in excess of $1,000 a month. So in the best case scenario, let's say 5 years from now, there will be an armamentarium of weight loss medicines. An armamentarium, which I think I stumbled over, a whole bunch of them, like an armory, let's say. So a physician could, diagnose a patient and say, for some people, you will need an injectable that you can lose 25% of your body weight on. For some people, you may be good with an oral medicine where you lose a single digit or even 10% of your body weight, or mixing and matching using one for maintenance. And the upside being theoretically, this will, one, become a massive $100 billion market for the pharmaceutical industry, but two, have knock-on beneficial effects for people's health.
So where do we stand with the pills? I mean, what other competition is out there? Who else is working on one that we should keep an eye on as well?
So Novo Nordisk has an oral version of the injectable Wegovy. It is not as convenient or I would say innovative, frankly, as Lilly's pill, because it's basically just a bunch of Wegovy shoved into a tablet that you eat, and it sits in your gut and administers the drug there. And that, it comes with restrictions. You can't take it with food. You have to do it in the morning. It's not really as attractive a commercial product, I think it's fair to say, as Lilly's. But there are other oral options from smaller biotech companies that we may see them progress to the market. There's also a lot of M&A speculation around these firms that a company like Pfizer, for example, which kind of crashed and burned with its first attempt to make a GLP-1 pill, might acquire them. So this is very much a space to watch. I would say a year from now, it's quite likely that it will look demonstrably different than it looks right now.
So as I look at the PGEO table, which kind of breaks down where the revenue comes from Lilly, where is the cardiometabolic health? Is that the sector it's in? All right, that sector is 65% of total revenue. So that's a big deal for Lilly.
And that's not inclusive of this oral drug, which isn't even approved yet. So, I mean, as you mentioned, these data overshadowing, Lilly had like a blowout quarter. Their approved medicine for obesity, and the same thing is sold for diabetes, both of them beat estimates. They raised revenue guidance and profit guidance. They're doing very, very well. But I think the stock reaction today is sort of an illustration of just how much is baked into the potential of these medicines. Lilly has flirted with being a $1 trillion valuation company. They're not there anymore, but that's strictly a reflection of what people believe will come of this class of medicine.
So speaking of the potential then, so why is the science behind these pills? Why is it such a challenge?
Oh, I mean, getting what you can do in an injectable medicine, getting that down into a pill has bedeviled the drug industry for many, many years, because there are safety concerns, there are dosing concerns. The ideal product is like a super pill that prolongs your life and et cetera, but there's a reason we have so few of those. And it's basically just the trial and error and the unpredictability of biology. And I think these companies are always trying to bend the curves of failures, but like it remains true that roughly 1 in 10 medicines actually makes it from the lab to the pharmacy.
My freshman year college chemistry lab partner went on to become like this crazy smart dude, played a wide receiver in the NFL, then became a scientist, astronaut, space shuttle. Crazy. And I was like, dude, can you carry me in this chemistry class? Because I'm not really into it. And he was super smart. So, and then he didn't peak there. He didn't peak in the NFL. I guess he peaked flying around in space. So good there. What's the next thing that you're looking for in the pharma space here? What's the next big mover here on a company level that you're looking at?
For weight loss specifically, or just more broadly?
Yeah.
I think everything. Actually, Merck is working on, speaking of pills, they're working on a pill version that would be basically a superstatin. It would lower bad cholesterol to a level that cannot be done with oral medicines that exist right now. And that it kind of follows this same trajectory that I think we're seeing. Big pharma companies years ago, after statins went generic, kind of moved away from primary care medicines because it's difficult. You have to run big trials. It's expensive. If they fail, you lose a lot of money, and move toward oncology and rare diseases. I feel like we're seeing, and I think GLP-1 was sort of the Trojan horse in some ways of this, we're seeing the major drug companies move back toward primary care, trying to invent medicines that would be taken by millions of people and that would actually address the #1 killer of Americans, which is heart disease. So I think that's a trend that I'm following, and we'll get data from that Merck pill, I believe, by the end of the year.
All right. I mean, you and Sam Fazeli, you guys do whatever you do in that healthcare thing. Just tell us when something important is happening. Damien Gardet, healthcare reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. You know, back in my trading days, man, I'd go to my healthcare guy and say, hey, can I buy Lilly today? It's down 15%. I mean, it feels like an entry point to me. And hopefully my analysts will have a good idea what's going on.
It's just such a competitive space. I mean, you hear the GLP-1s are supposed to lower cholesterol, but then you have he was just talking about another cholesterol medicine coming out.
But I mean, these GLP things have been, I see a news story every day how they help this, they cure this, they lower the risk of this. It's not just, so I don't know what's going on. But I tell you, healthcare space is a tough one to invest in, I think. That's why there's MDs and PhDs all over the place in investment firms investing in that space. Boy, this market's turned over a little bit. It got the S&P down 10, the Dow off 330, but the NASDAQ tech holding it up 65 points. More coming up. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
IPO market, I think it's coming back. This Firefly thing, Figma. I mean, I think the market's coming back. We heard the big banks when they reported a couple of weeks ago, Jamie Dimons and Brian Moynihan's of the world talking pretty bullish about the remainder of the year. And I think maybe when we get back from after post-Labor Day, we'll see a bunch. But we're seeing some activity right now here in early August. Anthony Hughes joins us. He's been busy. He covers the equity capital markets for Bloomberg News. What's going on today, Anthony? I know about the Firefly deal, but I think there's a second one as well, right?
Yeah, there's a company called White Fiber, which is a relatively smallish company, but it's in an interesting area, which is high-performance computing, and it has a Bitcoin mining heritage. But you know, this whole area around high-performance computing has been very active in certainly in the last year or so. And this company has some sort of echoes of a company called CoreWeave, which went public earlier this year and was a disappointing IPO initially, but did very well over time. A company that owns a lot of NVIDIA GPUs is helping to provide the the power for the AI revolution that we underway here.
I mean, we hear a lot about cloud-based services. There's a lot out there. That's what we talk about a lot. Do we need another company to come in and step in on it?
Well, I think there's been a lot of debate this year around how much money is being spent on AI and whether it's going to produce a very good, good enough return on investment. But that's still to play out, I think. But I think the bankers are certainly, most of the IPOs that are coming forward here in the next while have some sort of AI sort of angle to them, and I think that those words always appear prominently in the prospectuses at this time, and so certainly that's an area that people are excited about and where a lot of the growth companies are coming from.
Firefly Aerospace. We heard from their executives earlier today. I'm looking, that went priced at 45 last night. We got an indication at $66 right here. Still has not opened. What do these guys do?
This is a space and defence technology firm, and interestingly, there's been a few of companies in the broader area of space and defence that have gone public in the past year, and they've done really well. I think space and defence has been a little bit conflated. I mean, when you think about space, you think about we're going to the moon or we're going to Mars or further. I mean, that's part of the story, but a lot of the story is really about space as sort of the cutting edge, the cutting edge of defence technology, and America and other countries using space to develop some fairly advanced defence systems that will be important in the geopolitical battles that lie ahead, perhaps. So this is a big part of the story here, and there's some lot of money being spent by the Department of Defense to make sure that America is up to speed in space. Is winning the race, the space race, I guess you call it.
Well, talking about money, I mean, they raised, I'm looking at here, $868 million. What are they going to do with that? I mean, they already landed a spacecraft on the moon. It was Blue Ghost. So what's next for them?
Yeah, well, I think like most companies that go public, they love to have a lot of cash in the bank, and there's a lot of money that they're going to need to develop new spacecraft, and they have some other projects, rocket projects as well. But the interesting thing about this company is that it had a valuation of around $3 billion, I think, earlier in the year, and this IPO is basically going to crystallise a valuation substantially above that. Really, at the IPO terms, it's well above 6, and I think the way it looks like it's going to be opening for trading today, it's going to be substantially above that too. So there's been a big increase in the valuations of space businesses, and there's a lot of space businesses, a lot of small ones, a lot of private companies, a lot of upstart space businesses, and there's a real maturing of the space sector that's going on. Obviously, the other factor which we can talk a lot about is SpaceX has become this massive one of the biggest private companies ever, with a $400 billion valuation based on the most recent Bloomberg reporting, and that's still a private company. So if you want to get a public exposure to space, if you're interested in getting a public exposure to space, there's only limited opportunities out there.
It's Brisbane, not Brisbane, right?
Brisbane, yes.
Thank you.
Yes, that's how we say it in Australia. Yes.
Dude, how long? Just every time I look at the map, it's just like, God, that's a big country. How long does it take to fly from Brisbane to Perth?
I think you can probably do it in, I think 5 hours, I'm thinking. I haven't done that trip for a long time.
Is it possible to drive across Australia?
It is. You probably want to do it around the edges rather than through the middle.
You can't go just straight. There's not a highway. There's not like an Interstate 95 going.
There's a lot of big highways, yes, but
nothing
the Pacific Highway runs all down the edge of Australia, and that's how you want to get on the east coast. But you can go through the middle too, but it's a little.
I mean, there's nothing in the middle. There's nothing. Yeah. You don't even have cities in the middle, do you?
They have koalas.
Well, there's a city called Alice Springs, and that's where it's near where Uluru is, or the Red Rock is. So that's obviously a place which is very hot.
All right, I've been to Sydney like 4 or 5 times just for business. You kind of jet in, jet out. That's it. I need to do something bigger, but man, it's far away. I mean, all right. Phil, Anthony, thanks so much for joining us. Anthony Hughes, Equity Capital Markets reporter. He's got some stuff to talk about these days. We have some IPOs coming, and I see a lot of people on the beach reading prospectuses, so I'm thinking they're gearing up for September to come back and do deals. I mean, you used to see that. You used to see people on the beach kind of reading prospectuses and in the summer. And
I'm surprised they have time to sit on a beach. It's like busy time.
Yeah, exactly. So, all right, Anthony, thanks so much for joining us there. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121 across access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Top stories and global business headlines are coming up in just a moment. We've got kind of red and green here on the screen as we close out the morning trading session. The S&P 500, I'll call it for Lisa Abramowitz, unched. The Dow's off 285 points. The Nasdaq's up 83 points, so go figure there. The VIX, after being down right just below 16, we got to 15.98. We're now at 16.99, so a little bit more angst in the marketplace. Bloomberg Dollar Index, a little bit of life there. So we'll keep an eye on the dollar, which has been down 8-9% this year. 10-year yields 4.22% on your 10-year. For Lisa Abramowitz, I'm Paul Sweeney. More action coming up, more headlines right now. This is Bloomberg.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump proclaimed on social media that billions of dollars would flow into the U.S. because of his tariffs. New levies have taken hold today, affecting dozens of countries. CBS News business analyst Jill Schlesinger.
Investors seem to be taking the tariffs in stride, focusing instead on the ability for companies to continue to make money during this period of time, especially those technology companies that are spending on artificial intelligence.
CBS's Kelly O'Grady.
The president saying if companies commit to manufacturing in here, they could avoid that tariff. That's a really important point. It's essentially pay to play.
Russia continues to push for a Putin-Trump meeting, but CBS's Natalie Brand reports specifics and a full White House commitment to it remain elusive.
The Kremlin says that planning is in the works and even said that a location had been set but not yet announced. The White House pushing back against that, saying that no date or location has yet been set.
President Trump's expected to sign an executive order that could make it easier for 401ks and other workplace retirement plans to offer the option of allocating some savings in alternative investments. CBS's Aaron Navarro.
This order calls on the Labor Department to research and issue more guidance to employers on allowing these 401ks to be invested in other avenues, such as private equity, real estate, or cryptocurrency.
The day after the attack at Fort Stewart, Georgia, that left 5 soldiers wounded, the Army hails some heroes in the shooting blamed on Sergeant Cornelius Radford.
All 5 are expected to recover, thanks to the heroics of fellow soldiers like First Sergeant Joshua Arnold.
We have rendered aid those individuals, and shortly after EMS arrived and continued their jobs.
Army Secretary Dan Driscoll says other unarmed soldiers tackled and subdued Radford.
The fast action of these soldiers under stress and under trauma and under fire absolutely saved lives.
Michael Wallace, CBS News.
On the Health Watch, Eli Lilly says it has a first-of-its-kind pill to help people with diabetes and weight loss. Medical contributor Dr. Celine Gounder says it could be a breakthrough for patients who use injectable drugs like Wegovy and Zepbound.
In their phase 3 clinical trial, what they called Attain-1, people who took the highest dose of orforglipron, this is the pill form of these medications, they lost an average of 27 pounds over 72 weeks. And that's really on par with what we see with the injectable forms of these drugs.
And checking Wall Street, right now the Dow Jones Industrial Average is down 300 points. The NASDAQ is higher. This is CBS News. There's a new leader when it comes to vehicle theft.
That Chevy's Camaro with the ZL1 version on top and the base Camaro third. Matt Morris with the Highway Loss Data Institute.
What we've learned is that thieves discovered that there's a vulnerability with that vehicle.
GM has put out a security patch which should help prevent other thefts. A similar security patch has helped make certain theft-prone Kia and Hyundai models less vulnerable. Jeff Gilbert, CBS News, Detroit.
The United States is planning to auction off a $325 million yacht, the first American sale of a seized Russian luxury ship since the start of the war in Ukraine. The Amadea was taken 3 years ago and is now docked in San Diego. The 350-foot-long yacht features 8 staterooms, a helipad and beauty salon. A sealed bid auction is set for September. Steve Kathan, CBS News.
You're listening to Leaf Filter Radio, and the guru of gutter protection himself, Chris Coonahan, is here to take your...
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
And on the 200th day, the tariffs kicked in. Welcome to the Thursday edition as we mark 200 days of the second Trump term. Just as reciprocal tariffs on some 90 nations take effect, they've been in place since midnight, and we'll get the latest from the White House. A live report coming up from Tyler Kendall, and reaction from Adam Ferrer, geoeconomic analyst at Bloomberg Economics. The Kremlin says Vladimir Putin and President Trump are finalizing details on a meeting in the next few days. We're going to talk Russia, Ukraine, and chances of peace when we sit down with former Republican Congressman Denver Riggleman. And our panel is in place. Bloomberg Politics contributors Adam Hodge and Rick Davis will have analysis through the hour. Let's get going on Wall Street to start things off. A Bloomberg Business Flash with Amy Morris.
All right, thank you, Joe. Firefly Aerospace is going to start trading today in New York. It marks the next evolution for the company that survived bankruptcy and turmoil to develop its own fleet of rockets and successfully land a private spacecraft on the moon. The company's upsized initial public offering raised $868 million. The pricing giving the company a fully diluted value of more than $7 billion. Concerns over an overheated market have surfaced. A rally in stocks sputtered near all-time highs. Treasuries fluctuating. We check those markets now. We do it all day long here at Bloomberg. The S&P 500 now down 0.2%. NASDAQ up 0.3%. The Dow is down 0.7%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.72%. Weekly jobless claims rose a bit more than expected to 226,000. Bloomberg's Michael McKee reports it could have been worse.
There's been a big question about what's happening in the labor market, and obviously a lot of Fed officials made nervous by the low job creation last week. But so far, we're not seeing the converse of that, companies laying off anyone yet.
Still, Bloomberg's Mike McKee reports those continuing claims are at their highest level since November of 2021. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. We'll be back to Amy Morris a little bit later on this hour for more on the Thursday trade here. We've got a lot in the air today on this 200th day of the second Trump term. It's not all about Washington. In fact, maybe it doesn't have anything to do with Washington. The Wall Street trade doesn't seem to care right now very much about tariffs. We are keying off earnings, but to see the S&P 500 down 9 points as new tariffs against some 90 nations take effect, pretty remarkable. 1 hour from now, we're going to be talking with one of the president's most important economic advisors as these tariffs take effect. Stephen Myron, the chair of the White House Council of Economic Advisors, is going to join us from the very spot that Tyler Kendall is standing in right now. I want to get to Tyler on the north lawn of the White House as we welcome everybody to the Thursday edition of Balance of Power on Bloomberg Radio, satellite radio, channel 121, and YouTube. You got to do this now so you can see Tyler. Just Google or search whatever. Bloomberg Business News Live. Search it, put it into YouTube, and you can hang out with Tyler on the north lawn. It looks beautiful out there, Tyler. We could cover a lot of ground today. And we may as well start with tariffs here because the president put up the Truth Social. I guess he was up at midnight, Tyler. I don't know about if you were, but he seemed really excited about it. All caps, it's midnight, 3 exclamation points. Billions of dollars in tariffs, he says, are now flowing into the United States of America, exclamation point. 15% here seems to be the baseline, Tyler. Are they partying at the White House? What's going on?
Well, it's very clear, Joe, that President Trump waited up so that he could see these long-awaited tariffs go into effect after really months of threats, they're finally here. But we should also caution that there's still a lot of big question marks about what's actually in some of these deals as we wait for more of the framework details to come out about the different negotiations that went on. The White House liked to talk about how each country was able to secure a unique deal, and we still need to glean a little bit more details about some of these investment commitments, for example, or how countries are going to make good on their pledges to boost U.S. LNG purchases, for another instance. But one thing that's absolutely clear is that the average tariff rate is significantly higher today than it has been. Our analysts at Bloomberg Economics say that the U.S. average tariff rate will rise to 15.2%, significantly higher than the 2.3% when President Trump took office. And keep in mind, these so-called reciprocal tariffs might be done, if we can say that, though we know negotiations are still, of course, ongoing, but we're still bracing for additional sector-specific tariffs, Joe. Even when it comes to these deals that were struck, take those countries that were able to secure that more preferential rate at 15%, for example, Japan, South Korea, the European Union, they also all got lower rates on auto tariffs, but that's yet to be codified, so that's going to be a change there. And then, Joe, as you well know, the president's floating that we could have semiconductor tariffs and pharmaceutical tariffs in the week aheads, too.
Semi-tariffs of 100% unless you're invested somehow in the United States and you're building something which basically leaves everyone off the hook. Tyler, I'm just curious, before you go back inside, we've got a 4 o'clock event on the president's schedule. Delivers remarks, I think is all it says. What do we expect to hear from him today? Do we know?
Oh, well, there's a few different things on his agenda today. We know that there's going to be this EO signing that has to deal with different assets that can go into your 401ks. And then later today, there's just so many different things that President Trump could ultimately talk on. We know, for example,
so it's a jump ball.
Yeah, it kind of feels like that a lot of days here at the White House, but there's just so much. There's just so much happening. We could talk about the potential Russia headlines that we've been getting, or more discussions about potentially the future of the next Fed governor. There's just a lot of different things that we could be discussing here today.
And by that, we say maybe they don't even know in the press office what the president's going to say later. We got a full impromptu news conference last evening. Tyler, keep your ears open, as always. It's great to see you. She'll be back with us in our second hour from the White House, and we'll see what we know by then. If the president does make news, of course, at 4 o'clock, we'll bring you in there. That did turn into quite the romp last evening in the Oval Office, which occupied a good chunk of our late edition of Balance of Power. When the president speaks, we bring you there to try to find some news. Today, it's tariffs on day 200, and nobody knows more about that than our friend Adam Fair. In fact, it's become a full-time job for Adam to try to decipher, read between lines, I guess tea leaves, whatever you want to call them, to figure out what's real, what's going to be lasting, and if possible, what the impact will be on the economy. That last part is a little more difficult, or certainly a lot easier said than done. He is senior geoeconomics analyst for the Asia Pacific at Bloomberg Economics, but we take him around the world because he knows what he's talking about. A veteran of a different administration. Adam, it's good to see you. Good to be Day 200, are we done? Is the tariff regime in place? I realize, you've got China outstanding, but as far as these other 90 nations, we've got our numbers, right?
So the day has come, as you said. We have actually crossed that threshold. We didn't see another extension. We saw those reciprocal tariffs go into effect, although obviously at much lower rates than we saw originally put forward on April 2nd. But I mean, it's hard to look at this environment and look at where we are today and say we're done, right? President Trump has made very clear that he sees tariffs as one of his principal tools in international politics. And I think we should expect to see it keep coming out when he sees countries taking moves that he feels impedes the United States' access on trade or in other arenas. We still have ongoing major disagreements between the president and key trading partners like Brazil, and never mind India, which we've seen drastic escalation in the last couple of years.
I mean, you wouldn't want to be Brazil or India, as Tyler just mentioned. Basically, 15% is the average baseline tariff, but if you're India, it's 50%, and same for Brazil. Do you see either of those changing? I guess India might be the more likely to strike a deal.
So I think both of those partners have taken a much more firm stance than we've seen from others, right? Actually actively pushing back against the United States and against the president's assertions. Now, there is a difference in how those two have been framed, and in particular with the Brazil tariffs and the escalation in Brazil based a lot on domestic politics in Brazil and the president's perception of how they're treating their former president, Bolsonaro. And that creates actually less room, I think, for Lula da Silva to move forward and find a off-ramp. India's a little different, right? India, Modi has a strong relationship with President Trump that both of them have talked about considerably over the years. Right. And moreover, that he, set out to make a trade deal even before Trump put out tariffs on April 2nd, right? These were trade discussions that started in February and have been plodding along. So the other thing to keep in mind is that new 25% tariff that, again, is supposedly associated with Russian oil imports doesn't go into effect for 21 days. Yet again, opening the aperture for negotiation, for discussion, and for Modi and the team in India to try and find that headline that Trump can take away and declare victory.
Interesting. Mexico is the grand exception to all of this. Yes. A 90-day extension was granted. What does Claudia Sheinbaum know about handling Donald Trump that nobody else seems to?
I certainly think world leaders are probably asking that same question.
They must be calling her directly. What do you know? Unless you're Keir Starmer, you walk in with an invitation from the king. That works pretty well. What is Claudia Sheinbaum? Is it her sense of humor, her ability to call him? Apparently, they talk all the time.
Well, certainly she's put engagement at the forefront of her strategy and treating the president with a level of respect that he demands, and at the same time, standing firmly, but in that respectful manner that somehow has not crossed the president's threshold. The other reality, though, here is that Mexico has a lot of cards in its hand, right? The impact and the economic relationship with the United States is massive, and changes in that relationship, massive increases in tariffs will be felt by American consumers much faster than from other trading partners. So, you combine that with the fact that you've got USMCA still in effect, the president's decision to keep that in effect highlights that there is an apprehension at the White House about moving too quickly on issues that would affect Mexico and to some extent Canada.
Yeah. In our remaining moment, when we're listening to President Trump last evening, bombshell headline, redhead on the terminal, 100% tariff on chips and semiconductors. But will it apply to anyone? If you're building something in the U.S., you get a carve-out. So who's the tariff on? Huawei?
I think in a surprise to very few people who've been monitoring how the president interacts, this statement, like many others, left us with more questions than answers. Yeah. I think you're right. An initial read, and certainly how markets are reacting, is that this doesn't impact those major semiconductor producers, particularly TSMC out of Taiwan, Samsung and SK Hynix out of Korea, which have made huge investments in the United States. So it feels like that the president is kind of mapped out a position that doesn't impact the economy significantly. However, there are still really big questions. There are other producers of legacy chips, those older semiconductors that are still integral to things like cars, hundreds of them going into production of an individual vehicle that come from Southeast Asia and others that don't have that same kind of investment footprint in the U.S.
Texas Instruments and the like, these are the older line chip makers?
Right, and those are ones that are produced here in the U.S., but there are ones produced abroad too. So we'll have to see how that gets impacted.
Another one to untangle here, but fascinating to be here on the Day of Days with Adam Farrer. Thank you, Adam. I'm sure that you've got a lot of work to do on this at Bloomberg Economics. If we get any, of course, word from the president on updates on these numbers or the opening of trade talks, we'll let you know. Remembering, there's another deadline tomorrow. Secondary tariffs on Russia. We're going to talk about that and what's happening in Ukraine ahead with Denver Riggleman.
It's 12:21 on Wall Street. I'm Amy Morris. Firefly Aerospace will start trading today in New York, marking the next evolution for a company that survived bankruptcy to develop its own fleet of rockets and successfully land a private spacecraft on the moon. The company's upsized initial public offering raised $868 million, the pricing giving the company a fully diluted value of more than $7 billion. We do check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ is up 0.4%. The Dow is down 0.6%. The 10-year Treasury yield at 4.23%, and the 2-year yield at 3.73%. AT&T is working with advisors to sell its Mexico unit. Sources say the company wants more than $2 billion for the business, which has struggled for more than a decade to gain ground on Telcel, which is part of a group controlled by billionaire Carlos Slim. Shares of AT&T now more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. We go back now to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris is watching Wall Street for us today on the fastest show in politics. We're live in Washington. I am Joe Matthew, and it's great to see you with us here on the radio, on satellite radio. We're channel 121 on Sirius XM. You can dial us up on YouTube very easily. Search Bloomberg Business News Live. See all of our shows from Washington to New York and back again. We've got big stuff happening here at the White House and at the Kremlin. Remembering, of course, Donald Trump not only spoke with President Zelensky and our European allies, but Steve Witkoff sat down for 3 hours with Vladimir Putin. And there were big questions yesterday about, well, are they going to meet? When's it going to happen? And now we're hearing that this could be imminent. Now we understand from the Kremlin, by the way, and I want to be careful with this, that they are finalizing details on a meeting that could take place in the next few days. Here we sit on Thursday. That would presumably mean by the end of the weekend. That is not exactly what we're hearing from the White House, although they have acknowledged this effort to get the two together. An in-person meeting, the question is where, as well, would be an appropriate place for this to happen. Will Zelensky be at the table at the same time? Apparently, our European allies will not be. All of this is happening here. The gears are turning in both capitals because tomorrow is the threatened day that secondary tariffs against Russia would take effect. We're looking at you, India. We're looking at you, China. If you're buying oil from Russia, this is a problem for you. The question is, will it bring peace in Ukraine? Doesn't sound like it based on the rhetoric we've heard from the Kremlin with Putin, who's not interested in a general ceasefire, but this idea potentially of an air truce. Denver Riggleman knows a little bit about the idea of an air truce, having spent the better part of his last visit to Kyiv and throughout Ukraine in a bomb shelter. The former Republican congressman is with us right now on Bloomberg, and it's great to have you back, sir. I've got a lot of questions for you about the process.
Yes.
Welcome and good to see you. I hope your summer's going well. You're about to go back to Ukraine.
I am.
In a couple of weeks from now. Will this war still be raging?
It will.
So what are we talking about with this meeting? Because the conventional wisdom is you give Vladimir Putin an in-person, he wins.
Yeah, and I think what's interesting is there's a great thing in intelligence, Joe, right, where you say the only way to predict the future is to wait for it to happen. So I think right now when you're looking at the meetings and what's been announced beforehand, Putin hasn't followed any of the guidelines or any of the promises that he made, continuing to have huge drone strikes, right, glide bombs going into Kyiv. But it's not just Kyiv, right? It's Odessa, yes. Mykolaiv, Kherson, right? You're going up into the Donbass, right? You're looking at Donetsk. So it's all these areas that are really having really a tough time. So right now, I almost wonder if this is a stalling technique from Putin, but especially when you're talking about getting rid of air assets, then it gets really interesting based on, you know, the advances that Ukraine has had in drone warfare and things like that.
So an air truce would mean little? Because obviously the mantra from President Zelensky has been close the skies, but we've still got tanks rolling. We've still got Russian troops standing on the border.
Yeah, closing the skies is a weird definition. Are we talking about closing the skies to fixed-wing assets, right, that are piloted? Are we talking about closing the skies to unmanned, right, aerial vehicles, right, UAVs, or you're talking about FPVs, first-person view drones, you're talking about surveillance drones, you're talking even like huge drones, like the Baba Yaga drones that are coming out of Ukraine that are fitted with missiles.
Yeah.
So, you know, which the Russians are terrified of. So I think what you're looking at is what are they talking about when they're saying close the skies, Joe? Because right now, drone warfare has been a great equalizer for Ukraine.
So that would not help Ukraine in its war effort,
Not if you
troops.
take away drone warfare. I think
Wow.
it's ludicrous. I don't think Zelensky can ever say that happens. You know, the Ukrainians are so good and flexible in the way that they sort of dynamically manage the battlefield.
Mm-hmm.
The Russians are still very stolid, sort of very specific in the way that they do their tactics. However, when I was there, the Ukrainians did say the Russians are getting quite better at drone warfare, and they're actually learning from the Ukrainians. And what's sad is we should have many, many more Americans over sitting side saddle with Ukrainians, looking at the dynamic way that they conduct drone warfare.
Interesting. Let's hear from the president. He talked about this potential for a meeting when he sat down with reporters, like he's in the Oval Office for this Apple announcement last evening. They covered a lot of different topics. Here's the president.
We had some very good talks with President Putin today. And there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
Doesn't sound that optimistic.
Mm-hmm. There's a
he's
concept
come
of
to realize that Vladimir Putin may not be a deal maker here, huh?
Nah, I mean, what did Putin? You think anybody thinks Putin's a good faith negotiator? I mean, the guy lies as easy as he breathes, and you know, I think that's part of it too. Is that you're dealing with somebody who's not doing this in good faith based on their territory claims in Crimea and other things like that. And you know, it's interesting, Joe. You know, I've come back. I've looked at drone warfare. The millions of drones that are being deployed and made. And, you know, and even here, everybody's like, I think the drone market is actually going to grow. I don't think it's saturated at all. I was just talking to a company called Thor that has laser-based systems for shooting down drones and a counter-drone system. There's even small companies. But I was in one in Waynesboro, Virginia, of all places, called All Core Tech, that's doing motor controls, and they're growing. So you're seeing this sort of bizarre, you know, thing where everybody thought drones were saturated as far as a market. But I think right now we're seeing the real beginning of advances in drone warfare and something we've never seen before on the battlefield.
Fascinating stuff when you hear about these smaller defense contractors that are emerging. AeroVironment's another one.
Yes.
Massive moves in the stocks. They're making a laser beam that can shoot down missiles. We're clearly seeing this part of the battlefield change before our eyes here. And to your point, a lot of it's being tested in Ukraine. Before we move on to more domestic politics, the idea of a meeting here between President Trump and Vladimir Putin, where would it happen? What's the neutral ground that would be appropriate?
Oh, goodness.
Is this Saudi Arabia? Is it Turkey?
It's definitely going to be in the Middle East.
Yeah.
I think it's Saudi Arabia. I think it might happen in UAE.
Okay.
I think Turkey's a possibility, but I think that's tough. I do think it's a Middle East meeting.
Fascinating. As we spend time with Denver Riggleman, I want to ask you about politics here at home. It's August recess. Remember August recess? You know, they call it the home district work period, Denver.
Yes.
How much work is being done?
Well, you know, for me, you know, I actually did go to work, but some people don't. But August recess is also time to go out with your family and things like that. And, you know, that does happen. But when you have people out there, you know, in August recess running who says that they want to ban chemtrails, I think that's what we're looking at across the board is some of the craziest shite I've ever seen.
Wow.
Right, that's being sort of spurted out this summer.
Still on the radio, just to remind you.
Shite's okay, though, right?
I don't even know what that word is. But
that's why I'm not.
It's town hall season as well, though.
Oh my
Not
gosh,
everyone's holding them, but those who are, they brought a cardboard coffin to Brian Stiles' house last week. They're shooting down Mike Flood. Mike Flood is not MAGA, but anyone who's got the gumption to get on stage is getting an earful here. It's the big, beautiful bill, the rescissions, the tariffs. It's Epstein.
Epstein is the bottom line. I mean, if you want to talk rescissions, you know, it is damaging. I think you have, you know, a combination of Republicans and Democrats in these town halls, and I give them a little bit of props for the courage to get up there. I've been in those positions. But, you know, Mike got destroyed, right? And Brian got destroyed. I think it's inappropriate to have coffins sent to, I mean, that should not
pretty
happen.
heavy.
That's heavy and inappropriate. Whoever did it, it's a scumbag. But you have to also look at as far as the Epstein, the underlying Epstein files in the list, I think is driving a lot of the domestic politics because it's so ludicrous that they haven't been released. And when you see meetings to try to message out of it, it's very hard to message out of either protecting pedophiles, child rapists, or child traffickers. It's very, very difficult.
You worked in intelligence. You have a good sense of some of the sources here of this information. There's an effort in Congress to get the so-called file. What are we talking about when we say the files? Everyone imagines there's some black book in a drawer somewhere.
Yeah, and
if this happens, how would it be presented?
Well, conspiracy theorists did think it was a black drawer to file somewhere. So, and that's they're thinking there's a list with like, hey, we have him with $2 million in bribes.
Yeah,
and,
okay.
We have pictures of him.
It's in the
over
ledger.
here. Yeah, it's in the ledger. It's not like that, right? You have charging documents, all the files, all of the testimony that happens. You're talking about terabytes of data. That's why when they say release the files, it's sort of interesting to go through that. But with the way to process data now, you talk about technology, we can process and look at all the inconsistencies in all those files. And the fact that Trump ran on releasing them, I think
it inevitable?
You do. If they can lightly redact the 2016 Russian report and put our sources in jeopardy, I think they can lightly redact the Epstein files. And it's just ludicrous to me and just is against all common sense for anybody who has half a brain on this.
A lot of efforts to change the subject around here.
A lot of effort.
Right down to that classified document you mentioned. Sometimes I get mail from people saying, how come you don't talk more about the coup that Barack Obama staged for years, the perma coup or whatever they called it in the White House? Are we going to hear of an actual investigation? Will oversight get into this?
Oh, I think oversight will, but you saw how successful they were with the Hunter Biden investigation, which was zero. And I think because it's very hard to do an investigation when you don't have facts on your side or validated data. So you have to make things up and then let it flitter away after the midterms. This is all about 2026. I'm just going to be a sledgehammer here a little bit.
Oh, man.
This is about 2026. And what they're doing is they're trying to set up the same type of stuff and the same type of crap, really, where they just flood the zone that Steve Bannon mentioned they like to do. They're just flooding the zone with as many things as possible for a couple reasons. The midterms, Obama and Clinton, they want to rehash all the oldies, right? All the conspiracy theories are coming back.
It was a trip back, Comey, Clinton. I mean, it's like the Mount Rushmore of
it is the amount,
here.
We've gone from Clinton emails now to Clinton, now somehow she's manipulated by the Russians. And it's, and when the fact is, it's very hard to get over the GOP controlled reports that said the Russians did meddle in the 2016 election. It's going to be very difficult for them to balance that.
We're going to shut down the government in September?
Oh, yeah.
Oh, yeah.
Yeah.
Is there a plan to reopen it?
Yeah, I think it's going to be very difficult. I don't know if there is a plan to reopen it. How about this? I think it's going to be very difficult to get a deal. I shouldn't have been so quick. I'm sorry, everybody out there. But I think after the rescissions, I think any good faith negotiations are going to be very difficult. I wouldn't, right? It'd have to be tough for me. But I think after the rescissions package, there's no trust. And what happens with the Freedom Caucus? I still think they want a lot more cuts. And the Republicans themselves call them the Chaos Caucus. So let's see what the Chaos Caucus does.
Wow.
During this time period.
Yeah, we've only got 1 minute left. They'll be back after Labor Day. Is there another rescissions package, another reconciliation, or is the store closed?
They're going to run on that. I'm just going to let people know they're going to run on not only, we might be doing some reconciliation, but they're going to run on whatever. Back home, I'm telling you what they're doing. They're right behind the closed doors. They're with their people. They're with their constituents saying, don't worry, we'll have a rescissions package if it doesn't look good for you.
Fascinating. We didn't even get to the White House ballroom.
Oh, gosh, come back I really wanted to
When you get back to Kyiv, let's talk to you while you're there for an on-the-ground sense of what's happening. It's really great to see you, as always. That's Denver Riggleman, of course. I told you he was coming in. Former congressman and, of course, a regular voice here on Balance of Power. Former U.S. Air Force intelligence officer and the force behind the distillery. Right? Silverback, right? Yeah, the whiskey distillery. I'm Joe Matthew. The panel's coming up next, only here on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Intel shares down nearly 3% after President Trump called for the chipmaker's chief executive officer to resign, posting on Truth Social that, quote, the CEO of Intel is highly conflicted and must resign immediately. Republican Senator Tom Cotton had asked CEO Lip Bhutan to answer questions about ties to China, including investments in the country's semiconductor companies. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.2%. NASDAQ up 0.2%. The Dow now down 0.7%. The 10-year Treasury yield at 4.23% and the 2-year yield at 3.73%. Firefly Aerospace starts trading today in New York. Shares are expected to open at $72 each. The IPO price at $45. Firefly Aerospace CEO Jason Kim says they are aiming for the moon again.
The moon is really important. It's the ultimate high ground. It's also important if we're going to put humans on the moon again, starting in a couple of years.
The company's upsized initial public offering raised $868 million. That's different. With the pricing giving the company a fully diluted value of more than $7 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Live in Washington, Balance of Power on Bloomberg Radio and on YouTube. Search Bloomberg Business News Live. If you want to watch us on the radio, it's great to have you here as we consider what's taking place in Texas and what might be prompted in other states around the country. J.D. Vance today is in Indiana. We mentioned this quickly yesterday to meet with the governor. He's there for a fundraiser and some other business, but they're going to talk about the potential of redrawing congressional districts, maybe adding another seat there as the administration looks at this as a nationwide story. It's all, of course, coming out of Texas right now, where the Republican legislature is moving ahead with the redrawing of congressional districts, prompting, as we've been discussing, Democrats from Texas to flee the state. They are AWOL in cities like Boston, Chicago, Albany. And we've been talking to a couple of them, including James Talrico. There was another lawmaker from the Representative Turner from the House in Texas. They're scattered around the country now that the FBI has been dispatched to round them up. And of course, they're threatened with not only fines, but civil warrants for their arrest in Texas. A reminder of our conversations with both of these gentlemen who said they were not worried about the legal outcome. Listen.
They can't come and get me because they don't have authority outside of the state of Texas. That's why my colleagues and I have left the state of Texas. So as for the governor's bluster and rhetoric, look, I think he's just trying to show off for President Trump, and I don't take it terribly seriously.
I think I can speak for myself and my colleagues when I say that we're not very worried about the consequences we may face, whether they are arrest or financial fines or even removal from office, because we have right on our side. We are part of a long American tradition of looking bullies in the eye, of speaking truth to power, of civil disobedience, of good trouble.
While we're at it now, this is all part of the same story. Donald Trump on social media calling for a new census. This just in the last 24 hours here, there's been a lot of posts on Truth Social, including his call for the CEO of Intel to be fired. But the president calling on his Commerce Department to begin work on a new census, he said, would exclude undocumented migrants. You see the Truth post on YouTube. People who are in our country illegally, he says, will not be counted in the census. He did not specify, though, how census takers would use election results to count people, because he's talking about how this would, in fact, go back through the 2024 election, reflect the results of the election. I need help on this. From our political panel. Bloomberg Politics contributors Rick Davis and Adam Hodge are both with us. Rick is our Republican strategist and partner at Stone Court Capital. And of course, Adam is our Democratic strategist and Bloomberg contributor, Bully Pulpit International. Gentlemen, great to have you both here. Rick, can we just throw another census together? How would this work?
Yeah, look, I think that it's obviously extraordinary, right? Yeah. I mean, since the late 1700s, we've been doing censuses once every decade. Constitution's pretty clear about it. Whether Donald Trump will do it or not, he's broken every egg in the constitutional basket, right? I mean, so like, I don't doubt that he will not try to do it. Just so we know, I mean, the 2030 census is already in process at the Commerce Department, right? It takes 10 years to do this. Right. It takes $15 billion that they don't have in the Commerce Department to do a census. That being said, it's like the greatest bait for Democrats, because they're now going to say, oh my God, this is horrible, it's awful, it violates all these constitutional norms. Yeah. But the American public's going to scratch their head and go, well, what do you mean we're counting people who aren't citizens for apportionment of federal funds and political power? And so it's going to it's like political jujitsu all over again. It's just like the redistricting thing. Yeah. You know, oh, we're against you doing it, but we're going to do it. I mean, it's just Trump is in his prime right now at putting Democrats on the defense.
Well, it does speak to the narrative that we hear from Republicans and certainly this administration, Adam, that Joe Biden opened the border and let all of these illegal migrants into the country because they were voting Democrat. And that was the whole strategy behind having no security at the border. Now we're going to apparently codify this in a new census. Does it start the conversation that Rick was just describing?
No, hold on. Let's take a step back and have a little bit of reality here. I mean, in order to vote in the election, you have to be a citizen. And so any illegal immigrant who was in the country who is not a U.S. citizen can't vote. And so this idea that there was this wash of immigrants coming in to change the outcome of the election is just not true. And let's not forget, Donald Trump won the last election. So what he's complaining about, to me, once again, it seems a bit off base. I think the larger point that Democrats are trying to make here is not necessarily about arguing on the merits on one niche issue of the Constitution or another. It's that there was a broader assault on democracy. There's a broader attempt by the president to undermine the rules and to rig the game in his favor. And that's, I think, where they're on much stronger ground. I think Democrats have been clear over the last few days with this issue in Texas that the president is breaking the rules because his policies are unpopular, because he can't actually win on the merits of on the issues. And you look at the polling for the big, beautiful bill, they're out here talking about the census and immigration because they can't talk about the big, beautiful bill.
Well, I'll tell you what, they're getting an earful in many cases here, but it's not stopping the administration from moving forward with this idea in states like Indiana. Is this real? J.D. Vance shows up in Mike Brown's office and asks him to start redrawing districts. What's a Republican governor in a state like Indiana think about that?
Yeah, just one more point on the census. Okay. It's reapportionment, okay? It's not, no one's debating whether or not illegal citizens can vote. But when you add a census, you apportion electoral votes and House members per state by the amount of citizens they have. Yeah. And if a million of those citizens are not, actually citizens, they're illegally, they still get counted. And so actually states like California and Texas could wind up losing electoral votes and losing House seats. Now, one's a Democratic state, one's a Republican state.
So maybe it's
because of apportionment. And so there's an argument for it. You don't want to get in a debate over it because the last thing you want to say is somehow whether it hurts you or helps you. Now, on the other stuff in Texas that's going on, I mean, I've talked to a couple of Texas state legislators. They don't even want to do this. I mean, this is getting shoved down their throat. By the governor, who's trying to look good with Trump, and it's not clear, at least to the people I've talked to, that this will succeed. So we're investing heavily in chasing down members and other Democrats saying we're going to do it in our states and trying to get it done in Indiana and probably 5 other Republican states. Yeah, right. And yet the whole tip of the iceberg is, can Texas actually pull this off?
Well, you introduced the concepts of dummy mandering the other day. And I wonder, Adam, if that's how you're looking at this, could this actually backfire on Republicans and see them water down their districts at a census, like Rick says, with fewer in the population, you get fewer seats. This whole thing could take a very different direction.
It could. And I can't help but think, more broadly, this whole idea of politicians carving up the map. I know it's the age-old tradition. We've been doing it since the founding of the Republic, but it actually makes our democracy weaker. So I just that is a value I feel strongly about. I think there is a risk, for Trump to overplay his hand here. I mean, the votes what they're trying to do in Texas in making more of these majority Hispanic or much more Hispanic leaning districts because they think they've turned the corner with those voters. There's a real risk that with the more unpopular parts of their proposals that actually hurt the people that we're claiming were now on their side, they could end up with a backlash of losing some of these seats that they think are a lock, or having to defend other members who have more minority voters in their districts that they didn't have before, and it just makes it more competitive. I think that is possible. I think you are going to see Democrats stop, sort of allowing to play this game with one hand tied behind their back, and they will try to change the maps in some other states. And I don't think largely it is helpful for our democracy, but I don't think that you can think this is an automatic slam dunk for the Republicans.
Sure. I think the line from Jake Auchincloss last night was, the Democrat from Massachusetts with us on Balance of Power. He said, if Republicans decide to start using brass knuckles, we will as well. But I also wonder what the outcome here is in Texas, Adam. We spoke with James Tallarico, as you heard a couple of moments ago. And when I asked him if this is really just to publicize an inevitable event, he said, no, we're hoping our Republican colleagues will walk back from the brink. We don't really think that's going to happen, do we?
With all due respect to Mr. Tallarico, I have a hard time believing that Republicans, after everything we've seen over the first 6 months of this administration, where they have bowed and cowed to every demand that Donald Trump has made of them, going back on positions that they've held on things like the debt limit and tariffs and everything else, that the state lawmakers in Texas are going to turn down the president. I just don't, that's not the political reality that we're dealing with right now. And so I believe that this will eventually go through. But I think it has raised the specter for voters in Texas and voters around the country about politicians carving up the map in a way that I don't think is ultimately to their political benefit. I think it's going to prove to be pretty unpopular. Changing the game and rigging the election on your behalf because the policy is unpopular is going to run afoul of the voters' perceptions, and they could pay for it in the midterms.
Spending time with our panel, Rick Davis and Adam Hodge, with a breaker here on the terminal. I just want to let everybody know that trading has opened in Firefly, FLY, the ticker, opening at $70. We just fell back to about 68. With an IPO price of 45, I'd say it's doing pretty well so far. This is a pretty interesting company here. The next evolution of a company that survived bankruptcy and quite a bit of financial turmoil to develop its own fleet of rockets and successfully land a private spacecraft on the moon. An $868 million offering. Companies based in Texas. Investors like it. $67 right now, following an IPO price of 45. Rick, we saw a lot of Democrats, Democratic governors. We talked about this. Pritzker, Hochul, even Maura Healey, just by the way, last evening held a news conference with these Texas Democrats. They see opportunity here. Is it real?
You know, it's harder for them, right? Republicans have supermajorities in most of the states. They want to try and flip some of these seats. And so it's just easier for them to transact it at the state legislative level. Democrats, as Adam pointed out, have had as gospel that there ought to be independent commissions, deciding these lines, that it is non-democratic to have a political outcome, for redistricting. And so they acted in that way. Now those are the impediments to them to try and get the same thing done that the Republicans are doing. So in states like California and Illinois and Massachusetts, they're going to have to change the law in order to actually do anything. And of course, then you have to get everybody's support. And in situations like Massachusetts, you don't have a supermajority, so it's that much more difficult. So yes, they can try to replicate that. I mean, I think it's a mistake, right? I mean, I think there are a lot of things that could go wrong with Republicans doing this at the state legislative level. And every day they're talking about redistricting. They're not talking about rescissions. They're not talking about big, beautiful bill. They're not talking about Medicaid or Medicare. And so, they're just off message by getting drawn into this debate.
Sure. Just about 30 seconds here, Adam. What do you think of the J.B. Pritzkers and Kathy Hochuls of the world? Are they raising money on this, or are they wasting time?
I mean, based on the text messages I'm getting, they are. But I think that they're not. They definitely feel like there's an opportunity to stop playing this game with one hand tied behind their back, and so they're going to do what they can. But they don't like it. But this is the political reality, and so we're not going to leave potential votes and seats on the to the wayside just out of principle when clearly the Republicans in Texas and other states have just decided to not play the way that we typically played it.
I'll tell you what, Rick's right about one thing. We've been talking about this story every day now for 2 weeks instead of every other issue that Republicans would presumably like us to talk about. But our panel will be back in our second hour. Rick Davis, Adam Hodge, a smart conversation as always. We'll welcome our global television audience to the conversation. We'll talk to Stephen Myron from the North Lawn of the White House, all ahead on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The tariffs take effect on this day 200 of the Trump administration. Welcome to the Thursday edition of Balance of Power as reciprocal tariffs on some 90 nations kick in. They've been in place since midnight. We're going to get the latest from the White House in a conversation just a moment from now with Stephen Myron. an important economic advisor to the president, who is chair of the White House Council of Economic Advisors. I'm Joe Matthew in Washington. We thank you for joining us on Bloomberg TV and radio with analysis today from our political panel, Bloomberg Politics contributors Adam Hodge and Rick Davis. And we start, as always, with a look at Wall Street, a Bloomberg Business Flash with Amy Morris here in Washington. Amy, how's the Thursday trade?
Oh, it's hopping today, Joe, especially because of Firefly. The IPO debut saw trading open at $70 per share. It's now trading around $64 per share. CEO Jason Kim telling Bloomberg TV the funds raised from this IPO will go toward ramping up the cadence of its alpha rockets and fast-track the rest of the company's product lines. A rally in stocks, though, did sputter near some all-time highs. We checked the markets all day long here at Bloomberg. The S&P 500 down 0.2%. NASDAQ up 0.25%. The Dow is down 0.7%. The 10-year Treasury yield at 4.23%. The 2-year yield at 3.73%. Intel shares down 3% after President Trump called for the chipmaker's CEO to resign, posting on Truth Social that, quote, "The CEO of Intel is highly conflicted and must resign immediately." Now, Republican Senator Tom Cotton asked the CEO, Lip Bhutan, to answer questions about ties to China, including investments in that country's semiconductor companies. AT&T is working with its advisors to sell its Mexico unit. Sources say the company wants more than $2 billion for the business, which has been struggling for more than a decade to gain ground on Telcel, which is part of a group controlled by billionaire Carlos Slim. Shares of AT&T are more than 1.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, great to have you. We'll be back with Amy Morris for more on Wall Street, the Thursday trade, a little bit later on this hour as we consider what we do know, and that is tariffs are in place. There's been so much uncertainty about the president's tariff regime, and Wall Street has reflected that at times when you think about the swoon that followed the president's so-called Liberation Day. More than 90 countries, reciprocal tariffs went into effect at midnight. The president was on Truth Social to mark the occasion, up late, writing, "It's midnight," in all caps, multiple exclamation points. Billions of dollars in tariffs are now flowing into the United States of America. Exclamation point. We're going to talk with, just a moment from now, with Stephen Meyer, the chair of the White House Council of Economic Advisors, about the impact of these tariffs, what might change. We still have an extension with Mexico. We still have a deal looming with China. And we've also got the prospect of secondary sanctions against buyers of Russian oil that would take effect tomorrow. One quick note I want to mention, just crossed the terminal. If you're a ChatGPT user, version 5 is out today. It's just going up this hour. A more powerful GPT-5 model for coding and writing, and it's coming out both paid and free versions to users today. So you'll be probably hearing a lot about ChatGPT-5 at the cocktail parties later on. With tariffs in mind, with the search for a new Fed chair in mind, it's always a pleasure to bring in Laura Davison, Bloomberg's deputy Washington bureau chief, as we wait to hear from Stephen Meyer at the White House. Laura, it's great to see you. 200 days. Is it just me, or did the second 100 go by faster than the first?
It was quite speedy.
Yeah.
Much of that was dogged by all of these negotiations and tariff deals.
That's right.
90 deals in 90 days. We didn't quite get that, but there are tariffs now in effect that he originally previewed back in April.
Well, so we should probably detail some of this, because you're right. That was the line from Peter Navarro. 90 deals in 90 days. And we do have tariffs on some 90 countries. But as the president said a couple of weeks ago, a letter is the same as a deal. In many cases, these were simply imposed on nations without there being any agreement.
Yes, though the president has left the door open that there still could be negotiations. Mexico, for example, has sort of deftly navigated that.
Sure.
China, as well, is continuing to negotiate tariffs. The Swiss and this whole deal didn't turn out very well. They came to Washington at the last minute this week to try to negotiate down that 39% whopping tariff that Trump had placed on them, and were unable to do so. But I don't think this is the end of tariff talks.
50 on Brazil for political reasons. The president is concerned about 50 on India as well. Half of that for India has to do with a specific tariff on Russian oil. But this White House is still hoping for a deal with India, is it not?
They really are. And you see both sort of the Russia piece of this. Trump is potentially having the summit with Putin, as soon as next week. And so you kind of see all of these different geopolitical things, sort of a domino effect. If they're able to get a deal with Russia, that might ease some of the India tensions with the Russian oil. So there's a lot of different things that they could still try to navigate. The Indian trade delegation has been one of the most dogged. They've been here for weeks on end, really thought they were going to get a deal. And I think they still are holding out hope that they can.
Pushing back more than a lot of countries. And we remember the Prime Minister Modi was the first visit to this White House. It seemed like this pivot to India was finally happening. But I guess you're telling us that we should still allow some time.
What seems to be sort of the difference here is that Trump has determined that China is too big to bully, but that India is not. And they're trying to figure out, do they take the nice guy approach or do they stand firm? That will remain to be seen over the next several weeks about what kind of deal they get.
So a lot of headlines flying, and boy, all you have to do is look at Truth Social. We could pick our stories here. It's been pretty busy today, Laura, but I want to ask you about the Fed chair with Christopher Waller emerging as a front runner. How quickly did this happen? What do we know?
So Trump has been actively doing, and his team have been actively doing interviews with potential Fed chair candidates. This really kicked up as Trump has become more disillusioned with Jay Powell at the head of the central bank. Yeah. There's a bunch of moving pieces here of that. One, Trump has said he's going to announce potentially as soon as tomorrow a temporary Fed pick to fill the seat by Adriana Kugler that is vacated starting tomorrow. This will be someone kind of essentially a caretaker for that seat. He also simultaneously is looking at someone to replace Jay Powell. Waller has emerged as the front runner in those talks and has, but he's already on the board, so he doesn't need to be appointed to a seat. Plus, there's a third opening coming up, potentially as soon as May next year. If Powell steps off the board, then there'll be a 2-year seat to fill. So there's a lot of different pieces that they're looking for of, filling some of these empty Fed seats that are coming up, as well as finding someone, whether it's someone adding to those seats or someone already on the board like Waller, to be the next chair.
It's a curious approach because I can't figure out the benefit of doing the fill-in other than buying more time, and maybe it's just as simple as that. We're trying to figure out who you want here. But I thought it was the battle of the Kevins. This was Kevin Hassett. But Christopher Waller, I guess, has had a pretty good run here in the meantime.
He's had a pretty good run, and he has a lot of support from Wall Street itself. He's very much seen as the safest choice here. Traders
did Hassett and Warsh turn people off?
One of the things is also look at the photos of all of these people. Look who's the tallest person. Look who has the strongest jawline. You think
the
these
strongest jawline, central casting. You mean
this is and that's one of the things that helped Jay Powell out in the search. This helped Scott Bessent when he became Treasury Secretary. If he was one of the tallest people in the lineup.
That's hysterical. Well, so I talked to Michael McKee about this yesterday. The idea of a fill-in on the Fed, someone to your point already had a couple boxes to check, but already in government, already confirmed. The Deputy Treasury Secretary Faulkner, he's kind of out of central casting.
He's out of central casting,
should look at?
and he would be easy to just pop into that job for just a handful of months. He was easily confirmed by the Senate when he came through, and kind of has all the credentials. He's a strong Trump and Bessent ally. He would be someone to kind of keep that seat warm, keep things in the direction Trump wants to go until he can continue to play out his apprentice-style Fed chair pick.
Right, it really does. This is like the grand finale of The Apprentice. Maybe we could get the boardroom set back together here. Secondary sanctions on Russia is something I mentioned before you leave. These would presumably take effect tomorrow, but now we're also hearing about a potential meeting, an in-person meeting between President Trump and Vladimir Putin. They say the next few days. Could we see these two men together this weekend, and would the sanctions wait for that?
Trump has said that those sanctions are going to go into effect regardless of this meeting planning as it comes.
Wow.
They've said it could happen as soon as next week. They still don't have a location. They also, the U.S. has said that they're only going to do this if Zelensky is also there. So there's a lot of moving pieces. This may be a Trump sort of win the next 2 weeks and the next couple of days that slides much further than the actual timeline.
Fair enough. You think that once they're talking and they're finalizing details, to use the terminology of the Kremlin, that there might be some reprieve here, but we'll obviously have to wait to find out until tomorrow. We don't have a location in mind, right? There's no venue that's been established yet?
Not yet. The Mideast has been thrown out as sort of an option out there, but nothing has been nailed down.
Fascinating. Whether it's Saudi Arabia, UAE, this is going to be quite a moment, Laura, and I'm sure Bloomberg will be on the ground for it. It's great to have you, as always. Helping us set the table here on the Thursday edition of Balance of Power, Laura Davison, our Deputy Bureau Chief in Washington, D.C., who I'm sure is heading straight back to the terminal because 6 more stories have broken. It's that kind of day. Well, day 200 to be more exact. And we I want to bring you straight to the White House on this 200th day of the second Trump term for a conversation that dovetails off everything we just discussed with Laura. Stephen Myron has the president's ear when it comes to the economy. He is chair of the White House Council of Economic Advisors and with us now from the North Lawn on what is, by the way, it's got to be, Stephen, the most beautiful day of the year so far in Washington. Mr. Chairman, welcome back to Bloomberg TV and radio. It's good to see you. Day 200 and the tariffs take effect. I guess we'll start there. Is this it? Are we here? This is the tariff regime? Realizing you've got an extension with Mexico, you're working on a deal with China. These are the numbers that we've been waiting for. Yes? Will they stay in place the way they are?
First of all, thank you for having me. It's great to be back. Look, I think that the restructuring of the global trading system that the president has undertaken and successfully executed has been nothing short of historic. We've got trade deals encompassing material tariff rates bringing in large amounts of revenue with almost no retaliation from countries that now entail about 55 to 60% of global GDP. And that's going to bring in trillions of dollars of revenue over a decade. It creates very strong incentives for making stuff in the United States. And the investment commitments that the president has secured are going to do wonders for getting firms to invest in America.
So if it's going to bring in trillions, then I guess these are the numbers that we'll assume will be in place until further notice. But I'm curious, I saw the president's Truth Social last night. He says, it's midnight, we're here. Do we have a sense of how much money the Treasury has inherited in the last 13 hours or so?
So I don't have a sense about what's happened in the last 13 hours or so, but as you know, in the last month, we saw a record print of about $30 billion in the month alone from tariffs, and that was before the higher rates really set in. The CBO did a study when the One Big Beautiful Bill was under consideration in Congress, finding that the total effect of the tariffs was about $3 trillion over the course of a decade. I think that tariff rates have moved a little bit higher since then, and so my team is actually currently crunching through the numbers right now as we speak with the new tariff rates, but I wouldn't be surprised if the final number is closer to $4 trillion over a decade instead of $3.
Fantastic. Is that something that you'll be able to make public soon? When will we see that research?
Oh yes, I hope so. It's in process right now. I've got several of my staff working on it at the moment.
I love that. Getting a little peek behind the curtain here. To the extent that we're curious about the economic impact of tariffs, Mr. Chairman, there has been a grand debate, and your administration is on one side of it, about whether tariffs are inflationary. Now that we actually have the numbers, there's also been reference from yourself and from the likes of Treasury Secretary Scott Bessent about a one-time change in prices as opposed to an inflationary trend. When will we know the impact of that one-time change?
Thanks. So, look, you're right. There's been a lot of conversation about this subject, and I think that a few things are worth mentioning. One, we ran this experiment in 2018, 2019. We saw zero macroeconomically significant evidence of tariff-driven inflation then. Two, we've been running higher tariffs in this administration since the very first day, since January 20th. We've now got several months of data, and again, there's just zero macroeconomically significant evidence of price pressures from tariffs. Three, the overall policy mix is extremely disinflationary. When you think about deregulation, when you think about incentives for increased capital stock, increased labor supply from no taxes on overtime, things like that, that's very disinflationary. The border policies are very disinflationary as well. And I think that people are underestimating the amount of service-driven disinflation that's in the pipeline. And I think when you look at the housing market holistically, you get a sense of that as well. So overall, we don't expect significant inflation from the tariffs. And Secretary Bessent is right. If there were to materialize some inflation from tariffs, it would be a one-time price level shift, not an enduring trend, in the same way that a VAT tax would cause that. And there have been many countries throughout the world that have VAT taxes that change those VAT taxes, and when they move them up or they move them down, you get a price level shift. You don't get a new inflation regime that lasts years.
Yeah. Well, then it becomes a question of, who's actually paying for this beyond the specific importer who's standing on the dock here. We're going to talk later with Stu Leonard Jr., the force behind Stu Leonard's, the chain of grocery stores up in New York and Connecticut and the Northeast. It's a really interesting conversation because he said that prices for him are, in fact, costs are rising. And the more important thing he said was he can't afford to absorb it. He's got to pass it along to his customers. What do you say to the CEO, specifically of a small business who's experiencing this phenomenon?
What I would say is that adjustments are difficult, and adjustments don't happen overnight. And in the fullness of time, I have no doubt that the countries that we are placing tariffs on will ultimately bear the burden of those tariffs, either through lower prices or through another channel like currencies, as happened in 2018, 2019 with China. Now, that's an argument in the fullness of time. In the short run, there can be price volatility, right? We had volatility in financial markets. We have now seen a little bit of volatility in the real economy as well. And it wouldn't be surprising to me or to anybody else if we saw volatility in prices as in consumer prices as well. However, I think that's merely a short-run adjustment phenomenon. The incentives to make a profit, the bedrock principles of a capitalistic economy will mean that folks like Stu Leonard and others will find ways to provide products to consumers for cheaper, because that's what consumers want. And they'll find ways to adjust their supply chains, to adjust whom they're buying from, to take advantage of different tariff rates in different countries, and find ways to get others to absorb those costs, because they have an incentive to do so.
They're going to have a lot of work to do. I want to ask you about the tariffs on chips and semiconductors. Red headline on the terminal last evening, Mr. Chairman, when the president said 100% as he was talking to reporters in the Oval Office. But I realize there are some very important exceptions here for chip designers and chip makers who are actively investing and building in the United States. And to my read, that covers most of the majors here, including TSMC, which is building in Arizona and some other places. Who would this tariff actually impact, or will it not touch anyone other than a foreign maker like, say, Huawei that isn't already selling here?
Yeah, so not to get ahead of Secretary Lutnick and the other folks who are going to be designing this program, but I would be surprised if there weren't some guardrails around those criteria to make sure that companies were doing the types of investments that warranted that type of exemption that you just mentioned, right? And so, are countries investing enough to build their supply in the United States? Are they making good faith progress and good faith outlays that are leading to actual genuine increases in the productive capacity of the United States? It's not enough to say, oh, I'll build a factory and stick a pickaxe in the ground and then just leave it there for 10 years collecting a tariff exemption. Sure. There's going to be checks to make sure that good faith efforts are made to actually expand production in the United States. And if that's happening, then that's exactly the outcome we want, right? Like, what we want is to increase domestic production of critical components like semiconductors.
Just a minute left here, Chairman. I have to just quickly ask you about the search for a new Federal Reserve chair. Bloomberg is reporting today that Governor Waller, Christopher Waller, is emerging as a top candidate. The president's advisors have been very impressed with his approach to monetary policy. Are you one of those advisors making that recommendation?
Look, I think that Governor Waller has really built up a really impressive track record in the last few years at the Fed with his predictions about inflation, with his predictions about where Fed policy needed to move to respond to that inflation. And I think he's done himself a big credit recently as well, not succumbing to the tariff derangement syndrome that many others throughout the country, but particularly at the Fed, seem to have succumbed to. And he's done a really good job having an independent voice, which I think ultimately is proving correct, that there isn't really much of an inflationary threat from tariffs that anyone should really be concerned about, least of all the Fed.
Yeah. It sounds like you're in his corner. That sounds like a yes, Mr. Chairman. It's great to have you with us. Stephen Myron from the North Lawn of the White House. We thank you for the insights, as always. Tariff derangement syndrome. Did he just come up with that? We'll assemble our political panel next. Adam Hodge and Rick Davis are on the way in, only here on Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. Shares in Firefly Aerospace were up as much as 36% in Firefly's IPO debut. The company's public offering raised $868 million and gives Firefly a fully diluted value of roughly $10 billion. Firefly opened at $70 per share and is now trading around $64 per share. A rally in stocks sputtered near all-time highs. We check the markets for you all day long at Bloomberg. The S&P 500 down 0.25%. NASDAQ is up 0.1%. The Dow is down 0.75%. The 10-year Treasury yield at 4.25% and the 2-year yield at 3.73%. Fed Governor Christopher Waller is emerging as a top candidate to serve as the central bank's chair among President Trump's advisors. They say they're impressed with Waller's willingness to move on policy based on forecasting and his deep knowledge of the Fed system. Peloton projected a sales decline for the current quarter and said it would cut jobs, but expressed confidence in a turnaround plan under new management. Peloton shares this hour are more than 1% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Balance of Power with Joe Matthew.
All right, Amy. Happy 200 days, by the way. Amy Morris with us here in the nation's capital. Watching Wall Street, we'll have another Bloomberg Business Flash a little more than 15 minutes away here to take stock of the Thursday trade. It's day 200 for Donald Trump. Remember, everyone had a special plan for day 100? I don't think it has quite the same impact, but it does coincide with some pretty important news, including, as we were just discussing with Stephen Myron, really interesting conversation there with the chairman of the Council of Economic Advisors. It coincides with the implementation of reciprocal tariffs. They hit at midnight, more than 90 countries waking up to a new reality this morning as they are obviously being tariffed for goods coming into the U.S. But we've also got the potential, the president says it happens no matter what, for secondary sanctions against countries buying oil from Russia tomorrow, all along with talk of an in-person meeting between President Trump and Vladimir Putin. This is a pretty interesting inflection point for this administration, and we have a great panel to walk through some of it. Bloomberg Politics contributors Rick Davis and Adam Hodge are here. Rick is our Republican strategist and partner at Stone Court Capital, and of course, Adam, our Democratic strategist, Bully Pulpit International. Great to have both of you with us here. Adam, the first 200 days of the Trump administration has begun a reordering of our economy. We were just talking about this new tariff regime with Stephen Myron, who had nothing but good things to say about it. The money that's coming into the country, the growth that he says will come from this. We're making the playing field even again. What's the problem with that?
Well, I think one of the problems is the president has put a gun to the head of the global economy and said, everybody get online or you're going to face higher prices. But I think what was striking to me is that you had an official from a Republican White House acknowledge that they're raising taxes on the American people. And even Rand Paul today was taking the White House, a little bit to task for now being the party of raising taxes on working families. And I think that is a one-time hike on some of the prices that you don't think this may compound month over month, but the president ran on lowering costs for the American people. And you compound that with some of the actions on immigration, which reduced the labor supply, some of the other policy measures that they put in place. And it's a bit of an opportunity for Democrats, I think, to make the case that the president has broken his promise to lower costs on working families. And that's what I think you'll hear from Democrats going forward.
Yeah. How are you thinking about this today, Rick? Because the president would tell you need a little bit of pain for a long-term gain. This is years in the making. I need a minute. I need some space to reset the playing field. Most every major economist tells us it's going to send prices higher.
Yeah, look, I think they've leaned in on this notion that change is going to have an effect, sometimes good, sometimes negative. And you also hear at the same time, hey, we've just raised billions, hundreds of billions of dollars of new revenue, not targeted to be used for anything in particular right now. We don't know what that revenue is going to go to, but potentially trillions over 10 years, offsetting some of the debate about the massive deficits that they're running up with the big, beautiful bill. So, yeah, I think it's a pretty practical conversation about whether or not we can survive economically in a tariff regime that would actually help expand the U.S. wealth and enter us into what Donald Trump calls the golden age. And so as that debate wages on, you got to admit these first 200 days have been, a drumbeat of activity that has restructured not just trade all around the world, but our global relationships, our domestic, industries, healthcare, education, the legal system. It's phenomenal when you think of the breadth of what this president's done in 200 days. Whether you like what he's done or not, he's done a lot.
Yeah, well, the president says on Truth Social, Adam, tariffs are flowing into the USA at levels not thought even possible. But tariffs don't flow into the USA. Don't we pay them?
That's right. Yes, no, absolutely. Americans are paying them. I'm not sure how much wine you're importing from France these days, Joe, but, the price of them are going up 15%. And that is true for companies like Ford, right, who are now going to see and have been beating the drum about the pain that it will cost to their bottom line from how having to import steel and aluminum from Canada as part of our North American supply chain at significantly higher prices. And there's no question that eventually will lead to higher prices for your F-150 or for other commodities. I think you raised the example of Stu Leonard's, fabulous grocery chain from my old high school days. You can't get bananas from a whole lot of other places in the U.S., right? There are goods that are just not capable of coming from other places that we just cannot make here in the U.S. or don't produce here for various reasons. And that's going to lead to higher prices for the American people. And I think that is going to be a tough pill for the American voter to swallow, especially as you head into the midterms.
Yes, so Stu Leonard Jr. is going to join us later on, Rick, and he was making the point here. Everybody loves Stu Leonard's, I guess. That he says costs are up and I can't afford it. I need to start passing it on. If we start seeing that more and more in mainstream news coverage, what does that do to the argument coming out of the White House?
Yeah, I'm not even sure that you need more mainstream news coverage. I mean, when you look at consumer surveys, my favorite things to study, these are grumpy consumers. They're not happy with the higher costs that they're paying. They expected lower grocery costs, expected lower gas costs. There's a lot that isn't fulfilled in the promise of the Trump administration. We talked about how much he's doing, but that piece of it right now, especially as you start to look across the horizon at the 2026 midterm elections, they got to fix that because consumers vote on their pocketbook. We hear it over and over and over again, constantly telling, elected officials, this is what matters most. All this other stuff, window dressing. They're not going to decide on who to vote for because of the tariffs. They're going to decide on that banana cost.
Yes, right.
And so we're still in a banana economy. We got to constantly remind ourselves of that. And right now, unless something changes, you got a bunch of grumpy consumers looking at this administration saying, maybe we need change in Congress.
There are two posts I want to ask you about on this 200th day. President didn't get a lot of sleep last night. The midnight post on the tariffs, I guess, would be evidence of that. But they kept rolling in this morning. There are two that jump off the page or the screen or whatever you have here. One is about Intel. President writes, the CEO of Intel is highly conflicted and must resign immediately. There is no other solution to this problem. Thank you for your attention to this problem, exclamation point. And this follows allegations that the new CEO, not so new CEO, is tied to the PRC. Separate Trump post, Truth Social, he says, now that the nuclear arsenal being created by Iran has been totally obliterated, it is very important to me, that all Middle Eastern countries join the Abraham Accords. This will ensure peace in the Middle East. Does this president see him as the president himself, as the president of the world, Adam, as well as the chairman of every board?
I mean, that certainly seems like it. I mean, I will just take a step back. If you had a Democratic president calling for the firing of a CEO of a major U.S. company, Republicans would be screaming from the rooftops about a socialist republic, about socialism run amok in the country, the president picking winners and losers in the business community. I mean, that's what we're talking about here. And I think it is something that I think people is shot across the bow for corporate America. And I don't think it's going to lead a whole lot of businesses feeling comfortable about the decisions that they make and the choices they make going forward.
Is this just Trump being Trump? What do you make of these?
Yes, Donald Trump, xenophobia. I mean, come on. I mean, like, that shouldn't surprise anybody at this stage, whether it's Mexico or China or any other country that he sees as a blacklisted country. Sure. But I think this point you make about does he see himself as president of the world is really fascinating because, like, he came to office where people thought, oh, they're rolling up the carpets. We're not going to do business with anybody else. And he's been arguably the most integrated president on a global scale in our lifetimes. Wow. And when you look at all the bilateral activity he's done, trade, I mean, like, you don't have to like what he's done, but he has been more active on a global front, and it's been based on the U.S. is the most powerful nation in the world, both militarily and economically, and we're going to flex our power around the world. So, you know, I think the last time I saw a president like this, and he's my favorite president, so I don't want to compare the two, but Teddy Roosevelt understood the world.
Wow, Rick Davis.
Understood our role in the world, and he carried that big stick. And Donald Trump, in his own kind of different way, I think sees himself the same way.
What do you think about that, Adam? When he tries to influence developments in other nations, it's almost every day, either on Truth Social or in front of cameras and microphones.
I mean, it's the way that Donald Trump sees himself and his ego. I mean, he views himself as president of the world. And look, the president of the United States often does carry that big stick, that influence, and we are able through either the might and being right on a greater range of issues to being the world superpower and who helps shape the way the world works. That's the privilege that the president has to bear. And so I think that's something that I think you should not be surprised at necessarily. And I think Trump, like with most things, is going to take it to the extreme.
See the president on the roof the other day? He's walking around the colonnade on the roof. Is there going to be a second floor on the West Wing by the 300th day? What's going on over there?
Yeah, no, it wouldn't surprise me. I think we're into a redevelopment phase for the White House. I mean, obviously, the ballroom's getting most of its attention, but he wasn't on the roof to talk about the ballroom.
There he is.
So, yeah, no, I mean, and maybe someone told him, no president has ever been on the roof of the White House. So, boom, let's go.
There he is. If you're with us on YouTube or Bloomberg TV, he was describing, he said something beautiful with that hand gesture that he's working on. Maybe it's skylights or something, Adam. Maybe they are going to put the swimming pool in up there. We do understand the gold leaf is being added to the ceiling of the Oval Office. Will this White House look different forever because of this man?
I mean, no question. I think, you know, look at what's happened at the disgrace in the Rose Garden. I mean, I'm biased, but I just think it's totally changing the face of the way that the White House looks. And this has happened throughout history. I think, though, that Democrats can't get sidetracked into some of these issues and talking about a ballroom or the Rose Garden or everything else.
Sure.
Laser focused on the unpopularity of the big, beautiful bill. And that's where I think you'll see Democrats, if they're smart, that's what they'll focus on, because it is a lead balloon on the president's popularity with the American people, with the voters that put him in the Oval Office. And I think that's where you think Democrats should focus on going forward.
Sure. I just think it's fun for us DC guys to talk about it. Adam, thank you so much. And Rick Davis, Adam Hodge, Bloomberg Politics contributors. We'll get to the road show on the big, beautiful bill next time we talk. I'm Joe Matthew in Washington. We'll have a lot more on the potential meeting Trump and Putin next here on Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Shares in Firefly Aerospace were as high as 36% higher in Firefly's IPO debut. The company's public offering raised $868 million, giving Firefly a fully diluted value of roughly $10 billion. Now, it opened at $70 per share and is currently trading at $67 per share. We check the markets all day long here at Bloomberg. The S&P 500 down 0.3%. Now NASDAQ is down too. Little changed, but still on the downside. And the Dow is down 0.75%. The 10-year Treasury yield at 4.23%, and the 2-year yield at 3.73%. OpenAI rolling out a new artificial intelligence model called GPT-5. It's designed to be more capable at coding and creative writing, as well as reasoning through complex queries. OpenAI Chief Executive Officer Sam Altman called GPT-5 a major upgrade from the company's prior AI models. Atlanta Fed President Raphael Bostic says he still views one interest rate cut as likely this year. He says there are reasons to be skeptical that inflation caused by tariffs would be temporary, and he says tariff levels keep changing, and that's just extending the time that consumers are worried about inflation, and that could also lift inflation expectations. It's getting harder to find a job. New data from the Labor Department show recurring applications for unemployment benefits jumped to the highest level in years, a sign that the labor market is getting weaker. New claims, though, have remained subdued this year. Initial claims rose to 226,000 last week, higher than economists had expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Many thanks, Amy. We'll have more from Amy Morris and her take on the market coming up the top of the hour. Thanks for joining us on Bloomberg TV and radio on Balance of Power. We're live in Washington with pretty big news, in fact, as you go to check your 401k. An executive order that the president is signing today that actually does not have anything to do with tariffs, but in fact your retirement account. He's signing this EO to allow private equity, real estate, and crypto in your 401k. Directing the Labor Department to reevaluate guidance around alternative asset investments in retirement plans to clarify as well the government's position on fiduciary responsibilities. This initiative offering more investment options, greater potential upside. We'll see what happens at the Labor Department with this executive order, but a pretty fascinating story for people, of course, subscribing to the terminal and watching and listening to Bloomberg. Big doings when it comes to Russia and Ukraine. As we've noted, reciprocal tariffs took place at midnight, but tomorrow is the deadline for secondary tariffs on countries buying oil from Russia. And as that deadline looms, the president says it's going into effect one way or the other. As we hear some progress on a potential meeting, assuming that would qualify as progress, between President Trump and Vladimir Putin. The Kremlin speaking to this today, suggesting that final details are being ironed out in a meeting that could take place within a few days, was the language. The president talked about this with reporters last evening when he was asked if he planned to sit down with Putin in person. Here's what he said.
We had some very good talks with President Putin today, and there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
How close do you think you are to a deal?
Excuse me?
How close do you think you are to some kind of deal?
Well, I don't want to say. I've been disappointed before.
And he may well be disappointed again, though we can add another wrinkle to this story, as Politico just now reports that Vladimir Putin, this is from the White House here, the administration says Vladimir Putin must first meet with Ukrainian President Volodymyr Zelensky before he gets a bilateral with President Trump. It's interesting because much of the analysis today would suggest that any in-person meeting would be framed as a win for Putin, which may be prompting the White House to tap the brakes for a minute. This is why we're so glad to have the voice and experience of Mara Rudman. Mara is professor at the University of Virginia's Miller Center, a former U.S. diplomat who we talked to a lot about geopolitics, and it's great to have you back. Mara, what do you make of this new wrinkle? You need to sit down with Zelensky first, even as he bombs civilians in Ukraine?
Thanks, Joe, and good to be back with you. I suspect that this latest reporting is that the White House is reacting to the very obvious news out there that you have also reported that progress in terms of a meeting between Trump and Putin is progress for Putin. Not at all clear what the United States gets out of it without any further commitments from Russia. There's a reason that there has not been direct meetings between U.S. leaders and Putin for some years now. And so I think that the White House probably, unclear whether President Trump himself recognizes that he may have been once again taken by Putin with the I would say premature announcements yesterday of a meeting, of a one-on-one meeting.
Understood. And I had a feeling that would be your point of view here, Mara. Does this then put a Putin-Trump meeting on the rocks? Maybe it doesn't happen at all now.
I think it raises big questions about it because, to be clear, when President Trump had put out last night that he was meeting with Putin, he seemed likely to be meeting with Putin, and that a meeting between Putin, Zelensky, and Trump would follow. And that appears to be also what President Trump had briefed European leaders and President Zelensky on. And the Kremlin came right back and said there was no such three-way meeting yet on the books or in contemplation. What they were talking about was the meeting between Trump and Putin. There's a bigger problem here, though, Joe, which I think goes to the lack of process, the lack of planning inside the White House that leads you into these kinds of scenarios, which really hurts U.S. positioning in the world and U.S. security.
Well, let's say this all goes perfectly, and there's a meeting with Vladimir Putin, Donald Trump, Volodymyr Zelensky. There's a beer summit in Kyiv. There's nobody else from Europe at the table. Mara, how do our allies feel about that?
I think probably pretty uncomfortable, because our allies are the ones who are quite literally on the front lines and have played a very important role here, along with the United States, in backing up Ukraine and Ukraine's efforts against Russia. And so I think there's probably a lot of trust but verify, with more emphasis on the verify from the allies' perspective, though I also think they're playing a difficult hand, and they know it.
Before I move on, where do you think they meet? The conventional wisdom seems to be Middle East. Is this Saudi Arabia, UAE, or something we're not thinking about?
I think Saudi Arabia, UAE, Qatar, I mean, the Gulf players have been quite adroit in setting themselves up as meeting points and having kind of good relationships all around. And they should be given credit for that. I think there's ways in which the United States could take greater advantage of that than they are in terms of regional strength. But I think it would not be surprising if the meeting was somewhere in the Middle East.
Got it. Yeah. President says these secondary tariffs take effect tomorrow, no matter what. I guess that could always change. But how are you looking at this when you consider the likes of India and China paying the price for Russia's behavior?
Somewhat inexplicable to me, particularly with respect to India, because, again, reporting over the last 24, 48 hours has been that India pays the biggest price, which really counters what is in the United States' interest here, as we have been working, both Republican and Democratic administrations, for some years now to build the ties between the United States and India, in part to try to leverage against China's strength. So it's really quite surprising, and clearly is not going over well in India.
Really fascinating is we, of course, are dealing with a number of hot spots here that the president will likely be asked about if reporters get to throw some questions at him later on. He has remarks scheduled for 4 p.m. Eastern time, a couple hours from now. We did get quite the round of questions and answers in the Oval Office yesterday, because the news that's coming out of Israel here, Mara, is pretty remarkable. Israel intends to fully take over Gaza, despite global isolation here. In an attempt to end the fighting, they're under an enormous amount of pressure to accept a Palestinian state. An eviction seems to still be on the table here. President Trump was asked quite recently, it was in fact the 31st of July, about the situation in Gaza, knowing that he has suggested removing everyone and building waterfront condos. This is the most recent take from President Trump.
Oh, it's terrible what's occurring there, yeah. It's a terrible thing. People are very hungry. You know, the United States gave $60 million for food, and it's a shame because nobody, I don't see the results of it. And we gave it to people that in theory are watching over it fairly closely. We wanted Israel to watch over it. Part of the problem is Hamas is taking the money and they're taking the food. But we gave $60 million a couple of weeks ago. Nobody said anything about it. Nobody said thank you, but I didn't need to thank you. I just wanted the people to get fed.
President Trump, just a couple of days ago, just about a week ago, Mara, the Israeli government is going to make a decision on this idea of whether or not to fully occupy Gaza a bit later on today. It's unclear if we'll get an announcement when this happens. What would be the fallout of such a move?
Joe, listen, it would be a devastating decision for Israel to make, not only for the Palestinians in Gaza, but for the Israeli polity itself. To be clear, this is an Israeli political leadership decision, one that has been long pushed by the far-right members of Prime Minister Netanyahu's coalition. The military, the Israeli Defense Forces, is against this decision, and it's been remarkably public in their statements about thinking this is not a wise course. And so it is very unclear how this plays out for Israel within its own country, never mind, as you've pointed out, the international reaction. I will say President Trump, much as he wants to get credit for the United States supplying humanitarian assistance, which is important, but the United States has done for years and years, the important thing is that there is not a way forward for that humanitarian assistance. The United States did not do its due diligence on the mechanisms that were set up. And beyond that, President Trump himself played right into the Israeli far right when he made the pronouncement, which he has since backed away from, about the fact that essentially there should be ethnic cleansing in Gaza, that all Palestinians there should leave, as you reported a few minutes ago.
Yeah. I don't know if you saw his post on Truth Social this morning with regard to the entire region, I guess, is the only way I can put it. The president writes, now that the nuclear arsenal being created by Iran has been totally obliterated, you can see the post on Bloomberg TV, it is very important to me, he says, that all Middle Eastern countries join the Abraham Accords. This will ensure peace in the Middle East. Thank you for your attention to this matter. How does he expect Middle Eastern nations, allies or not, to respond to such a message?
So, Joe, it's not clear what President Trump expects. I will say what ties together your questions on this, on the Russia-Ukraine situation, on what's happening in Israel now, is that President Trump lacks an internal advisory process that every other president has relied on. I know because I was chief of staff of the National Security Council for two previous presidents. And that involves making sure the president has the best planning available, the right advice, knows what the perils are as he goes forward, and frankly doesn't make public pronouncements until he knows what the related likely reactions are. And so while there is tremendous opportunity in the region, I would say as a result of the actions against Iran and some of the combined interests, the actions of some of the Gulf states at this point, for a regional framework for security and economy and energy, that also requires finding a pathway to a Palestinian state. And the Gulf countries have been very clear about that. So that is the necessary price for the Abraham Accords and a way forward. And it's also what Israel needs to have a day after for Gaza at this point for Israel's own interests.
Interesting. And we should just let our viewers and listeners know that Mara's positions in government have included serving as deputy assistant to the president for national security affairs in both the Obama and Clinton administrations. With that said, Mara, how do Middle Eastern nations, allies or otherwise, feel about what President Trump wants himself? He says, this is important to me.
Well, listen, there are a lot of monarchies, kingdoms in the Middle East, so they may not be as surprised by his language as many in the United States ought to be, because we, of course, he's not a king. He's a president elected by the American people. So it's important what he wants, though hopefully what he's doing is representing the interests and the security interests of the United States, which I do think would be served by more countries joining the Abraham Accords. Though I also think that the price of those countries, they've been clear about it, the Saudis, for example, of a pathway to a Palestinian state would also serve the United States interests.
Really interesting conversation, as always, Mara. I really appreciate it. Mara Rudman, professor at the University of Virginia's Miller Center, former U.S. diplomat in the Clinton and Obama administrations. We thank you for the insights. We've got a lot more coming up on the late edition of Balance of Power. In fact, we're going to get back to the idea of a Trump-Putin meeting with the former ambassador to Ukraine, William Taylor. And the aforementioned, I'm looking forward to this, Stu Leonard Jr. is going to join us for his view on the impact of tariffs on consumers. We're going to go to the grocery store, and I hope you'll join us right here, 5 p.m. Eastern Time on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. I'm Carol Masser. Tim, as you know, is off this week, and Nora Melinda is in the house, someone you know so well to the Bloomberg audience. Of course, she keeps a watch on the equity markets. Good to have you here on a day where we've got stocks down, treasuries losing some steam after a weak $25 billion sale of 30-year bonds. We've had auctions throughout the week. Perspective, though, and I think about this, Nora, and I'm sure you guys talk about it on the earnings team and the equities team, is that the S&P, we've had about a 30% surge from those April lows. So if we see a little bit of a pullback, we have to have some perspective.
Absolutely. I mean, I think that when we think about the broader context, you look at last year, we had 2 back-to-back years of 20+% gains.
Off the charts.
Insane. So then we're here sitting in the situation where if you look back at New Year's and then you come back today, you just fell asleep in between. Feels like we're right where we were before.
I always love that concept. Sometimes I wish I had fallen asleep. No, I don't, because it's been interesting and fun. Hey, what we're going to get into over the next 60 minutes here on Bloomberg Business Week Daily is who may follow Fed Chair Jay Powell. We're also going to get into what well-known company is the latest to be on President Trump's radar. And then we're also going to get into what stock is being rewarded by investors following earnings today and really for the year overall, and whose CEO will join us later on this hour. And then, Nora, I got to say, one of the things we talk a lot about is rare earths, and so we're going to dig a little bit deeper into that.
Lots to dig into there.
Yeah, we got a big earnings on that after the close. First up, though, let's get to that trading day, and let's check in with Amy Morris in for Charlie Pellet.
All right, thank you, Carol. Shares in Firefly Aerospace are up 45% in their public debut. The stock trading right now around $62 per share. The company's public offering raised $868 million and gives Firefly a fully diluted value of roughly $10 billion. A rally in stocks sputtering near all-time highs. Checking the markets all day long now at Bloomberg, and we are in the red now. S&P 500 down 0.2%. NASDAQ is pretty much flat. The Dow is down 0.7%. The 10-year Treasury yield at 4.24%. The 2-year yield at 3.73%. Intel shares now down 3.5%. This after President Trump called for the chipmaker's chief executive officer to resign, posting on Truth Social that, quote, "The CEO of Intel is highly conflicted and must resign immediately." Now, Republican Senator Tom Cotton asked CEO Lip-Bu-Tan to answer questions about ties to China. The average rate on a 30-year mortgage has fallen to 6.63%. That's according to Freddie Mac, who says it is the lowest level since April. Atlanta Fed President Raphael Bostic says he still views one interest rate cut as likely this year. He says there are reasons to be skeptical that inflation caused by tariffs will be temporary. And he says tariff levels keep changing, which is just taking more time for consumers to worry about inflation that could lift inflation expectations. AT&T working with advisors to sell its Mexico unit. Sources say the company wants more than $2 billion for the business, which has struggled for more than a decade to gain ground on Telcel, part of a group controlled by billionaire Carlos Slim. Shares of AT&T about 2% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Balance of Power with Carol Masser and Nora Melinda.
Amy Morris, thank you so much. All right, semiconductors definitely on our watch again for a few reasons. First up, late yesterday, President Trump mentioned amping up tariffs on the space.
We'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge.
All right, that, of course, was President Trump yesterday. And then this morning, the president called on the chief executive officer of Intel, Lip-Bu-Tan, to resign because of what he called conflicts of interest, adding to the challenges for a company that is supposed to anchor restoration of the U.S. semiconductor industry. Here's what the president put out. He said the CEO of Intel is highly conflicted and must resign immediately. He was doing this, of course, on Truth Social earlier today. He went on to say there is no other solution to this problem. Thank you for your attention to this problem. Now, this comes after Republican Senator Tom Cotton asked the chairman of Intel's board this week to answer questions about Intel's CEO ties to China specifically, including investments in the country's semiconductor companies and others with connections to the country's military. As we mentioned, there's a fair amount of stuff going on. So let's get to it. A look at the Intel CEO. We wanted to talk to someone who has followed this company for a long time, knows the current challenges, and knows the executives certainly in the space. With us is Bloomberg News U.S. Semiconductor Networking reporter Ian King. He's out there in our San Francisco studio. First of all, Ian, thank you so much. You know this company so well. You know what they're facing. You understand the executives who are there. I mean, Intel, we know, is a critical piece of Washington's efforts to rebuild the domestic semiconductor industry. I want to start with you first of all, and we ask you this a lot. I mean, Intel, even with its struggles, is still a very important company, certainly to the United States.
Yeah, absolutely. If you want this country to be domestically capable of producing technology that leads this industry, the vehicle has to be Intel. There's no other company that's even close. Yes, they are not what they were. Yes, they have stumbled, but they're still the best if you believe in the necessity of advanced semiconductor manufacturing in this country.
So how are you perceiving this new added pressure here? I mean, has the CEO had enough time here to really turn around and really show a turnaround story here?
Yeah, I mean, I think what you have to do is look at what has changed. I think that you've gone to the heart of the matter there. He's only been in the job 4 months. 2 years ago, the House Committee on China asked him questions about his history of investments in China. So none of this kind of association with China is new. That's just not new at all. What is new is that Intel recently, during earnings, cast doubts on whether it'll build the plants in Ohio that everybody's looking at as a cornerstone of chip manufacturing in the US, that it'll be very measured in its introduction of new chip technology. That has obviously created an undermining of this story of bringing back chip manufacturing to the US and sort of making the US great again in that particular area. So clearly that has caught the attention of politicians, and clearly they're not happy with the direction that that's going in. And obviously we're now seeing some kind of a backlash, and that's focusing on the CEO of Intel.
Well, and I think it's kind of interesting, Ian, that this comes one day after we saw Apple CEO Tim Cook in the Oval Office with the president talking about investments in the U.S. and seemingly, at least some were weighing in on this and saying this is a way of getting some of the heat off of Apple, right? Is this potentially about the Intel CEO kind of not kissing the ring here?
Yeah, I mean, we've seen Jensen Huang from NVIDIA, we've seen Lisa Su from AMD, and pretty much all of the chip CEOs at some point making an appearance in the White House or at various events where the president or senior administration officials have been. So that's clearly been a policy that has, blossomed, shall we say, in the chip industry. We have not seen Lip-Bu Tan make any appearances at any of these type of events. But to be fair to him, he's only just got the job, and he's apparently taking 20-odd meetings a day trying to figure out what the heck is wrong with Intel and how to fix it. So you pick your poison here in terms of what he should be doing.
Right, and as investors, you probably want him focusing on doing what he needs to do at the company. The stock, though, we should point out, is down about 3.7% today and down just shy of 2% year to date here. If the president, though, is coming at you hard, Ian, what does that do to your turnaround efforts? Does it kind of spread you a little bit?
I mean, that's what we need to know. We haven't seen a response to this latest message from the president from Intel yet. We've been trying hard to get one, and we haven't seen one appear anywhere else. So you have to believe that that means that they are thinking very carefully and in a very measured way about how they respond to this. We've seen conjecture, well, is this the end for Lip-Bu Tan? What does this mean for Intel's turnaround? All out there, and clearly more uncertainty is not what Intel needs right now. We need signs that they're moving forward, and this clearly does not help.
So earlier on, we actually had Republican Senator Tom Cotton adding pressure, saying the chairman of Intel's board earlier this week, he was asking questions about Tan's ties to China. And of course, we know that the U.S. is really focused on those national security concerns. Of course, Intel did say that they are committed to national security. But can you just speak to what some of those barriers are and what some of those headwinds, essentially, what are the flags that a lot of this industry is dealing with as it pertains to national security here?
Yeah, I mean, semiconductors have become the absolute central tool that the U.S. is using in its increasing geopolitical rivalry with China. semiconductors are considered, because they are absolutely essential to technology that you would use to develop either economic strength or military strength. And that has only increased in focus with the emergence of AI as a viable tool for any number of different uses, including military. So depriving China of advanced semiconductors or the ability to develop them themselves has become a number one priority, or very close to the top priority for this administration, for the previous one. So anything that talks to that is very much a political hot potato, and will come acutely into focus and be used by politicians depending upon what it is they want to achieve.
Yeah, and a hot potato and sometimes conflicting signals is what some might say in terms of protecting this industry here in the U.S. and also putting some pressure. Ian, thank you so much. Busy day for you, and so glad we could get some time with him. Ian King, he's Bloomberg News U.S. semiconductor and networking reporter. All right, intel on the president's mind, so too is who might be the next Fed chair. This as Fed Governor Chris Waller is emerging as a top candidate to serve as the central bank's chair among President Trump's advisors as they look for a replacement for Jay Powell, at least according to people familiar with the matter. Governor Waller told our Bloomberg surveillance team in mid-July that he is open to taking the top job at the central bank.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it. But he's not contacting me.
What say if he does?
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it. It's a hypothetical.
It's a hypothetical right now. Fed Governor Chris Waller on Bloomberg Surveillance back on July 18th. Let's get a reminder of who he is, where we are. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee back here in studio. All right, Mike, Waller's already on the Fed board. So if he became the next Fed chair, help me understand how the chairs are rearranged or what it all means.
Well, that would have the least effect on the chairs that the chairs sit in and everybody else around the board table. Because he's already on the Fed, the president could nominate him to become chairman when Jay Powell's term is up in May. And he would have to go through confirmation as chair, but he's already been confirmed as governor, and he's already, so therefore, most all of the paperwork that he would have to submit, it might have to be updated. But given the fact that he's a federal employee and on the payroll, he's probably not made a lot of complicated investments in the meantime, and he probably doesn't need to do divestiture and all those other things that nominees would have to do. So he could be confirmed fairly quickly and be able to take over when Powell's term ends. It's also possible he could be confirmed ahead of that time. And
is he a logical choice?
He's the most logical choice from the market's point of view.
Okay.
The other day I was having a chat with Mohamed El-Arian, and we were talking about who should be the favorite, and he said the person who moves the long end of the yield curve the least. And that would be Waller. And you saw after our Saleha Bosan's story on this that the yields at the long end came down today. And so the markets, I think, would be very reassured by having somebody who has been on both sides of the hawk and dove line, depending on the status of the economy. And that's the way he would look at it now.
So he's data dependent.
Well, yes, he's data dependent, but the thing that the White House is saying, White House officials are saying, is he was able to make plans for what he thinks should be done based on a forecast.
Okay.
He thought that inflation would be a one-time thing and that the economy was weakening, so he called for a July rate cut. And the others have been saying we need to see more data until we're certain we can do this. And apparently that caught the president's eye and people in the administration's eye, and they like that about him.
Mike, there's been so much going on. I'm sure people are struggling to keep up. Please remind us of who the other names that are being floated right now are.
Well, there's supposedly 4 candidates, but there are 3 names. So one is Waller, of course, and then you have the people that the president calls the Kevins. Kevin Hassett, who is the director of the National Economic Council, and Kevin Warsh, who is a former Fed governor who has moved into the hedge fund world and is also does some teaching out at Stanford. And so those 2 have been variously thought of as the favorites, and Waller was thought of as sort of the insurance policy. But now, if he is indeed the favorite, that will change the dynamic for the president, who can then look to put somebody in the seat that's being vacated tomorrow by Adriana Kugler, who doesn't have to be chair. And it also makes it much more likely that Jay Powell would resign from his board seat when his term as chair is up. If the president appointed somebody that Powell thought would be a bad chairman, then he might be inclined to stay on.
So this is what I think is interesting, right? I mean, Fed chair is obviously the Fed chair, right? And that's a super important position, but it's a Fed board, right? And there's a discussion. And so I'm just curious about how you were thinking about what the composition of this Fed board might be post to Jay Powell.
Well, you make the important point that there are 12 voters, there are 19 members of the Open Market Committee, which include the 7 Fed governors and 12 presidents of regional Fed banks. And for any particular meeting, 12 of them are voters. So you've got to convince a group of people to go in a certain direction. It's not just that the chair can decide what's going to happen. Now, that was certainly the dynamic under Alan Greenspan, but we've gotten way away from that now. It's much more consensus driven. So just changing the chair isn't going to make necessarily a difference, and changing it to Chris Waller wouldn't make a major difference, except that he has advocated at this point cutting interest rates. So the president can see him as more likely to do it. But I think any one of the 3 that they're talking about would advocate cutting rates when they got in. But also remember, we're talking about May of next year. And who knows what if they start cutting in September, they may have already cut a number of times, and it may be time to do something else. So it's kind of hard to say exactly what it's going to mean.
Well, we heard from Mary Daly, and she said that policymakers need to prevent further deterioration in the labor market. Of course, we know we got that weak jobs report last Friday and other economic data that people are still parsing here. But she said that if the labor market stumbles, it falls, and it falls quickly, and it falls hard, so you don't want to get into that situation. And she essentially was kind of saying that maybe we should kind of start thinking about some rate cuts heading forward. Is there more of a resounding sense of urgency right now to get a rate cut done this year, no matter who's put in as Fed chair?
I would quibble with the word urgency, but since the jobs report, everybody on the Fed who has spoken has basically embraced the idea that it is probably time to do that. We heard from Neil Kashkari yesterday. We heard from Mary Daly. We heard from
I love when the blackout period is over.
Susan Collins and Lisa Cook. They all said the same thing, basically, is that it does look like inflation is going up a little, but not too much, but unemployment is starting to worry us.
I always think about, as Waller's name in this case is being talked out a lot as maybe the possible next Fed chair, how is that maybe impacting his relationship with Fed Chair Jay Powell? How are you thinking about
I think this would be one of the easier relationships to have, because they've worked together now for 5 years and been, very cordial to each other. And Waller is seen as an intellectual heavyweight on the Fed, and it's not like he's going to get Powell fired. I mean, Powell's term is up, so he's going to leave. So I think the chair would be happy with this choice, especially compared to some of the others he could get.
Great stuff. And we should remind everybody that coming up later this month, check out our live coverage from Jackson Hole. Mike will be there. We'll be on the ground in Wyoming to cover the Kansas City Fed's annual meeting, and remarks from Chair Jay Powell. It all starts Wednesday, August 20th. All right. Thank you so much. Michael McKee coming up next. We're talking rare earths, really important and important earnings after the close.
221 on Wall Street. I'm Amy Morris as we continue to watch Firefly Aerospace stock. Its IPO debuted today at $70 per share, now trading at around $64 per share. A rally in stock sputtered near all-time highs. Treasuries lost steam after a weak $25 billion sale of 30-year bonds. We do check markets for you all day long here at Bloomberg. Red across the screen. The S&P 500 down 0.5%. NASDAQ down 0.3%. The Dow now down 0.8%. 10-year Treasury yield at 4.25% and the 2-year yield at 3.73%. Fed Governor Christopher Waller emerging as a top candidate to serve as the central bank's chair among President Trump's advisors. They're impressed with Waller's willingness to move on policy based on forecasting and his deep knowledge of the Fed system. Peloton projected a sales decline for the current quarter and said it would cut jobs, but expressed confidence in a turnaround plan under new management. Peloton shares down now more than 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back to Bloomberg Business Week Daily with Carol Masser and Nora Melinda.
Lovely, lovely. Amy Morris in for Charlie Pellet. All right, well, this week, GM, General Motors, signed a deal with Texas-based Novian Magnetics to secure rare earth magnets for its full-size pickup trucks and SUVs. So this is the third domestic supply contract the automaker has signed related to the critical trade dominated by China. You might recall last month, Apple struck a $500 million deal to buy rare earth minerals from MP Materials. That's the U.S. producer that secured backing from the Pentagon. That company, by the way, reporting after the close. We're talking about rare earths a lot and with good reason, especially considering the world's dependence on China for rare earth permanent magnets. And we know that this has been certainly part of the trade conflict between the U.S. and China. So let's get to it. A great roundtable with us. Back with us is Dr. Gracelyn Bascarin. She's director of the Critical Mineral Security Program at the Center for Strategic and International Studies. She's out there in our D.C. News Bureau. Also here in studio is Bloomberg News economic statecraft reporter Joe Doe, who understands and is constantly explaining this space to us here at Bloomberg. He's right here in our studio joining Nora and myself. Hello, everybody. Dr. Bascarin, great to have you here again. You know, remind the world just why this is so important, who really has them, what the U.S. wants, and is the U.S. making the right moves to expand their presence when it comes to rare earths?
Thanks, Carol. It's great to be back. So the first and foremost is in April this year, China rolled out restrictions on heavy rare earths. And what this did is it put a chokehold on the industry because all of a sudden we had a supply chain disruption. And the automotive industry was particularly hard hit. Within 8 weeks, we saw that Ford actually had to pause production of its Explorer model owing to these supply shortages. What the U.S. did in response was a full-out effort to warp speed access to these rare earths and these magnets. Most recently, we saw the Department of Defense make a $400 million investment in MP Materials, essentially putting the U.S. government as the biggest shareholder to accelerate production, both of the rare earths and the permanent magnets.
Yeah, we've talked about that, which was kind of got all of us like, wait a minute, is this now a state-owned entity? Joe, come on in on this.
Yeah, I mean, this investment that we've talked about now for a few weeks, right, was a signal to the market. I think that was kind of the main thing. It was a signal to the market from the Trump administration, from the Defense Department, that the United States was serious about a mine-to-magnet supply chain. They were also signaling the real concern that the United States has over the fact that China has put in these export controls. As Gracelyn points out, we'd seen rare earths as export controls starting back in 2023. The difference maker here was the magnets. And that's why companies like GM came out and publicly said, the magnets are a problem, we're short, and we're having to stop production. So we now have a situation where MP Materials has been given a $400 million investment, equity investment by the DoD, will loan financing to become a magnet producer. This is a miner.
So problem solved?
And problem.
I'm just being silly.
Right, exactly. Problem. Right. And actually, that sarcasm is very much the conversation I have heard constantly now for the past few weeks in the market, which is in anything in manufacturing is hard because just because you say you're going to build a plant doesn't mean the plant will just come together and work straight out of the gates. And I think there are questions among many in the market of this mining company. Can they figure out how to produce so many magnets at scale in the time needed?
So listen, you brought us Graceland. You ask her something.
So my question is, I mean, Graceland, you're sitting here now weeks later after this announcement. What do you think?
We're giving all the right signals in from both a supply and a demand side intervention. You know, a lot of what this MP materials deal with Department of Defense was it was supply side. It was saying we need more rare earths and we need permanent magnets. What this new big announcement from General Motors is really telling us is they're also giving the demand signal by agreeing to offtake. Joe, we've talked about this before, but one of the difficulties is the price environment. Prices are generally pretty low. By stimulating demand and showing that there is an off-taker, what we're really saying is that we are meeting a market need, and that's a really positive signal. General Motors as a whole has had first mover advantage on a number of deals related to this. We saw them with the MP Materials deal. Now we see it with the Novian deal for the magnet. So really it's showing that it is a full mine-to-magnet effort if we want to reduce our reliance on China.
Do you think now that we're showing there's commercial market for this, commercial demand, as you're saying, are we now in a show me moment? Prove it that you can actually deliver these magnets?
Absolutely. We've already seen that Novian Magnet is already making their first magnets, and they were delivered last month, which is a really great first step. Now what we need to make sure that they can do, along with some of these other magnet efforts like MP Materials' second production facility, is to make sure that we can ramp up at a level that is quick enough, because we know that whatever trade agreement is reached with China is still transitory and time-bound, and we could have future disruptions. So we now need to make sure that we can ramp up fast enough.
Can we? In your view? As Joe said, none of this is easy.
Yeah, I mean, I think that there is enough market pressure to do it. You know, I was always reminded that during the COVID-19 pandemic, we developed a vaccine for a virus that we didn't know existed in less than a year. America's strong suit is innovation when under pressure. And I think what we've seen from the amount of government support, but also the way that we have embraced that challenge from a private sector point of view, that we are well on our way to being able to do that.
I mean, China controls over 60% of the global rare earth mining and more than 85% of processing capacity. And of course, we know that the U.S. really sees rare earth independence as essentially a security concern. How does the U.S. fit into all this? I know you mentioned that you do think that we have a stake in the game, but let me know to what degree.
So I want to take you back to actually 2007 and 2008 quickly, when our auto industry started collapsing and we saw significant bailouts to the automotive industry, given the impact on jobs and investment in a really important sector to the U.S. economy. We have skin in the game to ensure that our automotive supply chain does not have disruptions, because we know what the economic consequences, not just in the Midwest, but to the entire country that relies on it. So when we think about it through the lens of the economic health of our country, as well as importantly national security, given that magnets are used in a variety of defense technologies, we have every incentive to get this right.
Graceland, what's your biggest concern though moving forward? I know you're optimistic, but what do you think is going to be the biggest hurdle actually making this happen?
Can we do it fast enough? I mean, a lot of these things are very, very small scale. You know, in MP Materials' first year, they're actually only going to make 1% of the amount of permanent magnets China made back in 2018. So the ramp up will take time. And given the risk to further disruptions, the big question is, can we do it fast enough? And that's really difficult to to be able to say that now.
We're talking with Graceland Baskeren, Director of the Critical Mineral Security Program at the Center for Strategic and International Studies out there in our Washington News Bureau. Our own Joe Doe is also with us, with Nora and myself. Hey, one of the things, Graceland, I wanted to ask you is, how important, though, is this market for China and their economy? And if the U.S. is backing off, who does China then start talking with to do deals? And are we starting to see signs of that?
China's economy is already struggling. We saw this past year, they had the highest levels of deflation in modern Chinese history. Economic growth has really slowed. The IMF has actually flagged a number of these trade risks as a really big economic risk that China is facing. Anytime you have a new players coming on, because remember, it's not just the United States. We have countries like Saudi Arabia, Australia, and Malaysia are also going to bring facilities online in the next couple of years. This is a significant risk to China's future, because they've relied on supplying the entire global economy until this far.
So could we have a glut in a few years? I mean, I know they're called rare earth, and we've already debunked that. But could we have a glut essentially in a few years, or impossible?
That's a real risk we have. The reason a lot of mineral prices are actually quite low, like lithium is down 85% in 3 years, and nickel is down about 80% in 3 years, is because there's oversupply on the market. Oversupply is a real risk, and one that the market hasn't really conditioned itself to understanding if we get to a point where we have far more than we need and prices get pushed down further.
Talk to me about what this means for a lot of those technology companies when we think about rare earth materials. How does this impact something like the likes of Apple, for instance, and iPhones?
So, I mean, technology firms need rare earths across the board, and that's part of why Apple signed this deal. And increasingly, companies are willing to pay a premium to not be reliant on China because they saw that manufacturing could come to a grinding halt in the instance that China wants to roll out these restrictions. So generally for tech firms, they'd rather have too many options to buy from rather than not enough.
Graceland, I think one of the questions I have is, when you're looking out 2 years, 3 years from now, where's the investor class on this space? Do you feel like, yeah, great, we're seeing some offtake agreements, there's real commercial interest, but at some point the rubber's going to meet the road, and the question will be, where are the investors going to sit?
The investors are really going to be a couple of different sources. So given that rare earths and permanent magnets are used in virtually every sector of the economy, a lot of these investments are going to be made by off-takers. So we have seen already General Motors, really probably, and Apple being really signs of what is to come going forward. We expect to kind of see these deals being cut across the economy, particularly with President Trump's recent announcements, for example, on semiconductor tariffs, right? Which is really an effort to incentivize sourcing here in America. So when you kind of add up the aggregation of efforts ranging from tariffs to supply side intervention to stockpiling, which was part of the new Budget Act, it's really a full throttled effort to ensure that we are sourcing from America for American companies.
Hey, last question, Graceland, before we wrap, we do have MP Materials reporting after the closing bell. As I mentioned, stock's up almost 350% year to date. It's up another 4.3% in today's session. What are you watching out for? And just got about 30 seconds.
I'm looking to see how fast MP Materials can deliver. The amount of support MP Materials has gotten is absolutely unprecedented, and now they have the significant task of being able to scale up quick enough to meet both our national security and economic security goals. So I want to know how fast they're going to deliver on the very high expectations that the U.S. government has placed before them, as well as industry in this country.
Okay, whenever I talk with you, I always want to just take a class on rare earths, but you have to be the professor. I'm just going to put it out there. Dr. Graceland Bascarin, thank you so much. Director of the Critical Minerals Security Program at the Center for Strategic and International Studies. And same thing, I'll take a class with you anytime, Joe Doe. He is Bloomberg News economic statecraft reporter, a must-read here at Bloomberg. All right, coming up, we're switching gears and we're talking taking care of pets, big business. We're going to get into one company whose share price is definitely on the move to the upside today. We're going to talk with the CEO of Elanco Animal Health. That's coming up next. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. I'm Amy Morris. Shares in Firefly Aerospace were up as much as 40% in Firefly's IPO debut. That debut saw $70 per share, now trading at about $62 per share. Concerns over an overheated market have surfaced, analysts noting that the current environment is vulnerable to pullbacks caused by headline risk. And we check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%, NASDAQ down 0.25%, the Dow is down 0.75%, the 10-year Treasury yield at 4.24%, and the 2-year yield at 3.73%. OpenAI is rolling out a new artificial intelligence model called GPT-5. It's designed to be more capable at coding and creative writing, as well as reasoning through complex queries. OpenAI Chief Executive Officer Sam Altman called GPT-5 a major upgrade from the company's prior AI models. And Elon Musk posted on X that xAI's Grok 5 will be out before the end of this year. Atlanta Fed President Raphael Bostic says he still views one interest rate cut as likely this year. He says there are reasons to be skeptical that inflation caused by tariffs would be temporary, and he says the tariff levels keep changing, which is extending the time that consumers are worried about inflation, and that could wind up lifting inflation expectations. It's also getting harder to find a job. New data from the Labor Department show recurring applications for unemployment benefits jumped to the highest level in years, a sign that the labor market is weakening. New claims have remained subdued. That's something. Initial claims rose to 226,000 last week, a little higher than what economists expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Business Week Daily with Carol Masser and Nora Melinda.
All right, so appreciate it. Amy, thank you so much. Well, out with earnings earlier this morning, the stock is soaring. We're talking about Elanco Animal Health hitting a 52-week high today. It's up about 33% year to date. The gain, as I look at my Bloomberg, it's up about 16% in today's session. Again, as we mentioned, reporting earnings this morning, it boosted its adjusted earnings per share and revenue guidance for the full year, following better than expected second quarter results. We wanted to know more about the business and hear about the outlook. Delighted to have with us Jeff Simmons. He is president and CEO of the $8 billion market cap company, Elanco Animal Health. He joins us from Greenfield, Indiana. Jeff, good to have you here. How are you?
Great. Thanks for the opportunity, Carol and Nora. Good to be with you today.
Well, I want to talk about the business. I want to start, though, when we've got a member of the C-suite, start big macro, high and wide. When you look at the market and business environment, it's been an interesting year. And there was a lot of volatility. There was a lot of uncertainty. It feels like some things have calmed down. We've certainly seen that in the equity market. But I'm just curious how you see the business environment today.
Yeah, you know, I've pulled out the word volatile through my lens, and I see it dynamic. I think there's a mix of opportunity and challenge out there. But the backdrop that I come from, coming out of pharmaceuticals, but being in animal health for 35 years, I mean, this is an industry that's been growing. I think in the last 3 decades, only 1 year, 2008, we haven't grown. And we're seeing that resilience in the first half of this year. The animal health industry is probably one of the most resilient, and it's all around protein and pets. And you've got trends here that we're seeing, even with the dynamics that you just mentioned, consumer spend and the volatile environments, we're seeing resiliency because of these trends. I mean, the pet owners of the future, they're adding pets to their home. Pets numbers are up. The globalization of pets, the willingness to spend on pets is increasing as kids numbers and children go down, pets are going up, and we're seeing that in our results. And then on the protein side, this conversion of whether it's the new protein diets is also converging with our farmers and the dynamic. I mean, I don't know if you tried to buy cottage cheese lately or meat sticks. So those two trends are creating farmers, veterinarians, pet owners to have a resilience like I haven't seen. And we've seen 8 quarters of accelerating growth. And we peaked here, after those eight quarters, not peaked, but we've hit a high on adjusted basis of 8%. So where I come from, I see this as one of the most resilient industries right now with some of the consumer trends that are out there.
I'm a dog family. I've had tons of dogs, 3 Dalmatians at one point. Right now I've got a Weimaraner and an Irish Terrier. So I feel you, I hear you. What I'm curious about is, in terms of growth at the company, what's growing top and bottom lines? Is it existing products? Is it really what's coming in the pipeline? And I'd love to have you talk a little bit about what your pipeline is like, because I've seen changes, certainly in that monthly pill we give the dog. I used to give them 2 different pills. Now it's 1 pill, and it covers a lot of what ails them and you have to watch out for. So give us an idea of what's really driving growth at the company.
Yes, I'll anchor to that. I mean, it's innovation, and farmers and veterinarians reward innovation. It's got to be valuable. This is a cash-based business, not a payer business. So you've got to add value. Vets make money off from this, and pet owners respond to it. And that's exactly what's driving Elanco. We have been focused heavily on a pipeline a few years ago with blockbusters in it. We brought it through approval. We're now well into the launches, and I shared today, 5 major products with blockbuster potential. That's more than $100 million of potential in our business, but all of them are in big spaces. So let's just go down through a few of them that you could relate to, and hopefully we can get your pets on them if they're not. The first one's Credelio Quattro. A $6 billion market is parasiticides. That's the flea, tick, heartworm. This is the first product the FDA has ever approved with 4 active ingredients. We give the broad coverage. We give the speed to tick kill that other products don't have, 1-month heartworm control. And what we're seeing is we captured 14% share in just a few months into the marketplace. And it's a real opportunity. The market itself, this broad spectrum pill, is growing at 40%. And we're bringing what we believe best medicine into that. The second is, the number one reason people go to the vet is an itching dog. The dog can self-diagnose here for the pet owner. And we've got a portfolio coming, the first one into the market, and then we're globalizing it. We're launching Zenrelia in Europe. We think we've got a high efficacy product. We've now got over 50% of users that are using the product saying we're moving it to first line. That's a big deal for us. And sales more than doubled in the U.S. from Q1 to Q2. And then, I move over to the cattle business. We've got a couple products here that are actually helping with productivity on low cattle numbers that are out there. That's why beef prices are a little higher, but also having an environmental impact. And CPG companies are signing up to say, hey, this is important to the next generation of protein consumers.
All right, I have to ask, just because one of our producers is asking, and she's got a dog and a dog lover. She says, are these allergy meds for itchy dogs or a skin thing? Can you help us out there?
Yeah, so, atopic dermatitis, we're right in the heart of the biggest season, kind of July, August, September. This comes from, just on the same as the human side, but it's what we're doing here is we're actually with the products we're bringing is we're treating that problem. We're bringing that itch down and putting that dog back into a comfort zone where it's not itching. I have 2 Labradors, and I've had a Labrador that's been on many different medicines. And this product, Zenrelia, is actually working very well for those trouble cases, but it's primarily for atopic dermatitis.
All right. Well, Elizabeth and Pearl, thank you for that. A little bit of advice.
Jeff Nora here, also a dog lover. My family, we're proud toy poodle owners here, but curious how you all are navigating the tariff environment right now, especially as it relates to the pharmaceutical space.
Yeah, so first of all, we have been very clear in the last quarter and this quarter that we have, put our interventions in place. We've done everything from, we've got the manufacturing, we believe, in the right place, and we've really mitigated, quantified, and actually quantified today $10 to $14 million. We've covered that in our guidance and really tested that against any risk scenario at all on tariffs. As you go to the bigger kind of maybe 232 and some of the discussions that are happening in pharma, we as an industry, all of us have been there, animal health, inside of Washington. We're being heard with a constructive dialogue to say, hey, we're really out of scope. Why? We're not a payer business. We're a cash business, which creates a very competitively priced global environment, which takes us out of scope. But ultimately, this comes back to what I just talked about. This is about, we are about food, security, food affordability. We're about the American farmer, and that's what animal health does for veterinarians and pet owners. So at this point in time, we believe we're in a good, constructive dialogue, that we're being heard, and we will, we have a plan to be out of scope relative to pharma because our industry is so different.
Well, it is a different industry, and I love that you went there. What is it that maybe Bloomberg investors, Bloomberg audience doesn't understand maybe about your supply chain? Where is your supply chain?
Yeah, the big companies are American-based in our industry. That's one. And we primarily got manufacturing between Europe and the U.S. We have very small percent, I think, as an industry, 2 to 3% coming out of China with active ingredients. So that's one. But I think where the discussion goes is economics and pricing, which gets you into this situation. And again, when we don't have as much patent protection, we have a lower margin industries and customers, and it just creates a global competitive price base, especially when you don't have payer, you really don't have an insurance base in pets or farmers.
So, Jeff, does this mean you don't want to get caught up in the bigger, broader talk about the cost of pharmaceuticals?
That's absolutely right, because we're more probably food-based and farmer-based type products, and that's why we've got tremendous broad-based support from the veterinarian community, the farmer, the food community, because that's what we are. I mean, we're direct to consumers. We're supplying products that impact their homes, whether that's protein or whether that's their pets. And again, the cash market versus a payer market is a big deal. So the message is, yes, we are outside of that scope. Another reason that brings the resiliency. I mean, this pet and protein trend is creating a resiliency that I think for your viewers is why this is such an attractive industry, and our last 30 years prove it. And I think Elanco, where we are relative to value, is a great company inside of that industry.
So what about the White House wanting new drugs to be launched at prices equal to the ones in Europe or elsewhere? Where do you all view on, what's your view on that?
Yeah, I mean, I would say back to the out of scope is, you know, we're a regulated industry. We bring products through, but we go right into the marketplace where we're not looking to get on a formulary or there's no insurance. I mean, this is where we have to go right out on day one, like I'm doing with these new products, and I need to prove a value proposition to you, the pet owner, as well as to the veterinary practice, or I'm going to farmers and need to say, you know, the only way something works with farmers is it's got to be competitive. So I don't